morning. Good morning. Okay, welcome to the CA Foundation last paper, that is Economics Marathon for September attempt, September 2025. Hope you guys are writing exam next month. Is that so? Okay, so online students or maybe the recorded students, whoever is watching this on the YouTube, see, in this particular marathon, we are not going in detail with the syllabus coverage. Already there is a marathon which has covered with in detailed syllabus coverage, which was done in May 2025 attempt. So already there is a YouTube marathon video. Kindly watch if your interest is to understand the conceptual knowledge, not with MCQ discussion, exam paper discussion. If you feel I don't have a proper conceptual knowledge, I recommend you to watch that first. And then if you want, you can watch this as an additional manner. In this today's marathon or the September 25 marathon, we are covering with the syllabus part, but we are not going in detail like how we used to do in the previous marathons. We'll go little faster and we'll cover with previous year exam question papers, top 100 questions of every single chapter, which is most interested topics for ICI, which repeatedly the questions have been coming frequently. And also those MCQs which you guys have a doubt or any conceptual particular concept, if you feel, sir, in my main class, I didn't understand this particular topic, kindly redo this topic. So focus is towards students' doubt clarifying point of view, technical aspect point of view. If your purely intention is to understand the conceptual base in detail, watch the previous marathon and then come to this particular marathon. This is for YouTube students, whoever is watching this from the YouTube. Clear? Chalo, let's get started. So, if at all we look into our syllabus, economics is classified into two parts, microeconomics and so in today's class, we will cover with microeconomics. In tomorrow's class, we try to cover even with complete macro. If time doesn't permit, maybe on Monday, we can take the remaining rest portions. Clear? So, Saturday, Sunday and Monday, tentatively 3 days is going to be the marathon. Let's see, we don't want to hurry up. We'll take it in a proper manner, slow pace manner. Once we are comfortable, we'll finish it. There is no hurry in this. Okay, if you observe in the microeconomics, which economics? There are 3 important chapters which you can't ignore at all. So these 3 you cannot at all ignore. Chapter 2, Chapter 3, Chapter 4. Major weightage in the exam will be in micro 2, 3 and 4. Chapter 1, definitely the questions are going to come, but not to the extent of 2, 3 and 4. Just chapter 5 will also be there. So 1 and 5 put together, you can expect 15 marks. How many marks? 15. That is worst scenario. Actually, worst scenario is 15 marks. Usually you can expect somewhere between 12 marks or 10 to 12 marks. How much? 10 to? 12. This is the actual average for 1 and 5. So chapter 2, 3 and 4 is going to be having the more weightage, especially chapter 2 as a more weightage. Sometimes 10 or worst scenario 15. Even chapter 3, usually 10 marks that has to come. 8, sometimes even they have cut it down to just 7. So you can't expect your ICI. This is what exact the number of marks they are going to give. This is just an approximate. Sometimes they have cut it down to 7. Sometimes they have gone even till 12. In worst scenarios, they have gone till 15. See, usually between 2, 3 and 4. Least possible 7. Worst possible 15. So between 7 and 15 it will be always. Usually 10 to 12. What is that usually? 10 to 12 is going to be the weightage. So in today's class we shall cover with the microeconomics. And in the microeconomics I have my own flow. I usually don't follow the structure of ICI like first chapter 1, next chapter 2, next chapter 3, next chapter 4 and 5. No. Usually first I am going to start with chapter 2 unit 1. What is it? Chapter 2 unit 1. That is demand. So after covering chapter 2 unit 1, next we'll go with chapter 2 unit 3 supply. What is it? Chapter 3 unit 3 supply. And next we go with chapter 4 unit 2, that is price determination. And next we will come back to chapter 2, we'll finish the unit 2, that is consumer behavior. This is first set. Next comes the second set, chapter 3 unit 2 theory of cost. After that, chapter 3, unit 1, theory of production. Next, chapter 4, unit 1 and 3. See, already we have finished with the unit 2. Unit 2 is already done. So, remaining is 1 and 3. We do that 1 and 3 together. We don't do it in a separate manner. We take it together. This is chapter 4, market and its types. This is the second set. So this is where the major portions or major marks is going to come. Later on, last lag, that is chapter 1, unit 1 and 2. Unit 1 and unit 2, Introduction to Business Economics. And last but not the least, chapter 5, Business Cycle. So this is the flow in which I will be doing in the class. So even the revision, even my main class, marathon, whatever you observe, microeconomics, this is going to be the flow. Usually, this is the portion where you need to have a conceptual understanding. From this particular first lag, there is going to be a connection with the second and the third lags. Clear? So, demand is one area we have to understand little in detail. Consumer behavior is the another area where you have to understand little more in detail. From these two connections are there in theory of production and theory of cost. That's the reason I'm taking this first. And later, mixture, combination of all comes in chapter 1, that is introduction. So straight away I don't take up with introduction. Is that clear? Okay, chalo, let's get started. So we are going to start with the concepts of demand. We are going to start with the concepts of. So open the material and there you can observe the concept of demand. So usually there are three simple conditions which we call it as a demand. Desire to buy, ability to pay, willingness to. Only when all the three conditions are satisfied, then only we call it as a demand. Clear? So what is it? Desire to buy, ability to pay, willingness to spend. Even if any one single condition is not satisfied, that is never called as a demand. Or else there is one more meaning. Any commodity. What is it? Any? At a given point of time for a given price. See, for us now the importance is time and price. Now let's say for example, I will say I want to sell this watch. This watch is used by, let's say, for example, Raja Chola, 12th century, 11th century and all. I will say, I want to sell this watch for 50 lakh rupees. Now, suppose if any particular person is ready to buy this for 50 lakh rupees. Now, I said 50 lakh, this particular time, for a given price. If customer is ready to purchase, what is it? Customer is ready to purchase. Even that is considered as a demand. See, either these three conditions has to be satisfied. Desire to buy, ability to pay, willingness to spend, or any commodity at a given point of time for the given. If customer is ready to purchase, even that is called as. And next comes the most important and the most interconnected topic, that is determinants of. So what is determinants? Simple concept. Because of these factors, because of determinants, demand is going to change. Demand is going to, either demand can increase or either demand can. See, anything is possible. And there is a shortcut to remember this determinants of demand. The shortcut was PITCAT PCs. What is it? See, PITCAT PC. The very first P stands for price. Second one, I stands for income. T stands for tax. C stands for climatic condition. A stands for advertisement. Another T stands for taste and preferences. P stands for population. C and S stands for complementary and substitute goods. Out of which the very first one and the most important one is vitamin M. Most important, wherein which the price of a particular product. See, this whole concept of demand, we are going to study from a consumer point of view. Whose point of view? See, boss, as a consumer, I am going to buy my product. I have a want. I need to satisfy my want. I don't get a product for free of cost. I need to pay the price. Suppose if the product prices are increasing day by day, will you buy more units or less units? See, this is the main thumb rule. If price increases, demand will. Suppose if price decreases, demand will. See, arrow marks are in an opposite direction. Price is reducing, demand is increasing. Price is increasing, demand is decreasing. So remember, the relationship between this price and the demand is most important. And this is the main thumb rule, which is negatively related. Dash related or inversely related. The normal logic or the thumb rule of a demand chapter is always dash related, inversely related or negatively related. And the most important point, listen, whenever we are giving an answer, first importance should be always given to price. Second importance should be given to. That means when price is increasing, demand is. It's not other way around. When demand decreases, that is why price increases. That's wrong. First importance should be given to what? Price. Next importance should be given to. So price is the primary factor. The very first importance is given to the price. Prices are changing. Due to change in price, now what is going to change? Demand. So demand is always and always dependent on. So which will change first? Later what is going to change? So dash is dependent on dash. Price is dependent on demand. What is dependent on dash? Demand is dependent on. So remember, demand function, whatever we call it as a demand function, that is a relationship between price and demand is what in generic we say. Because price will affect demand to the dash extent. Because price is the one important factor that will make demand to change to a largest extent. Usually, whenever price changes, automatically quantity demanded will also. No doubt, even income will vary, taste and preference of a customer will vary. But these all are a secondary importance, which is the primary importance to the changes in demand. Price, so that affects demand to the dash extent. Henceforth, when we representing demand function, we call it as D is equals to function of price. What is it? D is equals to function of. So demand is a functional relationship with price, but in reality, it is having a functional relationship with all the determinants. What is it? Functional relationship with? And the most important determinant which affects demand is price. So we will take it as a separate and we call it as D is equals to function of price. Is that clear? And such functional relationship is of two types. One is direct relationship. Second one is, and the main thumb rule of demand chapter, just now we discussed, arrow marks are in opposite direction. That is indirect or negative relationship. And in most of the circumstance, which circumstance? This indirect relationship will work. Suppose if price increases, demand will, price decreases, demand will, and this logic is going to work in most of the circumstance. Only and only in few circumstance. Which circumstance? Few. There will be direct relationship. Which relationship? Direct. So it is positively related. Which related? Positively. See, what is that positive relationship? Whenever price is increasing, still demand will also. Whenever price will decrease, still demand will also. Decrease. So arrow marks are in a same direction. Arrow marks are in a same direction. That is positive relation or direct relationship. That applies only and only in dash circumstance. But in most of the circumstance, dash relationship is applicable. Indirect relationship. So for us, which is most important? Indirect relationship. That is the main thumb rule of demand chapter. See, remember, functional relationship is not only with respect to price, it is also with respect to all the determinants. What is it? With respect to all the. But usually price affects demand to the dash extent. Henceforth, we call it as D is equals to function of price. Now listen to this carefully. There are certain numerical problems that comes from demand function with connection to elasticity of demand. What is it with connection to? See, that is the another area where students will go wrong. Usually in exam, I will also show the exam paper. See, what did I said? Now demand function D is equals to function of price. Now this can also be elaborated as A plus B of P. Instead of giving it as D, they will mention it as Q. That is quantity demanded. What is it? In the place of A, they will just give some random number like this 150. Plus B is an induced part. Keynesian theory. If you remember, autonomous consumption, induced consumption, as the link is there. Induced part is there. So induced part, that will be in decimal, let's say 0.5 of P. Now you need to identify the quantity. They will only give the price. Let's say P is equals to rupees 10. P is equals to? Okay, P is rupees 10. Now what you should do in the place of P, you should put that rupees 10. Now Q is equals to 150 plus 0.5 of 10. What is 0.5 of 10? 5 plus 150. How much is the quantity? Quantity is 155, but they don't ask you to identify quantity. They will ask you to identify elasticity of demand. What is it? But the equation given is from the demand function. Equation is given from the. Here, there is a connection with elasticity. I will explain. So remember, there can also be a numerical problem which is connected from demand function. Connected from where? Clear. So demand function is not just expressed as D is equals to F of P. This can also be elaborated and it can be called as A plus B of P or even Y, income. The second determinant is what? Income. So there is a relation even with respect to income. See, simple concept. Income always represents dash capacity. That means how much goods I can buy with the given income. Let's say I have 100 rupees with me. Now within this 100 rupee, I need to buy chocolate. One chocolate is 10 rupee. How many chocolate can you buy? 10 chocolates. That means the capacity to buy a chocolate is 10 units with 100 rupee. Suppose if chocolate price increases to 20 rupee now, how many chocolate can you buy with 100 rupee? That means earlier I had a capacity of buying 10 units, but now I have a only capacity of. See, why do you guys need income? You need income. Why? To buy goods and. Without income, can you buy goods and services? No, we need to have income. Nah, that means I will work to attain income or to earn income. Because of that income, I will buy goods and services which will satisfy my wants, which will satisfy my. That means income is earned to attain livelihood. Income is earned to attain dash, and income represents dash. See, whenever income of a consumer increases, even demand will also. Simple. Sir, I'm going to buy a dress. Sir, let's say for example, festival is coming up. Ganesha festival is there. Sir, in the next coming 2 weeks, I will buy a new dress. Let's say you got extra money. You thought of buying just one normal plain t-shirt and pant. Now, rather than buying normal plain t-shirt and pant, now you'll go for little more luxurious dress or little grand dress. Why? Because your income increase. So automatically your demand will also increase. So rather than buying one pair of cloth, now I will buy one pair plus one extra t-shirt or maybe one extra shoes, maybe one extra necklace or some bracelets. Like this, I will buy something extra. Why? Because my income increase. Let's say COVID started during festival. Now you are not getting full salary, only half salary. First question, will you go for shopping? This time no festival, no shopping, no dress. By chance, even if you still go, will you buy full grand luxurious dress and all? No. Simple dress, sir. Maybe one track pant, one t-shirt. And your lockdown is there. Who will come to watch me? So when income is decreasing, demand will also decrease. See, observe the arrow mark. Is it in same direction or opposite direction? So it is dash related. So remember, price and demand is negative relation. Main thumb rule of demand chapter. What is it? Price and demand is dash related. But income and demand is dash related. Positive relationship. Suppose if income rises, demanding capacity of a customer will also. If income decreases, demanding capacity of customer will also. Is that clear? So income represents dash. So in PITCAT PC, P stands for price, I stands for income, T stands for your favorite best friend Nirmala aunty will come into picture now. Now when Nirmala aunty is there, now she will ask, I need two types of tax. One is direct tax, second one is. So direct tax is paid on income and wealth. So in our country, mainly tax is classified into two categories. One is direct tax. Which tax? Second one is indirect tax. So direct tax is always and always paid on income and wealth. Indirect tax is paid on goods and even this indirect tax is of two kinds. One is production tax. What is it? Production tax. Second one is product. Example of production tax, license fees. Which fees? License, registration fees. All these are a production tax. Product tax, your favorite one, GST. What is it? Or customs. What is it? Whenever you import the goods, you should pay the tax, na customs duty. That is going to be the product tax. Now we will speak about the indirect tax. See, direct tax we will speak in chapter 6. There is one particular topic called as disposable personal income. Which income? Disposable. Personal income minus direct tax. What is it? Personal income minus? That is disposable personal income. This comes in which chapter? National Income Accounting. Chapter 6. Now we are focusing on which type of tax? So remember, in our country, when we speak about this direct tax, direct tax is progressive. What is it? What do you mean by progressive? We have a slab rate system in India. If you are earning more, you will contribute to the taxes more. But in case of indirect tax, this is regressive. What is it? Regressive in nature. That means it doesn't matter whether you are poor, whether you are rich, whether you are a beggar. You want a product, you need to pay the tax. MRP in the brackets, inclusive of all the taxes. It doesn't matter if you are buying the product, you are going to for sure pay the tax. That is indirect tax. That is regressive. You can't pass the burden to someone. You should only pay that. But in direct tax, what is it? You can't pass the burden. Stupidity. In indirect tax, we can pass the burden. See, even though if I say it in other way around, everyone are like, yes, you can't pass the burden in indirect tax. Hello, you can. That means as a manufacturer, now I produce a goods. Now I will not be paying to the department tax. Now what I do, I collect the tax from the customer, from the end customer, and then I pay to the government departments. That means the tax burden can be shifted. Tax burden can be from one person to. another person. That is an indirect tax. But in direct tax, you can't shift the burden. If you are earning income, you should only pay the tax. If you are earning more, you are paying more. If you are earning less, you are paying less. That is regressive or progressive? Progressive. See, remember this word. This comes again in macroeconomics. The word regressive and progressive. So this word gets repeated. Clear? Even in the exam, most of the time they have given this word. Progressive and regressive in nature. So which is progressive in nature? Direct tax. Which is regressive in nature? Indirect tax is classified into how many kinds? Production tax and... Now we are going to speak about this indirect taxes. That means whenever indirect taxes are more, whenever tax rates are more, automatically demand will decrease for the buying of goods, and whenever tax rates are less, demand will be increasing. So tax and demand is dash related, negatively related. Next comes point number 4, climatic. See, whenever climate changes, automatically demanding capacities will also. See, in Bangalore, best example, morning winter, afternoon summer, evening rainy. In one day, we have 3 seasons. You need to wear your dress accordingly. In your bag, always raincoat will be there. Or one umbrella should be there. In Bangalore, we never know when it is going to rain. 5 minutes back, it was completely sunny. Clouds was there, not at all there. After 5 minutes, all of a sudden, cloud comes up and it starts raining. And usually, because of climatic condition, even your desire to buy goods and services, consumption will also change. Sir, evening when it is raining, sir, I feel like having one strong cup of coffee with bhaji, bonda, all these pakoda items. Suppose if early morning, sir, if it is too chill, same condition. Suppose in early morning itself it is too hot. We have Chennai people, they have 3 simple seasons. Hot, hotter, hottest. Whenever you go, it is the same. By mistake, if it rains, it pours like cat and rat and the entire city is flooded. If not, it doesn't rain. If it rains full dhamaka, 1 year whole rain comes on one day. That is how Chennai is. So in early morning itself, people will be like, no, I need something cold. I need something little chilled. That is how. See, depending upon the climatic condition, demand for the products will also. Next comes your favorite product. What is it? Mummy, Santur. By looking into that, most aunties bought Santur soap in the India, but nothing worked. And Katrina Kaif will come by holding one small mango. Droplet starts falling. Then you feel like drinking slice. Next, Virat Kohli will come, 2M Memito chips. And he will say, you will believe and you will eat. He will never eat in his life. But you will eat it. See, advertisement. That will instigate a customer. If advertisement is attractive, if advertisement is superb, if advertisement is catchy, automatically you will demand more. If advertisement is not that attractive, advertisement is not creative, demand generation capacity will be less. Next comes your Golgappa shop, Masala Dosa shop, take one broomstick, put on tawa, do one coating. That is the crispy coating. That is when you like the taste. If not, you don't like the taste when your mom does, because she don't use broomstick. Na? In home, if she use broomstick, that the full crispy texture is going to come. But she uses that onion, she will spread that onion, and with neat cleanliness she will do. That you don't like. You want something dirty. See, taste and preferences. Sir, I prefer to have only non-vegetarian food on Sunday morning. No vegetarian. Sunday morning, 4 a.m. biryani. We should stand in one big lane, 1.5 kilometers, and we should eat at early morning, 4 o'clock. Why? Because in Instagram we should post. It's not that you are feeling hungry. For Instagram purpose or preferences, why do you go to a restaurant? Nah, food and all other zamana, sir. Now Instagrammable ambience. Every week new new restaurant we go. That's our preference. Food and all is secondary. Now my first preference is ambience, look. Next comes the taste. Sir, I like the taste of that shop. So I repeatedly go. I repeatedly order something. I go and buy that product again and again. That is taste and. Even because of taste and preferences, the demand is going to change. Next comes most famous one of India. Finally, achievement made. Credit goes to grandma and great grandma. One cricket team, one volleyball team. Your grandma's one volleyball team. Your great grandma's one cricket team. Minimum 12 kids. That is status. If it is anything less than 12, only 7. Only 8. That is already for me. My relatives are catching gold. It's been already like 3 years I got married. No, they kids da. I said, how many you want? You first give one, later you will ask. That means they want still more. See, these are the contributors. See, population. What is it? Population. If the population is increasing day by day in the country, automatically demanding capacity will also. If population is less, demanding capacity will also be. Next comes the most important. This is where you guys will go wrong. Once again, my students, kindly remain silent. You know the drill now. What is going to happen? So the students who are attending for the first time, what is complementary? What is substitutes? Complementaries are buy one get one free. Then wait, I don't want mass answers. Yes, ma'am. Hero, tell me now.
For example, bike and petrol. If price of bike increases, the petrol price, consumption of demand for petrol will be decreasing.
Okay. Next, substitute goods.
Substitute goods are tea and coffee. If our price for coffee increases, demand for tea will be decreasing.
Tea will be decreased.
Increase.
Increased. Okay, chalo. First, let me say the meaning. Let me ask one more question for the students who are attending first time. Now, let's say, as he said, it is correct. Goods which are consumed together. What is it? Goods which are? They are called as complementary goods. Pen and ink, bike and petrol. All these are complementary. Without one, you can't use the another good. Substitute next best alternatives. What is it? Next best? Which gives same level or a similar level of satisfaction. Instead of having coffee, I will have a tea. Or instead of buying 5 rupees dairy milk, I will buy 5 rupees Gone Mad. Instead of coming to Shashikiran class, I prefer to go on first day first show movie. Substitutes. Clear? So like this, instead of doing one, I do a other elements which will give either same level or a similar level of satisfaction. That is substitute goods. Okay, for those students who are attending for the first time, did you understand this positive and negative relation? Only they will be answering. Others, kindly zip up your mouth and sit silent. Now my question, complementary goods are dash related, positive or negative? Okay, wait. Negative relation, raise your hands. Complementary goods. Negative relation, raise your hands. Positive relation, raise your hands. Positive relation, raise your hands. Madam, can you please explain how it is positively related? With example. How it is positively related. Just give a random example. Whatever you thought. Okay, this is why it is positive. Go on. Let's say now complementary. Petrol. Okay. If petrol price increases. Next term. Paka. Here positive or negative da? Quantity of bike. That means demand for bike increases if petrol price increases. Okay, now you said me, sir, I thought one single good. Okay, let's assume that price of bike is only increasing. Will demand for bike increases? Yes or no, respond. Okay, now suppose if petrol price is increasing day by day, Nirbala aunty, full stupidity, tax rates are going high and petrol price is increasing day by day. Will you buy more bike or less bike? So demand to buy more and more bikes is going to happen or it will be reduced. So positive relation or negative relation? Which relation? See, this is where most of them will go wrong. Complementaries and substitutes. That means if the petrol prices are reducing, then demand for bike will. Now observe the arrow marks. Is it in same direction or opposite direction? So complementary goods are. By mistake in exam, the way you guys said positive relation, if you say like that, do you know what you mean by CA? See, they all are experienced. Come again, we love your answers. They never say it as chartered accountant. Whenever I ask, what do you mean by CA? Come again. Now let's see. Okay, chalo. Now this is for complementary goods. Which goods? So complementary goods are dash related. Negatively related. Now let's take an example of substitute goods. Tea and coffee. Now let's assume that coffee prices are increasing. Coffee prices are. Now 10 rupee coffee price went to 15 rupees. Now which one will you buy more? Coffee or tea? That means demand for dash is increasing. Suppose if coffee price reduces from 15 rupees to 10 rupee back. Now what will happen to the demand for tea? Decreases. Now see the arrow marks. Is it in same direction or opposite direction? So substitute goods are dash related. So for the new students, if at all you are feeling confusing, which is positive, which is negative, what is my name? First alphabet. Substitute good first alphabet. Both are positively related. Self-advertisement. Shortcut to remember. Who taught you economics in marathon? First alphabet. Substitute good first alphabet. Both are. And answers for substitute will be also in positive. Answers for substitute also will be in positive. Complementaries answers will be in. They are dash related. If substitute is positive, complementary is. Is that clear? Understood. So this is what? PITCAT PCs. P stands for price. I stands for income. T stands for. C stands for. A stands for. C stands for. Sixth, seventh one. P stands for C and S. Substitute goods are dash related. Substitute goods are dash related. Complementary goods are dash related. Clear? So remember, demand function is not only with respect to price, it is also with respect to all the determinants, but dash affects demand to the maximum extent. That is why we call it as D is equals to F of P. Clear? Next comes law of demand. That is a Latin phrase called as ceteris paribus. What is it? Which states all the other elements is going to remain, or it is going to remain fixed. Now only and only dash changes. If price increases, demand. Price decreases, demand. That means simple. In PitCat PC, now only and only dash will change. ITCA TPC will remain constant. And the same thing was asked in your exam. Such a bachu question, you don't believe. Sometimes if ICA wants to donate marks, that is how they will ask questions. Wait, let me show that. It is there. Chapter wise I have bifurcated. Maybe in the Jan 25 attempt it has been there. May only, May 25 attempt, Okay, let's see. May 25 attempt. No. No, in 2 attempts they had asked that question. Particular 2 attempts. I don't think so. It is in Jan 25 attempt if I'm not wrong. Wait, let me show that question for you guys. Such a easy question it is. Like this, sometimes they will donate marks. Get ready. See here. Question number 87. Citrus is a dash face. That generally means all other things is going to be equal or constant. See, sometimes ICA donates marks. When they are willing to donate, you should know the concept. If you don't know the concept, donation not accepted. Clear? So, some basic elements also questions are going to come. And most important, in law of demand, it will only tell us a direction of change. That means if price increases, demand. But it will never say how much price is increasing, how much demand is decreasing. That is one of the disadvantages of law of demand. To overcome the disadvantage, we established elasticity of demand. Which one we established? So in short, law of demand, according to ceteris paribus, all the other things will remain fixed or constant. Only dash will change. And law of demand is a dash statement. Qualitative, because it only shows us a direction of. If you remember, when I was explaining demand function, I said there are few areas where law of demand will not work. Law of demand will. There will be positive relationship. What was that positive relation? If price increases, demand also increases. Price decreases, demand also. So point number 1, exceptions to law of demand we are speaking now. Conspicuous consumption. Which consumption? Remember, the word conspicuous refers to prestigious or luxurious goods. Which goods? See, best example, gold. See, day by day, gold price is increasing. Have you ever seen your mom, auntie, chittamma, all the female in your life stopped buying gold? Still they are buying more and more. Suppose car, a luxurious car for boys. Even though price increases, they are still having that love towards that car. I want a same car. Even though price increases, demand will still increase. See, that means people feel if the price of a product goes up, utility will also increase. Dash will increase. So what does the term utility refers to? Want a satisfying capacity. In short, in a layman term, satisfaction. If price increases, even level of satisfaction will. Price decreases, level of satisfaction will. Is that clear? Understood. So remember, in case of conspicuous goods, which goods? People feel if the price of the product is increasing, utility will also. If price reduces, utility will also. And that usually happens for a prestigious goods or a. Next comes your favorite topic where most of them will again and again they will go wrong. Giffen's goods. Which goods? So to call it as a Giffen good, there are 2 conditions. Number 1, they are dash in nature. And especially this word in nature is important. They are not actually low quality goods. In comparison to something superior. What is it? In comparison to something? It is low quality. Now let's take an example. Do you guys like biryani? Why sir, Saturday morning, why are you remembering biryani and all? Our mouth will become watery. Okay, in biryani, which kind of rice do they use? Basmati rice or normal rice? At your home, every day will they use basmati rice? Normal rice. Now you tell me in comparison to basmati, is this normal rice low quality or high quality? That is what? Not always low quality. In comparison to something, they are dash in nature. Inferior in nature. What do you mean by inferior? Low quality goods. We are considering that as a low quality in nature. Clear? And the most important, customers are spending dash part of their income. Major part of their income. See, it is low quality in nature. They are not actually low quality. We are considering that as a low quality in nature, and then we are spending major part of our income. Say for example, if you see in the ICA metal, they give rice, bajra, maize, these all. See, in reality, rice, bajra, maize, are they every time low quality? No, they are just low quality in nature, in comparison to something superior. In comparison to what? And the most important logic here is the table, which I always usually make my students to write. See, there is one table which I will usually give it here. See, just now we discussed about determinants of demand. PITCAT, PCs, clear? So let's say with respect to normal goods, which goods? And inferior goods. Inferior means low quality goods. Now with respect to price and with respect to income, clear? So now you guys have to tell me, in case of normal goods, main thumb rule of demand chapter, whenever price increases, whenever price decreases, it was dash related negatively. Now income and let me say demand, whenever income of a consumer increases, even his demand will also. Whenever income of a consumer decreases, demand will also. This was dash related, positively related. Now inferior goods, now that means low quality goods. Now rice example I was giving, let's assume our parents are getting a rice that is 50 rupee per kg. How much?
50 rupees per kg.
Now that 50 rupee kg rice will become 60 rupee per kg. How much it will become?
60 rupees.
Will they stop buying it? That means even though low quality goods prices are increasing, still demand will also. That means even though price increase, now demand for a low quality will increase. Suppose if the price of low quality goods are decreasing day by day, they know it is already low quality. Now it will can become worst quality. It become what? Now let's say for example, your parent will go and ask the rice which is of 50 rupee. He will say no, we have 20 rupee kg rice. Now it has become how much? Hey, no, I don't want the 20 rupees and all. Show me something which is 50 rupees to 60 rupees in nature. That means if the price of that low quality reduces, demand will also. That means now it is dash related. Now observe, same concept. In normal goods it was dash related, but in inferior good it has become. So usually in the main class I give that example of Puma t-shirt, Puma t-shirt, duplicate, first copy, Puma, same design, same pattern, everything same. But instead of P-U-M-A, Puma, in the local shop you will get it as P-O-M-A. If that Puma product price increases, still you will buy. Suppose if that price reduces, no, I want something which is of the 200, 300 rupee one. I don't want this 100 rupee t-shirt and all, because I know it is worst quality. Which quality? Okay, now let's assume a person was buying a Puma t-shirt. Assume it was 200 rupee one t-shirt. How much it was? 200. Now if income increases, let's say from salary 15,000, now it becomes 25,000. Now will you buy the duplicate? Which one will you buy? Original Pumas are now. That means whenever income of a consumer increases, what is it? Income of a consumer? What will happen to demand for low quality goods? Sir, lockdown, half salary. Now income decreased. Which demand will increase? Low quality goods demand will. See, this is where you will go wrong, so be careful. Income and inferior good relation. Which one? Income and? Inferior. They are dash related, negatively related. So kindly write down this table. The one who are attending for the first time, write down this table. This table will save your life. So remember, with respect to inferior good, you have to be careful. Most of the time, the questions are coming from which good? Inferior good. Logic with respect to price and logic with respect to income. Inferior good, price and demand is dash related. Inferior good, income and demand is negatively. Is that clear? Understood? Write this table. Online students, clear? Okay, let's get started. Next, we have a concept of snob effect and see simple snob effect example. Your Zudio. Sir, I went to Zudio. I bought a new dress. With excitement, I'm wearing this on the next day to my college. Like me, even 20 of them are wearing a same t-shirt. Will you wear it again? When a product becomes common, among all, either I will reduce its consumption or altogether stop its consumption. I will not at all wear that. Now I will stop wearing it. Or altogether I am going to reduce its consumption. Sir, sometime once in a month or once in 2 months, 3 months, I am going to wear it. But I don't wear it on a regular because that has become like uniform. Wherever see, everyone are wearing the same type of a dress. Now Gen Z trend that is. What is it? No, Gen Z trend. If one particular dress becomes Instagram trendy or your TikTok trendy, everyone buys the same shoes. Everyone has the same shoes. Everyone has the same t-shirt. Everyone has the same hairstyle also. Sometimes I like, hey, especially that K-pop, South Korean. There are many fans. They would like to look like them. And especially girls are there. Little mad fellows. Geometry box, K-pop, keychain, K-pop. Next, nail polish, same design. I am like, okay, all the best. Next comes Veblen effect. Which effect? See, same, like conspicuous consumption. What is it? That is luxurious consumption. Which consumption? That means even though product price increases, I want same product. I am not going for any substitutes and all. Even though price increase, I want to travel only in Mercedes Benz G-Class. I don't buy any other car and all. That is my status. That is my prestige. Even though price increases, still demand will. Same like conspicuous consumption. Which consumption? Which effect is that? Clear. So snob effect. What is snob? When a product becomes among all, some people either they will or altogether. But in Veblen, even though price increases, still demand will. Because that is your prestige, especially status seeking rich people. Who will consume that? Be careful, one or the other question is going to come from this. Randomly, either in RTP, MTP, they are going to speak about either snob or either Veblen or most repeated questions in the exam. Gibbons. Clear? Logic with price and logic with income. So we are discussing about exceptions to law of demand. That means where law of demand will not work. Number 1, conspicuous. Number 2, now comes number 3, also called as demonstration effect or bandwagon effect. Simple. Sir, my friend bought a new watch. Even I liked it. Even I want a same watch. Sir, my cousin, he got a new shoes. That's good. Even I want the same shoes. That means you are looking someone else. They are using it. You liked it. Even you want the same product. You want a. That is called demonstration effect. Which effect? Or also called as bandwagon effect. Which effect? Demand for the product increases due to usage of some other person. Even though price increases, I want same product. Because I liked it. Someone is using it. I saw that. I liked it. Even I want the same product. That is demonstration. Which effect? Or also called as conspicuous necessaries. Next comes expectations of future change in. Best example. See, yesterday festival happened. Varamahalakshmi festival. We know that our parents are smart enough. When the day of festival, prices of fruits, vegetables, everything is going to increase. Now let's say next 3 weeks down the line, Ganesha festival is going to come. We know that in future, prices will increase. When will you buy? In future or now? That means present demand will. In future, if price, observe the arrow mark. In future, prices. So present demand. But as per law of demand, if demand prices are going up, then your quantity demanded should decrease. But that doesn't apply for future changes. Which changes? See, in future, prices are going to increase. So I will not buy it in future. When will I buy? So present demand will. Clear. Suppose in future, prices will decrease. Now or in future, when will you buy? Present demand. See, future price decreased, present demand. Arrow mark same, na? Expectations of future change in price. Law of demand will not work. Next, in case of emergency. Best example, food articles in highways. When you are traveling on a national highway, when your bus or your vehicle is stopping in a particular place, there is one shop which sells water bottle, chips packet, biscuit packets and all. That one chips packet is 20 rupee, but that stupid fellow sells for 25. Will you stop buying? Or the water bottle which is supposed to be 20, you will say 25. Will you stop buying? Sir, next 50 kilometer, no shop. I need to buy in that one single shop only. Even though price goes up, demand will still Why? Because it is a, in terms of emergency situation, law of demand will not work. Next, in case of dash activity, auction, sale, betting, gambling, I said now, watch is used by Rajaraja Chola, Alexander the Great. I will say 10,000, other will say 20,000, 40,000, 50,000, 1 lakh, 2 lakh, 3 lakh. Prices are, demand is also. In case of dash, in case of auction, betting, gambling, speculation, activity. Next, in case of present trends and, this I will come later part. So, present trends and, best example, see, normal jeans pant, 500 rupees, no one will buy. Tear it and give 1,000, everyone wants to buy. Now see, trend is baggy t-shirt, baggy jeans and all. Suppose when I was at your age, if I wear that loose t-shirt, my friends used to tease me, "Ana maga, ನೀವು ಅಪ್ಪನ್ t-shirt ಹಾಕೊಂಬಂದಿದ್ಯಾ?" That is how they used to tease. But now today that has become a trend. They used to tease as if you are wearing your dad's t-shirt. But now one more person can fit inside. To such extent, people uses the loose t-shirts. But still now see, that is a trend. People pay extra for that and they will buy. Even though price goes up, still demand will increase. So in case of present trends and fashions and all, law of demand will not work. Clear? And see the basic necessaries of life. Boss, whether price increase or whether price, we will still demand. If price of cloth goes up, will you stop wearing cloth? Or if price of food increases, will you stop eating food? No, na. You will definitely wear them, na. So these are the exceptions. What are this? That means where law of demand will not work. Law of demand will. Number one, conspicuous. What do you mean by conspicuous? Luxurious or? Next comes, what do you mean by Giffen's goods? They are low quality goods in nature on which customer spends. So remember, there is one beautiful statement here. Usually people will forget. Giffen's goods are dash goods. But all inferior goods are not Giffen's goods. That means every low quality good is not Giffen. That means Giffen we consider low quality in. Best example, see, our government gives at highly subsidized prices in fair price shops now 1 rupee per kg rice, 2 rupee per kg rice and all. That I cannot consider Giffen. But no doubt, Giffen is low quality. But every low quality, what is it? Every is not a Giffen good. Is not a. Is that clear? So these are the exceptions to law of demand. What are this? Next comes the easy concept. Till now, the questions have not at all come. Demand, schedule and demand. That means representing demand in the form of a table is called as demand schedule. There are two types, individual demand and market demand. Suppose, let's say Shashikiran, he is a chocolate seller. Who is Shashikiran? Now, whoever eat my chocolate, they will get superpowers. So, only superheroes are my customers. Iron Man, Batman and Superman. Now, let's say I know that if price reduces, demand automatically. Yes, that is the logic. Main thumb rule of demand chapter. Now, if I only and only analyze, let's say Superman's column due to change in price. Due to change in how much is he demanding when price is 10? How much is he demanding when price is 8? How much is he demanding when price is 4? Like this, if I understand, analyze only demand of a one individual customer, demand of one individual, that is called individual demand schedule. What is it called as? Suppose rather than doing it for just one individual customer like this alone, I will consider total demand created by everyone in the market. That is called as, what is the total demand in the market because of change in? That is called market demand. Next, representing this table, that means representing demand in the form of a, what's called as dash? Instead of table, now if I represent them in the form of a graph, in the form of a, that is called as, and remember the general nature of demand curve is downward sloping curve from left to. So remember, usually x-axis, y-axis. Now the y-axis will represent price, x-axis will represent the quantity. The general nature is a downward sloping curve from left to. Let's say this is the initial price, this is the initial quantity, this is price and this is quantity, this is demand curve. Now let's say if the price increases, dash increases, we know that quantity demanded will, see their price increase, quantity demanded decrease. Suppose if price decreases, quantity demanded will increase. Accepted? See here, price decrease, quantity demanded increase. So you tell me, what is the general nature of demand curve? It is a downward sloping linear curve from left to right. What is it? See like this, it is a downward sloping. So it is a dash sloping, downwards sloping dash curve. Linear means straight line curve. Downward sloping straight line curve from left to Why it is downward sloping? This can be an exam question. So listen to this very carefully. There are 5 reasons. How many reasons are there? Number 1, LDMU, law of diminishing marginal utility. If you consume same commodity again and again, automatically your satisfaction level will. Best example, if you attend Shashikiran class one more time, for the 3rd time, the people are already attending 2nd time. By mistake, if they come to 3rd time, they same example, same sentence. Next, I will say what he is going to speak about. That means you will get fed up. Automatically, you will feel bored. That means if you are consuming same goods and services again and again, satisfaction will not increase. It is going to. Your favorite sweet. Now, let's say, for example, your mom yesterday, because of festival, she has done sweets at home. Obattu, holige. Now, with excitement, you had first one nice, second one also nice, third one also super, fourth one automatically okay, enough. So, mom will say, one more you eat. Mom, I will have later. I will have. Yeah. Will you eat continuously? If you try to eat continuously, what will happen? One point of time, whack, everything will come out. That is dissatisfaction. What is it? Dissatisfaction. See, it looks like you will get more satisfaction, but reality it is decreasing. Satisfaction is what? Decreasing. Next one, because of. See, there is always a substitute product for your goods, and that too by your competitor. Stupid fellow, if he decreases price, will customer buy from you or from the substitutor? Because substitute product prices are lesser, your product demand will decrease. Next comes, which effect? When you earn more income, will you buy normal goods or luxury goods? Then what will happen? Demand for normal goods. Next, Big Billion Day, Amazon Festival Sale, Rangappa Sale, Marappa Sale, Munyamma Sale and all they will do. Independence Day, Diwali Dhamaka Sale, Mahalakshmi Festival Sale, Ganesha Festival Sale. Because of offer, they will come and buy from you. Is there any rule that they will come and buy once again? No way, not at all possible. So, only for a time being demand went up, but later demand will. Next comes alternative or. One product used for an alternative or a repeated purposes. Because of that repeated usages, automatically the demand for various products will go down. Best example, milk. Sir, we get milk at home. My mom prepares curd from milk. From that curd, she will extract butter. From that butter, she will only prepare our own ghee at home, sir, or paneer at home. We don't buy paneer from outside or ghee from outside. We only demand milk. That's it. Only demand for milk is increasing, but curd demand decreasing, paneer demand decreasing, butter demand ghee demand. One product has got a multiple or alternative uses. Because of that, demand will not always increase for the other product. It keeps on. Is that clear? So, what are the reasons for a downward sloping or a negative sloping demand curve? Number 1. Number 2. Number 3. Number 4. Number 5. Clear? Understood? Next comes elasticity of. If you remember, in law of demand, I said you, sir, your audio and video is not clear. Jansi. Others, online students, audio, video, is it clear? Cross check once. Jansi, maybe it's only for you. Kindly log out and log in back. Just check with your network. Okay, chalo, fine. By chance, if I don't turn into the chat box and if I'm still continuing, if anything goes wrong, you have my WhatsApp number or maybe you have just give me a missed call. Just give me a direct missed call. That would be enough. Okay, chalo, fine. Elasticity of. Demand. About going in a speed or should I reduce the speed or the speed okay? Okay, now anyone finding it difficult? Going further, we are climbing the mountain. Speed keeps on. Still now from the first gear, now we are in the second gear. Now from second, next it will go to. Next third to. Next fifth. I am a destination reached. Okay, chalo, fine. We'll continue. Elasticity of. Okay, that means in law of demand, if you remember, I said it will only show us the direction. That means if price increases, demand will. But it never said how much price will increase, how much demand will. Did it said anything about it? No. So now elasticity will quantify the changes. What is it? Elasticity will? In the form of percentage. In the form of. That means suppose if price increases by 10%, price increases by. Okay, how much percentage is demand decreasing? Let's say some 30%. Like this, it will go in the form of dash. Percentage changes. Which changes? So simple. Differentiation between. Law of demand will only and only tell us the. But elasticity along with direction, numerical or. Law of demand, since it was only showing direction, it was called as a qualitative. Since it will also show as a numerical change, it is quantitative statement. Which statement? Now see there is a changes in quantity demanded due to change in dash. Due to change in dash, some determinants. Pitcat PC was the determinants of demand. Do you agree? Out of that Pitcat PC, only some determinants. Which are those some? Number 1, number 2, number 3. That is complementary and substitute goods. Number 4. But observe the formula. When we are writing the formula, we will say percentage change in quantity demanded divided by percentage change in. We are not using the word some determinants in the formula. Straight away we are using the word called as. Why? Because price affects the demand to the which extent? Clearer. So while writing a meaning, we will use the word called as some determinants. But while writing the formula, we don't use a word called as some determinants. We straight away use a word called as. Because price affects demand to the dash extent. Clear? Now, how many types of elasticity of demand is there because of that some determinants? Now, how many some determinants was there? 4. First one is price elasticity, second one is income elasticity, third one is cross elasticity, fourth one is advertisement elasticity of demand. Is that clear? Let's understand one by one. The price elasticity of demand due to change in dash. There is a change in quantity demanded. That means now quantity demanded will change because of change in. Because of change in. Is that clear? Understood. So remember, there is a changes in the quantity demanded due to the changes in. See the formula same to same. Elasticity of demand formula itself is given as the price elasticity of demand. Which elasticity? There are 5 types of price elasticity. How many types? 5. In the class, I would have bugged you up with this particular element. Multiple times I would have made you to repeat because numerical values are important. Sometimes the questions have straight away come. They will just give a word. Perfectly elastic is dash. You don't believe. Wait, I will show. See here, question number 89. In case of perfectly, as of now, ignore this word supply. Perfectly elastic is. What is greater than 1? Relatively elastic. What is 0? Perfectly inelastic. What is 1? See there, relatively elastic greater than 1, relatively inelastic lesser than 1, unitary elastic equal to 1, perfectly inelastic equal to 0, perfectly elastic equal to infinite. You need to remember with the numerical value, especially the students who are attending first time. Now only you guys have to repeat, others remain silent who already know the concept. Relatively elastic, E greater than 1. Relatively inelastic, unitary elastic, perfectly inelastic, perfectly elastic. Okay, one more time. Relatively elastic, greater than 1. Relatively inelastic, unitary elastic, perfectly elastic. Stupidity, infinite. First listen. I asked for perfectly elastic, but you are answering for inelastic. So I will not ask you in the order. Intentionally I will change. So only those students who are attending first time, only you guys have to respond now. What is unitary elastic? What is perfectly inelastic? What is relatively elastic? Greater than 1. So I was showing perfectly elastic, but I was asking question about clearer. Relatively elastic greater than 1, relatively inelastic lesser than 1, unitary elastic equal to 1, perfectly inelastic is equal to, perfectly elastic is equal to. See, sometime ICA wants to donate some marks for you people, IO Papa and all. So that time they will ask such questions. You should be knowing the concept. So E infinite is perfectly elastic. E1 is E0. E lesser than 1. Relatively inelastic. E greater than 1. Clear? Now let us go. Now meaning is also important. Meaning, numerical value, formula, explanation, everything is important. Price elasticity is 1000% important. Most of the questions are going to come from which elasticity? So relatively elastic, small change in price. Which change in price? Will lead to large change in. What is that large change in quantity demand? Let's look at the board for a time being. Now there is going to be a small changes in price. Which changes in price? What is the general nature of demand curve? Downward sloping linear curve from left to right. 45-degree downward sloping curve like this. Do you agree? Yes. But in relatively elastic, it will be a sleeping curve like this. That means it is a flatter curve. Which curve it is? Flatter curve. Let's assume that this is the initial price level. 1 second. Okay, this is the initial price level. This is the initial quantity. Let's say this is P. This is Q. This is demand curve. Now, what is the meaning of relatively elastic? Small change in price. What is it? Small change in. Okay, this is the small change in price, large change in quantity demanded. P1, Q1. Now, observe. Let's assume price is increasing by some 10%, but quantity is decreasing greater than 10%. What is it? Okay, let's assume 30%. Which percentage? See, price is changing by small extent, but the reaction is a dash extent, large extent or more proportion. Which proportion? So, relatively elastic has got one more name that is also called as more proportionate change. Dash proportionate change, more proportionate change. And what is the nature of demand curve? It is a flatter demand curve. Which demand curve? Flatter demand curve. Clear? So remember, E greater than 1. Which elasticity is E greater than 1? Relatively. Sir, how did we get to know relatively elastic is greater than 1? Relatively inelastic is lesser than 1. Now, in an exam, there can be a numerical problem. Which problem? Based on the numerical problems, end result, you should identify which elasticity is that. Let's take one fictitious example. Let's say Shashikiran is a chocolate seller who sells a chocolate for rupees 10. In a day, he used to sell some 100 chocolates. Now, he will increase the prices of the chocolate to 15. See, in the graph, I reduce, okay, we will make it decrease in the particular concept. Wait. Anyhow, I have taken increase in the graph. Now I will decrease the price of chocolate to rupees. Now, when price decreases, demand. Now, let's say it is 170. Now, there is a formula which will be used to calculate such numerical changes. The formula will be P by Q into change in quantity divided by change in price. What is it? P by Q into change in quantity divided by. Now, P stands for earlier price. Initially, how much was the price? Q stands for initial quantity. How much is that? Now, change in quantity, difference between new and old quantity, how much? 170 minus 100 is? Same way. The change in price, 5 minus 10 is how much? Hey, minus 5 da. 5 minus 10 is? Now, let us put it across. See, initial price, how much? 10. Initial quantity, how much? 100. Change in quantity, that is 170 minus 100. Next, 5 minus 10. So, this will be now 10 divided by 100 into 70 divided by minus 5. What is it? 70 divided by minus 5. Accepted. Now, for a time being, ignore negative. I will teach you how to deal with this negative. For a time being, don't consider this negative. Ignore negative. Now, this will be 10 ones are 10 tens are 5 ones are 5 are 14s are. So, end answer is 14 divided by 10. So, 1.4. What is the answer? Greater than 1 or lesser than 1? Which elasticity? If it is lesser than 1, equal to 0. Who is that? Genius fellow, unitary, E0. What is E0? E1. See, based on end result, we will identify which type of price elasticity is the same. Clear? So, we need to use this formula. What is the formula? P by Q into change in quantity divided by. But this formula has two different disadvantages. How many disadvantages? Two different disadvantages. Disadvantage number 1, without ignoring negative. What is it without ignoring? See, it was actually minus 5, na? We ignored negative and we took as positive 5. So, end answer is positive 1.4. But in reality, answer is minus. Suppose in an exam, if the same numerical problem is given in your exam, let's assume, now this is the options given. Let's say option A 0.6, option B minus 0.6, option C 1.4, option D 1.6, minus 1.6. What is the answer? 1.4 is the answer. Because we had ignored negative, so we got the positive value. Now suppose in an exam, if the given option is also having minus 1.4 and positive 1.4, both are there. Now what is the answer? Minus 1.4. Clear? Our new students and ICU students, is that clear? So remember, if the corresponding negative value is given, if you have ignored negative, then you should not ignore negative in the end result. Only if the corresponding negative figure, what is it? Corresponding negative figure is given in the option. Sir, we don't have this negative figure at all. Sir, 1.6 was there. Now the answer is corresponding dash figure, positive figure. Which figure? This is the first disadvantage. See, without ignoring negative, without ignoring, we can never solve a problem. Sir, why, sir? Why are you ignoring negative? Tell me that reason. Because when the answers are in negative, what is it? Answers are in, that is inferior goods. Which goods? Every good cannot be inferior good. In formula method, without ignoring negative, if you solve a problem, automatically you will get that positive or negative everything. That means if at all I ignore negative, I get answers in positive. If I don't ignore negative, answers will be in. If every time answers are in negative, can I call every good as inferior good? Clear, huh? Hello, excuse me, clear? Response. Audio has to come, not only video, audio. Clear? Yes, sir. So remember, if the corresponding negative value is given, what is the answer? Negative value. If the corresponding positive figure is given, what is the answer? Positive figure is going to be the answer. Is that clear? Understood? Okay, now second disadvantage. Now what is the second disadvantage? Now you guys solve the problem and let me know. I will explain what is the second disadvantage. P, Q. Let's say same problem I will give 10, 100. Now I will increase the price 15, 70. This is the first problem. Now second problem P, Q. Let's say 15, 70, 10, 100. Now kindly solve this problem by using formula method. What is the formula method? Into change in quantity divided by change in price. So solve this problem. Let me know which type of elasticity is the same. Which type of elasticity is the same? Let me know. Finished? Completed? Answer in the first case 0 point. So if the answer is 0.6, which elasticity is that? Relatively inelastic, E lesser than 1. Second problem 1.28. 1.28, E is relatively. Now kindly observe the numerical problem. I didn't do any much changes. First problem has been just reversed. See 1570 and next 10 100. I have just reversed the problem. See, in mathematics, even when you cross calculate, you should still end up getting the same answer. But in formula method, when you reverse the problem and when you calculate, you will end up getting same answer or different answer. That is the second disadvantage. So, in order to overcome this disadvantage, we started using a second formula and we call it as a ARC method. Which method formula? And this first method, whatever we are using now, this is called as formula method. Which method? Formula method. So formula method has a disadvantage. One, without ignoring negative, we can't solve a problem. That is the first disadvantage. Second disadvantage, if at all we reverse the numerical problem, we end up getting a different answer. So we started using which method? ARC method. Now ARC method formula. change in quantity divided by change in price. What is it? Change in quantity divided by into P1 plus P2 divided by Q1 plus Q2. What is it? Q1 plus? Clear? P1, P2. That means both the price has to be considered. Now let me solve the first problem for your better understanding. Now let's say for example, initial price and initial quantity. We have new price and new quantity. What is the change in quantity? Change in quantity is 70 and 100. What is it? 30. Change in prices 5. Clear? Into P1 plus P2, 10 plus 15.
25.
Next 100 plus 70. 170. Okay, let us solve it. 5 ones are 5 5s are 30 into 5 is.
150.
So 150 divided by 170. Answer is 0 point. Answer is greater than 1 or lesser than 1. Relatively inelastic. Now you guys solve the second problem by using arc method. I solved the first problem, right? Now you guys solve the second problem using arc method. Answer is same. See, this is the biggest advantage of arc method. Now, in an exam, suppose if a numerical problem is given without mentioning which method to use, just they have given a numerical problem like this. Mr. Shashi is a chocolate seller who sells a chocolate for rupees 10 and he sells 100 units per day and he will increase the prices to rupees 15 due to which demand decreases to 70. Identify the type of price elasticity of demand. Like this, they have given a numerical problem, but they have not mentioned whether to use formula method or which method will you use? First use formula. Usually 90% of the scenarios, answers you will get it by using the only and only if the options are not matching. Let's say, sir, I got answer as 1.28, but in the option there is no 1.28 or which is matching towards 1.28. Then I should solve under which method? Clear. If nothing is matching with your formula method answer, then only you should match with the sir, what if both the method answers are given? Sir, when will I get to know both the method answers are there? Only when you solve under both the method. That is extreme rare circumstance. Usually they will not do it like that. If they are asking from arc, they will mention it as solve it under the. If nothing is mentioned, always advise it to go with which method? Is that clear? Understood? So this is how we will calculate the numerical problem based on the end result. Based on the, we will say whether it is relatively elastic, relatively inelastic, unitary elastic, perfectly inelastic or perfectly elastic. Is that clear? Understood? So we were discussing about elasticity of demand. Small change in price will lead to dash change in quantity demanded. That is flatter demand curve and dash proportionate change. That is relatively elastic. Now relatively inelastic is full on reverse. Complete opposite. Now large change in prices. Which change in prices? But only small changes in the quantity demanded. Now let me also draw the graph and let me help you out to understand the concept. Now y-axis, x-axis. What is the general nature of demand curve? Downward sloping linear curve from left to right. But this time it will be more standing curve like this steeper curve. Which curve it will be? Steeper curve. Accepted. Now see, this is the initial price. Let's say this is the initial quantity. So this is price. This is quantity, this is demand curve. Clear? Now, what is the meaning? Say large change in price. What is it? Leads to small change in quantity demanded. Observe, price is increasing, let's say by some 50%. Demand is decreasing, let's say only and only by some 10%. See, price changed by large extent, but quantity is changing only by some small extent. That means reaction to price, is it more or is it less? Is the reaction less or more? So it is called as less proportionate change. Dash proportionate change. So relatively inelastic. Relatively is dash proportionate change. Less proportionate change. But relatively elastic was dash proportionate change. More proportionate changes. Clearer? See, small change in price, large reaction, more proportionate change, relatively elastic. Large change in price but small change in demand. That means smaller reaction. That is dash proportionate. And now what is the nature of demand curve? Now the nature of demand curve is a steeper curve. Which curve? Steeper curve. But in relatively elastic it was a flatter curve. Is that clear? Next comes unitary elastic. That means if price changes by 10%, even demand also changes by Same 10%. So what is the general nature of demand curve? Downward sloping linear curve from left to accepted. Say let's assume this is the initial price, this is the initial quantity. So this is the demand, this is y-axis and this is x-axis. Now let's say for example demand is increasing by 10%. How much percentage? Now even quantity is also decreasing by same to same 10%. What is it? Same to same. Is that clear? Now observe this very carefully. Now if I dot this, if I make the shading of this particular region, now both are having a same proportion. Which proportion?
Same.
Henceforth, relatively elastic was more proportion. Relatively inelastic was less proportion. Unitary elastic is. And it has got one more different name. Rectangular hyperbola or equilateral hyperbola. Which hyperbola? Rectangular or equilateral hyperbola. Clear? Rectangular hyperbola or which hyperbola? Equilateral hyperbola. That is going to be unitary elastic. Which elastic? Next comes perfectly inelastic. Simple concept. Whether price increases, whether price, it doesn't matter. Quantity demanded remains unchanged. See, demand curve is going to be a vertical curve. Which curve?
Vertical.
A straight vertical curve. Whether price increase, whether price decrease, it doesn't matter. This applies in basic necessaries of life. Which goods? Basic necessaries of or perishable goods. Which goods? And the graph is parallel to which axis? Last but not the least, perfectly elastic. See, at the given price level, what is it? At the, see, that meaning is actually wrong. At the given price level, whatever might be the price, at the given price level, quantity demanded cannot be determined. That means infinite demand. Which demand? We can't even estimate how much demand customers are doing. Now, many of my students will say, sir, oxygen, sir, we will breathe oxygen now, infinite demand. But my question, are you paying price for it? But here you are paying a price at the given price level. What is it? At the quantity demanded is infinite. What is it? Quantity demanded is infinite. So, horizontal curve. Which curve? Horizontal curve or parallel to which axis? Parallel to x-axis. So these are the 5 types of price elasticity. This table is important. See, relatively elastic E greater than dash demand curve, flatter. Relatively inelastic E lesser than steeper demand curve. Unitary elastic E is equals to downward sloping demand curve from left to, also called as rectangular hyperbola or equilateral. See, relatively elastic, more proportionate change. Relatively inelastic, less proportion. Unitary elastic, same proportion. Clear? Perfectly inelastic, dash nature curve. Vertical or parallel to y-axis. Horizontal, that is perfectly elastic. This concept is myth. What is it? This concept is? There is no real life example for perfectly elastic. Which is there, which we don't have a real life example. This concept is dash myth or unrealistic in nature. What is it? Myth or? Clear? And remember, there are 4 methods to calculate. The very first method is already we did P by Q into change in quantity divided by change in. Second one is arc method. Even arc method is also done. Now third method, point method. Which method is that? See, even this point method, meaning is unrealistic. What does it meaning is? Now they say to identify extremely small change. Which changes? Now what is that extremely small change? Let's say for example, Shashikiran bought one car, Lamborghini car, assumption. What is it? Assumption, Lamborghini car. Now I have given it to a service after using it for some month. Now the spare part has been worn out. Now the service guy will say, we need to replace that spare part. I will ask how much? 10 rupee. How much? Car is 5 crore. Spare part replacement is how much? 10 rupee. Extremely small change. Now to identify such extremely small change, which changes? We are going to use which method? Point method. See, conceptually, this is not possible. That is why I said theory is a myth. What is it? Theory is a? But this graph we need. This is important in chapter 4. Where is it important in? Chapter 4. So what do we do that in chapter 4? Simple. See, we'll draw a demand curve, downward sloping curve from left to toe. And we'll also make the demand curve to touch x-axis and y-axis. Just now we studied perfectly inelastic. Nature of demand curve was vertical, touching which axis? X-axis. See, the one which touches x-axis, E0. and perfectly elastic. Just now we did. It is horizontal. It was touching which axis? Y axis. The one which touches the Y axis is E infinite. Clear? So this is important. Remember, middle point of the demand curve is unitary elastic. Which elastic? The point which touches Y axis is perfectly elastic. The point which touches X axis is perfectly. Now, between this top and the middle, this upper portion is relatively elastic. Lower portion will be relatively. And see, between these points, now we are reckoning it as point A, point B, point C, D and E. This between the points is called as segments. What is it called as? And there is a formula to identify this. Lower segment on the demand curve divided by. I will just give an example. Let's take point D. What is it? Pointer. Now you tell me at the point D, how many lower segments are there? 1. Lower segment divided by upper segment. How many upper segments are there? What is 1 by 3? 0. Point. That is what I said. Na? Point D is E lesser than 1. E. By using that formula, we can identify. Why did I said middle point is E is equal to 1? Now you tell me at the middle point. That is at point C. As per the formula, lower segment divided by upper segment. You tell me how many lower segment is there? How many upper segment is there? So lower segment 2, upper segment 2. Answer is, if the end answer is 1, which elasticity is that? That is why I said middle point is unitary elastic. Is that clear? Now goes to the last topic, that is total outlay method. Again, most of the times the questions have come from total. So remember, what is the main thumb rule of demand chapter? Price increases, demand. Price decreases, demand. Clear? This is the main thumb rule. But now I am not interested in demand. I am not interested in. I don't even need a demand. I only need the price and outlay. What do I need? Outlay. Outlay is also called as total revenue. What is it called as? So how do we identify outlay? Price into quantity. What is it? Price into. So total revenue is identified or outlay is identified by using price into. We are not interested in demand. We are not interested in. That is quantity demanded. We are not at all interested. What are we interested in? Price and outlay. Only this first column and the third column. That is what we are interested. Now Shashikiran, chocolate seller. Whoever will eat my chocolate, they will get superpowers. What they will get? Clear? Now see there. Batman. Let's say now the prices are decreasing. 6, 5, 4. Like this, even Superman. Prices are decreasing. Iron Man. Prices are. When Shashikiran is decreasing the prices, I know that definitely they will buy more and more units, but I am not interested in quantity demanded. What am I interested in? Outlay. What am I interested in? Outlay. What is that outlay? Price into quantity. What is it? Now you tell me. 6 into 10. What is the answer? 60. Okay, nice. Next, 5 into 15. 75. 4 into 20. Hey, 4 into 20, not 420, man. 4 into 20 is 80. Next, 6 into 10. 5 into 12. 4 into 15. Clear? Next, see there. 6 into 10. Next, 5 into 11. 55. 4 into 13. 50. That means observe it very carefully now. In case of Batman. In case of what? Observe when prices of the product is decreasing. First he was spending how much? Next he started spending how much? Next, is he spending more money or less money? More money. What is he spending? That means there is a negative relationship. Which relationship? That means if the prices are decreasing, outlay is increasing. Accepted. That means he is spending more money, more proportion. What is more proportion called as? E greater than 1. What is it? Hey, hello, excuse me, others respond, especially there. If you are simply coming and sitting in the class, in another half an hour, you will sleep off. I'm serious on it. Respond, open up your mouth. Audio is important. What is E greater than 1 is also called as more proportionate change. Dash proportion. More. See there, when prices are decreasing, what is decreasing? Prices are decreasing. Is customer spending more money in this case or less money? More. When he is spending more money, more proportion is also called as dash. E greater than 1, relatively. Clear. But observe Superman, boss, Shashikiran, you decrease price or you increase price. My budget is only, I will only and only spend same amount of money. That is same proportion. What do you mean by same proportion? E is equal to unitary elastic. Which elastic? Unitary. Is that clear? Next comes Iron Man. See there, when 654, prices are decreasing. Stupid fellow, first he was spending how much? Next, that means is he spending more money or less money? Now observe arrow mark, price also decreasing, spending nature is also. And is he spending more money or less money? Less proportion, that means which elastic? Relatively inelastic. Relatively which elastic? Now comes the most important topic. This is where exam questions will come. Observe the arrow mark. In Batman case, price is decreasing, but outlay is same direction or opposite direction. That means there is a negative relation. Which relation? Between price and outlay. Between dash? Between. In case of which elasticity? Relatively elastic. Relatively. Price and outlay will move in a dash direction. Opposite direction. Which direction? See, this concept is important. This is where most of the times you guys are going to be wrong. So remember, let me write it. Relationship between price and outlay. What is the relationship between what? Price and? Point number 1. Suppose if E is greater than 1. What is it? E is? If price is increasing, outlay will be decreasing. If price is decreasing, outlay will be increasing. Accepted? So you tell me, price and outlay will move in a dash direction. Price and outlay move in dash direction. Move in opposite. Something is wrong with this. 1 second, stylus is not working properly. Okay, price and outlay is moving in dash direction. Opposite direction. See, this word opposite direction is important. That means whenever price is increasing, outlay is. They respond. Whenever price is decreasing, outlay is. Is that clear? Now, remember, in case of relatively inelastic, that is E lesser than 1. What is it? E? See, observe, in case of Iron Man example, now see, price is decreasing, outlay is also. So, price and outlay is moving in dash direction. Same direction. Suppose if price is decreasing, outlay is also. If price increases, outlay will also. So, price and outlay will move in dash direction. Price and outlay move in same. In which elasticity? Relatively. So kindly write this down. This is where most of the times the questions have come. And most of the students will go wrong. So remember, whenever they're speaking about spending capacity, which capacity? Or expenditure. What is it? That means outlay method. Which method? Clear? So these are the 4 methods by which price elasticity is identified. Formula method, arc method, point method, and outlay method. Which method? Is that clear? Understood? By this price elasticity, and the most biggest one comes to an. The next mistake what you guys are going to do is in income elasticity. Which elasticity? See, what is income elasticity? Now there is a change in demand. What is there? Change in? Due to change in income. Due to change in? See the formula, percentage change in demand divided by percentage change in. See, if you remember, in case of Giffen's goods, I made you to write a table. If you remember. Normal goods in. See, with respect to a normal goods, with respect to which good? Income is dash related. With respect to inferior good, income is. That means observe the graph here. In case of normal goods, in case of which good? Normal goods. What happens whenever income increases, demand will also. Income decreases, demand will also. That means upward sloping straight line curve. Whenever we have a positive relationship, which relationship? Upward sloping, but negative relationship, that is an inferior good, low quality goods. When you earn more income, will you buy low quality goods? You will decrease it. Suppose if your income decreases, then demand for low quality goods will increase. It is dash relation, negative relation. Whenever there is a negative relation, dash sloping curve. downward sloping curve or negative sloping curve. So with respect to normal good and with respect to inferior good, we need to understand the logic. Remember, income elasticity, there is a change in demand due to change in dash income of a consumer. So with respect to normal good and with respect to inferior good, we need to understand with respect to both the goods. Is that clear? Understood. Now, even to identify income elasticity, which elasticity? Income elasticity. There are two methods. How many methods are there? Two methods. First one, formula method. Which method? Now, instead of P by Q, instead of what? In the place of P, we should write it as Y. That is Y by Q into change in quantity divided by. And we also have ARC method. Which method? ARC method. Now, ARC method, change in quantity divided by change in price into P1 plus P2 divided by Q1 plus Q2. Is that clear? So, this is going to be the formula. So, instead of, oh, sorry, Y. So, change in income. What is it? So, change in quantity divided by change in income into Y1 plus divided by Q1 plus. So, instead of P, we will write it as Y. That's it. Clear? Now, this is most important. Remember, after using this formulas, if the end answer is E greater than 1, what is it? E? Luxury goods. Which goods? That means you are spending more proportion of income. You are spending dash proportion of income. Now, listen to this very carefully. Now, let's say income of a consumer. What is it? Okay, let's assume the income which we are earning is 15,000 rupees. Now, and I used to spend, let's say 12,000. I used to spend how much? And I used to save how much? 3,000. Now, let's say for example, my income will become 20,000. How much it will become? Now, you tell me, will I still spend same amount of money? Suppose. Now, listen to this very carefully. If I spend 18,000 rupees, if I spend how much? 18,000. Now, how much did the income change? How much did the spendings has been changed? How much did spendings change? But how much did income change? More than change in income, there is a change in spending. This is what E greater than 1. What is it E? More proportionate. Which proportionate? More. We are spending more proportion of my change in income. That means usually I spend it on which good? Either I'm buying some car, phone, something like this. Luxury items I'm buying. Suppose if E is greater than 1, which good is that? Suppose, same example. Now I'll make little changes. Now let's say for example, this was my initial income. This was my initial spending. Now my income became 20,000, but my spending is 15,000. Income is 20, spending is 15. See, earlier what was my income? 15. Now it has become how much? How much is change in income? So instead of 12, now I'm spending how much? From 12 to 15, what is the difference? Now change in spending, what is it? Change in spending is 3,000. Change in income is 5,000. Now, is income changing more or spending changing more? That means I'm spending less proportion. I'm spending which proportion? That means in such case, it is a normal goods or necessary goods. Which goods? Is that clear? If you spend more proportion of money, less proportion of money, normal or necessary. Suppose if it is equal to 1, that means our 5,000 increase in income. Spending is also increased by same 5,000. Either it can be a or that means same proportion money has been spent. My income increased at 5,000. Spending also increased by same to same. Either which good? Or necessary good. Is that clear? Understood. Next, suppose if E is 0. What does it E is? Confused fellow. He is not even spending more. His spending is 12,000. Now also it is same 12,000. Even if your income increases from 15 to, still spending remains. No change in spending. What is it? No change in. Even if income increases. Even if. This is mission impossible. As a normal human being, we have Instagram. We have brand ambassadors to influence you. Katrina Kaif is there. Virat Kohli is there. Sunny Leon is there. They know how to make you people to spend, not to save. So this E0 is like highly impossible in nature, but still we will learn. That means there is no change in quantity demanded irrespective of change in Clear? Next, E negative. What is it, E? Negative. Which good is that? See, suppose in income elasticity, which elasticity? E greater than 1, which good? E lesser than 1. E is equal to 1. Either luxury or necessary. E 0. No change in demand even if income changes. E negative, which good? Okay. Next, let us continue. And okay, now see there, we understood with income elasticity. Now we will go with the most beautiful concept. Which elasticity? Cross elasticity of demand. That means applicable to complementary and see, complementary is dash related, negative. Substitute is dash related. And even I said you, answers for complementary will be negative. Substitute answers will be in. Be careful. This is where is most important. You guys will go wrong. And one more important logic. Listen to this. In cross elasticity, we don't have formula method and arc method. We don't have formula method and then sir, which formula should I use? Straight away the main percentage formula. See, this is the formula for cross elasticity. Percentage change in quantity demanded of one good due to change in prices of another good. You took an example of coffee and tea. If you remember, let's say if coffee prices are increasing, coffee prices are because of that tea demand will increase. That means now first what changed? Price of coffee changed. Because of that, what is the reaction? That means due to change in price of one commodity, there is a change in demand for. Same way, let's say for example, if petrol price increased, which price increased? Because of the demand for bike decreased. Clear? First reaction is petrol price increasing. Dash is a primary factor. Dash is a secondary factor. Clear? So first price will change, later demand will change. So price of one good due to the reaction to the change in demand for other good. And we should convert that into a. So we don't have formula method and arc method. So simple concept. See there. It is a responsiveness or change in quantity demanded for good A due to change in price of. That means first price will change for good B. Because of the demand will change for. And that is applicable for which good? And see, complementary goods are dash related, negatively related. So graph is downward sloping curve. Let's say for example, now price of petrol. What is it? Price of? Is increasing. Because of the demand for dash. Demand for bike will decrease. See, negative relation. Negative means downward sloping curve. Negative relation is dash sloping curve. Next comes substitute goods. Substitute goods are dash related. Positively related. Let's say now the price of coffee is increasing. Price of coffee is because of the demand for tea will also. So positive relation. So graph is dash sloping curve. Upward sloping curve. Graph will be dash sloping curve. Is that clear? Understood. So remember, in case of cross elasticity, we don't have formula method and arc method. Straight away we should use the percentage method. Which method? Okay, look at the board. See, I have given a numerical problem here. This was actually an exam question. I have just changed the names. Anushka, Virat Kohli and all, I have changed the names. See, Miss Anushka owns a coffee shop where she sells how many coffee? Per day for rupees. Okay, first let us write the information of coffee. Coffee price is rupees 10 and she is selling how many coffee? 100 coffee. Due to increase in price of dash. Now she will increase the prices to rupees. Okay, now price of coffee went up to 12. We know that if coffee price goes up, automatically demand for coffee will reduce. Now she is only and only selling how many coffee? And opposite tea shop of Mr. Kohli started receiving all of a sudden more customers and Kohli sells a tea for how much? What is the price of tea? And demand increased from 400 cups to 400 to 500. Now I only need two information. One, price of coffee, quantity of tea. That's it. I don't need this other information. That is cream biscuit information. You should not eat that in exam. Clear? Extra informations. Now what is the main formula? Cross elasticity of demand. Percentage change in quantity demanded of good A. Here which demand is changing? Tea. Day. Price of coffee changed now because of the demand for tea. See here 400 to 500. Price of coffee increased from 10 to. That means which demand is changing? Tea. Clear? Because of what? Percentage change in price of coffee. So this is going to be the formula. Accepted. Now first we should convert this into percentage. Now, what was the price of coffee initially? New price. How much is the difference? How much was earlier? Into 100. 2 by 10 into 100. So 20 percentage prices have increased. Anyone having doubt? How did we get that percentage? Now quantity demanded of tea from 400 to 500. What is the increase? How much was the earlier quantity? Into 100. How much is the quantity changes? 25 percentage demand has increased. Clearer? Now observe. Prices have increased by how much? Demand has increased by how much? So as per that, percentage change in quantity demanded 25 percentage, price changes 20 percentage. What is 25 divided by 20? 1 point. Observe. E is greater than 1. What is it? And for substitute goods, answer should be in positive. Substitute goods answer should be in positive. Is that clear? Understood. Now, observe the problem number 2. If price of price of ink went up by, straight away they have only given in percentage. So no need to worry. No headache of conversion and all. And quantity demanded for pen came down by. Now first question, ink and pen, complementary or substitutes? Complementary goods, answer should be in. Keep this in mind. Most of them will do blunder here only. Okay sir, nice question. Sir, price went up by 25 percentage, quantity demanded went down by 20. Nice sir, demand divided by price, 20 divided by 25. How much is that? Answer is minus 0.8. But stupid fellows, they will only consider positive 0. And ICA know how to pull your leg. They will also give positive 0.8, minus 0.8. You got positive 0.8. Answer is option A, positive 0. CA means, what did I say? They will never say a chartered accountant. Whenever I ask what do you mean by CA, what they will answer? See proof. Why? Because like this silly mistakes. For complementary goods, answer should be in. Substitute goods, answer should be in. So when you're reading the question, first understand, is it complementary goods or in this question, is this complementary or substitute? Answer should be in. Answer is minus 0.8, not positive. Is that clear?
Yes.
Understood. Anyone having doubt? So remember, if the answers are greater than 1 in substitute goods, if the answer is E greater than 1, they are called as closed substitutes. Which substitutes? If the answer is E lesser than 1, not closed substitute. If the answer is 0, this is most important. They are totally unrelated goods. Sir, price of coffee is increasing, demand for bike is decreasing. What, people will put coffee to bike and they will ride? Huh? No, na. Unrelated goods. Which goods? Suppose if answer is infinite, they are dash substitutes. Kindly mark this as important. From this area, the questions are going to come. Be careful. Clear. Understood. Okay, shall I show one problem?
Yes.
Will you solve that problem? Exam problem shall I show? Okay, wait. Shall I show an exam problem? You guys have to solve that exam problem. Wait. Okay. Kindly solve problem number 14. Exam problem. This is exam problem. Problem number 14. I know that I have given answers there. But still I want you to solve it. Solve this problem number 14. The price of 1 kg tea is rupees 50. At that price 10 kg of, the price is rupees 50. At that particular price of 50, 10 kg tea was demanded. If the price of coffee rises from 30 to 40, the quantity demanded for tea rises from 10 to, what will be the cross price elasticity of tea? That is cross elasticity. Tea and coffee, complementary or substitutes? then automatically answer should be in positive. Automatically option B and D can never be the answers. So we have to strike them off. B and D can never be the gone case. Answers can only be between A and C. That's it. See, this common sense has to be there. Done. Answer. 1 point. Everyone were able to do it? Done. Okay, next question. Okay, first let me explain. Advertisement elasticity. See, this is Bachu question. Simple. When you spend more money on advertisement, what is it when you spend more money on advertisement? Automatically, the demanding capacity is also going to increase. Simple. See, prices on spending on advertisement. What is it? Prices on? If it is increasing, that means quantity demanded will also. Now, that has also got three options. E greater than 1, E lesser than 1, E is equals to. What is that? E greater than 1. Let's assume I spent 10 lakh rupees on advertisement, but I got demand worth 17 lakh. Demand worth more proportion or less proportion? E greater than 1. Is that clear? Suppose I spent 10 lakh rupees on advertisement and I got demand of just 7 lakh. Lesser than 1 or greater than 1? Less proportion of demand created. Less proportion of. Next, I spent 10 lakh. I also got 10 lakh demand. E is equals to. That's it. Percentage change in quantity demanded divided by percentage change in price on spending on. When you spend more money on advertisement, there is a high chances that you get more demand. You get dash demand. See, one more question has been asked from that area. See here. Question number 15. Exam question it is. If change in quantity demanded is 60% and change in advertisement expenditure is. See, straight away they have only given percentage. So it will be 60 divided by. What is the answer? 3. See, donation marks. ICA wants to donate the marks here. That is why they are asking such Bachu questions. Is that clear? Understood. So these are the 4 types of elasticity of demand. Price elasticity, income elasticity, cross elasticity and advertisement elasticity. Most important. In every attempt you can find question from this area. And especially from cross elasticity and income elasticity, high chances. And price elasticity, for sure question is going to come. It can come either from total outlay method or any numerical problem or from relatively elastic, relatively inelastic, unitary elastic, any concept wise, that particular concept, numerical problems, what we did. But every attempt you see an exam paper, there is no question paper without coming a question from price elasticity. Either numerical problem or either conceptual based. Any 1 or 2 question will for sure be there. And income elasticity, cross elasticity, price elasticity, you can't ignore at all. That is the most important topic. Is that clear? Okay, now let's go to the last topic of demand, after which we'll take a break for 15 minutes and then we will resume with supply consumer behavior. And hereafter speed will increase much more. See, I said now demand is a base. When you understand demand in a proper manner, straight away we'll go. We'll finish demand, we'll solve the questions of demand. And then we'll take a break. Clear up? Okay. Now let's go to a concept called as expansion and contraction of demand. What is it? Okay, what is the main thumb rule of demand chapter? Whenever price increases, demand Whenever price decreases, demand. See, we are using a word called as increase and decrease. What is it? That is actually wrong. We cannot use a word called as increase and. Then what is the word we need to use? Expansion or contraction? What is the word we should use? That means whenever there is a change in price in PitCat PC, only and only dash is changing. Even that is what law of demand also said now. According to ceteris paribus, all the other elements will remain constant. Only and only price will. Demand will. See, there also we are using a word increase and decrease. But actually we should not use that word increase and. Then what we should use that word as? Expansion or contraction. What we should use the word as? That means general nature of demand curve is a downward sloping curve. See, initial price line is black color line. Initial quantity is also black color line. Now if price goes up, what is it? Price? Quantity demanded. Is it coming near to the origin or is it going away from the origin? That means contraction. What is it called as? Suppose if price goes up, demand is going to contract. And even this point E is moving towards E1. Moving towards where? Suppose if price reduces, price, now observe green color line, is it going away from the origin or coming near? That means if price reduces, demand will expand, demand will dash. This point E is moving towards which side? That means this point E will either move for E1 or either it will move for, we are using a word movement, moving. So expansion and contraction is also called as a movement on same demand curve. Dash is a movement on same demand curve. Expansion and contraction. And in expansion and contraction, only and only dash changes. If price changes, demand will either expand or demand will either contract. Either it leads to expansion or either it leads to a. Is that clear? Understood. Now comes the word increase and decrease. What is it? Increase and. Now this topic is actually interesting. When I say increase or decrease, now price will not change. Price will remain constant except price. All the other elements will change. That means in PitCat PC, now price remains constant. IT, CAT PCs are going to. Whenever this IT, CAT PC changes, now we will draw a new demand line. We draw which demand line? That will be towards right side. Observe this black color line. Which line? This was the initial demand. Now suppose if income increases, taste and preferences increases, or any of the other factors increases except price, we will draw the new demand line towards which side? Observe, price is still remaining constant. Price will not at all change. Only quantity demanded increases. Which demanded increases? Price is still remaining same. Price will not at all change. Remember, whenever demand increases, whenever demand, it will shift to which side? Right hand side. Same way, whenever demand decreases, it will shift to which side? So see, we are shifting. We are not adjusting on the same line like movement E1 to E2 and all. We are shifting. What are we doing? Either shifting to left side or either shifting to. Henceforth, increase or decrease is also called as. Increase or decrease is also called as. But expansion and contraction was also called as movement on same demand curve. Is that clear? Now comes one more beautiful logic. This is where you guys will go wrong. So listen to this carefully. There is hardly one small word difference. That's it. I will teach in the classroom discussion paper. See, in the classroom discussion paper, in the supply, I have given this actually question number 21 and 22. First observe here. This, I know that this is related to supply. But still, let us consider it to demand and let us do it. See there. What is change in quantity demanded? What is change in quantity? And question number 22, what is change in demand? Let's consider what is change in. What is the main difference? This word called as. If the word quantity is mentioned, what is it if the word? It is expansion or contraction. What is it? If the word quantity is missing, what is change in demand or what is change in supply? That is increase and decrease. What is it? Increase or? If the word quantity is mentioned, what is it? Expansion or contraction? Expansion or? This is another area where you guys will go wrong. So remember the word quantity mentioned, then it is called as expansion or? The word quantity is missing, then it is called as? Increase or decrease? What is it? Increase or decrease? Is that clear? Understood. So remember, in case of demand increase, in case of demand, which side shift? They respond, open up your mouth. Which side? Which case of decrease? But this RHS and LHS is only a shortcut to remember. What is it? Actual name. In your ICA material, if you go and refer, you will never see this word called as RHS or LHS. Then what is the real word? Now observe, answer me carefully. This black color line and orange color line. Is this orange color line upwards to black color or downwards to black color? So in reality, it is called as upward shift. Which shift? Upward. That means whenever demand increases, there is an upward shift in demand. When there is a demand curve increase, that is called as? If it is decreasing, now see the green color. Is it towards downwards or is it towards upwards? It is called as dash shift. Downward shift. So increase and decrease is also called a shift in demand curve, either upward shift or downward. But in a shortcut, I always call it as RHSN because that will become easy while understanding supply. When I come to supply, this will make more sense rather than explaining only in demand. Is that clear? Understood. By this, the entire concept of demand comes to an. Before winding up the, let me say, demand concept, one small question for you guys. And my students who have already attended my class, shut your mouth and sit. Clear, huh? Just to solve this one numerical problem and explain me with the explanation. With the question number 16. What is it? Question number? This was actually an exam question. Connection is there even with chapter 6, unit 2. Connection is there even with chapter 6, unit 2. Simple. Question number 16. If income elasticity E lesser than 1, that is normal goods or necessary goods, it means the proportion of income spent on the goods is dash as income of a consumer increases. Let me also show the option. Increase, decrease, remains constant, nothing. Increase, decrease, constant. See, nothing cannot be answered. Increase, decrease, constant. What is it? Increase, decrease, and? Okay, whoever is going to answer this with the explanation. After that, we'll take break. Yes, man, go on. Answer it. What is it? How? Can you please explain? Okay. That means he's saying, sir, whether income increases or decreases, definitely he will spend on that goods, sir. But see, that is not a question. See the question. Understand the question proper. You guys are not understanding the question. Yes, madam.
If income elasticity is less than 1, means normal goods or necessary.
They're actually confusing you by giving the T lesser than 1 and E greater than 1. There is no relation with E greater, E lesser. That is a generic question. Common sense question it is. But still, try, give an answer. This was exam question, 16th one.
Income elasticity less than 1 means normal goods or basic goods. It means that the proportion of income spent on goods will be more because we consume necessaries, right? We spend more on those goods.
So as per you, what is the answer?
Increase.
So she says that it is increasing. If income elasticity greater than 1, proportion of income spent on the goods increases. That is what that E greater than 1, lesser than 1 is just given as a confusion. That is nowhere related.
So if no matter income increases or decreases, if it is a necessary good, our spending will be the same only.
Okay.
So
Answer. That's fine. You tell. What does that answer according to you?
I think it will remain same.
Same, constant. So he says answer is constant. One student said it is increasing. Other student says it is decreasing. I got all three as an option.
They are given consumers income is increase. So obviously positively related, their spending on goods will also increase.
So answer is increasing. Okay, option A, increasing. How many of them feel increasing? Raise your hands. Half of the class. Okay, B, decreasing. Hardly 5 or 6. Hey, you down your hands. Hey, Himam. I will make Hammam soap again. Next, constant. Anyhow, we have leakages in the class. Answer is decreasing, not increasing. But explanation is beautiful here because connection is there for chapter 6, unit 2. Chapter 6, what is that concept? Average propensity to consume. What is it? And here the word, that is the twister in the tail. No one is observing that word properly. Proportion, that means percentage. What is it? What percentage of your income spendings is going to happen? Now let's take the same example, whatever I took as an example. This is income column. Which column? Income column. This is spendings column. Which column? Okay, 15,000 rupees I used to get as an income. I used to spend 12,000. I used to spend how much? Okay, now my income increased it to 20,000. It increased it to how much? 20,000. Clear? Now let's say for example, I am spending let's say around some 14,000. How much am I spending? 14,000. Okay, why? 15. We'll make it as how much? 15 for your better understanding. Round figure. Let's say now my income increase it to 30%. Sorry, 30,000. How much it increase it to? 30,000. No doubt my spendings will definitely increase. Now let's say for example, my spending increase it to 18,000. How much it increase it to? Now my income became 40,000. Income became how much? My spending is only 20,000. No doubt. See, spending is increasing 12, 15, 18, 20. Now let's say for example, my income becomes 50,000. Income becomes how much? Now I am spending 23,000. How much am I spending? 23,000. Now make it as a percentage now. Convert this into a percentage. Now let's say for example, take out calculator. 12 by 15. 12,000 divided by 15,000 into 100. 12 by 15. How much? That means 80% of my income I am spending. Next 15 by 20. 70. Okay, 75% I am spending. Next 18 by 30. 60%. Next 20 by 40. 50%. Next 23 by 50. 40. Now observe, no doubt, my spending is increasing. My question is not about spending. Proportion of spending. What is it? Can you see this question? Proportion. What is it? That means proportion of the income spent on the goods will be dash. That means you tell me, earlier you were spending how much? Next. 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 Suppose my income increases to 60,000. Next my spendings will be no doubt 25,000 or 26, 27, whatever it is. But my proportion of spending, is it increasing or decreasing? Answer. Decreasing. Proportion. That is why understanding the question matters a lot. It's not about giving answer. That is why we call CA means. We love your answer. Come again. See, very simple. I usually say this in the class every time. My students know this. If you have come to the class regularly, if you have understood the concepts, not learnt, understood properly, or not just studied by hearting. If you have learnt properly, if you have understood properly, scoring 60 is damn easy. 60 is never a difficult task. 60 to minimum guaranteed. If you know the concepts, after going back home, if you have sat, if you have done MCQs, RTPs, MTPs, previous year question paper, you are on extra effort. You are on up to 80 guarantee. Up to 80, provided if you control negative marking. If you don't know something, don't do the tinky pinky ponky. Father had a donkey. On the result day, you will become monkey and your friend is Venky. To white 100 fix. If you don't know something, don't attend. Leave it. If you just know 75 question, attend that 75 and come. Don't attend all 100. Gone. Negative marking. Damar. If you are controlling on negative, if you have practiced well, scoring 80 is not a difficult task. Sir, suppose if I have an in-depth knowledge about the subject, interconnections between the concepts like this, how you said now, chapter 6, unit 2, average propensity to consume. There the connection is there from the demand. That word proportion is derived from there. Like this, if you have an in-depth knowledge between interconnection of the topics, scoring up to 90 is guaranteed. Scoring up to 90 is? Sir, what if I need to score beyond 90? Nook and corner of your book, you have a knowledge from ICA material. What is it? Every nook and every statement, every single topic, everything, bloody rascal, everything I know, full on A to Z, nook and corner, right from summary, right from concept, right from MCQ. Every bloody damn thing I have a knowledge. 90 plus guarantee. This is reality. Scoring 60 is never a problem in economics. That is very basic essential score. That is very basic bare minimum score it is. That is guaranteed score. 60 to 80 is your effort after going back home. That is most important. See, in class simple I will teach you how to make plain rice. How to make white rice. Now for that, to add masalas you should know and make it biryani. In exam they will ask you how to make biryani. That means you should add spices. Na? To add spices after going back home you should sit and you should know na, which spices, what proportion, what is it. That is important. This is where your ability stands. And this is where your smartness stands. Beyond this, your in-depth knowledge stands. This is the marks weightage. It's not everyone's cup of tea to score 90 above in a theory paper in a CA level exam. See, your 12th standard and all, you would have scored 100 on 100, 90, 95, 92. That is utter waste, nowhere useful. That is bachu. Score open challenge. Score it and show the same marks what you got in your 12th standard in CA Foundation. Let's see. They're by hearted. Sun rises in, sets in. Bullshit. Sun never rises or sets. Earth is revolving around the sun. This is CA. Sun rising in east and setting in west is your 11th and 12th PU syllabus, your BCom syllabus. Sun is revolving around the sun is, Earth is revolving around the sun is CA syllabus. Same concept explained in different way. This is the actual difference. Simple. Your ability, your dedication, the way you sit and you will solve in the home, or maybe once you are done with the class, how many number of exam questions you are solving, how much RTPs you are solving, how much MTPs you are solving, how many book back questions you are solving, how many scanner questions you are solving, whatever it is. The more you solve MCQs, the more you will become perfect in the syllabus. Practice makes man perfect. That is why I said, this marathon, I will not concentrate only on concepts. I will go with MCQs. You take out any previous marathons and all. I have never discussed any kind of MCQs and all because they wanted conceptual clarity. Which clarity? Literally, the views have gone like 1,50,000, 1,60,000, 80,000, 90,000 and all it has gone. Theory paper, economics going 1 lakh plus view is not a small task. It happened. That is why I said, man, this marathon, I'm not concentrating more on theory. I'm concentrating more on exam questions, the way you have to answer, the way you should analyze. That is where you will go wrong. That is important. Clear. See, one simple word that changed your entire answer. Proportion. What is it? This is how. This is the 80 category question. Above 60 to 80, this is the category of questions. You should be able to analyze the question properly. Is that clear? Understood? Now the time is 10:40. 15 minutes break. We'll start on dot class at 10:55. 10:55 to 1 o'clock. Okay, 20 minutes. Extra 5 minutes bonus. Enjoy. On dot, we are going to start at 11 o'clock. 11 to 1:15. 11 to, again, 1:15 to 2 lunch. Consider lunch. 2 to 4. Shall I take it till 4? See, I have to extend. If without extending and all, today micro, at least till chapter 4 we should finish. At least till chapter 4. Still, exam questions I need to solve. After supply, I will come to exam questions. I will solve demand and supply full and then we will go to the consumer behavior. Is that clear? Understood? Chalo, take a break, come back. And tomorrow morning, we'll start at 7:30. Better, 7:30 we'll start. No, chalo, take a break, come back. Okay, so we are done with the demand. Now we are going to continue with the supply. Settle down fast. So this is the trouble. After giving break, at least 2-3 minutes in advance, you have to come. Not at the fag end moment. Okay. Look at the board. So we are done with the concepts of demand. Now we shall start with the concepts of supply. See, even before starting supply, there is some correlation between demand and supply that we need to understand it first. See, the whole concept of demand we studied from consumer point of view. Whose point of view? And remember, I explained you about total outlay method. That is also called as TR. TR, AR, MR. There are 3 concepts which I didn't explain it in chapter 2. I shall explain this in chapter 4. So remember, average revenue. Which revenue? That is also called as demand curve. What is another name of demand curve? Average revenue. And demand and supply, both are flow concept. What is it? Demand as well as supply, both are dash concept. Flow concept. So what is this flow concept? Let us understand. Now, even the meaning of supply is hidden in this. Now, let's assume that I have 1 acre plot of land. Assume I'm growing paddy. What am I growing? Paddy. And let's say I have grown 100 bags of paddy. How many bags of paddy? 100 bags of paddy. Now, I will not sell the entire 100 bag. Let's say out of this 100 bags, I'm going to only supply to the market how many bags? So, supply is a part of stock. What is supply? Which is offered for sale. Which is offered for? See, this 80 bag is a part of this 100 bag. Clear. So, supply is a part of dash. Supply is a part of stock which is offered for. That is called as supply, and that is a flow. That means we can calculate this at any point of time. When I say stock, I am only calculating at one particular time or at that particular moment. Let's say balance sheet as on 31st March 2025. That means I am calculating a balance sheet only on that one single day. Balance sheet as on 31st of March. That means this is a stock on that particular time. But flow, I can calculate. Let me say after 3 months, what can be the demand? After 6 months, what will be the demand? Simple example, sir, there is a water tank at the top of my home. The water tank has got half water. Water tank has got how many water? That is stock. That means, say, there is a pipe, sir, the water keeps on dripping from this. And this is flow. What is it? Flow. Flow gets added to the stock. What is it? Flow gets added to the stock. So, both demand and supply, both are dash concept. Both are a flow concept. We can calculate them. We can analyze them. What is going to be the demand next 3 months down the line? We call it as demand forecasting. What is the demand? And even supply forecasting. Clear? So both demand and supply are a dash concept. Demand and supply are a flow concept. And what is supply? Supply is a part of stock which is offered for. See, again, supply refers to the amount of goods and services that the producers are willing and as well as able to offer to the market for a particular price and a given period of time. See, once again, we are understanding about the time, price, ability and willingness. So, same concept what we studied in demand. So, demand consumer point of view, but supply manufacturer's point of view. Clear? So, determinants of supply. What is the next concept? See, determinants of demand. PITCAT PCs. We studied with the shortcut. Accepted. Now, determinants of supply. The very first one, again, price. Now, since I am understanding from a producer point of view, whose point of view? Now, you tell me, being a producer, would you be interested to supply more units when prices are more or when prices are less? That means when price is increasing, I will produce and supply more. And if the prices are less in the market, will you supply more? No, you will supply less. Clear? So, there is a positive relationship. Which relationship? So, the relationship between price and supply is dash related. Positively. And see there, law of supply, relationship between price and supply expressed in a mathematical equation is called as dash function. Now, S is equals to function of price. What is it? S is equals to function of price. That means, again, functional relationship, positive and negative. But in supply unit, we give more and more importance to positive relationship. We don't focus much on negative. Yes, we also have a negative relationship, but we will not focus much on negative. We are focusing much on. See, the very first determinant, price. Next, price of related goods. What is it? Price of? Now, let's say Shashikiran is a chocolate manufacturer. Now, I understood, more than selling chocolate, if I come up with ice cream, people are willing to buy more ice creams than a chocolate. Suppose if ice cream prices are increasing day by day in the market, that is making me more profitable than selling chocolates. Now, which one should I produce next? Ice cream, na? Rather than producing chocolate, I can still sell ice cream. Produce and sell the ice cream. So, automatically, when you are substitute goods, which goods? Prices are more. You will be interested to produce that substitute good. That is related good. Remember, related refers to substitutes and complementary. What is it? Substitutes and? Or we can take the same example. Let's say there is 1 more acre plot of land next to mine, which belongs to Mr. Kohli uncle. Which uncle? Kohli uncle. And there is 1 more acre plot of land, which belongs to Mr. Dhoni uncle. Now, let's say Shashikiran is growing paddy, Kohli is growing ragi, and Dhoni uncle is growing sugarcane. Now, by selling this 80 bags, Shashikiran earned, let's say, 1 lakh rupee. How much did I earn? Now, let's say Kohli uncle, by selling that ragi in 1 acre plot of land, he is earning 1,20,000. Now, Dhoni uncle, by selling sugarcane, 1,50,000. Now, next year, which crop should Shashikiran grow? Why? Because, sir, you will earn more income comparing to ragi and paddy. So, rather than growing paddy, now you can grow Sugarcane, substitute now on this land rather than growing paddy, now I can grow sugarcane. Related good, substitute good. If that prices are more, automatically your product supply will decrease. See, negative relation is there, but we don't focus much. That means even because of substitutes and complementary, supply will change. Third one. See, today's word, technology is highly interdependent with each other, business and technology. Without technology, we can't perform business. If technology is advanced, productivity will also increase, supply will also. Next, factors of. How many factors of productions are there? Which are those? Land, labor, capital, and organization. Will land, is it available for free of cost? We should pay. Labor, is it available for free? We should pay. Wages or salary. Capital available for free? No, what we should pay? Organization expects in return. Now you tell me, as a business owner, when you pay more rent, are you happy or less rent? More and more wages, are you happy or less wages? Okay, more interest to the banker after taking loan or less interest? Now comes beautiful, more profit or less profit? Selfish fellows, you need more profit but less rent, less wages. Yes. Am I running any charitable organization? What is the intention of doing business? That means if other cost of factors are less, my profit will be. Then only I am interested to produce and supply more. Suppose if other cost of factors are more, your profit will be. Then automatically supply will decrease. See, negative relation. If the cost of factors are more, supply will become less because your profit is less. If the cost of factors are less, your profit is more, then I will produce and supply more. Even because of factors of production prices, supply will vary. Last but not the least, dash policy. See, if government comes with unnecessary rules, regulation, you should not do that, you should not do this, blah, 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 blah. Are you interested to produce? Will supply increase? Government policies should be friendly. If government policies are restrictive in nature, productivity will decrease. Supply will decrease. Like this, still more, lot many factors are there. For example, expectation of future change in price. What is it? Expectation of future change. Let's say next week there is a festival, Ganesha festival coming up. Prices are going to increase. When will you supply more? Now or future? Present supply decreases. In future price increase, present supply decrease. Suppose in future price will decrease. When will you supply? Present supply. Increase. Say negative relation. Yes, we also have negative relation, but we don't focus much. We don't focus much. Clear? So these are the determinants. Price, price of related goods, technology, factors of production, government. Policies. Clear? Next comes law of supply. Same statement. All the other elements remains. Constant. Price increase, now supply will. Decrease. Price decrease, supply will. So supply function is not only just relation with price, it is relation with all the determinants, price of goods, price of related goods, prices of factors of production, technology and government policies. Clear? So this is supply function. See, exceptions to law of demand we studied, if you remember, Giffen's goods, conspicuous consumption, conspicuous necessaries and all. But here we don't study in specific something called as exceptions to law of supply. Clear? Supply schedule representing supply in the form of a table, supply curve representing supply in the form of a graph. But now we have a positive relation. That means price increase, supply will also increases. Price decrease, supply will also decrease. So dash relationship. So graph will be dash sloping curve, upward sloping curve. Next comes elasticity of supply. Straight away relation is with. Whenever price changes, there is also change in quantity supplied. So we are main focus is only towards price. We are not using a word some determinants. In demand we used a word called as price, income, cross, advertisement. These were the some determinants. But here straight away we'll use a word called as because of change in price there is going to be a change in supply. That means 5 types of price elasticity we had now. Same thing is types of supply elasticity. Relatively elastic, E greater than 1. Relatively inelastic, E lesser than. Unitary elastic, E equal to. Perfectly inelastic, 0. Perfectly elastic, infinite. Even meaning remains the same. We should just change the word. Instead of demanded, we should call it as. But supply is dash relation. So graph will be, say, relatively elastic, flatter. Relatively inelastic, but it will be upward sloping flatter, upward sloping steeper. Now one more extra topic we should remember. See, usually supply curve will not cut the axis. But suppose if it gets extended, what is it? Suppose if it gets now relatively elastic will cut y-axis. Which axis will it cut? Relatively inelastic, steeper curve is going to cut the x-axis. So remember, in relatively elastic, if supply curve gets extended, see, it is a flatter supply curve. What is it? When it is getting extended, now it will cut which axis? Y-axis. In relatively inelastic, if supply curve gets extended, it will cut which axis? X-axis. Clear? This alone we have to remember. See in the table. Now flatter supply curve. If supply curve gets extended, relatively elastic at which axis? Y-axis. Relatively inelastic will cut. See, steeper supply curve, flatter supply curve. But in unitary elastic, general nature, upward sloping curve, if it gets extended, now it will intersect at origin. Where will it intersect? Origin. Only in unitary elastic, it will intersect at origin. Yes, boss.
Sir, when it is steeper or flatter at the point where it touches y and x, is it autonomous subset or is there some other term for that?
See, there is a term, but not covered. So don't go deep into that. Usually chances are very low. See, usually they will not ask. That is usually an autonomous part. Clear? That means we are not at all, let's say for example, at that particular price level. Price level is 0. At that point of time, still, let's say for example, this is the amount of supply which is there in the market. Now let's say for example, if it is cutting on the x-axis, wherein which this is the particular point, wherein which this is the minimum quantity. What is the minimum? By default will be there anytime. Autonomous. What is it? Autonomous part. Clear? So you don't go deep into that. Usually such question, advanced level question, there's usually inter-level questions those are. In foundation till date, they have not asked. Suppose by chance if such question comes, suppose if you are having enough knowledge of it, well and good. But if you observe the past 7 years paper, such advanced level never had asked them. Clear up? So I am not touching those points. Clear? So remember only this extension you have to remember. That is where more focus is given. Unitary elastic extension. What is it? Unitary elastic getting extended will intersect at origin. In relatively inelastic, it will intersect at x-axis or it will cut the x-axis. In relatively elastic, it will cut the y-axis. Is that clear? Now, the important thing which we have to remember is a numerical problem from that. I said you, if you remember, from the demand function, there is a numerical problem. They will ask elasticity out of it. Even from the supply function. From which function? Say supply function, Q. That is quantity supplied, is a functional relationship with price. That means S is a function of price. Instead of S, they will say quantity supplied. What is it? Quantity. Now they will give a question like this. And there are two concepts which we have to remember. Slope of demand curve, slope of supply curve. Along with that equation. Now, whenever we are drawing the curve or whenever we are drawing the graph, observe. First, we will plot y-axis, x-axis. Now, let's say demand curve. For a time being, demand curve. What is the nature of demand curve? Downward sloping curve. Now, what does y-axis represents? X-axis represents? So, it is always first importance is given to price. Primary factor is dash. Primary factor is? Secondary factor is? So, remember, slope of demand curve. What is it? Slope of? Once the question has been asked, slope of demand curve. Change in price divided by? What is slope of demand curve? Change in price divided by? Clear? And we used a formula method. If you remember, formula method to identify. Same to same applies even in supply also. Formula and arc. What is it? So, what is the formula method's formula? Price by quantity into change in quantity divided by. Now, this, listen to this carefully. This is where usually you guys will go wrong. Now, they will give a numerical problem. Let's say, for example, Q is equals to 120 plus, let's say 0.7p. Q is equals to 120 plus 0. So, remember the 0.7 induced part. Which part is it? Induced part can also be referred as change in quantity by change in price. What is the change in quantity by? See, whatever this induced part is there, this is referred as that B. Induced part B. What is it? Induced part? In many numerical problem, they will not give this value of induced part. Whatever the value that we can identify by change in quantity by change in price, that is used in the induced part. That is used in which part? See, sometimes in an exam, they can ask any permutation combination. They will give, let's say for example, elasticity of supply. What is it? Elasticity of? Is 1.25. Initial price. Let's say initial price is 10. We have to understand the new price. The quantity of supply. Let's say it was 100. Later it becomes 250. Later it becomes See, quantity is increasing. No doubt price will also increase. But I should identify this new price. Identify this. So now they will give an equation like this. They will give a what? Equation. They will also give a price. Let's say price is rupees 10. Price is rupees. We should identify the quantity. Price is also given. Now they will ask you to identify elasticity of supply. What is it? Let me show that question. Wait. Can you see this question number 29? See the question number 29. A consumer is going to buy how many units? 100 units of good at a price of rupees 6 per unit. Suppose price elasticity of demand. Already demand elasticity is given. How much is that? Minus means inferior goods. Okay, let's assume for a time being ignore minus. Demand is 3. At what price? At what? That means new price. Already earlier price. Initial price P is given. This is P1. Now they are asking you to identify the P2. At what price they are going to buy how many units? 80 units. Now simple. First write it down like this. Wait, let me use a new sheet for your understanding. Now they have given elasticity of demand, that is minus 3. Price is there, quantity is there. What is the initial price? Initial price is 6. Clear, quantity is 100. Initial price is 6, quantity is 100. Now we should identify this new price. And they are saying quantity is 80. Clear. Now observe. Now we have to solve this problem. See, straight away we can convert things into percentage. We can convert things into, because we have a quantity. Now observe here. Quantity, I know that. From 100 it has reduced it to 80. What is the difference in quantity? Earlier it was how much? 100 into 100. How much percentage? 20% demand has gone down. Clear. And we know the formula. Price elasticity of demand is equals to percentage change in quantity demanded divided by percentage change in price. Now we should identify the percentage change in price. We know the price elasticity of demand. How much is that? Minus 3 is equals to 20 divided by new price. Simple. Price will go to LHS. Minus 3 will come to RHS denominator. So P is equals to 20 divided by minus 3. Answer 6.666. Clear? That means price is increasing, or sorry, price elasticity, negative relation. Price is decreasing. Wait. Oh, okay. Demand decrease. So price will increase. Sorry. Price will increase by how much percentage? 6.6%. Now you tell me, what was the initial price? Hello, 6. Now 6.6% of 6 rupees. What is it? 6.6% of 6 rupees. Do it. 6.6 divided by 100 into 6. How much is that? 6.4. Answer is 6 point. Clear? Got it? See, any permutation combination the questions can come. See, I would have asked you to do it in a very simplest way. But they will mix match. They will ask you to identify the new price. They will ask you to identify which price? Clear. Now price is increasing by 6.66%. Initial price is 6. In that 6.66% is 0.4. What is it? 0. Initial price is 6. Another 40 paisa getting added. So 6 rupee, 40 paisa. See, this is how the questions are going to be. You need to practice. Is that clear? Next one. Wait, let me also show the different type of questions that has been asked. Okay, let me go to the September attempt. Now you guys only solve it. Question number 9. The price of the commodity is rupees 10 per unit. At this price, quantity supplied is how much? 500 units. Now price elasticity of supply. Already they have given elasticity. How much is that? 1 point. At what price the quantity supplied will be 20% more? What is the initial quantity? What is 20% of 500? 600. That means I have old quantity as well as new quantity. But I only have an initial price. I don't have a new price. First write down all the information. So what all information is provided? Now simple. They have given you information about the initial price, initial quantity. Okay. What is initial price? 10. What is initial quantity? 500. Okay, sorry. Wait. 500. Now they are saying 20% it is increasing. What is 20% of 500? Another 100. So 100 plus 500? 600. They have given elasticity of supply. Elasticity of supply is 1.25. What is it? 1. See, same to same. Apply the main formula. Elasticity of supply is equals to percentage change in quantity supplied divided by percentage change in price. Already elasticity of supply is given. How much is that? 1 point is equals to percentage change in quantity supplied. How much? Price has to be identified. Now simple. Price is equals to 20 divided by 1.25. How much percentage? 16 percentage. What is 16 percentage out of 10? 1.6 rupees. How much is that? So 10 plus 1.6 rupees. 11.6 rupees is the new price. 11.6 rupees the clear? Understood? See, this is how the questions are going to be. 11.6 is the answer. Is that clear? Understood? Anyone finding it difficult? Online students, is that clear? Okay, next one more question. I will give it in the form of equation. See, question number 7. Question number 7. The demand function of the product X is expressed as Q is equals to 1000 minus 50P. 1000 minus, where Q is quantity demanded, P is price. When price is 10 rupee, they have only given price. See, what is it? Q is equals to 1000 plus, how much is that? Minus 50. What is the value of P? 10. See there, they're asking you to identify dash. They're asking you to identify price elasticity. What are they asking? Elasticity they're asking. Is that clear? Now, okay, 10 is the price. Now in this place we have to make it as 10. 10 is going to come. 50 minus, this is 1000 of quantity. 1000 minus 500. So quantity is how much? 500. We also have a price. Price is how much? Rupees 10. They're asking was elasticity. What are they asking? What is price elasticity? Formula method. Formula method. P by Q. See, because I have a price and I also have a quantity. Depending upon the available information, I'm using the formula. Clear? P by Q into change in quantity divided by, pause for a second. What did I say? Change in quantity and change in price is also an induced part in the equation. What is it? Induced part in the equation. What is induced part? 50. Straight away I can use that 50. Clear? Now see there. Automatically price is 10, quantity is 500 into induced part 50. How much is the answer? 500 divided by 500. Answer is clear. Understood? But answer is -1 because price elasticity is inversely related. Which related? See, if the corresponding negative value is given, formula method has the disadvantage. Without ignoring negative, we can't solve the problem. We have ignored negative. We have ignored. Clear? I said you, if the corresponding negative value is mentioned in the answer, corresponding negative is going to be the answer, not the positive. Is that clear? And price elasticity is inversely related. Which related? See, this is where another area you will go wrong. Sir, answer is 1. No, minus. Is that clear? Understood? See, this is where you guys will go wrong, especially numerical problems. This is how the numerical problem comes. So that is why I'm taking from exam paper only. Okay, this is, let us see. Some more problems are there. Okay, this we solved, this we have solved. Okay. Okay, look at the board. Look here. Question number 83. Question number? What is the slope of? Just now I said now, y-axis divided by x-axis. First changes in price, next changes in quantity. Change in price by change in quantity. Okay, chalo, next. See here. A shopkeeper is selling how many commodity? Product A and product. Their dash substitute. Common sense. If you remember, I also made you to write that in case of close substitute. Which substitute? See here, close substitutes. E is Now I need not to solve the question. I don't even need to solve the question now. Straight away I can tell the answer in close substitutes. Which substitutes? Substitute goods answers will be in positive. If it is close substitutes greater than, definitely B and D cannot be the answer. It should be greater than 1. Common sense. But still, sometimes it doesn't work for you in exam. Still, you will solve the problem. See there, either close substitutes. It is observed that the price of the commodity rises by, and the demand is increasing by. What is 30 divided by 20? 1.5. And substitute goods. So answer should be in positive. See, this is how I say donates marks. And for that, logic is important. Sir, you are making it so easy, but last attempt, same question, we have made blunder, sir. Why? In exam, you didn't know how to solve. Why? Because after going back home, reading will not serve purpose. Practicing. What is it? Practice makes man perfect. This is the reason. You should not just read. Reading will alone not serve the purpose. Practice. Next. See there, question number 88. If the price of the wheat increases from 1800 per quintal to 1200 per quintal, and consequently the quantity supplied rises from 2000 to, now simple, price, quantity. What was the price initially? 1800. Later it became how much? 2200. Quantity was initially, it became how much? Calculate elasticity of supply. Straight away. Now P by Q into change in quantity divided by change in price. Do it. Initial price 1800 divided by initial quantity 2000 into change in quantity how much? 1200. Change in price how much? 400. Solve it. Now simple question it is. 4 ones are 4 fours are. Clear? 18 into 4.
4 3s at 12.
4 3s are 12. Sorry. 4 3s are 12. Sorry. My mistake. 18 into 3. 2020 Matash. Simple.
2 1 to 10.
2 points. Clear? And already we said elasticity. That is perfectly elastic is E. 90th question. Easiest question it is. 90th one. Have a look here. The supply function. Which function? Q is equals to 120 plus 6P. Find the elasticity of supply when the price is 10. Simple. In the place of P, make it as 10. 6 into 10, 60. 60 plus 120. So quantity is how much? But what are they asking us in the exam? Elasticity of supply. Simple. P by Q. What is it? P by? Into change in quantity by change in price. We know that this change in quantity by change in price is an induced part. What is that induced part? 6. We have a price just now. They have only given price now. How much is that? 10. Just now we identified quantity. 180 into 6. 6 into 10 is 60 divided by 180. 6 ones are 6. 1 by 3 positive supply. Positive relationship. Supply is which relation? Demand is inversely related. Clear? How many of them made this questions blunder in your exam? Please raise your hands. Such a easy questions da.
Minus what we should say.
Supply na. Supply is positive relation. Price increases, quantity also increases. That means it is inferior good now. Which good? Next. See, just observe how many numerical problems have come in this one single attempt. 1, 2, 3. See, 3 marks. Demand and supply numerical questions. How many? Free of cost. 3 marks. They are trying to donate you. But you guys are not accepting the donation because you are rich kids. Da. You don't want donation only. What to do? See, this is how the questions will be. Clear? That is how easy it will be. See, even supply. See, relatively elastic, flatter. Relatively inelastic, steeper. Unitary elastic, upward sloping straight line intersects where? Intersects at. See, perfectly inelastic. Even graph remains the same. There is no change in graph. That is vertical. Which graph? Whether price increases or whether price. Quantity will remain. Next, perfectly elastic at the given price level. Quantity supplied cannot be determined. E infinite. Concept is myth or unrealistic. Formula method, arc method. Only 2 methods are there. Next comes here. Expansion and we did with expansion and contraction of demand. What was the reason for expansion or contraction? Due to change in, also called as movement on same demand curve. Here, movement on same supply curve. Simple concept. Point E will move for E1 or it will move for. Now, whenever price goes up, whenever price, observe quantity going away from the origin or coming near to the origin. Away from the origin, accepted. See, this Q1 is happening. Now, from Q it is going to where? Q1. Away from origin or near to the origin? So, expansion or contraction. So, if price goes up, supply will. Suppose if price goes down, now it is coming near to the origin. From Q to Q2, it is coming near. So, what is it? Clear. Understood. Next comes increase or decrease. What is the reason for increase or decrease? Due to change in except, and it is also called a shift in the supply curve now. Which in the supply curve? Simple. Supply increases, RHS shift. Supply decreases. But life cannot be so simple with ICAI. So RHS and LHS is only shortcut. RHS and LHS is what? But the real word is upward shift in. Now 1 second. Turn back your pages. Demand. Was it upward or downward? RHS was upward or RHS was downward? Upward. Wait, let me draw the graph for you. Why confusion? Let us draw the graph. See, demand is downward sloping curve. This was the initial price. This was the initial quantity. Now there was a new demand curve. That new demand curve was upwards or downwards? See, this is the initial price, initial quantity, initial demand curve. Now this is D1. We called it as RHS shift. Which side shift? RHS shift. See this RHS shift. Is it upwards to the black color or downwards?
Upwards.
Now kindly observe the supply. This black color and orange color. Is this orange downwards or upwards? Which side shift? So when supply increases, downward shift. When demand increases, life goes to confusion. So to make it simple, what did we said? Whether it is demand or whether it is demand, we know downward sloping. Supply, we know which side shift? Right hand side shift. But life cannot be simple with ICI. You don't have to write it as RHS. You should remember as what? How do you remember? Plot the graph and then come to the conclusion. Don't just do inky pinky ponky. It will not work. So shortcut to remember is RHS. What is the shortcut to remember? Same way, when it decreases, what is it? LHS. Even in the demand, it will be LHS. See, observe. So this was the demand curve. This was the price. This was the quantity. Now there is a new demand curve which is coming towards the left side. Coming towards which side? See, this was the initial demand. Now this is going to be the new demand curve D1. Now this new demand curve is towards left side. Which side is that? This is the new quantity. Let's say Q1. This is the initial quantity Q. Now you tell me, is this left side, whatever we are calling it as LHS, compare, and you tell me, is the black color line and green color line, is this green color line downwards to the black or upwards to the black? So it is called as dash shift. Downward shift. Now observe in the supply concept. Now in the supply concept, is this green color upwards to the black color or downwards to the black color? What is it called as? Upward. Welcome to ICI. This is how they will screw your happiness. So that's why I didn't use the word upward and downward. I used as RHS and I said, now this will make more sense when I explain supply. See, remember RHS and LHS. Increase RHS, whether demand or whether supply, right hand side shift. But in exam, they will never use a word right hand side and left hand side. That is only a shortcut to remember. What is it? But the actual concept is upwards and by this supply also comes to an Khatam, that's it, supply. Whatever we studied in demand, opposite is going to be the. Now comes the interconnection between demand and supply, both put together. That is called as equilibrium. What is it? Called as market equilibrium or industry equilibrium. What is it? Market equilibrium or industry equilibrium. So don't write anything. Look at the board. Let me explain the concept. Later you can draw whatever you want. So what is the nature of demand curve? Nature of demand curve is a downward sloping curve from left to two. Is this clear? What is the nature of supply curve? Upward sloping curve from left to two. Is that clear? Now, the point where demand and supply intersects, that is called as, remember, at the point of equilibrium. What is it at the point of? The price which gets established, the price which gets, that is called equilibrium price. What price is that? And that equilibrium price is also having one more name. What is that one more name? Market clearing price. What is it also called as? Clear. Let's assume Shashikiran, he was selling chocolate for rupees 10 and he was selling 100 units of chocolate. That means Shashikiran is also willing to sell 100 units of chocolate for rupees. Even customers are ready to buy it for rupees 10. How many chocolates? Buyer's willingness is matching with the seller's ability. Ability, willingness, both are matching between buyer and seller. But Shashikiran is greedy fellow. He doesn't want to sell for 10 rupee. Intentionally, I will increase the prices. What I will do intentionally, I will. We know it already. Whenever price goes up, whenever price, automatically demand will contract. Changes in price, expansion and contraction. What is it called as? Expansion and accepted. Now observe. This will be the new demand and this will be the new supply. Accepted. Now let's say Q1 and this is as Q2. Now Shashikiran, greedy fellow, because he increased prices, because he increased to rupees 15. Now demand, people just want 70 chocolates, but Shashikiran is supplying 130 chocolates to the market. How much am I supplying? 130 chocolates, but how much people are demanding? Now you tell me, people just need 70, but how much am I supplying? Now this particular region, so this region is where supply is more than demand. This is excess supply. What is it? Excess supply. Whenever there is excess supply, automatically you will start giving offers, promotions to attract customers because people are not buying more, na? But you are supplying more. Products are available 130 units, but demanded only. To sell more and more units, you will start giving offers and promotion. That means effect of price. That means again it should come back near to the equilibrium. So prices will decrease whenever there is excess supply. Okay, now Shashikiran did other way around. Stupid fellow Shashikiran, instead of increasing the price, he wanted to disturb the market. Intentionally, he decreased price. What did he do? Intentionally, because Shashikiran decreased price, that means he is coming to P2. That means now he is charging only 5 rupees. How much is he charging? 5 rupees in the market. That means automatically now people will start demanding more and more. Now people want 130 chocolates. But Shashikiran, since prices are less, he is supplying only available quantities only. But demand is 130. Now that means this is the region where demand is more, supply is. So this is the concept of excess demand. What is it? Excess demand. When there is more demand in the market but products are less, what will happen to price now? Increase. It has to go near to the equilibrium. So effect of price will increase. What is it? Effect of price will? See, conclusion very simple. When there is excess supply, prices will. When there is excess demand, prices will. But only and only at the point of equilibrium. What is it? Only and only at the point of price remains constant. Price remains. That means, remember, whenever total demand is equal to total, this is called as which equilibrium? Industry equilibrium or market equilibrium. When total demand and total supply both are constant, that means both are equal, dash remains constant. Price is constant. Price will not at all vary. Price remains constant. Such price is called as market clearing price. Which price it is called as? Market clearing price. See there? Equilibrium refers to the market situation where quantity demanded is equal to quantity. The point of intersection between the demand and supply is called as equilibrium. At that equilibrium price, the amount the buyers want to buy is equal to the amount the sellers want to. Only and only at the equilibrium, both buyers and sellers are. Henceforth, equilibrium price is also called as market clearing price. Is that clear? And microeconomics. Which economics? The central focus of microeconomics is deciding the price. So, microeconomic theory is also called as clear. So, this is the concept of market equilibrium. Which equilibrium? When does the price of goods and services remains constant? Only and only at the equilibrium. Only and only at the. If there is excess supply in the economy, prices will. If there is excess demand in the economy, prices will. But only and only at the equilibrium dash remains constant. And such price is also called as dash price, market clearing price. Which price? Market clearing is the clear. Understood? So this is equilibrium, and based on this equilibrium, there are many questions that can be asked. If you remember in the class, even I have done this. Let me show that. See, there are different scenarios are there. Different. See that change in demand when supply is constant. What is changing? Demand. Two options. One, demand can increase or demand can decrease. Now, just now we identified when demand increases, which side shifter? See, black color line, proper normal demand, normal supply, normal equilibrium, black color. This is basic skeleton. Normal equilibrium at this level. Now, when demand increases, which side shifter? Only and only demand is going to which side? Now, see, this is the new equilibrium point. At the new equilibrium point, equilibrium price is also increasing, equilibrium quantity is also. So, now in the exam, question comes like this. When demand increases and supply remains the same. When demand increases in, it will lead to dash. It will lead to option A, increase in price. Option B, decrease in price. Option C, increase in price, decrease in quantity. Option D, increase in price, increase in quantity. Option D, increase in price, increase in. So you can't guess the answer. You should plot a graph like this. See, when the question comes, when demand increases, supply remains constant. First, draw the graph like this. Freehand diagram. Demand, supply. This is supply. This is. So this is equilibrium price, equilibrium quantity. Now take the different color. Demand is increasing. Which side shift? Now this is new equilibrium. At this new equilibrium, what is happening to price? What is happening to quantity? Price is increasing. Quantity is also. Like this, you should come to a conclusion. Suppose if demand decreases, LHS shift. If supply increases, RHS. Supply decreases. Okay, let's go to simultaneous change now for your better understanding. See there, simultaneous change. In the class, minimum 20 conditions I have given in the class. They have practiced all the 20 conditions. Every individual condition answer was different. You can't guess the answer. You should plot. You should only plot and then only you can get to know the answer. See there, demand increases more proportion than supply. What does it mean? Both are increasing. Demand is also increasing. Supply is also. But which is increasing more? Demand. See there, gap between D and D1 is more. Gap between S and S1 is less. So this new color, this is the new equilibrium. At this new equilibrium, price is increasing, quantity is also. But which is increasing more? Quantity is increasing more or price is increasing more? Even this can be a question. Dash increases more, price or quantity? Yes, like this, any confusing questions can also come. Be careful. Next, see there. Now you guys only do this. See there. Supply increases more proportion than demand. Supply increases with side shift. Demand increases. See, supply more, so gap is more. Here gap is less. Is that clear? So price is reducing, quantity is. Okay, do one thing. Now, I will give a question. You guys draw the graph and let me know the answer. Write on. Write on. Demand increases more proportion. Demand increases more proportion. Supply decreases less proportion. Demand increases more proportion. Supply decreases less proportion. Identify the price and quantity. What will happen to price? What will happen to quantity? Demand increases more proportion. Supply decreases less proportion.
Quantity decreasing is more than price decrease.
No, let them do it. Also, let others do it. So in this case, which is increasing more? Hey, question da, demand is increasing more. So gap between D and D1 should be more, like this. Next, supply increasing or decreasing? LHS or RHS? LHS, madam, decrease, LHS, decrease means LHS, increase means RHS, na? So decrease, more proportion or less proportion? Less proportion, see S1. So this is the new equilibrium point. Now at this new equilibrium point, now you guys have to tell me what is happening. Prices Quantity is. So price is increasing more, quantity is increasing less. See, price is also increasing, quantity is also. But which is increasing more? Price increases more than increase in quantity. Shall I show the exam question? Will you draw the graph? Pakka? Okay. Chapter 4. Kindly solve the question number 55. What will happen to the equilibrium price and equilibrium quantity when the demand increases and supply decreases? Now listen, they have not given which proportion. They have not given. Consider equal proportion. Consider which proportion? See, whenever you are considering equal proportion, either price or quantity, any one is going to remain same. That means it will be uncertain. What it will be? Uncertain. Now do it. Others. All my students who have already attended, you guys remain silent. First time students, first time who is attending my classes, you guys have to answer now. Let's see. Now what are they saying? What will happen to equilibrium price and equilibrium quantity? Demand will increase. Supply will decrease. Now look at the board for a second. People who are struggling. First plot your normal x-axis and y-axis. Clear? So this is supply curve. This is demand curve. So this is the point of equilibrium. Identify the price and quantity. Equilibrium price, equilibrium quantity. This is the equilibrium. Now they are saying demand is increasing. Demand is what? Let's say 10%. Let us consider equal proportion. Now demand is increasing. So this will become D1. Supply is decreasing. Supply is? That means LHS shift. Same proportion. Same 10%. It is decreasing. S1. Now observe. This is the new equilibrium. Now at this new equilibrium, observe. If I try to extend the price line, it is almost the same. Price remains. Price or quantity? Then when I say price remains same. Do you agree? Yes, sir. Price remains same. Stupidity. What is it? Quantity is remaining same. So we can also call it as quantity is uncertain. Quantity is uncertain. Clear? But now what is happening to the price? Price is. So in this case, price is increasing. Quantity is uncertain. What is it? Price is rising. But quantity of equilibrium is option B. Clear? CS questions are coming in the exam. Next, one more question. Let me ask it. Wait. Chapter 4. See, I have divided chapter wise, so it is easy to find now. Question number 13. When a decrease in demand, there is dash. That's it. That means supply remains constant, demand is decreasing. Plot the graph, let me know the answer. Decrease in? Both is decreasing, Everyone got the answer? Were you able to do the graph? Okay, one more question. Last question. Let's see. See, in every attempt, one question is coming from that area. Question number 32. In case of demand decreasing and supply increasing, what is the expected impact? They are not giving proportion. That means consider same proportion. Price remains same. Wrong. Equilibrium price false, but quantity remains constant. That is uncertain. Only equilibrium price is going to fall. See, in every attempt, one question is there from that area. So you can't ignore. Okay, shall I show one more exam question? So my students, already we have done this in the class. You guys shut your mouth and remain silent. Now let them do it. Let them. Clear? Okay. Now kindly write down this graph first. Write this graph first. Bangalore competition. See, this is the initial demand, this is the initial supply. What is it? This is initial supply, this is initial demand. So, point 1 is the initial equilibrium. If demand increases, D2. If supply increases, S2. If demand decreases, D3. Supply decreases, S3. Clear? Based on that, total 9 different equilibrium points are there. They will give certain scenarios. You need to understand the scenario. You should then decide whether demand increasing or decreasing, supply increasing or decreasing. You should plot the new curve and you should know which is the new equilibrium point out of this 9. So first write down this graph. First write this graph. So what is the initial demand and initial supply curve? S1 and D1. So what is the initial equilibrium? Point 1. Point 1 is the initial equilibrium. If demand increases, D2. Supply increases, S2. If supply decreases, S3. Demand decreases, D3. If you want, I will show in the exam paper only the question has come. It is in not June 24 attempt. In June 24 attempt, this question is there. I said, ICA didn't disclose that question paper. In that question paper, it is there. Yeah, first question only. First attempt. When June 24 is first attempt. Next September, you didn't. That considered as attempt only. 4. Which paper you are finding it difficult? Out of all the 4. Ako? Science background student, Okay, do it now. Hello, excuse me, do this Rangole first. Done with the Rangole? Shall I show the questions? So students have already attended my class, who have already known with the answers how to do this. Remain silent. Now don't even teach to your friends who is next to you. Don't even teach them. Now only I am saying. Hey Arun, main for you. Now, these are the questions. Simple. 4 questions are there. How many questions are there? These are the 4 questions. Let's see. How many of you will get 4 on 4? If you want, I will show in the question paper also. The more you discuss, the more you will go wrong. Identify the new equilibrium points. Do you still remember or not? Then remain silent. Arun remains silent. Himam remains silent. Done. Completed. Only one question now. Maximum you can take for one question is 2 minutes. Beyond 2 minutes, if you guys are taking, gone case. That is the maximum time you can take. Finished. All the 4 questions done. Only 2 questions. Unable to do it? We will skip, sir. Why do we want 4 marks and all? Simply ICI. Stupid fellows. That is 4 different questions, not 1 question. That is 4 questions, da. Oh, you thought 1 single question, huh? They 4 different questions, 4 marks. Do it. Do it. Hey, these all are Bachchu questions, man. You should have done this in your first attempt only. To be frank, Bachchu question this is. Finished. Full Tare Zameen Par. ICU students, raise your hands once. Let me see the faces. They are the prime target in the class now. ICU batch students. Now you guys have to answer this first. I think revision classes are done, right? ICU batch, revision classes. Now, this is only revision class. Sir, tomorrow is there a marathon? Definitely yes. Morning 7:30 to 2:30. Monday after 3 o'clock. Maybe I will let you know the timings. Tomorrow I will let you know the timings for Monday.
Exam will be there now, Monday.
Which exam?
This economics. Simultaneously we should do. 2, 3, 4. 2, 3, 4. Lesson 2, 3, 4.
2, 3 and 4.
Yeah.
Anyway, we would have finished micro by tomorrow first half
No,
only.
no. The exam timings.
Exam, which exam? ICU students, huh?
Yeah.
What time?
5 to 7.
5 to 7. I will postpone it, don't worry.
Better.
Or will prepone it. Better. Better will prepone it. In the morning. You write test in the morning, later you attend marathon. Any of you guys will be in the academy only. You can prepone it. Not a problem. Okay, done with the answers. Still not yet done. Govindane. Okay, listen, Mahan Bhavs, everyone look at the board. Let me only answer it. Just cross check whether you got the correct answers or not. Or will you answer? You will answer, huh? Okay, who would like to answer question number 1? Question number 1. Yes, man, go on. Try it. Wait. Others, all uncles and aunties, remain silent. Point 2. How? Can you please explain?
So, it is a normal good, sir.
Okay.
As the income rises, the demand will also.
Okay, income rises, so demand will also rise.
They did not talk anything about supply, sir.
They didn't speak anything about supply, huh? So he
It
said
remains same.
it will remain same. So that means yes, 1.
Yes, point. Here, sir.
You said supply remains the same. That means yes, 1.
Yes, 3, sir.
Yes, 3. That just now you said supply remains same.
I said 2, sir.
What is happening to supply then?
Supply is decreasing.
How? Okay, hero, there.
Because the factor of production is increasing.
No, so
Supply also will increase.
how? Explain. That is what. How? Explain.
When you have to expend more for production, so you better reduce the supply.
We are paying more for the factor of production. Sir.
Ah.
So we are employing more number of persons.
Hmm.
So the factor of production also is increasing. Supply also will increase as we employ large number of persons.
Okay, supply increases or decreases? Increases. So which one? S1, S2 or S3?
Sir.
Wait, madam. He is answering. Auntie, Usha.
Supply is decreasing, sir.
Yes, now you said supply is increasing. Now you will say no, supply is decreasing.
I'm confused with the LHS and other.
See, LHS means decrease. RHS means increase. Now what is confusing in that? Tell me. Now simple question. You said demand is increasing. Supply, first you said no information given, constant. Next, no, it will decrease, you said. While explaining, you said increase. Which one should I consider now? S1, S2, S3 with explanation. S3, how? Explain. That is what my question. Explain. 5. Sir, no confusion at all. 5. Yes, ma. How? Explain. Others, stop discussing. Girls, especially here. Second, third, fourth bench. Hey, Ira, stop discussing is what I said. If someone is explaining, first listen. Stop discussing. Yes, ma. Stand up and explain.
There is an increasing factor of production.
Okay.
So if there is an increasing factor of production,
So the production of the price of these products increases.
Hmm.
Because the factors gets increased. So the supply gets decreased.
If you're employing more and more factors, that means you're producing more, right?
The price
Okay, price is increasing. So what will happen to supply? Decrease. So what is your answer? 0.2. Okay, see, I've got answers for 0.2, 0.5 as well as 0.7. So, okay, 0.2, raise your hands. How many of them agree 0.2 is the answer? Raise your hands. Hardly few in the class. 0.5, raise your hands. Another few of them. 0.7, raise your hands. Hey, others, what is your answers then? Without even answering for yourself, none of the above.
0.8.
0.8, okay, 0.8, raise your hands. We got one more. 0.8, raise your hands. Answer is 0.2, but explanation what he said was correct, but none of them understood. Listen, if you remember, factors of production, supply, related goods, factor prices. In fact, I explained it. Look here. Let me go back. Look here, look at the board. What did I say? If you're paying more rent, if you're paying more wages, if you're paying more interest, that means prices of factors of production is increasing, then profit will. If profit reduces, will you produce more and supply more? No, that is the reason supply is reducing. Supply is reducing. Is that clear? So remember, in this case, since income is increasing, what is it since income is? No doubt demand will increase. See, prices of factors of production is increasing. Since prices of factors of production is going up, profit will be less. Automatically supply will decrease. So supply decreases 3, demand increase. D2 answer is 0.2. Answer is 0.2. Yes, ma'am. Again, simple. Prices of factors of production going up. That means for land you are paying more rent. For labor you are paying more wages. For capital you are paying more interest. Then profit, this will be lesser. Since you are paying more and more costs, incurring more cost on factors, your profitability will be less. Because of that, since your profitability is low, you will not produce more. You will produce. If you are producing less, supply.
Like that we have to answer.
Yeah. Yes, exactly. That is what even I explained when I was explaining determinants of supply. Same only I explained. Now she woke up. Okay.
If price increases, like supply increases, demand decreases. Thumb rule.
Price of factors of production. What is given? What is it? What is this? That is what? Reading, understanding is most important. Question you have to understand first. Clear? Anyone still having doubt? Okay, next. We are analyzing the market for. Oh, wait. Okay. Who will answer? Question number 2. And others remain silent. If someone is answering, remain silent. Don't discuss. Anyone would like to answer question number 2? Question number 2. Easiest question that is. Go on, ma. 0.7. How? Please explain. Okay. Okay. Price of a complementary good why decline? So, superb. Complementary goods have dash relation. So, good why prices are declining? That means demand for Z will
Increase.
So, demand is increasing. Okay. Superb. When technology is advanced, supply will. So, demand is also increasing, supply is also. So, simple concept. Here, it will be D2 since demand is increasing. Supply is also increasing, it will be S2. Answer is 0.7. Good. Clear? How many of them got both the questions correct? Raise your hands. How many of them got both the questions correct? Question number 1, question number 2. Both was correct. Hey, you never considered not you. You attended my class earlier? Not considered. Only 2 students. Hey, so-called ICU batch students. You are in intensive care unit. Analyze. That is what I am saying. Analyze. Analyzing is most important. Understanding the question is most important. Clear? Clear? Understood? Okay, question number 3. I got to know. I will only explain. Listen. Heavy rain in Maharashtra during 2005 and 6 has caused a havoc. Havoc means flood. Havoc means in the dash crop. When there is a flood, what will happen to the productivity of rice? That's it. After that, see what point on the figure is most likely to be the new equilibrium price and quantity. That means they have only spoken about supply. There is no information about the demand. But our students will be having beautiful assumptions. Sir, supply decreased, not demand will increase. Or you will get more craving to eat rice when there is a destruction in crop. Demand remains same, only supply will decrease. That means now supply is reducing. Supply reduced point S3. Demand remains. Answer is 0.3. How many of them got correct? 0.3. 1, 2, 3. All three questions, please raise your hands. All three raise your hands. Only still two of them. In the race, only two of them are there. Okay, only third question correct, raise your hands. Only third question correct. Second and third correct. Okay, 1, 2, 3, at least two correct. Out of these three, two correct. Out of 3, 2 correct. 1, 2, 3, 4, 5, 6, 7. Only 7 students. Okay, last question.
Sir,
Yes,
can
ma'am.
calculate that since there is a natural disaster,
Yeah.
the consumer will start storing more, so they buy more. That
Usually don't happen. See, in case of necessary goods, whether price goes up, whether price comes down, quantity demanded remains same. See, I need to analyze what is the information given there. I can't take a new assumption. Suppose, as you said, if they made customers are stocking, customers are as a precautionary motive, customers are stocking more or customers are demanding more, then I should analyze it. Information, is it given in the question? What is the information given in the question? Only to that extent I should analyze. Clear, huh? Next one. Assume consumer expects the price of a new car to significantly increase next year. Expectation of future change in price, and who is expecting it? That means whose point of view? So demand concept. In future, if the prices are going to increase, demand will increase in. So present demand is. So demand increased. And what point on the figure? That's it. No information given about supply.
remains same.
Supply remains. That's it. Supply remains same. Demand increased. Answer is. How many of them got all 4 correct? Same 2 students. At least all 4 correct. Huh? Oh, only last one correct. Okay. 3 out of 4 correct. 3 out of 4 correct. At least 3 out of 4 correct. 1, 2, 3, 4, 5, 6. 6 of them. See, this is how exam question comes. You don't believe. Same to same question has come in the exam. Wait, I will show that. Why to bluff for you guys? Wait, let me show that. Where is our mail ID? 1 second, wait. Which is that attempt? June 24 attempt paper. Wait, let me open the June 24 attempt paper. Look at the board 1 second. See here, June 2024 paper. This is what I'm showing to you guys now. In fact, the graph is also there. Can you see the graph, Rangole? And see the question. Assume that the end user expects the price of a new motorcycle. Now I said car. New motorcycle will significantly increase next year. Same question, na? Next, IV storms in Tamil Nadu 2011 and 12 created a havoc. Here Maharashtra 2005 and 6. Here Tamil Nadu 11 and 12. Next, Mr. P visits a supermarket and was purchasing a normal good. We are analyzing for a normal good. First question. See there, holding everything else constant, income rises and prices of factors of production decreases. In what I explained to you is prices of factors of production increases. But what they have asked is prices of factors of production? Same to same questions, na? Instead of Maharashtra, Tamil Nadu. Simple. Instead of car, motorbike. This is what they have done and same to same question. 3 questions have come. Clear? Exam questions. That is why solve previous year exam questions, RTPs, MTPs. Why important? This is the reason. Straight away from RTP, MTP, sometimes questions will be asked. So don't worry. Day after tomorrow, Monday, while finishing the marathon, I will give you one khajana full. From 2017, I have RTPs and MTPs. That has BCK and economics. Ignore BCK. Microeconomics alone is there. And after 2023, micro, macro, both is there. From 2017, RTP, MTP, I have. And previous year question paper, 4 attempts. How many attempts? You should sit and practice. That is what I'm saying. The more you practice, the more is the benefit. You will get more and more conceptual understanding. Clear? So by this, even chapter 4, unit 2 also comes to end. So demand is done, supply is done, chapter 4, unit 2 is done. Now let us finish consumer behavior and let us take all the 3 attempts questions from chapter 2 and we will calculate how many questions are coming from chapter 2. So simple, consumer behavior. Which behavior? As the chapter name itself is saying, whose behavior? Consumer. So whole unit we will understand from whose point of view? Consumer point of view. Whose point of view, pa? Now, as a customer, suppose if I get a product for free of cost, if I get a product for what? How do we behave? Suppose if I need to pay the price for a commodity, how do I behave? Suppose if I'm buying complementary goods, how do I behave? So like this, different situation, different consequences. Now listen, in this unit, we believe that in economics, every consumer is a rational consumer. Which consumer? Hey, not rascal consumers like you guys. We are consuming as what? Rational consumer. Who is that rational? Whose choice are consistent with goals. Whose choice are? So what is the choice consistent with goal? Simple concept. Boss, I thought of buying a white pant or jeans pant, one blue color jeans pant. I will go and buy only and only that blue color jeans pant and come. That's it. No extra shorts, no extra shoes, no extra t-shirt, nothing. What I think and what I do, both are one and the. But in real life, when you go for shopping, you thought of buying pant. Except pant, you will buy everything else, whatever looks good. That is why I said, you guys are dash consumers. So you are only agreeing. But economics believes that customers are a rational consumers. So we are interested to identify the consumer equilibrium. Which equilibrium? See, consumer equilibrium has 2 simple conditions: maximum satisfaction and no change. What is it? Maximum satisfaction and to achieve this consumer equilibrium, there are 2 approaches: cardinal approach and now cardinal approach. Now simple. I usually give this example in the class. Let me take the same example. Let's say tomorrow is my birthday. Assumption. What is it? Assumption. Happy birthday treat and all will not work. Assumption. Now let's assume that my parents have given 5,000 rupees to me. Assumption. What is it? Assumption. Now since it's my birthday, first I will go and buy a cloth. I should look good. After that, second, I will take my friends for a treat, my close friends for a treat. I know that stupid fellows, they will not give treat. Only I should give treat on their birthday, on my birthday and all. Next, third preferences. I will go for a nice movie. I will go for a with my friends after giving a treat. Next, fourth preference, I will take my family for a dinner. See, this is what I'm doing with the 5,000 rupees. Clear? Now, Alfred Marshall, who is it? He said we can quantify satisfaction in terms of numbers. That means after every consumption, you can calculate satisfaction in terms of numbers. For that, he has given a tool called as utils. What is it called as? That means simple. Utility is a satisfaction. Utility can be measured. Utility can be, let's say, after buying cloth, you got 500 utils of satisfaction. How much utils? After giving treat to your friends, stupid fellows, they will not give. Only just 30 utils. That's it. And after going and watching a movie, super movie like Balaya movie, if he hit a person, go out of the earth and all. I got some 200 utils of satisfaction. How many utils? After going out with a family for a dinner, I got 700 utils of satisfaction. Which utils of satisfaction? See, like this, we can quantify satisfaction in terms of numbers. But you tell me, is it practically possible to quantify satisfaction? That is why ordinal approach came up. Which approach? Now, ordinal approach said, see boss, quantifying satisfaction is not possible. Rather, we can give rank or preference. What we can give? See, my first preference is going for a dinner with family because that will give me more satisfaction. Second preference is buying a cloth. Third preference is going for a movie. Last preference is giving a treat. Like this, I can give a rank or I can provide a preference. That is ordinal. But what does cardinal approach will say? We can quantify satisfaction in terms of utils. That is numbers. That is, now you tell me which is more practically possible. Ordinal approach. Clear? So we have 2 methods to identify equilibrium. First one is cardinal, developed by Alfred Marshall. He said satisfaction can be measured in terms of, that is in the form of utils. Utils is a tool. Utils is a by which we will calculate utility, want satisfying capacity of a commodity. Clear? So he said it in a very professional term. What is that professional term? Cardinal measurability of a is. That means we can quantify them. So under cardinal approach, he also came up with two theory, LDMU approach and consumer surplus. But the ordinal approach at CBOS, highly impossible to measure satisfaction in terms of numbers. We can arrange them in the form of rancor. And this was said by R.J.D. Allen and J.R. Heeks. And even they said we have two theory, indifference curve and clear. Now characteristics of utility is important. Utility is psychological concept. What make me happy will not be the same for you. Shashikiran, let's say Shashikiran likes chicken. You will say, no sir, I am vegetarian. I don't like non-veg at all. I like coffee. You will say, no coffee and tea. Energy drink. Red Bull gives you wings. Like this. My preference is different. Your preference is different. It's a completely psychological. What I like might not be the same for you. Like that next cycle. It depends upon the intensity of how badly you need this. Next term. Utility is. That means it changes from person to time and place to. Utility has no social or ethical. Your society might follow 1,000 things, but it need not be like you also likes the same. You might like something different. So these are the characteristics. Clear? So cardinal and ordinal approach. Next comes TU, AU, MU. Anyone in the class who doesn't know about this. Total utility, marginal utility, average utility with the formula. Because this is basic concept. Based on this only I have to go next. Doesn't know. Okay, what's your name, Dahira? Dev. Okay, let's consider Dev. Shashikiran and Dev. We both are best friends. Assumption. What is it? Assumption. Now let's assume tomorrow morning, Sunday, why class and all, we'll bunk. We said we'll go for playing badminton. We'll go for playing. Okay, let's say morning 7 o'clock we went to play badminton. We were playing for 3 hours continuous until 10 o'clock, 11 o'clock. But Dev was getting Dev was getting a call for his cell phone from a very important person. But he's not attending call because he's busy playing badminton. Now after 10 o'clock we went to a hotel but no food is available. Everywhere hotels are closed. We went to a shop. We bought a biscuit. We bought what? 1 biscuit packet for Shashikiran, 1 biscuit packet for Dev. Now let's say for example, he opened a biscuit wrapper. He got a phone call. Now he is busy over a phone call. He is not in a mood to disconnect. But Shashikiran feeling hungry. Now I opened a biscuit wrapper. Assume there are 10 biscuits. How many biscuits are there? 10 biscuits. Clear? Now I had first biscuit. I got 10 utils of satisfaction. How many utils? I had second biscuit, 30 utils. Third biscuit, 60 utils. Fourth biscuit, 100. Fifth biscuit, 150. Like that I consumed all the 10 biscuits. I got 300 utils of satisfaction. How many utils? 300 utils of. That means total utility. It is the utility derived by consuming all the units of output. How many units? Shashikiran consumed total how many units? How much satisfaction he got? Now let's say first biscuit, second biscuit, third biscuit. That means when I say second biscuit, it is not second biscuit alone. First and second. What is it? That is what? Total utility. It is cumulative. What is it? If I say third one, first, second, third, all 3 put together. Same way, all 10 put together. Okay, now they will ask me, Shashikiran sir, you had 10 biscuits and you got 300 utils of satisfaction. Now, how much satisfaction you got by consuming every single biscuit? What is it? I will say, see, simple. That is called average utility. 300 utils for 10. 300 divided by 10. How much? That is average utility. Utility derived by consuming every single or one single unit. Better every single. What is it? Or also called as per unit. Turn this off. Turn this off.
But then,
Ah.
as the consumption increases, the utility decreases.
I will explain the basics. Still, we are in first standard. Wait, let me come to third standard. He doesn't know what he mean by first standard concept. Wait, I will come. Okay. Now this is average utility. Which utility? Average. Clear? Utility derived by consuming every single unit. Which unit? See, concept is very simple. Total utility divided by quantity. Average utility. Is that clear? Okay, now Dev is completely busy. He is not in a mood to disconnect the call. Shashikiran saw he is not in a mood. I will take off 1 biscuit from his packet. That is what friends do. You don't eat food in front of them on time, gone case. They will take your food. Now Shashikiran had 11th biscuit. Which biscuit? 11th biscuit. Now by consuming all 11 biscuit, let's assume I got 350 utils of satisfaction. How much? How many biscuits? 11 biscuits. Total utility how much? 350. Now if I ask you people, only and only 11th biscuit. What is it? Only and only. How much satisfaction I got? How did you get to know? Sir, simple. 350 minus 300. Present minus previous. What is it? That is marginal utility. Which utility? Utility derived by consuming one additional or one extra. One additional or one extra. Sir, ಆಫ್ ಮಾಡಬೇಕು ಸರ್. ಇಲ್ಲ ಸರ್, ಅದು ಬೇಡ ಸರ್. ಅದಲ್ಲ, ಇಲ್ಲಿ ನಂಗೆ ಡೈರೆಕ್ಟ್ ಆಗಿ ಹೊಡಿಯುತ್ತದು. ಏನ ನಾನು ಮನೆಗೆ ಆಂಬ್ಯುಲೆನ್ಸ್ ಅಲ್ಲಿ ಹೋಗ್ಬೇಕು ಆಮೇಲೆ ಸ್ಟ್ರೈಟ್ ಅವೇ. ಥ್ಯಾಂಕ್ ಯು ಸರ್. Okay, chalo listen. What I was saying by the way? Ambulance I remember now. Okay, marginal utility. That means now I consume total 11 biscuits. How many biscuits? 11 biscuits. 350 utils. 10 biscuits was how much? See, 350 minus 300. How much is that? Simple concept. Present minus previous. Consumed by one more extra. Utility derived by consuming how many extra? How many extra? That is most important. Most of them will go wrong in marginal concept. It is always one more extra, one more additional. What is it? One more extra? TU n minus TU n minus 1. N means present. N minus 1 means previous. Clear? Okay, now let me ask a question. Dev, alone, you have to answer me now. First biscuit Shashikiran consumed. How much satisfaction he got? Second biscuit I consumed. Total how much I got? Second biscuit alone. 20. Third biscuit alone.
30.
Hey, are you there? Wait, remain. Let him answer. Next, fourth biscuit alone.
40.
Fifth biscuit alone. Clear? Now observe. They very much clearly. 10 plus 20. Now 10 plus 20 plus 30. Now 10 plus 20 plus 30 plus 40. Now 10 plus 20 plus 30 plus 40 plus 50. That means whatever we are calling this total, that means by adding marginal utility. By adding which utility? That means concept is very simple. TU is cumulative of MU. What is it? TU is of MU. So that's the reason there are two different formulas for total utility. Total. So formula number 1. What is it? Formula number? U1 plus U2 plus U3 until UN. This N can be any number of units. N can be any number of 10, 15, 20, 30, whatever can be. The second formula, TU is also called as summation of MU. What is it? Summation of. That means we will add all the marginal utility together to derive total utility. There is it clear. Now there is one more confusion here. See, whenever output is not continuous, when an output is not, see there 0, 2, 4, 6, 8, 10. We are not having like 1, 2, 3, 4, 5, 6. What do we have? 0, 2, 4, 6. Is it 1 extra unit or 2 extra units? But what is the meaning of marginal speaks? How many extra unit? 1 extra or 1? So remember, if output is not continuous, output is not, we have a second formula for MU. We have a second formula for, what is that second formula? Change in TU divided by change in quantity. Clear? Now, let's say, observe, there, 20 is for second unit. What is the previous of second? First unit. Do we have information? What is the information we have?
0.
That means you are not even consuming anything. If you don't consume anything, will you get any utility? So, compare between these two. 20 and 0. What is the difference? So, that is change in TU. And 2 and 0, what is the difference? 1. Yappa. Change in quantity is also how much? So what is 20 divided by 2? So that is the answer. 10 is the answer for MU. Clear? That is how we will identify again. 80 and 20 difference. 60. 4 and 2 difference. 60 by 2. Clear. So remember, there are two formulas for marginal utility. When output is continuous. What is it when output is? What is the formula when output is continuous? TU n minus TU. When output is not continuous. Change in TU divided by change in quantity. Is that clear? So TU, AU, MU. Anyone still having doubt? TU has two formulas. MU has two formulas. AU has TU, utility derived by consuming all the units. Utility derived by consuming AU, every single unit, total divided by quantity. What is it? Total divided by? But MU2 formula, output continuous, output does not. Clear? Now let's go to the very first concept, LD. Simple concept. 5 assumptions are there. How many assumptions? First understand that 5 assumptions. Now let's say for example for Dev, I will be giving his favorite sweets. Dev, which sweet do you like the most? Rasgulla. Okay, now let's assume today, tomorrow was Shashikiran's birthday, na? Now tomorrow, Shashikiran will come with Rasgulla, let me say sweets in his box. Now I forgot that tomorrow there is some festival because my birthday, na? I was in my birthday mood. Assume there was some festival. It was declared holiday. It was declared. But Shashikiran forgot it is holiday because my birthday, I am in my birthday mode, and assume Shashikiran is conjuice fellow. Assume. What is it? Assume Shashikiran is conjuice fellow. Let's assume I have 100 rupees with me. I went to Asha Sweets, the famous sweet shop in Bangalore. I went and got some rasgullas for 100 rupees. Let's assume I have got some 7 rasgullas. How many rasgullas? For 100 rupees, I got some 7 rasgullas. And even they forgot that today is holiday. Let's assume he stays very next to door in the PG. He will also come to the class. He is the first person to come to the class. I will give him a sweets. He will ask me, sir, why are you giving sweets? It's my birthday, sir. Happy birthday, sir. His favorite sweet, early morning, 7:30. Without having breakfast, he has come. He is taking his favorite sweet. Yesterday night, let's assume that he didn't had his dinner. He is already feeling hungry. He is like, yes, sir. Favorite sweet. He will give first sweet. Let's assume he got a satisfaction worth of 50 utils. How many utils? 50. Because cardinal approach says now we can measure satisfaction in terms of numbers. In terms of, he will ask, sir, one more, sir. Please, sir. My favorite sweet. Okay, take one more. Now we got 75 utils. How many utils? 75. By consuming second one, he will say, sir, my friend is coming. He don't like sweets. Shall I take his sweets? Sir, please, sir. Okay, one more. How much utils? 95. Sir. One more, sir. I take. How much utils? 95. Now, he's like, sir. This is last one, sir. After this, I will not ask. Okay, take it. One more. How much? 120. Now I will ask him, Dave, why is that man? No, none of them have turned up to the class. Just check whether are they coming or not. Sir, it is holiday, it seems, sir. We don't know, sir. Ayyo. I will say, only 2 sweets are remaining. You eat one. He's like, okay, but already his tummy is filled. But still, his favorite sweet, he will take one more. 6th sweet he had. Now what is the utility? Same. Whatever he got for 5th one, it is also same for the. Because already tummy filled, his satisfaction level already reached maximum. Now he's like, no satisfaction. I will say, there, anyhow, one more is remaining. Anyhow, you had 6. Eat this one more also. Oh, no, sir, I will have that. If you don't eat this 7th sweet, I will fail you in economics. Undue influence. Now, with great difficulty, he will eat this 7th sweet. After that, after going out, immediately will rush to washroom, whack full everything. Dissatisfaction. See, satisfaction reduce it to 100. See, first sweet he had. How much satisfaction he got? 50. Second sweet? 3rd sweet? 4th sweet? 5th sweet? See, he is getting more and more satisfaction. That is how it looks. But reality is different. For that, we should identify MU. What we should identify? Marginal utility. First sweet alone he had. How much satisfaction he got? Now, output is continuous. MU formula. TUN minus TU. 75 minus 50. 95 minus 75. 110 minus 95. 120 minus 110. 120 minus 120. Observe, that means first sweet alone is giving him a satisfaction of. Second sweet alone. 3rd sweet alone. 4th sweet alone. 5th one. 6th one. It is not at all giving any satisfaction. 7th sweet. Minus 20. Hey, respond. Open your mouth. Everyone open your mouth and respond, stupid fellows. Now, 5th sweet how much? 6th sweet? 7th? Clear? That means it felt like he is getting more and more satisfaction. 50, 75, 95, 110, 120. Reality is his satisfaction is not increasing. It is. That is what the concept name is also. Law of diminishing. Which one? Marginal utility. It looks like satisfaction is increasing. Reality is from the very first unit. Satisfaction is. See, first sweet alone he got which how much satisfaction? 50. Second, see, comparing to second one, first sweet gave him more satisfaction. Comparing to third one, second one gave him. They respond. Hey, should I stop the class? See, simple. They know how undue influence works, my students. If response doesn't come, instead of 2 examples, it will cut down to. Next, if still happens, no examples, only concepts. You want that to happen? Then what you should do? See, even that also 1 or 2. Respond. Stupid fellow. Serious, da. Next, if response doesn't come, that too after lunch. Nicely it will be inside the tummy. Full sleepy it will be. Now I will skip examples. Simple. I will skip examples. Clear, huh? Shall I skip examples? For that, what you should do? Like this same audio should come. If that audio goes down, my examples goes down. Now only I am saying. First sweet, how much he got satisfaction? Second, third, fourth, next. See, it felt like he is getting more satisfaction, but the reality is he is getting. That is what LDMU. Every additional unit you consume, satisfaction will not increase. It will. Law of diminishing dash utility. So in this whole unit, we are interested to identify consumer equilibrium. At the 6th unit, they are in equilibrium. It is maximum. Sir, how come 5th is also maximum? Na? 6th is also same. How come you said 6th unit is maximum? Because, wait. Let me explain. When he consumed first sweet, how much satisfaction he got? Second one, third one, fourth one, fifth one. See, when he consumed fifth one, he got how much satisfaction? With the same belief, he will consume the. Only after consuming, he got to know he is no more getting satisfaction. Did he get to know that even before consuming? That means only after. Now it is not more giving satisfaction. Will he think of having 7th one? That is why I said 6th is maximum satisfaction level. Because when he add 5th one, he was getting 10 units of satisfaction. He might have thought, okay, one more unit, one more extra satisfaction I might get. But he didn't get. He only got to know after consuming, not before. So I will stop at 6. That means simple concept. When TU becomes maximum. What is it when? TU becomes and MU becomes. This is the level of equilibrium in LDMU. And the most important topic is relationship between TU and MU. Observe. TU is increasing. MU is. So step number 1. TU increases. MU. There is one superb question out of this. TU increases at dash rate. Why? Because MU is decreasing. So TU increases at dash rate. Diminishing rate. Clear? Next, equilibrium. When TU is maximum, what is it? TU is? MU is? That is called optimum utilization. What is it? Next, whenever TU starts decreasing, observe, from 120 it is decreasing to 100. MU has become. So when TU decreases, MU will be. Is that clear? Understood? Now see the assumption. Commodity should be given for. Did I charge anything with Dev? And I believe Dev is a dash consumer. And not rascal, rational. Next, there should be dash consumption. Without any time gap, continuous consumption. One after the other. And it should be dash goods. All the 7 sweet is from same shop, same size, same taste. And cardinal measurability of utility is. That means satisfaction can be represented in terms of numbers. Clear? What is equilibrium condition? TU maximum. Same to same in the graph, we can represent TU is becoming maximum, MU will be. Is that clear? Understood? See there, equilibrium, LD, MU. When TU becomes maximum, MU becomes. See, there are few places where LDMU concept will not work. First one, in case of rare. Suppose if any person has a habit of collecting old stamps, old coins and all. You go and give him 2 stamps today, happy. Next day 3 stamps, full happy. Next day 5 stamps, much more happy. He will never say LDMU achieve, don't give. Next, in case of money and for Dev, instead of giving sweet, if I had given 100 rupee note, he will, let's see your capacity, sir, give. He will never say no. Get your property papers also. I will never say no. See, in case of money and wealth, LDMU will. Harmful drugs and drunkards for all this undesirable goods. People will never say no. One who is addicted. Next, in case of already you have one bungalow, you want one more? You already have one luxurious car, one more? Another one? Still one? See, stupid fellows, greedy people. Next, very small unit of Suppose you like that sweet, but sometimes your mom will scold. You will take only little from the edge. By mistake, if you eat, cravingness will increase. Next, in case of singing, dancing, all this, LDMU will not work. These are the limitations of LDMU. Clear? Next, consumer surplus theory. Beautiful concept. Movie ticket example. If you remember, first day, first show, you are ready to pay extra. You are ready to pay what? Even black ticket. Assume 500 rupees is a movie ticket price. You are ready to pay even 500, but you got to know. Let's assume the theatre belongs to Nitin sir. You will call up Nitin sir. Hello sir, how are you? We are missing you a lot. When are you going to come and take us a class? Why pa, what happened? Shashikiran class not good. No sir, always a torture only. Assumption, assumption, assumption. So he will somehow convince and he will get a ticket for 200 rupees. How much he will get it for? 200. How much you are ready to pay? 500. How much you got it for? 200. How much extra money you save? 300. But you paid only 200. You got satisfaction worth of. You are ready to pay how much? But only paid how much? 200. That's it. This is the concept. Potential price minus actual price. This is consumer surplus. Which surplus? Whatever you are ready to pay minus what you actually pay. Whatever you are ready to pay minus what you actually pay. That is called as surplus. Consumer surplus. Now next day, you will come. Let's say for example, you went to movie alone. You enjoyed Balaya movie like this full on. If you hit a thigh like this, train will go reverse. If you hit a person like this, you will go out of the earth. You will come and influence all your friends. Now next day, who will go to Shashikiran class? Tamta, bunk will go. Now 5 of them are going. Now he didn't say that he asked Nitin sir help and all. Hey, yesterday I paid 500 rupees per ticket. Da. At least we 5 are there now. We'll bargain little. We'll get it for 400 rupees. Everyone bring 400 rupees. But after going to the theatre, other person, hey, yesterday you paid 500 rupees for this theatre. I don't know. This theatre belongs to. Hey, wait. He will call Nitin sir again. They also got it for how much? But how much they were ready to pay? 400. See, next time, after 1 week, there is one problem with boys. We know now. When you go to, let me say, movie with your friends, college friends, nearby home, you have one more gang. They have a problem. You will go with new friends. All undue influence started. Now he wants to go to the movie once again. He will go stand in a lane in the counter. He will get a ticket for how much? He was also ready to pay how much? See there, first time he was ready to pay. Second time? Third time? See, he is not getting sweets for free of cost once again. He is buying movie ticket now. That means he has to pay the price. When you are ready to pay the price, your intention to pay keeps on. That means potential price keeps on. Your ability to pay for the same commodity again and again. You are watching the same movie again and again. First time you are ready to pay. Second time. Third time. Suppose if your friends call for the fourth time, hey, no, I have exam, I will not come, I have to study. That means your intention to pay has become 0. This is consumer. So where exactly equilibrium is achieved? Here, in this concept. When potential price is equal to, and remember, this potential price is also called as MU. It is also called as what? Marginal. So life cannot be so simple with ICI. They want to complicate. So in simple words, they could have said equilibrium is when potential price is equal to actual price, or when consumer surplus is 0. Ready to pay 200, 200 minus 200, consumer surplus. But they will not agree. Hello, you should answer in a complicated manner. Oh, marginal utility and price both are equal. MU equals to P, or P equals to MU. P equals to, that is equilibrium in case of single commodity. Which commodity? So total there are 3 conditions. In case of single commodity, which commodity? Price paid is equal to MU. That is equilibrium. In case of 2 commodity, MU of X, that is first product, divided by price paid for F. First product is equal to MU of Y divided by price paid for. This is equilibrium for how many products? If it is more than 2 products, what is more than? MU of X divided by price paid for X equals to MU of Y divided by price paid for is equal to MU of N until price paid for N. That N can be any number of units, up to your wish. Clear? Total 3 equilibrium. Single commodity, 2 commodity, more than 2 commodity. What is it? Single commodity, 2 commodity, more than. Is that clear? Understood? So this is equilibrium under cardinal approach. Which approach? This is for consumer surplus theory. Single, 2 and more than 2. In LDMU, TU maximum, MU 0. Clear? Now, when we try to represent the same example, whatever the movie ticket example, in the form of table. What is it in the form of? See, this is how the table looks like. See, we were ready to pay how much first time? Next, let's say only some 100 rupee. I will say, I know I have only 100 rupee. Another 100 rupee you guys put. Later it will come 0. It will become what? That means it keeps on decreasing. Keeps on what? But every single time when they bought a movie ticket, how much they paid? 200 rupees only, na? Every single time, whether first time, second time, third time, every time it was only rupees 200. That is actual price. Which price? Potential price is also called as dash. Potential price is also called as marginal utility. See, this looks like a triangle. Consumer surplus region looks like what? So, the consumer surplus theory is also called as welfare triangle. Which triangle? Is that clear? Understood. Now listen to this carefully. There is one more connection with the demand and supply concept. What is the general nature of demand curve? General nature of supply curve? Upward sloping linear curve from left to right. Is that clear? Now the point where demand and supply meets together, that is called as equilibrium. So this is the point of equilibrium. So this is the equilibrium price. Now for a time being, for your understanding, I will erase the supply line. Clear? So this is dash curve. This is the price line. Now remember, anything below demand curve and above price line, anything below demand curve and this is called consumer surplus. Same to same graph, na? Clear? Anything below demand curve and above the price line, that is called as dash. Consumer. Same way. If at all you are just writing demand curve, if you are just writing which curve? So like this x-axis, y-axis, if you just write a demand curve, anything below the demand curve, anything below the which curve? That is called total utility. Which utility? If you want, kindly write this down somewhere. So anything below demand curve, above price line. What is it? Anything below demand curve, above price line, consumer surplus. But only and only below demand curve is called as dash utility. Total utility. Total utility. Anything below demand curve, above price line. Anything below demand curve and above price line. Anything below demand curve and above price line is called dash utility. Superb. Consumer. Just below demand curve is called as? Clear. So by this, cardinal approach comes to an. Now, cardinal approach said we can quantify units or satisfaction in terms of numbers. So we are writing it in terms of numbers like this. Clear? Now, we will go to ordinal approach. Which approach? Very first theory. Which is the first theory? Indifference. So listen to this carefully. The very first one is called as indifference. So indifference curve, we can't quantify in terms of numbers, but rather we can give a rank or preference. What is it? Rank or? Okay, let's take up an example. Assume there are 3 baskets. How many baskets are there?
3.
So in this 3 baskets, this is basket 1, basket 2, basket 3. Let's say in first basket there is 1 apple, 2 banana, 1 watermelon. In basket 2, there are 2 apples and 2 watermelons. In basket 3, there are 2 bananas and 2 apples. Which basket will you choose first? First one, sir, because 3 fruits are there. Next up, sir, let me say basket 3. Next up, basket 2. Sir, this is my first preference. This is my second preference. This is my. But end of the day, in all the baskets, in total, there are how many fruit? 4 fruit only. Na? 4. Clear. See, at least a combination of 2 commodity. What is it? At least a combination of? See, every time we are buying a combination of how many commodity? Which will end up giving same level of satisfaction. End up giving dash level of satisfaction? Connected in the form of a curve is called as indifference curve. And the biggest assumption here, income is limited. What is it? Within that limited income, we are completely buying how many goods? 2 goods. That means there is no concept of savings. What is it? There is no concept of savings is nil. There is no savings. Complete income is spent on combination of 2 commodity. Suppose after spending that commodity, you felt, okay, let's assume I will buy 1 cup of tea, 1 packet of biscuit. After buying, I felt, no, I should have got more cup of tea rather than more biscuits. Now the only left out option is barter system. Identify the person who is ready to accept a biscuit and give you a cup of tea. Clear? And see there, utility is always a cardinal approach. Which approach? And as a customer, as a rational customer, we try to always optimize the satisfaction. What is it? Or get more level of satisfaction. Clear? See, this is how indifference curve will be. Downward sloping curve from left to right. This I will explain later. For a timing, just understand this. Clear? It is a downward sloping convex to origin. What is it? Now comes a question. Sir, why it is downward sloping from left to right? Because of limited. See, I need to buy product A as well as product B. If you need to increase consumption of A, you should sacrifice the consumption of B. That is the reason it is downward sloping from left to right. Okay, sir, why is it convex to the origin? Because of diminishing rate of substitution. What is it? Or diminishing marginal rate of substitution. What is it? Diminishing? Sir, what is this? Diminishing rate, diminishing marginal rate. Simple example. Let's assume you bought 2 chips packet, one for you, one for your sibling. Let's say you had some work. You didn't open the chips packet, but your sibling, your brother or sister, now they opened, they had every chips and they are now empty. Now later you will open. Now what will they do? They will also come and ask, hello, give it for me. Okay, chalo, Pava, you will give some 3 chips. They will eat that. Again they will come. Now this time, hey, last time, you will give 2 chips. Next time again he will come. What will you do? Get lost, stupid fellow, get lost. I am not giving you. That means you are sacrificing. Your intention to sacrifice. Will it be always more and more or lesser? Let's say now Shashikiran bought 1 tea cup and 1 packet of biscuit. In that 1 packet of biscuit, there were 12 biscuits. How many biscuits was there? Now I felt, no boss, 1 cup of tea is not sufficient. Shashikiran is a teetotaler. Like alcoholic, I am a teaholic. Assumption. Now I need 2nd cup of tea. I found a person, let's assume that I found Mr. Dhoni uncle. He is ready to accept a cup of, let me say, he is ready to give me a cup of tea by accepting biscuit. Now I have only 8 biscuits left. I have 2 cup of tea. How many biscuits did I sacrifice? Now still I want 1 more cup of tea. Now I have only 5 biscuits. Now earlier how much I had? 8. Now I have how much? How many biscuits I sacrificed? Okay, still I want 1 more cup of tea. Now I only have 3 biscuits. How many biscuits I sacrificed? See, first I sacrificed how much? Next I will sacrifice only 1 biscuit. That means yes, I am ready to sacrifice. Will I sacrifice more and more going further or lesser? That is what? Diminishing rate of substitution. Yes, you are ready to sacrifice. Your intention to sacrifice will be reducing or diminishing. What is it? Reducing or diminishing? Clear. It is diminishing rate of substitution, because of which it is dash to the origin, convex to the origin. Since rate of substitution or marginal rate of substitution, since it is always and always diminishing. What is it? Always and always? Indifference curve has one more different name. What is it called as? Law of diminishing rate of. Is that clear? Understood? Next, see there. It can never be concave to the origin, because rate of substitution can never be increasing. Rate of substitution will be always and always. That's the reason it is always diminishing rate of substitution. Clear? Next comes, there are 2 exemptions. That means only in 2 scenarios. How many scenarios? It will not be convex curve. It will not be. It will be either straight line curve or L-shaped curve. What is it? Either straight line downward sloping, or remember, it will be straight line downward sloping in perfect substitutes. Which substitutes? Because rate of substitution will be equal, like this 5:5, 1:1, 3:3. When it becomes equal, when the rate of substitution becomes what? It will be downward sloping straight line curve, and that happens in case of which goods? See, in case of perfect complementary, to be frank, it should be upward sloping like this. But in your syllabus, they have said as dash shape curve. Which shape curve? Is that clear? So from this, your ICA loves that most. They are asking question multiple times. What is the nature of indifference curve in perfect complementary? What is the nature of indifference curve in perfect substitutes? But what is the general nature of indifference curve? Downward sloping dash to the origin. Why it is downward sloping? Because of limited income. Why it is convex to the origin? Because of diminishing or diminishing marginal rate of. Can the indifference curve be concave? No. It will be always and always. But in 2 scenarios, it will not be convex. Number 1. It will be downward sloping straight line curve. In case of perfect substitutes, downward sloping. In case of perfect complementary, Clear. Next point number 3. Indifference curve, whichever is away from the origin, completely towards right hand, that will give dash level of satisfaction. And if there is more than one indifference curve in the graph, we call it as indifference map. What do we call it as? When there is more than one indifference curve in a graph, we call it as indifference. And indifference curve, whichever is totally away from the origin, will give dash level of satisfaction, higher level of. See there, you don't believe. Same question has come, that too, bachchu question it is. Full, muft mein milega marks. That is how literally the question was. Wait, I will show. The graph is also there. Question number 86. What is it? Question number? With reference to the following indifference curve, which of the following curve represents the dash level of satisfaction? Which one? Whichever is away from the origin. Such a easy question. There is nothing here. See, that is what. Sometimes ICA will only donate marks. Clear, huh? If there is more than one indifference curve in a graph, we call it as? And even though if there is more than one, it should never intersect with each other. What is it? It should? Sir, why? Because before intersection, whichever is away, it is giving more satisfaction. But after intersection, IC1 is giving more satisfaction. How come? Whichever is away, IC2 should give more satisfaction than IC1. And that too, it is a limited income. Let's say IC1 is 100 rupees of income level. IC2 is 200 rupee. How come an 100 rupee income level can give more satisfaction than the 200 rupee? It leads to misconception of your point number 3. That's why it should never intersect. It should never. If there is more than one indifference curve, it is called as. In that graph, such multiple curve may be parallel or may not be. Even though if they are not parallel, they will never intersect with each other. They will never intersect with. Sir, why? If they are not parallel at one or the other point, they should intersect. Why? Because to increase consumption of one, you are sacrificing the consumption of another. That's why it will never intersect. Last but not the least, indifference curve should never touch any of its axes because it is always a combination of how many good? By chance, if it touches the y-axis, we are not consuming good A, we are only consuming. If it is touching x-axis, we are not consuming good B, we are only consuming. But it is always a combination of. Clear? This is indifference curve concept. Last but not the least, which one is this? Which line? Boss, I have this income. Let's say I have 60 rupees with me. Within the 60 rupees of income, what is happening to the stylus? It is giving a lot of trouble. Okay, now listen. Let's assume I have 60 rupees of income. How much do I have? 60 rupees of income. Within the 60 rupees of income, let's say I need to buy product A and product B. Let's assume product A is 10 rupee, product B is 15 rupees. See, I know that it is always a combination of how many goods? Combination of. Even budget line speaks about combination of. Now, which can be bought with given income and price level. Which level? So, budget line is also called as income line or? See, I need income. I also need prices of goods. Let's assume for a time being only and only product A. Only and only. How much money I have? What is the price of product A? How much of product A alone I can buy? 6 units. If at all I buy only and only product B with 60 rupee, how many units? That means this is the ultimate mark. That means product A I can buy 6 units, product B I can buy. Now I will join this line to x-axis and y-axis. This is budget line. Any point on the budget line will make me to spend the whole income of 60 rupee. Let's say point B. At this point P, assume I am consuming 3 units of A and 2 units of B. How many units of A? 3 into 10 rupees. How much is that? 30. Now 2 into B. 2 into 15. 30. 30 plus 30. That means any point on the budget line. What is that? Any point? Will make me to spend the whole income. I can't even save anything. Any point below the budget line, I can also spend, I can also save. Let's say 2 units of A and 1 unit of B. 2 unit of A, 20 rupee. 1 unit of B, 35 rupees I am spending. But how much I have? Still 25 left out. Now underutilization of income. What is it? Suppose if I go anything beyond budget line, not at all possible with the given income level. Let's say I need 5 units of A and 3 units of B. How much? 5 units of A and so 5 units of A, 50 rupees. 3 units of B, 45 rupees. 50 plus 45. Do I have 95? Not at all possible. Beyond budget. What is it? Anything below, that is underutilization. Anything on the budget line, optimum utilization. Anything beyond, not at all possible. What is it? Not at all. Is that clear? Understood? Now see there, even budget line can shift either towards RHS or either towards. Now what is the reason for RHS? This is superb. Income will increase or price of the product will decrease. The reason for LHS shift will be complete opposite. Income will decrease or price of the product will. Is that clear? Understood? So this is the concept of budget line. See, sometimes there is no rule that price of both the products should change together. One product price will remain same. Product A price will not at all change. Only product B price. Let's assume price decreased. Price? I can buy more units of B. That means there is only RHS shift only towards product B, not towards product A. Clear? So one product price might go up, another product price might come down. So a graph can be like this. In one place there is LHS, other place there is a. Yes, possibilities are there. Any mix and match combination is possible. Is that clear? So this brings to the last topic of chapter 2, that is equilibrium under which approach. Now I should combine both budget line and indifference curve together. So remember, two conditions are there. Budget line and indifference curve should be. What do you mean by tangent? They should just touch. What is it? They should just. See, budget line is like this. Indifference curve has to just touch and it has to go. Which IC curve is just touching? IC. And at the point of this tangency, MRS, that is rate of substitution, should be equal. We are consuming both the commodity in the equal proportion. Which proportion? Or even if I need to sacrifice, I will sacrifice equally. 1 unit of A I will give up to buy 1 unit of B. Like this, equal satisfaction or equal sacrification. So two conditions are there for ordinal approach equilibrium. Which approach equilibrium? Tangency should be there between IC curve and budget line. And at the point of tangency, dash should be equal. MRS or ROS should be. By this, the entire chapter 2 revision comes to an. From morning, 4 hours, we have done only with the chapter 2. Still chapter 3. Chapter 4 is pending. Chapter 3 will increase the speed. Chapter 4 will get over very fast because unit 2 is done now. Just a connection with the chapter 2 and chapter 3 there. Clear? Now, let us see the exam questions. Once we are done with the exam questions of chapter 2, we'll take the break, we'll have our lunch, we'll come back. And then, next 2 hours, one hour, one chapter will get over. It will be very fast. Now only I'm saying. Clear? Chapter 2 was the base. That is why it is taking a lot of time. In order to understand the topics, we need to first build a base. So I went to slow. Clear? Okay. Now you guys have to tell me the answers. Have a look here. Also we'll count how many questions have come. Okay, see here. Already we have discussed the numerical problem. Already we have solved it. Next, see there. If the total revenue of the goods increases, total revenue means TR. What is it? TR. If the total revenue, that means outlay. What is it? TR is also called as? TR is increasing because of increase in price and outlay will move in a same direction in which elastic? Relatively. See, same concept I discussed in the morning. See here, E lesser than 1, price and outlay will move in a. If price is increasing, outlay is also. Is that clear? Next up. Which of the following statement is not true while determining the price elasticity of? The greater the proportion of income spent on the commodity, lesser will be the elasticity of demand. Yes, na, proportion. We discussed na, same proportion question. When you earn more and more, will you spend more money or will you spend less money? Proportion. What is that? Proportion. See, the greater the proportion. What is the word? Yes, na, yes, true. We also discussed question number 16, classroom material. Yes, next, goods which are having close or perfect substitutes. Which substitutes? They are having highly elastic. That means E greater than 1. Is it greater than 1? Day. Perfect substitutes. Infinite. What is it? Infinite. Next up. Necessaries are generally price. Inelastic. Yes, na? E is equal to 0. Next, the more possible use of a commodity, greater will be the Multiple usage. Which usage? The more possible use. Yes, this is possible. But here, observe the option number A carefully. Greater the proportion of income on the... Are you spending more? Spending lesser proportion. Nah? Are you spending more proportion or less proportion? But what are they giving here? More proportion. Is it more proportion you will spend or less proportion? Which is not true. Option A. Next. Commodity for which the quantity demanded rises only at up to a of income. Up to certain level of income, demand will rise. Later it starts. Inferior goods. Puma example. Next term. Highly priced goods are consumed by status-seeking rich people. Which effect? I said na, snob effect, Veblen effect, inferior goods. Any one question is definitely going to be there. Next. An expectation that price will fall in the... Expectation that prices are going to fall in the future. What will happen? Upward movement on the demand curve, downward movement, rightward shift, leftward shift. One question. Increase and decrease happens due to change in other factors except price. That is where we have RHS shift and whenever price changes, movement on same demand curve, shift in demand curve, movement on same. Already we have done increase and decrease, a shift in demand curve. Expansion and contraction, movement. What is the reason for movement? Changes in price. But here, prices changes are now or in the future? Future change in price. That means increase or decrease. They are saying expectation of price that will fall in the future. In future, if price falls, present demand. Hey, present demand increases or decreases. Expectation of price will fall in the future. What is it? Price will? In future, prices will fall. So, present demand. Exceptions to law of demand, na? Expectations of future change in price. Exceptions to law of demand. See, in future, prices will decrease. So, present demand will. If demand decreases, LHS or RHS? Shift to which side? Leftward shift. LHS shift. Which shift? Next. The rate at which consumer is prepared to exchange good X to good Y, holding the level of satisfaction. Diminishing rate of substitution. Rate of substitution is also called as marginal rate of. Clear? Next up. Chapter 3. Okay. Two goods which are? The cross elasticity for a complementary goods are? See, free donation of marks. Next. When total utility is a dash rate, TU increases, MU. That means TU is increasing at dash rate. That means MU is decreasing, but MU is still remaining positive. See, same to same LDMU concept. TU-MU relationship. See here. TU is increasing, but MU is? TU increases at dash rate. And the values of MUs are still in positive. MU is decreasing, but MU is still positive. Next, already we solved this question. We did this. 3 was the answer. I think that's it. Just check how many questions have come in this attempt from chapter 2. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 questions. How many questions? So, in May 25 attempt, there were 10 questions. How many questions was there? Okay, now let us look into Jan 25 attempt paper. See that. When some people starts investing money in the share market, then many people starts following the same without considering its advantages and disadvantages. Someone else is doing, even I am doing it. Clear up, bandwagon, also called as demonstration effect. Next, which of the following does not describe the nature of the, chapter 1 it is, wait. Slope of demand curve. Change in price by change in quantity. Already we did this problem, numerical problem done. Next up, excess of price which a customer will be willing to pay rather than go without it. I'm ready to pay extra. Without that, I will not at all go. Consumer surplus. Whichever is away from the origin, dash level of satisfaction. Next, ceteris paribus, Latin phrase, everything else remains. We did this. We also did this. Did this. Next, chapter 3. That's it. Chapter 3. So, see number of questions. 1, 2, 3, 4, 5, 6, 7, 8, 9. Only 9. I guess only 9 questions in this. Okay, next attempt. I said average is 10. Sometimes up to 12. They can also go less than 10 or sometimes they can go even beyond 12 also. Any particular chapter. Okay, chapter 2. Was there any chapter 2 here? Here. Advertisement elasticity already done. Cross elasticity we already finished. Next, see there. Which tool does the ordinal utility? Which utility? RJD Allen and J.R. Eakes. Ordinal utility approach uses to analyze the consumer behavior and it is based on indifference curve and budget line. Both are ordinal. Here, LDMU, cardinal, elasticity, not at all related to consumer behavior. Consumer, cardinal approach. Only indifference curve is the ordinal approach. Next, an increase in consumer surplus. Increase in? When will consumer surplus increase? That is likely to happen when price falls. That means instead of movie ticket 200, if it becomes 100 rupee, you are ready to pay how much? 500. You are ready to pay how much? Earlier it was price was 200, but now you got it for just that means consumer surplus increased. So that means instead of 500 minus 500 minus consumer surplus was supposed to be. Now it became 500 minus consumer surplus. Now consumer surplus increased. Why? Because prices are falling. Next, if the income elasticity for a specific type of a good is greater than 1. Income elasticity greater than 1. Next, if X and Y are rich rivals, in a party Mr. X is wearing an expensive dress and seeing Mr. Y also has a same dress, decides to reject the use. Even he is using, I don't want to use. I said snob, Veblen, inferior. Any one question will be there. Next, we already discussed. Next, with respect to the properties of indifference curve, which of the following statement is? Higher indifference curve represents higher satisfaction. Yes. Indifference curve is having negative slope. Yes, downward sloping means negative slope. Intersection point of two indifference curve represents. Indifference curve should never intersect with each other. Indifference curve is dashed to the origin. Yes, which is false. Option C is false. Next, already we did this problem. Next, suppose the price elasticity of a demand for the firm is, for the product is minus 1.2. For a time being, ignore minus. 1.2, greater than 1 or lesser than 1. Next, see there, the price of the product is increasing by how much? Then it is more probable. See, greater than 1, that means more proportionate change. Which proportionate? More proportionate change. And price is increasing by? That means demand. Okay, that will decrease greater than 5%. Now, more proportion. Which proportion? 1.2, greater than 1, more proportion. See the option. Total revenue, profit. Total revenue, TR. TR means which method? Outlay method. If E is greater than 1, what is it? E is greater than 1. Price and outlay has a opposite direction. That means negative relationship. Now, in case of negative, see, both TR and revenue and profit will increase. No, negative. TR when profit will decrease. No, negative relation. It cannot be same direction. TR will be, profit will be. Yes, negative relation. Next, TR would be increasing, but profit will be. Yes, sir, both are negative. But how to identify? See here, what is happening to price? If price of the commodity, demand will decrease. Quantity demanded will decrease. Clear? That means what will happen to TR? TR will decrease. Profit will negative relation. First understand what is happening to price. Price of the product is increasing. So because of that, spending nature will decrease. But dash proportion, greater proportion. Which proportion? So that is how TR will decrease. Profit will increase. Is that clear? Next. I think that's it. See the number of questions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 questions. So total 10 questions were there in this attempt. Clear? So 9 questions, 10 questions and 10 questions. So that is the average for chapter number 2. That is the base. That will take a lot of time to understand. Clear? Huh? So the time is 1:10. Take a break till 2 o'clock. Till what time? 2 o'clock to 4 o'clock. 2 o'clock to? We'll try to finish chapter 3. Yes, chapter 3 will be done. Tomorrow we'll take up with maybe, let's see.
Sir, easy is faster.
Now, see ma,
Sir,
I have to understand. Even you have to understand. Suppose if you don't want me to do so much, I can cut down. If you want me to cut down, I can do it. Morning SM class is there for me in Malleshwaram. There 6 hours, here 6 hours. In a day 12 hours. Human in nature. Make it fast. Come back fast. Go and turn back fast. Okay, so before the break, we had finished with the entire chapter 2, demand, supply, consumer behavior, as well as chapter 4, unit 2. So now let us get started. We'll continue with the chapter 3. First, we'll do with the theory of cost, and later we'll start with the theory of production. So what do you mean by cost? Cost is a very simple term which speaks about all monetary expenses. Which expenses? Which is incurred by whom? Which is incurred by a manufacturer. That is called as a cost. See, total there are 12 types of cost. How many types of cost is there? 12 types of cost. Settle down fast. This is the reason. Come fast early. So there are mainly 12 types of cost, but out of the 12, 8 are important types of cost. How many are important types of cost? 8 important types of cost is there. Fixed cost, variable cost, total cost, average cost, marginal, opportunity and sunk, accounting and economic and incremental. So our primary focus is on this 8. Along with this 8, there are additional 4 more. So total how many types are there? 12 types. Okay, the very first one, which is that fixed cost. So what is fixed cost? Okay, all those monetary expenses. Which expenses? Which is unavoidable in nature. That means you have to compulsorily incur them. That means it doesn't matter whether you are producing the goods or whether you are not producing the goods. You have to pay them. Best example, rental expenditure. Let's say this is the premises which I have taken for a rent. Let's say, for example, for my manufacturing of XYZ goods. Every single month I have to pay the rent. Whether I produce the output or whether I don't produce, it doesn't matter. Irrespective of output. What is it? The fixed cost is going to remain same, and the cost curve will be horizontal curve or parallel to x-axis. Horizontal or parallel to? See, even though when we are not producing, there is still a fixed cost. Whatever might be the output level, irrespective of cost, fixed cost will remain same. Clear? Next comes variable. What is it? Variable. So variable cost, those costs which will change due to change in output. Suppose if we are producing more units, definitely then I have to incur more and more raw material cost. Let's say, for example, I am manufacturing a bottle. Let's assume that to produce one single bottle, I have to incur a variable cost, raw material, steel, all this gum, moldings and all. Let's assume it is 100 rupees. How much is that? 100. That means for every single time, if I am producing one single water bottle, 100 keeps on getting added. So whenever output increases, variable cost will also increase. Whenever output decreases, variable cost will also increase. Clear? So it depends upon the output. Now, even in that variable cost, there are 2 elements. How many elements are there? 2 elements. Number 1, proportionate changes and proportionate changes unequal. So what does that proportionate change equal? Simple. As I said, in order to produce every single bottle, what is my raw material expenses? Second bottle, 200. Third bottle, 300. Fourth bottle, fifth bottle. See, this is called proportionate change equal. Suppose if I am not even producing anything, will I incur any raw material cost? It is 0. That is when proportionate cost is equal. Proportionate changes are equal. But there is no rule that every time this proportionate change should be equal. It can also be unequal. What is it? It can also be unequal. See there, I am not even producing anything. 0 unit. Variable cost is 0. One single unit, 100. 2 units, It is 220, not 200. 3 units.
380.
It is 380, not 300. 4 units. It is not 400. 5 units is. It is not 500. See, like this, it will not always be equal. It will not always be. The proportionate change can be unequal. What is it? Proportionate change can be. Suppose if the proportionate change is equal, like how I have said in the first cases, variable cost will be upward sloping straight line curve. What will be the variable cost? Straight line curve. It is going to start from origin. It is going to start from where? Origin. Clear. But every time it will not be upward sloping straight line. It will be inverted S in shape. What it will be? Because proportionate changes are unequal. What is it? Proportionate changes are? So it will be dash shape in curve, inverted S. What is it? Inverted S shape curve. Is that clear? So remember, the reason for inverted S shape is law of returns to scale. What is it? Law of? Which is production function under long run. What is it? Production function under? See, in theory of production, still I am yet to do theory of production. There is a short run production function as well as long run production. In that, long run production function is called as law of returns to scale. If you remember, before the break we did with relatively elastic, relatively inelastic and unitary elastic. So, E greater than 1, more proportion. Same way, over there price and demand. What were we understanding? But now, rather than taking price and demand, we will take input and output. What do we take? Now, let's say for example, if input is increasing by 10%, input is increasing by how much? 10%. No doubt, output will increase, but greater than 10. Let's say 30% increase in output. So it has a dash proportionate changes. That means output is increasing more proportion than input. That is IRS, increasing returns to scale. Next comes CRS, constant. That means dash proportion. If input is 10% increasing, output will also increase by same 10%. Is that clear? Next comes, last but not the least, less proportionate changes. That is DRS, diminishing returns to scale. Suppose if input is increasing by 10%, output is only increasing by some. That means output is lesser than input. That is DRS. Output is same as input. That is CRS. Output is greater than input. That is due to the operation of all the three. That is IRS, CRS, DRS. Here, IRS, CRS, DRS. Observe, input is lesser. Let's say for example, input is 10%. Output is 20%. Let's say input is 20%. Output is also same. Say input is 50%. Output is just 20%. So due to the operation of IRS, CRS and DRS, variable cost is dash in shape. Inverted S in shape. What is it? Inverted S shape curve. Is that clear? So what is the general nature of variable cost? It will be dash shape curve. Why it is inverted S in shape? Because of law of returns to, due to the operation of IRS, CRS and DRS. Clear? Suppose if you are only and only operating at CRS, where are we operating at? That means constant returns to scale. Suppose if input is increasing by 10%, output will also increase by same. Again one more time 10%, again here also it is. That means we only and only operate at upward sloping straight line curve. Upward sloping. And there are mainly two types of variable cost. How many types of variable cost is there? One is semi-variable cost. Now, up to some extent, what is it up to? Cost will remain fixed. Usually in Bangalore, we used to give example earlier. First to 2 kilometers, auto rickshaw. Let's say for example, they will charge 40 rupees. How much they will charge? Anything if you travel beyond 2 kilometer, meter starts ticking and according to the meter, it will be variable cost. Which cost it will be? Now no one follows this properly. Everyone are Ola, Uber and all. Clear up. But let me say up to some extent. What is it up to? Cost remains fixed. What is it? Cost remains. Beyond which cost starts varying. Beyond cost starts. Is that clear? That means let's say electricity charges. Even though you don't use electricity for one whole month, still you will get a minimum electricity bill. Do you agree? That means you have to pay that fixed amount of charges. Only beyond that particular limit, let me say up to 20 units, 30 units, 50 units. If you are using beyond that particular limit, then the meter starts ticking then according to your usage. So up to some extent cost is fixed. Beyond some extent cost starts varying. That is called as which type of variable cost? Next, stair step variable cost. That means every additional expenses will be same. See, to be frank, it should be like a upward sloping straight line curve. But they have given it in the form of a staircase. That means, let's say, sir, I bought one tea, 10 rupees, 1 cup of tea. One more cup of tea, another 10 rupee. Now, tea price increased. From 10 rupee, let's say it has increased it to 12. From year after, every one more cup of tea, 12. Again, rupees 12. Like this. Every additional expense. What is it, every? Every single time when I buy one more, every additional expenses are going to remain same. That is called dash variable cost. Stair step variable cost. Which variable cost? Clear up. Variable cost is how many types? 2 types. Semi-variable and stair step variable cost. And what do you mean by variable cost? Those expenses which changes because of change in output. Whenever cost remains the same, irrespective of output, every time cost is same. That is called as. So we understood fixed, we understood variable. Now let us understand total cost. Which cost? Total cost is a combination of fixed and variable. What is it? Total cost is a combination of, see, total fixed cost plus total variable. We will add both together. Total fixed plus total variable. Putting together is called as a total cost. Now observe this very carefully. If I am not even producing anything, when output is 0, will I have any variable cost? Variable cost will also be 0. But observe, we have a fixed cost. Which cost is there? So fixed cost is existing. Now that means as per the formula, fixed cost is 100 rupee, variable cost is 0. So what is the total cost? That means very simple. Whatever will be the total fixed cost, that itself will become the total cost. Now what is the total cost when output is 0? That means when output is 0. What is it? When output is 0, TFC is equal to TC. Whenever output is 0, dash is equal to dash, TFC is equals to TC. Now next 100 plus 100, 200. Next 320. Next 480. Next 650. Next 850. Now observe the variable cost. Is proportionate change same? No. Then variable cost will be from the origin inverted S in shape. But fixed cost remains the same irrespective of output. So that is horizontal curve. Which curve? We are just adding the fixed cost along with the variable cost. So even total cost. But the total cost will start from the point where TFC starts. Because just now we said now, whenever output is 0, whenever dash equals to dash, TFC is equals to. That's the reason TFC starts from the point where, or TC is going to start from the point where dash starts. TFC starts, but variable cost starts from origin. Variable cost is inverted S in shape. Fixed cost is horizontal. So TC will also be inverted yes, because variable cost is inverted yes. Variable cost is. So combination of TFC plus TVC put together, TFC plus, that is called as total cost. Is that clear? Now comes the most important of all, average cost. Which cost? Simple. Cost incurred to produce every single unit. What is it? Cost incurred to produce? Okay, now let us take an example. Assuming, now let's say Shashikiran is producing water bottle. Let's assume I am taken a premises for a rent. Every month I am paying a rent of how much? And to produce every single water bottle, my cost is 100. Suppose 10 bottles, now my cost will be 1000. For 100 bottles, my cost will be 10,000. For 1000 bottles, my cost is going to be. So this is raw material cost. This is variable cost. Now let's assume I am producing 100 bottles. How many bottles? 100 bottles. What is my raw material cost? What is my fixed cost? So as per the total cost of producing 100 units, TFC plus TVC, this will be how much? 10,000 fixed cost plus 10,000 variable cost. Both put together is how much? 20,000. Clear? Now how many units I produced? 100 units. Now average cost is simple. Total cost divided by quantity. What is the total cost? How many bottles I produced? 100 bottles. So 20,000 divided by 100. Rupees 200 per unit. What is rupees 200? See, this is what we call average cost. Which cost is that? Total cost divided by quantity. What is the total cost divided by? That is called as which cost? Average cost. Clear? Now, even in this average cost, whatever this 200 rupees is there, we can actually bifurcate this as average fixed cost and average That means in every single water bottle, how much proportion of fixed cost is there and how much proportion of variable cost is there. So what is the formula of average cost? TC by Q. Same way, AFC will be TFC. What is it? TFC divided by quantity. AVC will be total variable cost divided by quantity. Is that clear? So this is going to be the formula for total fixed cost, that is TFC will be total cost minus total variable cost. What is TFC formula? How did we identify it? Because total cost is total fixed cost plus total. By using the same formula, from the total cost, if I remove variable cost, what do I get? Total fixed cost. Suppose if I need to identify total variable cost, from the total cost minus total fixed. Clear? These are the three simple type of a cost. What is average cost formula? Total cost by quantity. Now average cost can be split into AFC and what is AFC formula? TFC by Q. AVC formula? Clear? First one, let us understand average fixed cost. See, these topics are important. Whatever the question comes from average cost, most of the times it will be from these area. Average fixed cost. That means what is the proportion of dash cost present in every single unit. See, I am producing 10 bottle, 20 bottle, 40, 50, 100 and 1000 bottles. And my fixed cost is how much? 100 rupee. Now, as per the formula, what is AFC formula? TFC by Q. Take out calculator. 100 by 10. 10. 100 by 20. Next 100 by 40. 2 point. Next 100 by 50. 100 by 100. 100 by 1000. Suppose 100 by 10,000. 0 1. 100 by 1 lakh. 0.001. That means whenever output keeps on increasing. Whenever output keeps on. AFC keeps on. But AFC will never become 0. At least some minute fractional element. 0.1. 0.01. At least some minute element will be there. See there. AFC will never go and touch x-axis. Can you see the slight gap? It goes almost near to the x-axis, but it will never touch the x-axis. Simple. Whenever output is increasing, AFC keeps on. But AFC will never become. AFC will never become. Is that clear? Next comes average variable cost. It is J in shape. What is it? See, initially AVC will decrease. Later AVC will become minimum. Later AVC starts increasing. So what is the nature of average variable cost? J in shape. Now sir, why is this J in shape? Due to law of variable proportion. Due to what? Because production function under short run. Just few minutes back we discussed about production function under long run. What is production function under long run? Law of returns to. Because of which variable cost is dash in shape. Inverted, yes. Now average variable cost is J in shape. Which variable cost is J in shape? Average variable cost is J in shape because of law of returns to. Production function under short run. See, average fixed cost is downward sloping convex to origin. What is the downward sloping? It will never become 0. It will never become. But average variable cost is dash in shape. Now, same to same. Now, listen to this formula carefully. If you remember, what is the total cost formula? TC. TFC plus. By same way, I can also say average cost is AFC plus. Yes. Not just AC is equals to TC by Q. Even we can call it as AFC plus AVC. Is that clear? So because of the combination, what is it? Because of the dash and dash, AFC plus, we have AC curve. That means AC formula, new formula. What is it? AFC plus AVC. So this is the new formula. And just now we understood AFC curve will be downward sloping curve from left to right. AVC curve will be dash in shape. And why is that AVC curve J in shape? Because of law of. Even that has got 3 stages. How many stages are there? See there, SIR, stage of increasing return. Output will increase, but dash proportion. That means if input is increasing by 10%, now output will no doubt increase. Let's say, for example, increasing by some 30%. How much percentage? Next, stage 2, SDR. What is it? Stage of diminishing return. Now output will increase, but dash proportion. That means if input is increasing by 10%, output is increasing by just. Now comes the twister in the story. After dash point. after dash point. Now output is not increasing, rather output is. Observe, in first two stages output is. But in the last stage output is. After dash point, after. Now we need to understand which is the certain point beyond which output is not increasing, output is. So remember that certain point is nothing but when AFC and AVC both are equal. What is it? AFC is equal to AVC. Remember, when AFC and AVC both are equal, that is happening by end of stage 2. By end of which stage? That is SDR. AC has also become minimum. AC has also become what? AC is minimum. AFC and AVC both are equal. That means if I am producing one single water bottle, if 200 rupees is the average cost to produce every single water bottle, in this 100 rupees a fixed cost, 100 rupees a. That is what? See, average fixed cost and average variable cost both are equal. That is when AC becomes minimum. Dash becomes minimum. Cost of producing every single water bottle is minimum. That means I should produce at this Q1. Where should I produce? And this is what we call certain point. Which point? Certain point. Observe, in stage 1. Which one? SIR. Increasing return. AFC is also decreasing. AVC is also. Henceforth, AC will also decrease. Which will decrease? By end of stage 1, AVC will become minimum and AVC slowly starts increasing in stage 2. What happens? In stage 2, AVC slowly starts. But AFC continues to decrease. AFC decreases faster. AVC increases slower. Henceforth, AC continues to decrease. Henceforth, what AC? Continues to. Now, by end of stage 2, this is most important. By end of stage 2, AC will become dash. What do you mean by AC? Cost of producing every single unit is minimum. That is what every manufacturer wants, na? Whenever I am producing the commodity, I want my cost of production. What is it? Cost of? Should be minimum. It should be dash. Clear? When cost of production is minimum, in that cost, whatever I am incurring, fixed and variable cost both are equal. That is what we call dash point. Suppose, sir, what happens if I produce beyond certain point? Simple. Your AFC no doubt continues to decrease, but it will come to decimal 0.1, 0.01, 0.001. Like this, it goes to decimal. But AVC starts increasing faster, because of which AC starts. That means variable cost is increasing faster, fixed cost is decreasing slower. That's why AC starts. Now you tell me, when you are manufacturing, when your cost is increasing, are you interested to produce? That is why output should not increase after certain point. Output should only, clear, after certain point, output only and only decreases irrespective of. And this graph is most important. From this graph, many a times the questions have come. Now listen to the question carefully. I will also show the exam question. Clear? Wait, let me show the exam question better. Based on the exam question, I will explain it to you guys. That question is Katarna question it is. I will show you. Wait. Where is that? One more superb question it is. That was little advanced level question it was. Theory of cost. Wait, I will say what is that advanced level. Now observe. When average cost is increasing, what is that average cost is? Is variable cost more or fixed cost more? Variable cost is increasing faster, fixed cost will be decreasing. That means proportion. What is it? Of fixed cost is lesser. Proportion of fixed cost is? That's why average variable cost is coming near to average cost. That means in the graph. Now observe. AVC is increasing. AVC is becoming closer to AC. Why? Because AFC is reducing. AFC is. the proportion of fixed cost is lesser. Proportion of fixed cost is? That's the reason average variable cost is going near or closer to which cost? See this distance. It is going closer to average cost because fixed cost is decreasing and variable cost is. That was the question. Most of them wrote it wrong. Anyhow, when we are discussing Allah, you will get that question. I already explained you. So remember, any manufacturer, where will he wish to operate? That is which stage? SD. Clear? So after certain point, what is it after? Output should not increase. It should. So any manufacturer will prefer to operate in which stage? Why? Because cost of producing every single unit is at the same time dash is equal to dash. That is also called as same to same. Full on explanation I have given here. Clear? Next comes my favorite topic. Tortoise shell. What is it? Relationship between AC and MC. What is it? Relationship between? Wait, just now I saw that question. Here. Which of the following is not true about the relationship between average product and? Same way, the question can also come from average cost and marginal cost. Average cost and? See, just now we identified what is the nature of average cost. U in shape. What is in shape? Why it is U in shape? Because of combination of AFC and so we are adding AFC plus AVC. We are getting AC curve and such AC curve is dash in shape. U in shape. Clear? Now listen to this little carefully. This is confusing. See, marginal cost. Which cost? Okay, let me explain marginal cost and let me come back. See, what is the meaning of marginal cost? It is a cost incurred to produce how many extra unit? One extra or one additional unit. See, usually MC curve will be U in shape. MC curve will be dash in shape. See, for us, only the second part of the graph is important. First part of the graph is not important. We will explain this in chapter 4. Clear? Why second part is important? Why first part is not? So, when we are writing MC curve, we will only write it as J in shape. Which J in shape? We don't write the full graph. We only write the second part of the graph. So, we write it as dash in shape. J in shape. Clear? And this is most important. See, AC curve is dash in shape. AC curve, just now we understood now. AC curve will be. But MC curve will write it as dash in shape. So remember, MC will cut AC. MC will from below and minimum of AC. What is it? Below and this you should keep it in mind. Same way, when we are understanding the concepts of average product, which product? Marginal product. Which product? Will cut from above and maximum. Above and of AP. Which product? Marginal product will cut from above and. So, sir, how should we remember this all? Simple. I call it as a tortoise shell. Which shell? So, there are two concepts in this. How many concepts are there? So, remember both the concepts. First, see, I will be explaining AC curve. Which curve? Since I explained already average cost. AP, I am yet to do it. Still, theory of production, I have to explain. See, initially, AP will decrease. Do you agree? AP or AC, da? Yes. Then I'm saying AP will decrease. You're like, hello, I know you had your lunch. Wake up, stupid fellows. So initially dash will decrease. Later AC will become. Then later AC starts. So first stage, AC will. See, remember that what I'm explaining you now is rate of increase or rate of decrease. That means which will increase faster or which will decrease faster. What is it? Which will increase faster or which will? Okay, let me take up a random example. Now, let's say this is AC curve, this is MC curve. Let's say 20 or let's say 16, 12, 10, 4. This will be like 20, 18, let's say 16. This will be like 14. This will be like 10. Now, you tell me which is decreasing faster, AC decreasing faster or MC? AC is decreasing very faster than. That is what? Whenever AC is decreasing, whenever dash is decreasing faster than dash, AC is decreasing greater than MC. AC will decrease greater than. And just a few minutes back, I taught you people, AC curve will be dash in shape. MC curve cuts AC from dash and dash. At that point of minimum of AC, at that point of dash is equal to dash. Now AC will be equal to. That is what? Whenever AC is minimum, what is it? AC is? Dash is equal to dash. AC is equals to? Clear? Now, whenever AC is increasing, whenever AC is? Remember, this is important. MC will increase faster than AC. What is it? MC will increase? MC will increase? Okay, let me explain it once again. See, initially AC will decrease. AC will? Dash decreases faster than dash. AC decreases faster than? Next, whenever AC is minimum, dash is equals to dash. And we know that MC cuts AC from dash and dash, below and minimum. Clear? Next, whenever AC is increasing, dash increases faster than dash. See here, already it has cut, it is increasing faster, then AC will increase. So this is more steeper. MC curve is more, AC curve is still flatter. Clear? Steeper means it will increase faster. That's why whenever AC is increasing, dash increases faster than dash. Clear? Now let me go to average product. Still I didn't explain you, but still theory of production is yet to be done. But I'm explaining now itself. Initially, whenever AP increases, MP increases faster than AP. Same to same. Whenever AP is maximum, MP will be equal to. Now, whenever AP decreases, remember, MP will only decrease faster than. That means there is only one shortcut to remember. So, what is that shortcut? Only and only when AC decreasing, we guys have to be careful. Only and only dash decreasing, we have to be. In remaining three corners, observe, marginal is always greater than average. Marginal is always greater than? Only and only when AC is decreasing, AC decreases faster than. Clear? Understood. So this is the shortcut to remember. Only when AC decreasing, be careful. Only when AC is decreasing, average concept is greater than marginal concept. Is that clear? Understood? So when all the other three corners, marginal is always greater than average concept. Is it clear? So this is the tortoise shell concept. Next comes the most important, SAC and LAC. What is it? SAC and? See, concept is very simple. Yes, pa. I will explain. Wait. But there are still more explanations are there. I have to connect theory of production also. When I come to theory of production, I will connect it. Clear? Now it is very early to connect. Many of them will get confused. Clear? Okay. Doubt pa? Oh, you're checking AC. Is it coming or not? Okay. Okay, chalo, let's continue. Now see there. Now let's assume that I'm getting admission of a 50 students. How many students? Okay, for marathon, economics marathon, okay, we took an admission of 50 students. Now I have a small classroom, SAC1. Now where I can accommodate 80 students in total. How many students in total? Okay, SAC1. I can accommodate 80 students. How many students? Okay, I have classroom number 2, SAC2. I can accommodate 150 students. How many students? Now SAC3. Let's say I can accommodate 300 students. How many students? So, small classroom, medium classroom, bigger classroom. That is the size. SAC1 small, SAC2 medium, SAC3 bigger. Now, I got admission of 50 students. How many students? Which classroom should I use? SAC1. Now, if you are producing a 50 students, even your cost of production is minimum. Cost of production is? Okay, let's say little more students join. Now, let's say for example, 70 students have joined. How many students have joined? Now, I am at point A. Now, there are totally 70 students in the class. I know that my AC is increasing. Beyond 50, AC slowly starts increasing. Now I am at point A. Now I know that going further, still more students might join. Still more students might join. Now you tell me, should I still continue in the small classroom or should I go to medium classroom? As expected, number of students increase. Now total, let's say for example, there are 80 students. How many students? 80. Suppose if I had continued in the small classroom, from point A, cost will go to point N. Cost will go to where? But since I came to medium classroom, my cost is at point M. Where is the cost? Okay, still popularity increased. Now, 100 students have joined. How many students? My cost is minimum in medium classroom if I'm, let me say, teaching 100 students. Now, little more popularity increased. Now, 120 students join. How many students join? Now again, decision making point. Should I still continue in medium classroom or a bigger classroom? Now still more popularity increase. Now total around 200 students are there. How many students are there? See, 300 is the total capacity of bigger classroom. Now I have how many students? See, like this, whenever number of students keeps on increasing, I should go for a bigger classroom. I should go for a. Now let's assume. Now 400 students took admission. How many students took admission? Now Shashikiran, you can't have classroom and all. Kindly go one marriage chowdhury you book. One big auditorium you book and you kindly teach from there. That means now I should go for much more bigger classroom. For how many students? 400 students. That means this is SAC for simple. When the capacity of the firm is increasing, capacity of the firm is. That means in a short run, I will first understand, boss. Crash course, I will not do it for whole year. I will just do it for 3 days and 4 days. For 3 days and 4 days. Should I go with a small classroom, medium classroom, or a bigger classroom, or one big marriage hall, one auditorium? Like this, I should understand. Depending upon number of students who have taken admission. Do you agree? Now let me take one more example. Now let's say Shashikiran is a water bottle manufacturer. Now with the small machinery, let's say I can produce some 200 bottles a day. With a medium machinery, 500 bottles. With a big machinery, I can produce 1000 bottles. Little more bigger, ultra big. I can produce some 1000 bottles in a day. Like this, depending upon my order size, I should select, should I produce in small, medium, large or extra large? Accepted. So in a short run, first we should decide a plant size. Which size? So SAC is called as plant curve. Which curve? See, whatever I am operating in every single month, I will be operating for a whole year. That is long run. Which run? Now comes Rangoli competition. Long run. That means LAC curve. Which curve? I have a long run planning. I have a dash planning. This long run planning is decided based on my short term plant size. Which size? Okay, now let's say for example, in a month I am producing 500 bottles. How many bottles? 500 bottles in a month I will be producing. In a year I will produce 6000 bottles. How many bottles? I decided if I produce in SAC 4, where I produce SAC, even for one single month my cost is minimum. For whole year also cost is minimum. 500 bottles in 1 month. So I should produce in fourth machinery. In first machinery I can only produce 100 bottles. In second machinery 250 bottles. Third machinery 400 bottles. Fourth machinery 500 bottles is the minimum. What is it? It is the minimum. Clear? So I decided I will produce in SAC 4 in short run as well as in the. For 1 month 500 bottles. 1 year 6000 bottles. To produce 6000 bottles. What is it to produce? My cost should be minimum. I will understand. In which plant, in which machinery if I produce a bottles for every month. Even monthly my cost should be minimum. Overall year also cost should be. I decided, boss, SAC 4. SAC 4 is this point M. At this point M, listen to this very carefully. At the point M, LAC and SAC both are tangent at their minimum. Both are dash. Suppose initially, what is it? Suppose when I am producing the output, see, my cost is still decreasing. Cost is still dash decreasing. Cost is still reducing. That means when I produce more and more units, cost keeps on decreasing, and this happens because of economies of scale. What is it? And economies of scale will be existing until this point M. Until this. This is also called as optimum scale of plant. What is it called as? So until where economies of scale is existing, until optimum scale of plant. See, this is where exam question comes. Initially, what is the word? When output is increasing, output is cost is decreasing. Cost is at optimum scale of plant. Where? Optimum scale of my short run cost as well as long run cost. Both are minimum. Both are. And that happens only and only where? Optimum scale of. They open up your mouth. Everyone respond, stupid fellows. Next. Beyond optimum scale of plant. What is it beyond? If I produce, my cost starts increasing. This is called diseconomies of scale. What is it called as? Is that clear? See, until optimum scale of plant, I will be having economies of scale. During economies of scale, whenever output increases, cost keeps on decreasing. Until when? Until optimum scale of plant, we have dash. If I produce beyond optimum scale of plant, my cost starts because of. Now observe, black color dotted line. Black color. There is a dots like this, black color. This is where LAC curve is touching SAC. LAC is? Now observe, SAC1, SAC2, SAC3. Now is LAC touching SAC at their minimum point? Is this a minimum point? No. See, this is the minimum point of SAC1. This is the minimum point of SAC2. This is the minimum point of. That red color dotted line is the minimum point of SAC1, 2 and 3. Is this black color dotted line the minimum point? It is towards left side. It is towards. That means initially, what is it? During economies of scale, when output is increasing, output is. No doubt LAC is decreasing. LAC is. But is it tangent at the minimum or left side? So this will be the question. In economies of scale, LAC will be tangent to SAC towards which side? Left side or decreasing side? Left side or? Now observe the same in diseconomies of scale. Is that black color dotted line minimum points? No, see, this is the minimum points. Now LAC is tangent to SAC towards which side? Right side or increasing side? Right side or? Now let me ask you the question. You guys have to respond to me. Initially. What is the word? What will be there? In economies of scale, when output increases, LAC. But is it tangent at the minimum point of SAC? Where it is tangent? Left side or decreasing side? Then where is LAC and SAC both are tangent at minimum? Optimum scale of. That is what we call certain point. See, AC is minimum, LAC is minimum. And after the certain point, that is after optimum scale of plant, if output increases, LAC will increase. When it is increasing, is it tangent to the minimum point of SAC? Where it is tangent? Right side or increasing side? Now listen to the question carefully. After optimum scale of plant, after, if we increase output, if we increase, cost of production will. That is what? Up to that certain point we should produce. We should not go beyond the. That means every manufacturer will wish to operate in where? And we are understanding long run. This is IRS. This is CRS. And this is. IRS is also called as economies of scale. DRS is also called as. Optimum scale of plant is also referred as. Clear? Understood. So this particular concept, still even more in detail, I have explained in the previous marathon. Clear? You can watch that. And if you want to revise, you can watch this once again. See, tortoise shell is important. Which is important? Even from this questions are coming. Even from LAC and SAC also questions have been asked. Clear? So this is the concept of average cost. Which cost? And what do you mean by marginal cost? It is a cost incurred to produce how many extra unit? Or one additional. And remember, let's say for example, now I'm manufacturing bottle. Now let's say Dev is my customer. He will come and give me order for 101 bottle. How many bottle? 101. But by mistake, Shashikiran produced 100 bottle. How many bottle? 100 bottle. Now see, I took an example, Alva. See here, I was giving you the values. See, my rental expenditure is how much? To produce every single bottle, what is raw material cost? 10 bottles, 100 bottles, and he gave me order for 101, but Shashikiran by mistake produced how much? So fixed cost plus variable cost. Fixed cost 10,000 rent, variable cost 10,000. That is raw material. 10,000 plus 10,000 to produce 100 bottle. What is the cost? And to produce every single bottle, that is 100 bottles. Average cost of producing every single bottle out of 100. How much is that? 200. So cost of producing every single bottle is how much? 200. What is the order size given by Dev? By mistake, Shashikiran produced how many bottles? Cost of producing every single bottle is how much? Now how many bottle shortage? Now what is the cost to produce that one more extra bottle? Welcome to CA. 100. Stupid fellows. I will only incur variable cost. Now only this variable cost. Will I pay once again rent? Why will I pay once again rent? That means I will only and only incur variable cost. That means concept is very simple. Marginal. One more extra. One more. 101 bottle. But I produce 100. How much shortage? To produce this one more extra bottle. One more. Which cost I will incur? Only and only. That means MC changes only due to change in variable cost. MC changes due to change in. Welcome. I said now marginal cost, marginal revenue, marginal. Every time marginal concept is where you guys will go wrong. And there are two formulas. How many formula? Output is continuous and when output is not. Clear. Understood. Output continuous TCN minus 1. Present minus previous. Output is not continuous. Change in TC divided by change in quantity. Now to produce this one more extra bottle, that is 11th bottle. Which bottle? 11th or 101 da? Then when I say 11th, 11th bottle. Stupidity. Wake up first. After having lunch, nicely everyone are sleeping. That means now let me erase this. Wait. Now let's say Shashikiran is producing 101 bottle. Total cost formula TFC plus. Fixed cost is still same. Rent is how much? 10,000. Now variable cost. This 10,000 plus one more. How much? 10,100. So what is the total cost of producing 101 bottles? 20,000. See, observe. Total cost for 100 bottle is 20,000. Total cost for 101 bottle is. So present minus previous. So this is present. This is previous. So present is how much? 20,100. Previous is how much? What is the difference? Got it? So marginal cost will change only because of change in dash cost. Clear? Now continuation of marginal cost, there is one more concept. Incremental cost. Which cost? See, it is an extension of a. Now let's say Shashikiran is producing 100 bottles in January. 100 bottles in? 20,000 was my cost. Now same 100 bottles I will produce in February. Now 23,000. How much? Sir, how come? Same 100 bottle 20,000 na January. Now in February, how come it became 23,000? Now I have a special requirement from them. This water bottle cap is there now. I want color cap because I am doing yellow group, blue group, green group and all in my school. In my Montessori, I am dividing it into a group. And even in that particular, for blue bottle, I need Chota Beam. For red bottle, I need Doraemon. For green bottle, I need Pokemon. Like this, he has a special requirement. He has which requirement? So because of that, now my production costs have gone up. Production cost have. Because of a client's requirement. Because of a. Or my machinery was very old. Now I replaced that machinery and I bought a new machinery. Now that new machinery is taking a lot of electricity because of the 3,000 extra. That means due to change in business decision. Due to change in which decision? Business decisions. Clear? See, whenever business decisions changes, like which kind of decision? See, change in the production line, replacing a worn out machinery, buying any new production or acquiring a dash set of client. They have a special requirement. Because of that, there is an additional cost incurred to produce dash batch of output. One additional batch of output. Same 100 bottles in January 20,000, February 23,000. That extra 3,000 is called as a dash cost. Clear? Now incremental can change because of both fixed as well as variable. But marginal will change only because of variable cost. Is that clear? Understood. So this is incremental. Now let us go to the next type of cost. Sunk cost and opportunity cost. Best example of sunk cost. R&D expenses. Which expenses? R&D. What do you mean by R&D? Research and development expenses. Which expenses? Or advertisement cost. I will bring Katrina Kaif, Virat Kohli, everyone. And I will do that advertisements. And will I recover anything in the name of advertisement income? Highly impossible. We don't have anything called as advertisement income. Only there is a expenses incurred which cannot be recovered back. Which cannot be. Let's say you went to a movie. First day, first show. But you didn't like a movie. Within half an hour you will come out. If you go back and give tickets, will they give money? They will say, get last poda day. That is how they will say. Clear? That means cost once incurred. Cost once cannot be recovered back. Another best example. Preliminary expenditures in your business. Registration charges. In accountancy will show now preliminary expenses. Can you recover them back? And get ready, from this numerical problems are coming. Wait. Question number 25. What will be the total amount of on the following? Fuel and power, is it sunk cost? No, we can record and we can also recover that now. Cost of production, research and yes, this is sunk cost. Rent paid. Yes, we can recover. Wages paid. Yes, it is a part of your cost of production. Na? Advertisement. Sunk cost. See, 150 plus 5. Answer. See, this is how I say donate marks. But if you don't want donation, you will write wrong marks. You will only donate them with negative mark. That is why concept is important. See, what are all the examples of sunk cost here? That's it. You just have to add these two things. Answer is 150. Such a easy question. We have explained theory. They are giving in numerical problem. See, they want you to score more, but you don't want to score more. Why? You don't know a concept. Clear? Understood? So this is the concept of sunk cost. But the beauty of sunk cost is it can be recorded in the... But we have opportunity cost. Opportunity foregone. What is it? Opportunity? Now let's say Shashikiran, after my BCom, let me say in my final year of BCom, I got selected in campus interview. Let's say KPMG. Where? And Ernst & Young, PwC, all big fours that come. I got selected in all the three. Assumption. What is it? Assumption. Let's say now PwC. Now PwC said in a year I will give you 3 lakh rupee. Now KPMG said in a year I will give you 3.5 lakh rupees as salary, not month, year. Next, let's say for example EY, Ernst & Young. They said I will pay you 3.2 lakh as salary per year. Now which one should Shashikiran select? By chance if he wants to go. How much, sir?
3.5 lakh.
But Shashikiran didn't want to work under anyone. I started my own business. What is my business? Bottle manufacturing business. Now after 1 year, now let's say after completing that one, let me say full entire bottle manufacturing for 1 year, I made a profits of 3 lakh. How much I made a profits of? I will be thinking, hey, stupid fellow, Shashikiran. Shut up, and if you had gone to 3.5 lakh rupees of income with KPMG, that was better, na? You selected to start your own business. How much are you earning? 3 lakh. But how much you could have earned? Now in my books of accounts, P&L, credit side, if I would have worked in KPMG, extra 50,000 I should have got. Shall I show that in books of accounts? Or can I show it in books of accounts? That is what? Opportunity cost. Opportunity foregone. What is it? Which opportunity foregone? Next best opportunity foregone. That means out of these 3 opportunity, which is the best opportunity? I should only compare with the best opportunity, and I cannot show that in the firm's books of accounts. See, we cannot show that in the firm's books of accounts. Formula: opportunity selected minus opportunity. And why is that opportunity cost comes? Because of limited resources. Because of... Now Shashikiran is a human resource. Simultaneously, I can't start my own business and I cannot also go and work in KPMG. Possible, na? Possible, la? Hello, excuse me, wake up. Is it possible to work both the place simultaneously? So I should select any? I selected to bottle manufacturing, I rejected the... See? Opportunity cost concept arises because of the fundamental premise. Premise means assumption. Resources are, and such resources can be put into or alternative uses. If not for one purpose, we can use it for other purpose. So this is the concept of dash cost. Can it be shown in the books of accounts? But sunk cost can be shown in the... Sunk cost once incurred cannot be. Opportunity, next best opportunity. Next comes accounting cost and economic cost. Simple concept. Those expenses which can be recorded in the books of accounts, and from whose point of view? Accountant point of view. Whose point of view? That is called accounting cost, also called as direct cost or explicit cost. Now comes economic cost. This is important because which subject are we studying? Whose point of view is important? Economist point of view. Those expenses which can be and both put together. Opportunity cost can be shown in books of accounts. Accounting cost can be shown in books of accounts. So accounting plus opportunity which can be shown plus which cannot be put together is called as And economic cost is also called as under. Next comes a beautiful explicit and implicit. As the name say, explicit, which can be expressed, which can be expressible. That means which can be shown in the books of account. These are actual monetary expenses. But implicit, what is it? Which cannot be shown. These are not actual monetary expenses. What is it? Not actual. See, in explicit, you are making payment to outsider. So it is a payment concept. Which concept? But implicit is like Nityananda. Me talking to the outside me through the inner me from the outer me. That is like Nityananda. What is that Nityananda? Simple. Let's assume this building belongs to Shashikiran. Assumption. What is it? Building belongs to. And I'm starting business in my own building. And in my books of accounts, I'm showing as rent paid. Which paid? Who is paying rent? Shashikiran. For whom? That is implicit cost. We are not paying this to any outsider. We are only receiving money. But in the books of accounts, we are showing it as an expenses. Books of accounts, we are showing it as a. Sir, why, sir? Are the stupid fellow economist? That means for decision making purpose. Which purpose? See, Pa Shashikiran. In this building, in this floor, rather than you doing your bottle manufacturing, if you could have given this premises to someone for rent, you will earn rental income, na? Assume 10,000 rental income. You are foregoing the 10,000 rental income because you are only starting this business. So, even including that, you should consider it as a cost. From whose point of view? Economist point of view. But accountant, Akhilesh sir doesn't have any problem. Akhilesh sir say, Shashikiran, whatever expenses you will incur, say that we will record it in books of accounts, life simple. Why do you want to complicate your life? Hey, no. See, Shashikiran had opportunity of going to KPMG. He sacrificed employment in KPMG. He started his own bottle manufacturing. Which one? Because in regular class, we give bench manufacturing example. There, full length and breadth connecting full bench manufacturing only will happen. Now, I am a bottle manufacturer. Now, Shashikiran could have worked in a KPMG and earned how much? He sacrificed that, na? That means in his bottle manufacturing, at least, what is it? He should get 3.5 lakh rupees of income. Same way, this building, you should have given to someone as a rent. You will earn how much of rent? You have sacrificed that, na? At least including that sacrificing, you should get in your business as a profit. This is economist point of view. Clear, ra? So, it is recorded or not recorded. It doesn't matter. We will consider it for a decision making. Which making? That is implicit cost. So, implicit cost is a dash concept. See the example. Wages for self. In my books of accounts, I will only write as salary paid to Shashikiran. Shashikiran is only running the business. I am also working in my business. Salary is paid to Shashikiran. Who paid salary? To whom? This is implicit cost. See, rent for self-owned premises. These all are an example. Is that clear? Understood? So remember explicit cost and implicit cost. Explicit, which can be expressed in books of accounts. See, expressly shown in the firm's books of. It is also called as implicit cost. It does not enter into the firm's books of. Clear? So this is explicit and implicit cost. Now comes one beautiful example. In exam, most of the time the questions will come from this accounting cost and economics. So listen to this question carefully. Now let's take the same example, KPMG example. Let's say Shashikiran, he started his own bottle manufacturing. Let's say factors of productions are needed now to produce. That is land, labor, capital and. Let's say for example, land expects 10,000 rupees premises rent in a year. Total 1,20,000. How much is that? Now salary or wages. Salary or in a year, let's assume I have paid 1,80,000 rupees salary. Now let's say for example, interest. Let's assume I have paid 1 lakh. How much I have paid? And Shashikiran, he has sacrificed the job in KPMG, na? How much did I sacrifice? Hello, 3.5 lakh total salary in a year, da? How much did I sacrifice in total? 3.5 lakh rupees. Now, at least that I should earn as a. That means whatever I have sacrificed, whatever I have as an opportunity foregone, including that I should earn it as a profit. How much did I sacrifice? So, from Akhilesh sir point of view, that is accountant point of view, what is the recordable cost now? 4 lakh. But including even Shashikiran, economist point of view, 4 plus 3.5. So, this is accounting cost. That is Akhilesh sir's point of view. This is Shashikiran's point of view. That is economic cost. Clear? According to Akhilesh sir, how much you should recover back by selling the product? But according to Shashikiran, how much? 7 point. Clear? Let's assume we made a sales. We made a of 9 lakh. How much is that? Total sales is how much? Now Akhilesh sir said, hey, superb. We made 5 lakh profit. We made how much? See, what is the cost incurred? How much sales we made? 9 minus 4. So this 5 lakh rupees is dash profit. Accounting. But Shashikiran will say, hey, no, not 5 lakh is a profit. Actual profit is only 1 point. This is whose profit? Economic profit. Clear? Now you tell me, which profit is greater? Accounting profit is greater or economic profit? Accounting profit is always greater than. Now you tell me, which cost is greater? Economic cost is always greater than. Is that clear? Understood? There is one superb problem in class I always used to discuss. Nicholas Pottery factory. Wait, let me give that question for you guys. Wait, I will give that question. I know whole class will give the wrong answer, but still, it is a nice question. Question. Mic testing 1, 2, 3. You guys have 2 minutes time. Identify accounting cost, economic cost, accounting profit, economic profit. Simple. 2 minutes time. That's it. Nicole owns a small pottery factory. She can make 1,000 pieces of pottery per year and sells them for rupees 100 each. The cost, Nicole, 20,000 raw material to produce the 1,000 piece of pottery. She has invested 1 lakh rupees in her factory and equipments, 50,000 from her savings and 50,000 from borrowing at 10%. Assume she could have loaned her money for 10%. Nicole could have worked in a competitive pottery factory for 40,000 rupees per year. Simple concept. Shall I take a class till 6? Anyone attending accounts class of Akhilesh sir? You guys can leave. Not a problem. At 4 o'clock you can leave. And anyone else other than our regular batch students attending Akhilesh sir class? Shall I extend till 6? We'll finish chapter 4 also. Then we will leave. What do you say? Yes or no? Hello, say it properly. 4 o'clock I will give a break. 4 to 4:15. Again 4:15 to 6 o'clock. You want it or not? That's it. Simple bath. Now do it. ಏನಪ್ಪ ಏನಾಯ್ತಾ 4 ಗಂಟೆಯಿಂದ 4:15 ತನಕ ಅಚ್ಚ ಕನ್ನಡದಲ್ಲಿ 15 ನಿಮಿಷ. Sir, we have accounts class till 2 o'clock. Tomorrow. No other option. Watch the recording. Janvi. Monday I will confirm because Sai sir is taking it Sims law. Law marathon. Completed. Law is it done full?
Long maximum practice is percent. 50% written practice.
The marathon is done, sir.
Marathon is done now. Tomorrow I will confirm. Don't worry. Now, hello, excuse me. Solve this. All disturbance of India. Solve it. Oh, yeah. We will give easy questions every time. Question is difficult, it seems. Actually, question is easy. Done, finished. Day Mahan Bhav, such a easy question, man. This is. Completed? Accounting cost? Welcome to CA. Come again. Bye, hey, man boss, listen. Nicole owns a small pottery factory where she will make 1,000 pieces of pottery and sells them for rupees. 1,000 into 100. That is sales. How much is sales? 1 lakh. Write it somewhere. Sales is 1 lakh. Now listen, first understand the question. It will cost 20,000 for recordable or not recordable? Where will it come? Write down. Accounting cost 20. First. Next. She has invested total how much? Out of that 1 lakh, 50,000 her own money. 50,000 savings. Another 50,000 borrowings. Clear? Now for that borrowings of 50,000, she should pay 10% interest. What is 10% of 50,000? Interest paid. Accountable only, na? So 5,000. Accounting cost. 20,000 raw material plus 5,000 interest. 20. Okay. Next. See there. Nicole could have worked in a similar pottery factory. How much? What is that? Opportunity cost. What is that? 40,000. Next to accounting cost. Write down that opportunity cost 40,000. Next, see there. In a bracket, they have given one more word. Assume that she could have loaned her money for. Her 50,000 savings is there now. See, total, let's assume that she has invested 1 lakh. In that 50,000, her own savings. Another 50,000 loan. For that 50,000 loan, every year she will pay 10% interest. Now, they are saying whatever she has invested, her own money, now 50,000. Rather than doing this business, you could have given this to a loan to someone for 10%. That means opportunity interest. Opportunity interest foregone. 10% of 50,000. How much is that? Opportunity cost 45,000. Opportunity cost is 40. And accounting cost 20,000 rupees for raw material and 5,000 rupees of 25,000 accounting cost, 45,000 opportunity cost, 25 plus 45, 70,000 economic cost. 70,000. One second. Oh, excuse me, open. One second, man. What happened to this? Hello, all Mahan Bhavs. Look at the board. See here. Stop speaking. Accounting cost plus opportunity cost is equals to 20,000 raw material expenses and interest how much? So total accounting cost how much? Clear? Next, opportunity cost. Similar pottery factory in a year. And 5,000 rupees of interest foregone from her savings money. So total opportunity cost how much? So total economic cost. Now, how much was the sales money? Sales rupees 1 lakh. Now you tell me 1 lakh minus 25. 75 is accounting profit. Accounting. Next, 1 lakh minus 70. 30,000 is. That's it. There is only one bouncer adjustment, that is opportunity interest. Except that nothing was there. Anna 1,25,000 accounting cost. Clear? Finished? So this is how the question comes. Get ready. Even in the exam, I will show. There are questions from accounting and economic cost. Clear? So this will bring us to next one. Private cost and social. This I will explain better in chapter 7, because in chapter 7 the same concept comes. Okay, let me give an idea, background about this. See, now let's assume, Shashikiran. Now when I am manufacturing this water bottle, I am using one special chemical as outer coating. He has all the Pokemon, Doraemon and all, na? Some special chemical. And I am discharging that chemical straight away into river water. Straight away into where? Now because of my production, river water is getting polluted. There is an externality. What is there? But when I'm selling my water bottles to them, did I include any cost of damaging river? I only included my primary cost of production, land, labor, capital, and organization. For that, I added a profit and I sold that product. That is private cost. Which cost? The cost which is incurred by the producer in order to produce the goods and services. See, that is cost faced by the. For a time being, I will not explain consumer. You will go mad because chapter 3 completely speaks from producer point of view, manufacturer. Again, this comes in chapter 7, and that is directly involved in the transaction, which all that directly involved like labor, material, energy, any other overhead like transportation, communication, advertisements. Now, what is external cost? That is a cost of. Hey, read it, man. Cost of. When I give that pause, that means you have to respond. Cost of resulting from externalities. Now, let's say, for example, here, what's your name? Nitin. Let's assume Nitin is a fisherman. Now, because Shashikiran is discharging lot of chemicals into river water, fishes are dying. Now, that river water is no more fit for drinking purpose, bathing purpose, any purpose. Now, who are the parties to the contract? Shashikiran and Dev. Now, did we include any particular cost for damaging river? No. Parties to the contract is Shashikiran and Dev. Third party to the contract is Nitin. But who is getting affected because of our contract? Third party, Nitin. So, because of externality, because of third party gets affected and parties to the contract will not at all bear the cost. See, such costs are borne by which party? Who is not directly involved in the transaction. Best example of externality is a pollution. Air pollution, water pollution, noise pollution, clear? Huh? Now, only this private cost can be shown in the books of accounts. Can you show this external cost? Cost of damaging river and all. Same like accounting plus opportunity. Recordable plus not recordable. Both put together is called as real cost to society. That is total cost to a society on account of, which includes both private plus. Clear? Understood. Next comes direct cost and or traceable. Indirect cost. Simple. Accounting cost is direct. Indirect cost is economic, which can be recorded, shown, which is incurred. That is direct cost. And sometimes the definition of direct cost is most important. The questions have come straight away from this. Questions have come. See there. Direct cost as a direct relationship with the components of operations like manufacturing, product, organizing, process, etc. These are directly related to the product, process, machine. What is it? Product. This was actually the definition which was given, and they are asking which type of cost is this. And those costs which is incurred for once in order to produce goods and services like raw material expenses, what are they? Like this, they can ask you some questions like this. Clear? Indirect cost. Which cost? Yeah. Which are not easily identifiable, which is reflected into the plant, product, process and development. Let's say, for example, now reception is there. Even there we are, let me say, using a manpower. Now, ArivuPro Academy, no doubt it is teaching for CA and CS. Their direct cost is salaries paid to staff. All this. But indirect cost is salaries paid to a receptionist, electricity charges in reception. These are negligible amount. These are, which is supporting to the direct operation, which are supporting to the, these are indirect cost. Clear? So, this is the different types of cost. What is the different types of? Clear? And one more, outlay cost. Which cost? Money is actually going outside. Same like explicit. What is it? Same like payment made in the form of wages, material, rent and see, these are financial expenditures at some point of time which are recorded in the firm's books of. These are dash expenses. Same like accounting cost. Is that clear? This brings to the most important topic and the last topic of the theory of cost. That is shutdown point. What is it? Interest on capital we take. That means returns. See, what are the factors of production you are using? What is the payment you make? Here in the cost concept, we are focusing on payments made. Cost incurred by manufacturer. Capital investment is not taken. Expenses incurred to produce is taken. Incremental cost. Decision making, business. No, it won't come. Only your operational cost will come. Clear? Auntie is done. Discussion done. Let's continue. Okay. Shutdown point. What is the concept? Okay, listen. Simple concept. When a firm is unable to recover back their dash cost, then a firm is said to be in the shutdown. Even such a shutdown is of two types. One is short-term shutdown, also called as temporary shutdown, like your COVID-19 lockdown. Next is a long-term shutdown, also called as a simple concept. If a firm is incurring a losses on a continuous basis, firm is incurring dash on a continuous. If their average revenue is always lesser than average cost. What is that? Average revenue is always lesser than permanent shutdown. Which shutdown? Now, what is temporary shutdown? Now we are operating into a business, but scenarios are not good. Like COVID-19 is there. For everyone, there is a trouble. Even though when I produce and sell the commodity, either I will recover only my variable cost or even lesser than variable cost. Only variable cost or that means TR, total revenue is lesser or to total variable, or we can also represent it in every single unit. Average revenue is lesser or average. That means, Shashikiran, you are taking so much of risk and you are producing. When lockdown is happening, when no one is able to make profits, but you are producing, you are selling everything superb, but you are only and only recovering back your dash cost. That means if it is equal to, what is it? Or you are not even recovering back your variable cost, then why are you taking so much of risk? Whether you produce or whether you don't produce, fixed cost is lost, na? Every month you should pay rent, every month you should pay salary, whether you are producing or whether you are. Then why are you taking that risk of producing and still unable to recover your variable cost or only recovering your? Anyway, whether you produce or don't produce, fixed cost is loss only, na? Then relax, sit silent, stupid fellow. Why are you operating? For a temporary purpose. Which purpose? Close down. So condition is TR lesser or equal to AR lesser or equal to clear. So this is the theory of cost concepts. Which concept? Theory of clear. Next, let us go to the theory of production. Simple concept. Three main headings are there. How many main headings? So first we will understand about human wants. Are you guys humans? Do you have wants? Limited or unlimited? So what is the meaning of human wants? Simple. DTM. What is it called as? Desire, taste and motives of a human being. What is it? Desire, taste and motives of a? It's called as human wants. And such human wants is of three types. Necessary, comfort, luxury. What is it? Necessary? Under necessary. Again three types. Basic necessary. Food, clothing and shelter. Necessary is of efficiency. That means tools and equipments. That means now see, in order to teach you people, I need camera, I need internet, I need TV, all this iPad. By using this, I'm able to teach you well and I'm able to earn income. That is tools and equipment. That is acting as efficiency. That is acting as last but not the least. Which efficiency? Whether you like it or whether you don't like it, it doesn't matter. For the sake of society, for the sake of, you have to follow certain practices. Clear? That is social necessary. Which necessary? Next comes comfort. What is it? Which provides better level of satisfaction. Sir, for academy, I will come by walk. Basic necessary. Sir, I come by bus. Comfort. Sir, I come by my private vehicle. Luxury. Even in that luxury, three types. Harmful, harmless, defense. What is harmful? Which increases social status, but it will affect on dash health, which will affect on human. Best example, air condition. Next, harmless luxury, which will increase social status, but does not affect on human health. Does not affect on. Next comes dash luxury, which can be readily convertible into liquid cash. Like for example, from bonds into cash, stocks into cash, gold into cash. That is called as dash luxury. Next comes characteristic features. Human wants are, all wants cannot be. Wants are competitive and moreover, you will use together one after the other. It keeps on coming, and after buying cell phone, next to laptop, next to XYZ products like this, one or the other comes. There are dash in nature. Next, wants vary with time, place as well as person. Next, want become habits and most importantly, want gets affected because of. Clear? Understood. Next comes meaning of production. What is it? What is production? Adding utility to the subject matter. What is it adding? It's called as production, not just converting raw materials into a finished goods. Clear, na? So what is that? Adding utility into a subject matter. Simple. Let's say, sir, in the break time, we went to a hotel. That SLV hotel, sir. We ordered one plate South Indian meals. We didn't like a taste, sir. Taste was bakwas. Next day, will you go there? Sir, I will go to different hotel. Let's say, for example, A to B, Adiyar Ananda Bhavan. I had meals over there. Sir, I liked it. That means in both the places, input is converted into. But where did you like the taste? Adiyar Ananda. That means their utility is present. So utility is most important. Dash is most important. Not just converting input into one. Here the term input refers to factors of production, land, labor, capital, and clear. By using these inputs, we will try to produce dash output. We will try to produce dash. Clear. Next comes to create that utility. There are 4 alternative ways. How many alternative ways? First one, form utility. Second one, third one, fourth one, ownership or. See, simple, changing from one form to another. Sir, I bought a cloth material. I went to a tailor. I gave it. He will cut. He will stitch, and he will give. Then I will wear. Changing from one form to. Next, place utility, agricultural products. Sir, farmer, he will grow in a farmland. Where will you buy? In farmland or in market? He will bring that to market. Their utility can be created. That is shifting the place from one place to. Next one, time utility. Best example, rainwater. Sir, we store it in dams, reservoirs. At the summer time, it won't rain. Now, at that time, we will use that water. Storing the product and using it at an appropriate time. Last one. Either you should be a owner to use that goods, or either you should have a possession. Either you should have a to get the utility. Is that clear? Next comes factors of production. What is it? How many factors of productions are there? All these 4 are important with the characteristic features. Questions are repeatedly coming from this. What is land? Free gift of? It is not created by a human. Not created by a clear. See, land is perfectly. That means supply of land is perfectly inelastic. Quantity which is available on earth, that is same. Neither you can't create nor you can destroy. Next, it is indestructible. Physical land can never be destroyed. Only fertility can be destroyed. Next comes land is. You can't move it from one place to. Differs in. That is soil quality. Next, differs in. And this is most important. Land is primary as well as dash factor. See, anything and everything has to be created on a land. That is primary factor. Which factor? And will a human will come and create the matter on the land, or will land construct everything on its own? That means human effort. Which effort? Land will not construct everything on its own. Human effort is needed. That is called as dash factor. So remember, land is not an active factor. Land is a. But everything has to be created on the. That is primary. Clear? Next comes labor. What is it? Labor. All dash efforts. Either a physical effort or a. Now Shashikiran teaching to ArivuPro students. Which effort? And such effort should result in. That means creation of utility. And Shashikiran, is he doing for free? What is he expecting in return? See, if Shashikiran is, let's say, teaching for ArivuPro students, that means I am only selling my labor. I am only selling my. Shashikiran is a laborer. And whatever teaching skills he has, that is a labor. Can you separate Shashikiran and his teaching skills from him? Labor and laborer are. When I am teaching to ArivuPro students, that means I am selling myself to ArivuPro, or I am selling my teaching skills. I am not selling myself. I am only selling my teaching. And labor is dash. See, I can't, let me say, work 24/7. And suppose if I am not keeping away, tomorrow suppose, let's assume I don't take a class. Can I utilize the same time once again? If a day's labor not utilized, that day's labor gets perished. Day's labor gets. And human in. Can I work 24/7? Is it possible? Next, differs in. The way Shashikiran sir teaches, the way Akhilesh sir teaches, the way Nitin sir teaches, is it one and the same? No. Everyone has their own way of teaching. Their quality differs from one person to other person. Next, less mobile. Yes, we are ready to move, but not for a longer distance, only for a shorter distance. Labor has less bargaining. See, whatever predetermined salary is there, I will get the same salary. No, I thought something extra to the students, even real life experiences and all. Did I ask you? No. Why did you teach? Did I know? Get lost. Whatever I agreed, I will pay you that. That's it. Next, labor is. Even if price increases to maximum extent, still I need labor. Na? I cannot reduce the labor by low, let me say, lot many extent, relatively inelastic, large change in price, a small change in quantity demanded or supplied. Suppose tomorrow government will come and say minimum wages in India 1 lakh rupees. How much? Assumption. He's like, wow, right, sir. 1 lakh rupee. That means I might not appoint more number of people. Let 1 or 2 people I will appoint. Instead of appointing 10 of them, I will appoint just 2. Large change in price, only small change in quantity demanded. Clear? Next comes capital. What is it? All man-made goods. Which goods? That is condition number 1. It should be used for dash production. It should lead to further. See, self-consumed goods are not capital. Like Shashikiran constructed his own building. He is staying in his own building. Is it leading to any productivity? No. See, self-consumed goods are not capital. Even free gift of nature is not a. What is free gift of nature? Land, air, water. These all are free gift of. That will never be called as a capital. So what is capital? All dash goods, all. Which should be used for. Appa, this is generic topic. Fixed capital, circulating capital, human capital, tangible, intangible. This is accounts concept. Read only. Concept. Clear? Next comes capital formation. This is important. Which one is important? Creation, mobilization, utilization. What is it? Creation. So what do you mean by that? Simple concept. As an household, when I earn income, will I spend my entire income? What I will do? At least some small portion I will create as a savings. That is what? Creation of savings. What is it? Who will do that creation of savings? Or individual. So where will this household or individual keep money? That means bank will mobilize. That means banks will collect. Mobilization. That means collecting. Who will does that? Banks and financial. What will this bank do after collecting that money? That is what? After mobilizing, what they will do? They will lend loans and advances. For whom? Business houses, corporates and. That is called utilization. So who will utilize that money? Simple. Household create savings. That will go to bank. From bank again it will go to whom? Now these guy will invest in his business. Again he will produce goods, sell the goods. He will earn profit. Again he pays salary. Salary means ultimately it goes to whom? Again it comes to whom? From there again it goes to whom? From business firm again it goes to whom? That is what we also call it a circular flow of money. What is it? Or whatever savings that is created by the household, that is ultimately converted into investment. Ultimately converted into? Due to the process of CMU. Due to the process of? That is capital formation. Which formation? Next comes, last but not the least. What is it? Or organizer, that is owner. He is the one who will bring all the capitals, all the funds, all the human resources together. He is the one who will initiate the dash enterprise. And he is the one who coordinates all the resources together. That means he also takes the advantages of. That means our environment keeps on changing. He should take advantage and he should also come up with something new, innovation. It may work or if it doesn't work, who has to bear that uncertainties? Clear? See, these are the objectives of the entrepreneur. I need to be organically grow. Economic objective is there. Social objective, human objective, and read this from ACCA material. That is only read only concepts. Clear? Next, there are also some problems faced by them in terms of objective. We can't achieve all the objectives together. We can achieve few and we can't achieve. And also problem related to the location and size of business. Sometimes we will have located in a wrong place, wrong size, and also selecting and organizing a dash facility. Vitamin M is not available. Organization structure, top level, middle level, and lower level. Marketing problems, 4 P's: product mix, place mix, price mix, promotion mix, and also legal. Most of them doesn't even know when to register, what all certification is needed. Last but not the least, industry. Even this is read only. So these are the 4 factors of production. What is it? 4 factors of land, labor, capital, and see, from that area, most of the times the questions have been asked. Is that clear? Understood? Now this brings to the most important topic of all, that is production. See, if you remember, law of variable proportion, law of returns to. Already I introduced you to the topic now. Production function under long run is called as. Production function under short run is called as. Straight away, let us go to the first one. Law of variable, which is production function under short run. Okay, let's take up an example for your better understanding. Okay, now listen. Now Shashikiran, bottle manufacturer now. Now let's say either I can produce in short run or in. Okay, now let's say for example Dave, he gave me an order to produce 100 bottles. How many bottles? and he asked me to give it in 1 month. How many months? And after using my bottle, he got impressed. Now he said, sir, I needed 10 lakh bottles. How many bottles? 10 lakh bottles to give gifts to multiple people across the nation, sir. 10 lakh bottles. When can you give? I said, bah, I can't produce in 1 month and all. I need minimum 1 year time. How many years time? 1 year time. Now this is long term, na? And this is, I will use inputs in order to produce the output. So what is my input? Land, labor, capital. Now, in order to produce just 100 bottles for 1 month, will I change my land? Will I change my capital? Will I change my ownership? Now, I will say to my employees, see pa, 1 month alone, we need to produce 100 extra bottle. Come 1 hour early or leave 1 hour late. They said, no, we can't. Unsupportive staff. Which staff I have? Okay, only for this 1 month, I will appoint 1 or 2 extra laborers. That means, what did I change? Did I change land? Capital? Organization? Most of the elements are fixed. Most of the elements are only and only dash changed. See, that is what? In case of short run, in case of fixed factors are more elements will be fixed, less elements will be variable. Clear up? Very less elements we can change, but more elements will be fixed. Now you tell me, suppose let's say if I am producing 1 lakh benches, within this existing land space, whatever I have, land space, small land space, can I produce? I have to change. Labor, first of all, 100 bench only, 100 bottle only, they didn't agree. Capital, still I should invest more, na? Organization, now let's assume Shashikiran himself is a owner. I took some loan, I only managed it, but still I have an option. I can take my friend as a partner. Any of the competitor, I can join my hands together and I can still produce 1 lakh bench. But I said, no, I will only produce. What I will do? I will only produce. So organization didn't change. Now in long run, what all changed? Land changed, labor changed, and organization didn't change. That means, see, more elements are changing, less elements are fixed. See, observe, in long run, fixed factors are, variable factors are clear. Okay, now let us take one assumption. For a time being, Shashikiran himself is a owner. Whether it is a short term or whether it is a, we'll ignore it. What do? We consider there are only how many factors of production? How many? 3. Which are those 3? Land, labor, and land is not changing in short run. Capital is not changing in. Only dash is changing. See, that is the very first assumption. We assume there are only 3 factors of production. How many factors? Land, labor, and land and capital is a only dash is changing. And technology remains constant. Why? Suppose without appointing labor, by just using technology, I will produce 100 bottles extra. But we are believing technology is not at all changing, and there is no perfect substitutes for fixed. That means whatever is fixed, that is land and capital, there is no alternative to this land availability or a capital availability. Clear? So now I am producing 100 water bottles for 1 month. Now these are the 3 stages. Already I explained this. SDR, that is SIR, more proportion. Which proportion? And next term, less proportion. And after dash point, what was that certain point? AFC, AVC both are. That is certain point. After that, output will not increase. It should. Okay, now I am appointing laborers. Only laborers will change now in my organization. Okay, I appointed a first labor. In a day, he is producing 20 bottles. How many bottles? 20 bottles like this. Okay, next I will appoint second laborers. Now both of them put together, they are producing. Now all 3 put together, all 4 put together, all 5 put together, all 6 put together, all 7. That means, sir, stupid fellow, 7th guy is not at all working. Still same only. Next to 8th fellow is even more worse than 7th guy. Productivity decrease it to 140. Sir, stupid fellows. Okay, now let us also identify the average product and marginal. See, average, 1 single unit. That means total product divided by quantity. And marginal, see, variable is continuous. Variable is what? So, first formula, that is TP n minus TP. N minus. Is that clear? So, now let us identify the average product and marginal product for all the laborer units. 20 by 1. Take out calculator. 50 by 2. Next 90 by 3. 120 by 4. 140 by 5. Next 150 by 6. 20. 150 by 7. 21.42. Next 140 by 8. 17 point. Next, marginal product. Only one single labor is producing 20. Next, see the difference. 50 minus 20. Next, 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 next. Now I will say, let's assume I will just take a comparison for 3 units. That means, see, there are 3 people working in my organization. All 3 put together, they are producing how many benches? That means I believe that every single fellow is contributing how much? 30, 30, 30. First fellow, second fellow, third fellow. 30, 30, 30 put together is how much? It may be true or may not be. Reality is first guy is contributing how much? Second guy, third guy. But what did I thought? Everyone is contributing. So which is giving me true picture? Average product or marginal? So I should believe more in than. Now my question. At which number of labor I should stop appointing? 6 or 7? 7. I only got to know after appointing, na? Did I get to know before appointing? That means my second stage. Which stage? That is SDR comes to an end whenever TR is maximum, MR is. First stage will come to an end whenever AP and MP both are equal. That is SI. And last stage SNR. That is whenever MP becomes negative. Clear? Then sir, what is this? By the way, whenever MP is maximum, 40 is there, na? That is called point of inflection. That means corresponding TP. This 90 is called as what? Point of. Until point of inflection, TP will increase faster. TP will increase. No doubt, even after that, 90, 120, 140, 150, it is increasing, but it will increase. Slower rate. It will increase at which rate? And for us, most important, whenever TP is maximum, dash, MP is. Remember, when MP becomes 0, optimum utilization of resources. What is it? Usually, we take up an example of Innova car. Which car? Let's say our boys have planned to go for a Goa trip. Which trip? Never ending Goa trip. After economics exam, CA Foundation will go to Goa. Now 6 of the friends. How many friends? They have planned to go for Goa trip. In reality, it is happening. They have booked a car also. Innova car. Which car? They have booked a Innova car. Now number of seats. 1, 2, 3, 4, 5, 6, 7. First seat is for driver. Next to driver, 1 fellow. Third, fourth, fifth, sixth, and now let's say driver will come inside a car. Okay. Now second fellow will come, third fellow will come, fourth fellow will come, fifth fellow will come, sixth fellow will also. Now you feel like, sir, let that one seat be empty, long distance, now baggage, luggage and all are there. We should keep it. No, but in reality you can also accommodate one more person. Now how many seats are there in the car? The 7 seats are fixed. Do you agree? How many persons are there in the car? That is variable. What is it? Now see there, fixed factor is equal to, that is what now AFC is equals to, that is what we call, now this is the certain point, optimum utilization of resources. There are 7 seats, there are 7 people inside a car. Now suppose, let's assume Shashikiran is waiting in the bus stand. Now this fellows will come, hey wait, the torture fellow is there, wait. Sir, what are you doing here? Waiting for a flight. What will I do in bus stand? Oh, you don't know. Today BMTC strike is going on. Bus will not come. Where do you want to go? Banshankari. Come, sir. We are also going to Goa. We'll drop you on the way to Banshankari and go. Now this second, there is 8th fellow, Shashikiran, thin guy. He will come inside a car. How will it be? Congested. They can't sit proper. And when Shashikiran is inside the car, they can't speak properly also. Hey, wait, that idiot fellow is there. Now, by the time Shashikiran gets down, they are waiting. The fellow who invited Shashikiran inside, he is the Balika Bakra for whole trip. Full on teaching for him only. Now that means if the 8th fellow comes inside a car, that means now Shashikiran, one more fellow. Variable factor is more, fixed factor is less. That is what happened in last stage. Now after a certain point, ABC will increase, AFC will. Variable factor is more, fixed factor is lesser. So output should decrease. Not possible. See, one more meaning. In first stage, which stage? Fixed factor will be more than. See, there are only 4 people who have come inside a car. How many people are there? But number of seats is still more people can come. Now fixed factors are more, variable factor is less. 7 seats, 7 people inside. Fixed factor is equal to They respond, man. Fixed factor is equal to. Better, I will not take after 4 o'clock. Better tomorrow I will take. Simply, you guys will not respond at all. Now fixed factor is equal to variable. That means number of people inside a car. 7. Number of seats in the car. Fixed equal to optimum utilization of resources. Neither we are underutilizing nor we are over exploiting. Suppose if Shashikiran, 8th fellow comes inside. Dissatisfaction, negativity. Clear? See, that is what. In the second stage, fixed factor will become equal to. In the third stage, Shashikiran came inside. Variable factor is more than. Clear? This is the another way of understanding. Especially this graph is most important. See there. Whenever total revenue is maximum, marginal revenue will become 0. See, this is P. Sorry, total product, not revenue. Total product, average product, marginal. Total product, average product, marginal product. Clear? Next, what is point of inflection? Point of inflection is whenever dash is maximum, MP is. See, when MP is maximum, corresponding TP is point of inflection. That is until point of inflection, TP will increase. After point of inflection, TP will increase. And see, in the last stage, marginal product has become. Because TP started to. See, initially TP will increase, MP will also. Next, TP will increase, but MP starts. Later, TP will decrease, MP becomes. So that is the relationship between TP and. So remember point of inflection. This is where most of the time the questions will come. So any manufacturer, where will he wish to operate? SDR. There also we discuss same na. SD. AC will become minimum. AC will become. AFC and AVC both are. So conclusion, when TP becomes maximum, MP becomes 0. That is where every manufacturer will prefer to operate. That is in stage of diminishing return. Tortoise shell. If you remember, already explained, I asked you to be careful in one place. Which is that one place? See here. Whenever AP increases in 20, 25, 30, AP increasing, MP is also increasing 20, 30, 40. Which is increasing faster? MP, na, see 20, 30, 40, here 20, 25, which is increasing faster. That is what I said. When AP increasing, MP increases faster than. Next, whenever AP is maximum, AP equal to. Condition satisfied. Next, whenever AP is decreasing, 25, 21, 20, 17. See here, 20, 10, 0, minus 10, which is decreasing faster. That is what I said. When AP decreasing, MP decreases faster than. So only one place we should be careful. Which is that one place? So which was this concept called as? Rate of increase or? Rate of? Already we did this now. Already done. What is the shortcut to remember? Only and only when AC is. We should be careful. Average is greater than marginal. In remaining three corners, marginal is always greater than. Clear? Understood. Now there is one more concept called as value concept. Which concept? Value concept. Now listen to this very carefully. This value concept is more interesting. See, in case of value concept, which concept? Value concept. Diagonal opposite, we should be careful. Which opposite we should be careful? That means whenever AP is decreasing, what is it? AP is? AP value decreases faster than MP value. Which value decreases faster? Have a look here. See there, decrease. Now, is 28 greater or 20 greater? 25 greater or 10 greater? So, which is greater? AP value is greater than MP value. Condition satisfied. Next, see, initially 20, 25, 30. Now, observe this. Observe in this case. 20, 25, 30. 20, 30, 40. Is 30 greater or 25 greater? That means MP is greater than. Logic satisfied. Next, when MP is maximum, AP is equals to MP. Both are equal. Clear? So, this is the logic. When the question comes from value, question comes from, be careful with the diagonal opposites. When things are decreasing, when things are, average is greater than marginal. When things are increasing, marginal is greater than. Diagonal opposite, we should be careful. Is that clear? Understood. So this is the law of variable. Next comes the most important topic, law of returns to. Law of returns to. Production function under long run. Now 1 lakh bottles, sorry, 10 lakh bottles. How much bottles? 1 year time. Now definitely I need to change my land, labor, capital, even including organization. But what we believe, Shashikiran himself is a owner. He will only take a loan. So he will only balance something. So organization we are ignoring. We are considering how many factors of productions are there. All the 3 can be changed. All the 3 can be. Okay, let's assume. We'll take one more assumption. Already I have a bigger land space. What do I have? Already I have one bigger land space. For this bigger land space, I should, let me say, whenever I appoint on one capital, that means machinery. To handle that one machinery, I need 2 labor. How many labor I need? That means every time I invest on one capital, how many labor I need? In that proportion, every time I will invest. See here, one single capital, 2 labors. One single capital needs how many labors? 2 laborers. 2L, 1K. What is it? 2L? Or else we can also write like this. We need 2 laborers and 1 capital. 2 laborers and that is called 1 unit. Next, 4 laborers, 2 unit is called as, sorry, 4 laborers, 2 capital is a 2 unit. 2 laborer, 1 capital is a 1 unit. See there, we assume there are how many factors of production? In the dash is fixed. Only dash is variable. See, technology remains constant. No perfect substitutes for fixed. And every time, whenever I invest it on one capital, I need how many laborers? Second capital, 4 laborers. In that proportion, 1:2 proportion, I will appoint. See there? 1:2, 2:4, 3:6, 4:8, 5:10. That is units. And see, first unit is producing 50 bottles in a day. How many bottles? Second unit is producing. Third unit. That means all the 3 put together. All 4 of them put together. All 5 units put together. And I know that marginal product is important for me. That will make me to help in taking decision. See, output unit is continuous. Output unit is variable units are continuous. So first formula, TPN minus TP. So here it will be 50. Next 110 minus 50. Next, observe 50, 60, 70. Increasing IRS. When MP increases, 70, 70. When MP remains constant. Next, when 50, 35, 15. Simple concept. MP increases IRS, MP remains constant. CRS, MP decreases. But in all the 3 phases, TP is increasing. Observe, TP increases, MP also IRS. TP increases, MP remains constant. TP increases, MP starts decreasing. See here, IRS, more proportion. That means TP increases because MP is. Next, CRS. No doubt TP increases, but MP remains. Dash proportion. See here, more proportion, same proportion. That is mainly based on TP and MP. What is it? TP and? In last stage, TP increases, but MP starts. That's it. TP increases IRS, TP remains constant. CRS, TP decreases. Is that clear? Understood. Now, same topic of law of returns to scale is explained by 2 mathematical economists called as Charles Cobb and Paul Douglas. What is it? Charles Cobb and? Same to same logic they have explained in the form of equation. What is that equation? Q is equals to K L of A C of 1 minus A. C of that 1 minus A can also be written as B. It can also be written as what? B. See, for us now the most important is this A and B. What is it? A and? If A plus B, if it is greater than 1, IRS. What is it? A plus B greater than 1? IRS. If the value of A plus B equal to 1, A plus B lesser than 1, even numerical problems have been given many a time. See, they will give it like this. For example, Q is equals to K, L of 1 by 2 and C of 3 by 4. C of, what is 1 by 2? 0.5. 3 by 4? 0.25 or 7.5? 7.5. What is 0.5 plus 0.75? 1.25 is greater than 1 or lesser than 1? What is it? IRS. Clear? Understood? So remember, even these formulas are important. Once they have asked this formula as a question, wait, let me show that. Chapter 3, chapter 3, chapter 3. Look here. Question number 92. Cobb-Douglas production function. What is the formula? Q is equals to K L of A, C of 1 minus A. That 1 minus A can also be written as B. Induced part. Clear? Formula is also important. Clear? This is Cobb-Douglas production function. Last but not the least topic. Isoquantum. Already we have done with indifference curve and same to same of indifference curve. That is isoquant. See here, indifference concept of consumer. There are two commodities, same level of satisfaction. Two goods, same level of. But here, two factor inputs out of land, labor, capital and organization. Any two inputs which will give same level of output. Dash level of output. Here it is input and output. There it is two goods, same level of. They respond, satisfaction. That is isoquant curve. If you remember, tea and biscuit example I gave now. Always and always dash rate of substitution, diminishing rate of substitution or diminishing marginal rate of. Clear? Similar to indifference curve concept. There consumer point of view, here it is a producer point of view. Last but not the least, isocost curve. Which curve? Which is similar to concept of consumer. Same to same. There if you remember, I have an income. Within that income and price, I should buy two goods. Same way, I have an operating capital, that is income, or let me say expenses to make. By using that operating capital, two factors. How many factors? Combination of two factors which is used to produce same level of output. Which level of output? Or which is used to produce that particular amount of output. I need two factor inputs. Which factor inputs? Their consumer point of view, here it is. See, economies of scale, diseconomies of. Already I spoke about this. This is homework question. Tomorrow I will be asking. Now tomorrow I will be asking you guys. You guys have to explain me what is this economies of scale, internal and. See, simple concept. Economies of scale means advantages. What is it? When we are operating until economies of scale, I have an advantage inside the organization as well as outside the. Diseconomies means disadvantages. Disadvantages inside the organization and outside the. Is that clear? Understood? So by this entire chapter 3, theory of cost and theory of production comes to an end. Khatam. Clear? Okay, now let us see the exam questions from chapter 3. Appa, you want me to continue till 6 o'clock or should I do it tomorrow? Tomorrow? No, sir, tomorrow, sir. Today only I have given so much of torture. It's your wish. Okay, chalo, see there. Returns to scale. What is it? Law of returns to production function under short run or long run. Hey, for you guys only respond. I will leave. Okay. No energy will come. I said you will leave. No energy will come. Stupid fellows. Law of returns to scale. Short run or long run. Law of returns to scale. What does it refers to? Change in output as a result of proportionate change in. Yes, we can change anything and everything in the long run. Clear? See there. Option A. But here see there. Change in output as a result of proportionate change in only and only. It's not because of one variable or only because of any. Or any because of any variables of. Okay, change in output as a result of variations in. No, because of change in all the factors. To be frank, we are changing. Next term. Linear homogeneous production function. Linear means straight line. Production function that comes only in. Next, the minimum quantity of variable inputs that are required to yield a given quantity of output. Relationship between input and output. Minimum level of input given to level of output. Relationship between input and output is dash function. Production function. Which of the following is not true about the relationship between tortoise shell, average product and see, average product is maximum, marginal product is equal to. Yes, true, but they're asking is which is. Next, average product is rising as a result of increase in the. of variable input, marginal product is more than. Yes, whenever AP is rising, MP increases faster than. Yes, no, correct. Option B is also correct. Next, average product falls. Average product. That means right side. AP is falling. Marginal product is lesser than the. Yes, no, value concept. AP is greater than MP. See, these two are rate of increase, rate of decrease. This is value concept. Next, average product is when marginal product becomes. AP will never become negative. See here. AP, is it going below the x-axis? But MP will below x-axis. That means MP can be negative. AP can never be negative. Clear? So answer is option D. Next. Total product starts declining. TP starts. At which stage? Last stage. Now, when MP becomes negative, MP becomes. That is stage of dash written. Next, budget line or budget constraint line. What is another name of budget line from production point of view? Indifference curve. Isoquant. Now, do it. Now, see there. From the following data, calculate question number 47, 48. They are asking average fixed cost. Which fixed cost? Whenever output is 0. Whenever output is 0. Whatever will be AFC, that is going to be the AAC. That means what is the fixed cost? 200. So they are asking average fixed cost. So total fixed cost is how much? 200. They are asking 2 units of output. So AFC formula, TFC by Q naught, 200 by 2. How much is that? 100. Clear? So 200 divided by 2 is 100. Next, clear. Next, diminishing marginal return starts to occur. Which returns? Diminishing marginal returns. That means where the variation happens in marginal. See, 200, 310 differences. Next, 310, 410 differences. 410, 500 differences. Now see, it reduced it from 110, 100, it became 2. Next, see there, 500 and 604. Between 3 and there is a difference. There is a difference in value. See here, it was kept on going down, but suddenly all of a sudden increased. So it is between 3 and. Next, a firm should not produce shut-down point. What is the condition of shut-down point? When a firm is unable to recover back there. Suppose the sole proprietor is earning a total revenue. That means sales of how much? Accounting cost, economic cost, accounting profit, economic profit. Questions here. And incurring an explicit cost. Explicit means which can be shown in the books of. How much? If the owner could work with another company for rupees a year, which of the following statement is false? They're asking which is false. See, first write down what all information is given. This is sales. How much is sales? 1,20,000. Next, what is accounting cost? Explicit cost. 95,000. What is opportunity cost? What is 30 plus 90? 1,20,000 is which cost? So sales minus accounting cost. Sales is 120, accounting cost is 95. Accounting profit. So 25,000 is the accounting profit. Now 1,20,000 is sales. 1,20,000 is economic cost is. So we don't have an economic profit. We have an economic. How much? Now read it. A firm is having an accounting profit of 25. Yes, correct. A firm incurs an economic loss of 5. Correct. Next, economic cost is 30,000. How much is economic cost? Yes. Next, the total accounting cost is 95. Correct. Which is wrong. Clear? Next, use the following data and answer the question 56 and 57. Now, output is 0. Total cost is how much? That means what is this? Fixed cost. That is TFC. And they're asking us to identify average. That means for which unit? 20th unit. See, output is not continuous. Output is not? Marginal means there is a different formula. Now, 100 is the fixed cost. For a 20th unit, total cost is how much? 320 minus 100. That is variable, na? So, 220 is variable. 20 units. 220 divided by 20. Answer. 11. Next, between 10 and 20, what is marginal cost? Output is not continuous. Change in TC divided by, so difference 220, 320 divided by 20 and 10. So 100 by 10. Clear? Such a easy questions. I think that's it. Just calculate how many questions have been asked. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 30. Here one more is there. 1 second. Survival, growth, expansion, objectives. I said now read only concept. Next, 13. Next, the form of capital which performs the functions of production of a circulating capital. Types of capital I said now read only. See, these two questions have come from read only. Circulating capital it is. One time it can be used. Raw material. After using raw material for one time, can you use it once again? That is circulating capital. Clear? See how many questions are there? Total 14 questions. See, I said now sometimes it can go even beyond 12, up to 15 questions. Here, see 15 question. An economy exists on which of the following two? Human wants are, but resources are. How many questions in total from chapter 3? 15. Next, September 24 attempt paper. At higher level of output, what is it? We got the question now. I said now one Khatarnak question was there. See, at higher level of output. 1 second, let me open that also. Now look here. What are they saying? At a dash level of output? That means third stage, na? Higher level of output. At the higher level of output, average total cost and average variable curve comes closer. They will come. At the higher level of output, average variable cost and average cost will come. Because fixed cost is decreasing. Fixed cost is decreasing. See, their average fixed cost for relatively smaller percentage of the, in the overall average cost, AFC is smaller. That means ABC is. That is why it is going near to the average cost. See, this is little advanced level question. Next. A firm is producing 5 units of, at the average fixed cost of rupees. See, 5 units, AFC is 4. So 4 into 5. That is the total fixed cost. Clear? So total fixed cost is how much? 20. Next, for producing 10 units of output, average cost is how much? They have given average cost. That is 7 rupees into 10. What is the total cost? In that, what is the fixed cost? 20. So what is the variable cost? 50 is the variable cost. So they're asking for average variable cost of how many units? So in short, 50 divided by 10. Clear? Understanding the question matters a lot there. Next, how is production in the economist sense is different from the, because of exchange in the, because see, in the production sense, we will only record whichever can be shown in the books of account. But from the economist sense, which sense? It will be totally different from what we can actually express in the market, or we can be exchangeable. That means selling price. Selling price from the accountant is different. Selling price from the economist is totally. It is not one and the same. Now you guys solve this problem. Kindly fill in the blanks. Fill this blanks. See that from the following information, identify question number 19 and see 0 units of labor. The labor itself is not there. Are we producing anything? This will also be 0. This will also be clear. 1 unit of labor, 20. Marginal will also be 50 divided by 2. 50 minus 20. Next, 90 minus 50. Satisfied? 90 by 3. Next, 30 into 4. 120 minus 90. See, what is the marginal productivity of a second labor? Second labor marginal productivity. Answer is 30. Next, what is the average productivity of a third unit of labor? 30. That's it. Next, when does the law of variable proportion or law of diminishing return becomes relevant. It is usually in the law of variable proportion applies in which run? See, what is the primary characteristics of decreasing returns to scale? DRS, IRS, CRS, DRS. Where does it come? Long run. In the long run, whenever TP is a dash rate, because MP starts to. So TP is no doubt increasing, but in the last stage MP starts. Wait, let me show that better. If I just say out of words, Allah, people don't even recognize. Here, TP is increasing, 300, 350, 300, 335, 350. Clear? So TP is increasing, but MP is where? Decreasing returns to. See there, primary characteristics of decreasing returns to scale. TP increases at dash rate because MP starts to. Next term. What term is used to describe the cost that remains fixed up to certain range of output but suddenly jumps to the new height? Stair step variable cost or semi-variable cost? Semi-variable. See, it jumps to new height all of a sudden beyond the given limit. Up to certain limit it will be fixed. Then it starts varying. Answer is, it's not stair step. Next term. Which of the following expenses is incurred is cost of production and termed as a out of this, which is the accounting cost? See, wages paid to the workers employed in the factory, employed in the, yes, we have to consider as accounting. Next, expenses incurred on research and development, which is that sunk cost. Expenses incurred on advertisement. Next, common cost incurred as a general operation of business. Indirect expenses, that is, which expenses? Option. Sunk cost, already we did this. 155. One more question here. See, when should a competitive firm consider condition of shutdown? When they are unable to recover back there below the average variable cost. That means average revenue is lesser than, either lesser or equal to short-term shutdown, temporary shutdown. Option B. I think that's it. Let's calculate. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's it, I guess. Yes, that's it. 11 questions in total. How many questions? 11 questions in total. Clear, huh? Next, let us go to Jan 25 paper at last. See, this is one such statement. I forgot to inform you this. See, sometimes when you're reading from ICA material, you should also read a summary. What I should read? And sometimes few economists, they will come and they will put their point of view also. And in this case, see, whenever you are reading the question, this 100 question is Khatarnak questions here. Who described production function? Which function? Relationship between input and output. As the relationship between the maximum amount of output that should be produced and the input required to make such. Now what you will think, sir, law of variable proportion, law of returns to scale, production function, sir, the word Cobb-Douglas is there, Alfred Marshall is there. Either it should be Cobb-Douglas or you are thinking about Cobb-Douglas or Alfred Marshall, but in reality the answer is Samuelson. And sometimes few economists will come in between and they will put their point of view also. And this guy, Samuelson, Schumpeter, there are few economics like this. Swissy model, like this it will come. Swissy's model, oligopoly market it will come. Clear? It will be given in the summary or somewhere nook and corner of your ICA material sometimes. Such 1 or 2 questions will be there. See, that is what I am saying. 1 or 2 questions will come from some nook and corner without even your expectation. Such bounces will be there in every attempt. So, my recommendation, kindly even read the summary. What you should read? Don't just read like a newspaper once your main material. Also read the summary from ICI material, especially in chapter 8, M1, M2, M3, M4. Formulas are there now. Even you have something called as NM1, NM2, NM3, L1, L2 and reserve money concept. And that is never given in the main material. It is given in the summary. Sometimes questions will also come from summary. There is something called as cross rate. That is given in summary. It has come once in exam. I will explain that. Clear? Next, long-term average cost curve. What is it? Long run. Also called as planning curve, envelope curve, or one more name is there. 3 names are there. Wait. Let me show that. It has given in my material also. Write this down. See here. SAC is called as a, LAC is called as a, or least cost combination curve, or these are the 3 different names for long run average cost curve. So long run average cost curve is also called as a. Next up, initially, this I asked you to do a homework question. This you do it and come. Economies of scale and diseconomies of. Next up, in a short run, which run? Short. When average cost falls as a result of increase in output, AC is decreasing as a result of increase in tortoise shell question. Which question? In a short run, AC, that is tortoise shell, AC is falling. I said you, whenever AC is decreasing, be careful. AC is greater than, AC decreases greater than MC. Clear? And in terms of value concept, which concept? Same to same. AC will be greater than MC. See here, in the short run, when the average cost falls, average cost decreasing as a result of increase in marginal cost is dash than average cost. Marginal cost will be lesser because AC is greater, na? Only at that one point AC will become greater. That is what I said you. Be careful in that one area. See here, AC is greater, MC will be lesser. They are asking question from which point of view? They are asking MC will be dash than MC. MC will be lesser than, because AC is greater than. Clear? See tortoise shell concept. Next. Table. Already I have solved it. What will be the average product? What will be the, when the labor is 6, 10. Next, what will be the total product when labor is 4? 44. What will be the marginal product when the quantity of labor is 5? Quantity of labor is 5, marginal product. See 3 questions, continuous, easy questions that is. Next, see, 100 question, why did it come again? Here. Next, which of the following refers to the want satisfying power of goods and services? Formula already we did this. Next, see, factors of production. Which of the following is not a characteristics? What is it? Of the land is heterogeneous. Yes, it is not same with every piece. It is different quality will be there in the soil. Land is a fixed. Supply of land is perfectly inelastic. What is it perfectly? Yeah. Land as a multiple. Yes, land is an active factor. Hello, passive. Here. Next, already we did this. Any chapter 3 questions remaining? I think that's it. Okay, just check. How many questions are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 questions. Clear? Okay, listen, before winding up with the class, tomorrow, I will not be going so slow like this. Today, I understood after looking into the faces of these ICU students, when I speeden up little in between, already everyone are like, that is why I went slow today. But don't expect that tomorrow I will go in the same speed. Tomorrow it will be Shatabdi. Now only I am saying today you have a time. After going back home, sit, open your book, revise and come. See, marathon means you have already done 1 round of revision. This is the 2nd round of revision which is happening. Doubt clarification has to happen. But most of them, without even opening book, straight away they have come to marathon class. Nice legends. I can make out that in your face. When I am asking questions, people have not even opened economics book. Straight away they have come. I know. So tomorrow it is not going to be the same. Tomorrow it is going to be a fast. Tomorrow we will be finishing with chapter 4, chapter 1, chapter 5, chapter 6, 7 and 8. Definitely it will get over till 8 tomorrow. So today 3 is done. Tomorrow another 4 to 5 chapters will be getting over. And another 2 to 3 hours of shortage will be there. That alone will take it on the either Monday or whatever the respective day it is. Clear? So online students, even you guys, have to revise it and come to the class. Is that clear? Okay, bye bye. We'll meet you guys. Hello, tomorrow what is the class time? 7:30 to 4. Consider 4. Better 7:30 to 4. Or do one thing. Better 8 to 4. Huh? Better 8. 7:30 is actually, see, 7:30 to 9:30. 9:30 to 10 breakfast break. 10 o'clock to 12. Small chota break. 12 to 12:15. Again 12:15 to 2:15. 2:30 class wind up. Suppose if you need lunch break and still if you want to extend 2:15 to 3 o'clock lunch break, 3 o'clock to 5 o'clock last session. If needed. What is it if? Needed. I am not, see today also I thought of taking till 6. You guys said, sir, enough sir. Better we are leaving at 4:15 only. Clear? Huh? Chalo, tomorrow we'll see. Depends. Bye bye. Okay, good morning.
Good morning.
Good morning.
Good morning.
You're still alive?
Yes, sir.
Okay, chalo, today we'll make you to die in the class. Okay, so in the previous day, we finished with the concepts of chapter 2, chapter 3. Now today we'll be finishing with chapter 1 and 5. In the first 2 hours, it will not take much time. 4, 1 and 5. Before your breakfast break, your entire micro will be done. So chapter number 4 speaks about market and its types. What is it?
Market and its types.
So very basic question. What is market? Market is not a place. So don't make that mistake. Market is an arrangement or association. What is market? Where buyers and sellers contact. Such contact can be either direct contact or indirect contact. Why are they contacting? To exchange goods and services for them or consideration. Remember, market need not be a physical place always. It can be a virtual place too. That is online platform. And these are the features of market. There should be 2 group of people, buyer and they have to contact, either direct contact or they have to exchange the product. That is either a good or services. There should be a value or a consideration for the product and most important, willingness and ability to buy and sell. And when we speak about various classifications of market, we have classification based on area, like local market, regional market, national market, international market, based on time, spot market, future market, based on transaction. Let's say, for example, wholesale, retail, even volume of business, regulated, unregulated. But for us, these are not important. What is most important for us? Market based on competition. What is it? Market based on? Competition. So market mainly based on competition is classified into 2 kinds. How many kinds it is classified? So market based on competition is classified into 2 kinds. Number 1, perfect competition. Second one is imperfect competition. See, under perfect, we have only one single type, that is pure competition. But under imperfect, there are actually 6 types. How many types are there? 6. First one, monopoly. What is it? Monopoly. Second one is duopoly and oligopoly. What is it? Same way, monopsony. What is it? Diopsony. And oligopsony. What is it? See, now the word poly, this refers to seller. What does the word poly refers to? And the word sini, this is referring to buyer. What does it refer to? So mono. Mono means single. What does mono refers to? Single. Dio refers to 2. Oli refers to few. Same way. Monopsony, single buyer. What is monopsony? Diopsony, 2 buyers. Oligopsony, few buyers. In your syllabus, we'll be discussing only about monopoly and oligopoly under imperfect. And we also discuss about perfect competition market. And beyond this 2, there is one more type of a market, which is a combination of perfect and monopoly. What is it? Combination of? Perfect. That is called as monopolistic competition. What is it? Monopolistic competition market. So today, whatever the market scenarios which we are witnessing in the real world, that is monopolistic competition. Which competition market? Clear. So remember, market is mainly classified into 2 kinds based on competition. That is perfect competition and imperfect competition. So under the perfect, we have only one single type, that is under imperfect, there are actually 6 types. But in your syllabus, we only study about monopoly and oligopoly. Poly refers to seller, mono refers to single. Dio means 2, poly means again seller, 2 sellers. Oli means few, poly means that is few sellers. Which sellers? Few sellers. Clear? Monopsony. Sini refers to buyer. Mono means single. Dio means 2. Oli means few. So simple. Single seller, 2 sellers, few sellers. And there is also one more type of a market. Sometimes the question might come when there is a single seller and single buyer in an economy. What is it? Single seller and that is called bilateral monopoly. What is it called as? So kindly mark that down. Bilateral monopoly. If there is only one single seller and one single buyer, that kind of a market is called as what? Bilateral monopoly. One single seller and one single buyer. That is called as bilateral monopoly. Bilateral monopoly. Clear? Okay, so if you remember, yesterday we spoke about the concepts of total utility, average utility, marginal utility, and not just that. Even we also studied about the concepts of total product, average product, marginal, and also we spoke about total cost, average cost, marginal cost. Same way. Now, total revenue, also called as, already we have done this, price into quantity. What is it? Price into average revenue will be revenue earned by selling every single unit. See, total revenue is a revenue earned by making entire sale or total sales. What is the revenue earned by selling the number of units? Let's say I am selling 100 units for 50 rupee. 100 into 50, 5,000. That is total revenue. Let me say 5,000 is what I have earned. Again, 5,000 divided by 100, rupees 50. Once again, that is average revenue. That is total revenue divided by quantity. What is it? Total revenue divided by? And marginal, every extra unit or one additional unit. By selling one more extra unit, what is the revenue that we have earned? There are two formulas. When output is continuous, TRN minus. If output is not continuous, change in TR divided by. So this will be the formula. So this is the concept of revenue. TR, AR and MR. Total revenue, average revenue and marginal revenue. Anyone having doubt in this? So let us get started with the very first topic, that is perfect competition market. Which market? Perfect competition market. Now this is one of the most unrealistic market. This market is totally myth. There is no real life example. This is just a theoretical concept we are going to learn. In real life, there is no country which is following a perfect competition market. So why do we say that? Because they say this is the type of a market which is most idealistic market, which is free from all kinds of defects. They say this is the type of market where there is no problem at all. They are always and always perfect. What is it? Always and always? We don't even face any kind of a trouble. We are always perfect. You tell me, is there any market without facing a problem? Highly impossible. There is a problem, one or the other way. One issue will come in the economy. But in this type of an economy, there won't be any problem at all. That is why they claim, and we call it as unrealistic or they're totally myth. So why do we call them as myth? Let us understand characteristic feature. In perfect competition, there are large number of buyer and large number of. Then what's wrong in it? Every market has more buyers and more. Yes, point number one is not a trouble for us. Point number two, see, manufacturer is only and only not a price maker. For your own goods and services, you don't have any authority deciding your own selling price. Then who will decide the selling price? Market forces are also called as. What is that? Market forces or price mechanism? Demand and supply. So manufacturer is only just a price taker, not a price maker. Clear as? Next comes uniform pricing is there. That means all the manufacturers are selling the goods for a same price. You tell me, in an economy, will every nook and corner of the economy, will the price remain same? But in this market, every nook and corner of the economy, price remains. And yesterday we discussed one more topic where price was remaining same. Market equilibrium. See here, at the point of equilibrium, dash remains constant. That means in this market, they are always and always operating at equilibrium. Every manufacturer, every seller, every single person is operating at where? Equilibrium. Where is he operating? Equilibrium. Next, see there, homogeneous or identical goods and services. That means every manufacturer is producing same type of goods and. Now you tell me, price also same, goods also same. Is it possible? You go and buy from any person, even goods also remains. Even product price also remains. And everyone are, let me say, for example, buying the same product. Everyone are selling is also. Is it applicable? That is why we said this market is myth. See, homogeneous or identical goods and services is produced by all the manufacturers. Clear? So point number one, large number of buyers in. Point number two, manufacturer is only a price, not a price. Uniform pricing throughout the market, homogeneous or identical goods and services. That is also called as perfect substitutes. Now let us solve this table. Have a look here. Very simple and a small table. We know the formula, TR formula. Price into quantity, 2 into 5, 4 into 5, next 6 into 5, 8 into 5, 10 into 5. Next AR formula,
10 by 8.
TR by Q, 10 by 2, 20 by 4, 30 by 6, 40 by 8, 50 by 10, 5. Next MR formula.
10.
Hello, change in TR by change in quantity. Observe the output. Is it continuous? If output is not continuous, then MR formula will be change in TR divided by. See, second unit is there. Previous of second is first unit. We don't have information. What is previous of first? 0. That means when you are not selling anything, will you have any revenue? Revenue will also be 0. So compare 10 and 0. What is the difference between 10 and 0? 10. So 10 and 2 and 0. 2. What is 10 by 2? Next, same to same. 20 and 10 differences. 4 and 2 differences. Again, 10 by 2 is. So the end answer will be 5, 5, 5. And what we need to observe is price column, AR column and MR column. Only and only in perfect competition market. Which market? Perfect competition market. Remember, price is equals to AR is equals to MR. So this condition is satisfied only in which market? Perfect competition market. And even though when we are plotting the graph in perfect competition market, this is how the graph will be. P is equals to AR is equals to MR, x-axis, y-axis. This is the price. Is that clear? So price, average revenue, marginal revenue, all the three are equal, or it is going to remain same. Is that clear? So this condition applies only and only in perfect competition market, not in other markets. So only in perfect competition market, price is also called as average revenue, and that is also known as marginal revenue. Clear? So we are discussing about the feature. Point number one, there are large number of buyers in. Manufacturer is only just a price. All of them are selling at a uniform price, and everyone is producing a goods and services. Point number 5, free entry and free exit of firm into an industry. That means a firm can enter whenever they want, and they can also exit whenever they don't wish to. Simple. When will a firm enter? Simple. At two scenarios. Number one, when there is a supernormal profit, or when they are earning a normal profit. When do they exit? When there is a. Yesterday we discussed about a condition of loss. Shut down point. What is loss? Average revenue is always lesser than average cost. What is normal profit? Average revenue is equal to average cost. Supernormal profit. Average revenue is greater than. So when will a firm enter the industry? When they are earning either supernormal profit, or when do they exit from the market? When they are incurring. Clear. And buyers and sellers have a complete knowledge about the market. That means they know it. Everyone are selling same goods. Price also remains. All the manufacturers are producing homogeneous goods. We are just a price takers. That means we don't need to do any advertisement. So there is no advertisement. There is no dash. That means everyone has a complete knowledge in the market, buyer as well as. And also there is no transportation cost. Even though if you are incurring, you can't charge because you are just a price taker, not a price. Last but not the least, perfect mobility of factors of. So factors of production can move from land, labor, capital, can move from one person to without any restriction. You work in an organization A, same salary. Organization B, same salary. And you get a land for a particular price in one location, same rate. Other location also. It is perfectly mobile. What is it? Perfectly clear up. That means land cannot be moved from one place to another place. The land rate will be almost the same wherever you go and purchase that particular land. Clear? So these are the characteristic features. Number one, large number of buyers in. Number two, manufacturers just. Number three, uniform pricing. Number four, homogeneous goods. Number five, see, if first 5 points are satisfied, we call them as a. But if all the 8 points are satisfied, if you remember, I said there is no country on earth which is following a But the elements of pure competition can be followed in certain industry. For example, agricultural sector, stock markets. Say, let me say company, you will not decide the price of the stock. Demand and supply will decide the price of the, throughout the country, wherever you go and buy that stock, the price remains same. See, like this, there are certain industries which follows pure competition. But there are no country in the earth which is following a perfect competition. Only the elements of pure competition. What is it? Agricultural sector, stock market, for example, gold prices. These all are having the pure competition characteristic features. Clear? So these are the characteristic features. And we also discussed about the industry equilibrium. Which equilibrium? What is industry equilibrium? Total demand should be equal to total. This is called as industry equilibrium or market equilibrium. Now let us understand equilibrium of an individual firm. Individual. If one individual firm has to be in equilibrium, there are two conditions. Condition number one, MC should be equal to. Condition number two, MC has to cut MR from below. If you remember yesterday when I was explaining you the concepts, I said you AC curve and MC curve relationship. See here, AC curve will be U in shape, but MC we took it as. But in reality, MC was also U in shape. I said you, even MC will be U in shape. But for us, only second part of the graph is important. Which part of the graph is important? Only the second part of the graph is important. First part of the graph is? Now that is what we are discussing now. See there, even MC curve. See, this is MC curve. MC curve is U in shape. Now we know that in the perfect competition market, P is equals to AR is equals to. Let us only give importance to MR. MR is a horizontal curve. MC is a U-shaped curve. As per the condition, MC should be equal to. So there are two places MC and MR is equal at point X initially and later at point. Now where should I consider equilibrium? So that is when MC cutting from below, not from. Why? Suppose if it is cutting from above initially, see this is the portion. We are incurring only loss. And we know that selling price are market decided. So this is the selling price. Let's assume 10 rupee for a product. But my cost of production is, let's say, 18 rupees. Cost of production is 18. Initially, when I'm producing lesser number of units, my cost of production will be more. When I start producing more and more, cost keeps on decreasing. So initially, I've only incurred losses. If I stop producing at point X, that means I've never seen a profits. I've only incurred losses. Suppose if I produce beyond this point X, now slowly I will start seeing the profits. And let me say when you come to this particular point M, let's say you're producing 50 units. Again, you are at equilibrium point. That means no profit or no loss. Let's say when you're producing 300 units. How many units? Let's say in order to sell that one more extra unit, you are earning maximum profit level. Which profit level? Only for that one extra unit. Only for that one. Suppose if at all you are producing beyond this point M, I know that still I will be in profit, but the profit portion reduces. But still I will be in profit. There are large number of buyers and large number of. So I will not stop at this point A. I will go beyond until point Y. Until. Now when I come to point Y, I will stop here. If I produce beyond point Y, once again I will incur losses. I don't want to go to the. I want only and only this profit zone. That's the reason only when MC is cutting from below, I will consider it as a state of rest. What is it? And this is the maximum profit level. Which level? See, this is the maximum profit level of output, not this. In order to sell one more extra unit, you are getting the maximum profit only for that extra unit. But in your lifetime of an organization, until when you can earn that profit level, point Y, from this point X until point, you are only incurring profits. So that maximum profit level of output or until where you will produce until point Y. So since I'm not considering MC cutting from above, first half of the graph is not important. Which graph is important? So that's the reason year after when we write MC curve, we don't write it as. You only write it as. Clear. So what are the two conditions of firm equilibrium? Condition 1. MC should be equal to MR. Condition 2, MC should cut MR from, not from. Okay, this is firm equilibrium. Sometimes even question can come from output perspective. Which perspective? That means when we should produce, when we should not produce. When we should go aggressive, when we should not be. Simple concept. Now this point A, this is MR curve. Point B, this is MC curve. Which curve? See, point A is MR, point B is MC. Now, MR is greater, MC is lesser. That means revenue is more, cost is less. When revenue is greater than cost, we will increase our output. We will. Now, observe this point C and point D. This point C is cost. Point D is revenue. Cost is greater, revenue is. I am incurring losses. Should I produce more? Decrease output. Remember, whenever cost is greater, what is it? Than revenue. See, revenue has become lesser. Revenue is lesser, cost is greater, output will. But revenue is greater, cost is lesser. Output will. Now, sir, what if at this point X and point Y, MC and MR both are equal? Deciding factor is MC. If MC cuts from above, output will. If MC cuts from below, output will. Simple. See here, MC and MR is equal. If MC cuts MR from above, output will. If MC cuts MR from below, output will. That's it. This is firm equilibrium concept. Is that clear? And during a short run, that means less than a year, if at all, let's assume, I know this perfect competition market is unrealistic, which is nowhere existing in real life. But let's assume we are only operating for short run. My intention is to only operate for short run. Three possibilities are there. Either we can earn supernormal profit, or we can earn normal profit, or also incur. And especially in this normal profit condition is most important. When we are plotting the graph, in case of normal profit condition, see MC curve and MR curve should be tangent. That is the point of equilibrium. What is it? Point of? And MC curve, will write it as J in shape. Which in shape? And at that point of equilibrium, not just MC and MR is equal, even AC and AR is also, and price is also. So, in a short run perfect competition market, which market? Condition of equilibrium will be P equals AR equals MR equals AC equals. That means all the curves are equal. All the curves are at this point of equilibrium. P, AR, MR, AC, MC. All the curves are equal. That is the condition of equilibrium under normal profit. Condition of equilibrium under? In which market? Perfect competition market. Is that clear? Understood. So, in case of long run, what is it in case of? Only and only normal profit is possible. Why? Can't be on supernormal profit? Yes, you can. But they say, if any one firm makes a supernormal profit, now others will also start doing the same. Stupidity. There is no actual competition at all. Everyone are selling same goods. Everyone are selling for same price. And moreover, you are not having the authority to decide the price. Who is deciding the price? Market forces. Demand and then where is the competition coming in? So in reality, there is no competition, but they claim if any one firm makes a supernormal profit, everyone will also start making it. It will attract competition. Since there are large number of buyers and sellers, and we also have a free entry and free, we will only and only incur. Same graph, no difference. Now everywhere L as prefix for equilibrium. P equals LAR equals LMR equals LAC equals LMC. Clear? So this is perfect competition market. Industry equilibrium already we have done. Total demand is equal to. Is that clear? Now comes the next and the most important concept, monopoly. What is it? Mono means single. Poly means seller. Clear? Monopoly. That means single seller in the entire economy. Except you, there is no one else is there. So the firm itself is called as a industry. One single firm itself is called as what? So firm equal to industry condition is satisfied in which market? Monopoly market. You are the only one single seller, but large number of. You tell me, when you are the only single seller, will you decide the price or will market forces decide? So we are a price maker, and when you are deciding the price, would you like to earn profits or incur losses? Normal or supernormal? See, you are always a greedy fellow. You want supernormal profit. That is why you will decide the price. That means if people come and buy a product from you, supernormal profit. If people don't buy a product from you, loss. That's it. Only two possibilities. We don't have a concept of normal profit at all. Since you are the only seller, except you, no one else is there. You will always make supernormal profit, and no one else is there to compete with you. There is no closer, or there is no concept of. And you will also put something called as entry. You will not be allowing some other company to easily enter this industry, either to perform same business or a similar business. Either to perform which business? Same business or a. So there are 4 types of entry barrier. First one, legal entry barrier. Now the government of the nation, that is law of the nation, will only restrict. In India, best example, atomic energy. Only government can perform. Only RBI can print currency notes. Can any other bank print currency notes? Like this, by law of a nation, they will restrict. Second one, natural entry. Climatic condition will only act as a barrier. Now, can IT companies go and establish in Himachal Pradesh, Himalaya and all? No. Why? It doesn't allow them. Even though climate is very cold, chill and all, but still they can't. Can we grow apple in Bangalore? Climate is chill, na? No. Ooty, yes. Kashmir? Yes. Next, business formation. That means cartel. What is it called as? This cartel is important. See there. Best example, your local flower market, vegetable markets. See, there are chota mota people, some 2-3 people are selling in the place. They have a competition between themselves. But they will convert that competition into one small association or corporation. Let's say Kormangla Fruit Market Association. Only the members of that fruit market association can sell in the Kormangla market. Have you ever seen any new person coming and sitting and selling? No, that is called cartel or business formation. Only the cartel members can sell, no others can sell. Last but not the least, sometimes investment becomes a challenge. Even if government provides a permission, let's say Indian Railway, now open for privatization. But no private organization is coming to take it forward and invest it. Why? Huge amount of money is needed, like how government has done it from past 78 years, even under British rules from past 100 years. Such huge money is needed, and that cannot be done by any private single organization alone. So investment becomes a challenging. That becomes a challenging. So how many types of entry barriers are there? Number 1, number 2, number 3, number 4. Clear. Next comes the most important point of entire my monopoly concept, that is simple, charging different prices to different customers for the same goods and services. Best example, your college. Be calm. General merit, different fees. SC, ST, OBC, different fees. Economically backward class, different fees. Sports quota, different fees. NCC quota, same classroom, same teacher, same studies, but fees are. That is price discrimination, and monopoly will always follow this because you are the only person, except you, no one else is there. You intentionally will charge different prices to different customers. Why? In order to earn supernormal profit. Which profit? My intention is to make which profit? So for that, I have 4 types of discriminating. Number 1, personal price discrimination. My wish, my shop, my wish. I will charge the way I want. Let's assume Shashikiran has a cloth shop. If my regular customer comes, 10% discount, student comes, 20% discount, relative comes, 20% premium. My shop, my wish. Stupid fellows, you scolded me from my childhood, you will not do anything, so pay extra. My shop, my wish. Next, geographical. Let's assume I'm the only person who is selling clothes in India. Assumption. Intentionally, I will charge more price in North India, less price in South India. Or intentionally, I will charge more price in South and less price in North. My wish, I will divide it based on geographical location, and I will charge the different price. Next, based on usage. Now they will come, sir, I need white shirt. Why? Sir, I'm going for interview tomorrow in KPMG. Okay, 1,000 rupee. Now a cab driver will come. I will ask for what purpose? Driving cab. Same t-shirt, 200 rupee. Purpose, usage is different. Now he wants to look good, he wants to look professional. So I'm charging more. Cab driver, papada, every single night and day he will be riding vehicle for his livelihood. So I will charge less. Next, price discrimination according to. Best example, your raincoats. During rainy season, prices are higher. Why? During the summer, it is very low prices. That means even depending upon certain time, the prices will vary. Prices will not be the same. Next, 3 degrees are there. How many degrees? See, first degree is based on movie ticket example yesterday. Whatever you guys are extra ready to pay as a customer, you will be paying extra. You will be willing to pay extra. As a buyer, I will try to extract as much as possible. Best example, local vegetable vendors. If your mom goes, she will say 1 kg 70 rupee tomato. Oh, what 70? Next one they are giving for 40 and all. She will bargain and she will get it for. If your dad go, maximum will get it for. If you go, see, based on sometimes even premium 80. They will intentionally say extra, you will pay extra income. That means as a manufacturer, I will try to extract as much as possible from you. That is first degree based on consumer surplus. Second degree based on. See, if at all we are buying in bulk volume, usually we get at a wholesale price. If at all we are buying at a less volume, we get it at a retail price. So depending upon the volume. Third one, this is important, based on attributes. Based on I will divide the markets into some particular sub-markets based on attributes, either location, customer segment. Best example, now airlines. We have economic class, business class. Now book publisher. Now book publisher has something called as school books, novel books, story books. Like this different set of categories there. Now even apparels. Let's say for example clothing, kids wear, men's wear, women's wear, party wear. Like this, I will divide and I will charge separate prices for separate categories. That is called as based on attributes. What is it based on?
Yes.
So these are the 3 degrees and 4 types. And this is important. From this questions are coming. 3 degrees and 4 types. Which are the 3 degrees? First degree based on? Second degree based on? Third degree based on? Attributes. And dividing them into separate sub markets. Clear? And types of price discrimination. How many types are there? First one, personal price discrimination. Second one, third one, price discrimination according to use. Last one, price discrimination according to. Clear? And now let us understand the graphical way of representing monopoly graphs. Now see again, TR, AR and MR. Simple concept. TR formula, price into 20 into 1, 18 into 2. Next term, 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 next term. Observe, from 20 it increase it to 60. From 60 after becoming maximum, again it is going down to. That means increase and again decrease. That means it is like inverted U shape. Which shape? See, increased becomes maximum and then it starts decreasing. Clear? Next, average revenue formula. Total revenue by quantity, 20 by 1, 36 by 2, 18. Next, 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 next. Now observe, very simple concept. Price column and AR column both are 1 and the. So average revenue is also called as selling price. What is it called as? So what is another name for average revenue? Demand curve. AR is also called as. So average revenue has 2 more different names. One is selling price, second one is demand. Next comes marginal revenue. See, output is continuous in nature. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So first formula. So what is that? First one is 20. Next 20, 36 minus 20. Next 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 minus clear. Understood. Now this table let us represent in the form of a graph. See, this is how the graph looks like. See, TR curve. Initially it will increase. It will become maximum. It will become and then it starts. AR curve is also called as selling price. So hence AR will never become 0. It will never touch x-axis. But MR will decrease. It will also become 0 and it will also go to negative. That means, remember, this logic is most important. Whenever TR is maximum, whenever TR is, MR will be 0. MR will be 0. And long ago, very long ago, we discussed point elasticity method. Middle point on the AR curve will be unitary elastic. Demand curve middle portion, unitary elastic. Lower segment divided by upper segment, point method. And initially when TR is increasing, what is it TR is? No doubt, MR is decreasing, but MR is positive. MR is decreasing, but MR is positive. E is greater than 1. Clear? Next, whenever TR is decreasing, what is it TR is? Right side. Now see, MR has become negative. MR has become and E is lesser than. So once again, see, initially TR increases. MR is no doubt decreasing, but still E is greater than. Next, whenever TR is maximum, MR is E is equal to. Next, when TR is decreasing, MR has become and E is lesser than. Clear? So TR increases, TR maximum, TR decreases. So this is the TR curve, inverted U in shape. AR curve will be flatter. AR curve will be dash because it will never become 0. AR curve is also called as selling. But MR curve will be steeper. MR curve will be dash. It will decrease, it will become 0 and it will again go to negative. But it is a decreasing. But the one thing which we need to observe the most, observe just AR and MR column. 20 and 16 difference. 20 and 18 difference. Next 16 and 12 difference. Here again difference. Here again difference. That means marginal revenue decreases double than average revenue. Does it MR decreases? Double than average revenue. Is that clear? So this is the graphical representation. And like a surprise, we have one more. Third formula to calculate marginal revenue. So if you remember, there were 2 formulas to calculate marginal concept. So which are those two formulas? Just few minutes back we discussed. When output is continuous, what output is? TRN minus TR. When output is not continuous, change in TR divided by change in. But we have a third formula. What is that third formula? Simple. MR will be AR E minus 1 divided by. When do we use this formula? When there is information given about AR, that means selling price. This is the first. And second one, there is information about elasticity. What is the information given about? When these two informations are given, we will identify MR by using a third formula. Which formula? Okay, let's take one fictitious example. Let's assume selling price of a product is rupees 20 and elasticity is, let's say, 1.4. 1 point. E is greater than 1, right? See, common sense. When E is greater than 1, what is it? E is? MR will be still positive. Suppose if E becomes equal to, without even solving, I can say MR is clear. So that means I know MR answers will be positive now. Let us still solve it according to the formula. What is it? MR is equals to AR E minus 1 divided by E. Now 20. E is 1.4 minus 1 divided by 1.4. 1.4 minus 1 is 0.4. 0.4 divided by 1.4 into 20. Answer 5.7. Clear? See, MR is still positive. See, like this, we also have a third formula. When do we use this third formula? When there is information given about selling price and elasticity. We are going to use the third formula. Clear? Now, in monopoly, during short run, what is it during? Only two possibilities. Since you are the only seller in the market, except you, no one else is there. Except you. That means you will only and only earn which profit? If people come and buy from you, supernormal profit. If they don't buy from you, that's it. Supernormal profit. AR greater than AC. Losses AR lesser than. That is in short run. What is it in? But in case of long run, you are the only seller in the whole market. You will only and only earn which profit? Supernormal profit in long run. See, now AR curve is flatter. MR curve is steeper. MC curve cuts MR curve. That is equilibrium. Graph will change. Clear? And next comes price discrimination. We already discussed now, charging different prices from different for the same type of goods and that is called price discrimination. Now there are two areas where the question comes from this price discrimination. Number one, what are all the essentials to follow price discrimination? Number one, you should be having a real and you should be able to separate and in that separate market there are different elasticity in different market. In one market relatively elastic, another market relatively, and there is no possibility of. That means one person, let's say I'm charging less price in South India, I'm charging more price in North India for my cloth. A person from North India will come to South, he will buy it here and he will go and resell it back again. No, resell is not. You are the only seller and you are differentiating the market based on elasticity. One market, it is relatively elastic, other market is relatively inelastic, and you should be having the real monopoly power. Except you, no one else should be there, and you should be able to divide the market. So these are the four essential conditions. Now, what condition? And because you are having this power, you can charge different prices and earn which profit? In a regular class, we have done one in detailed case study on this. We solved a problem, how supply gets shifted. Because of that, why prices are going to change. In one market, price will increase, other market price will. See, that is what? Discriminating the price. In one market, price goes up, other market price. But where price goes up, where price comes down, that is most important conclusion. Remember, when the market has less elasticity, which elasticity? Less elasticity. In such market, we will increase price. When a market there is high elasticity, we will opposite reaction. If elasticity is more, in that market, prices will be less. If elasticity is less, in that market, prices will be. Now, because of this discrimination, what is it? Because of this, we will earn supernormal profit. Which profits do we earn? Is that clear? So this concept is important. Kindly see, in the previous marathon also, I have given in detail explanations over there. And the conclusion is very simple. We charge high price in a market where there is. That means, let's say E lesser than 1. What is it? E? Where we charge high price. If there is a high elasticity, E greater than 1, we charge dash price. And see, same to same, we will represent in the form of graph. When we are representing in the form of graph, see, E lesser than 1. What is it? E? E lesser than 1, relatively inelastic, steeper demand curve. See, your demand curve is steeper. Suppose E greater than 1. What is it? E? Relatively elastic, flatter demand curve. See, one market steeper, other market flatter. Now, because of both of them, combined market, that is aggregate market, there is a kink. What is there? Kink refers to bend. What does kink refers to? Now, this is most important. Bend. That bend is also called as kink. So, we have a kinked demand curve. Which demand curve we have? Can you see this? We have a kinked demand curve. Reason for a kinked demand curve is price discrimination, and most important of all, this kinked demand curve is dash to the origin, convex to the origin, and especially below the kink in relatively elastic is going to be there. What will be there? Relatively, that is E greater than 1. Above the kink is relatively inelastic. Relatively, below the kink, relatively elastic. Above the kink, relatively inelastic. And one more important element is there. After discriminating the price like this, in one market more price, other market later, MR of both the markets will become equal. MR of market A will become equal to MR of market B. So these are the important topics of price discrimination. Clear? So by that, monopoly revision comes to an clear. See, little detailed version, it is already there in the previous marathons. If I touch that now, minimum it takes half an hour. If I have to go little in detail and all, because in the class almost we have done in detail, full on, length and breadth we have done. Why price will increase, why price will decrease, that part. And I think ICU students, yesterday I was speaking to Nitin, he said there is an access to my regular classes. Have you guys watched it? Then why still many of them are still blank even after watching? You could have answered yesterday. He said already you guys have an access to the regular classes. He said you are watching the regular classes. Did you finish the syllabus? Don't do it. After September, after the exam, you do it. Stupid fellows. You should finish that, na? Then why did they give that access, by the way? Then, for complete, he said complete syllabus access is given for the latest recording for ICU students. Okay, chalo, next, oligopoly. What is it? Oligopoly. Oli means few. Poly means seller. That means there are few sellers in the entire economy. Who are there? When I say few, that number might not exceed beyond a single digit. Number might not exceed beyond a. That means hardly 1, 4, 5, 7 like this. There are few sellers, but large number of. Between all these few sellers, there is a close interdependency in terms of advertisement, selling the product, customer base. Everything is closely interdependent with each other. Let's say Ariel will wash the dirt in first to go. Next Tide, one line will come like this. Tide, other brands. Ariel, other brands. They always try to say that we are best and we are superior. They are always comparing, and there are few people, and between them there is something called as price. Like how price discrimination was important in monopoly, price rigidity is important in. See, what is price rigidity? If any one fellow reduces price out of this few, even others will also decrease. If any one fellow increases price, others will not. They will never compete in terms of increasing in price. Oh, if this guy increase, I will also increase. Other guy increase, I will also increase. No, they will never do that. But if any one fellow decreases, others will also. That is price rigidity. Is that clear? So price rigidity gets operated in which market? And there is existence of dash cost. Which are those selling cost? And there are 5 types of oligopoly, and in every attempt, one question is going to come from this. Types of oligopoly, and especially third and fourth one. This is important. This is where most repeated number of times the questions have come. See, very first one, pure oligopoly. And pure oligopoly means everyone are selling homogeneous goods and services. Differentiated means heterogeneous, different goods and services. Next comes open oligopoly. Entry of any new firm is not restricted. Closed oligopoly. Entry of new firm is. Next comes collusive and competitive. In collusive, everyone are selling at a common selling price. Which selling price? See, everyone will come under one roof and they will decide at a selling price. Like for example, petrol bunks, clear, and gold prices, 1 gram gold. Everywhere it is the same. Making charges and wastages are all different. But base price of gold is. Next comes partial and full oligopoly. In partial oligopoly, there is a price leader. He will be regulating the prices. If price leader changes the price, other competitors will also. If price leader does not change, others will. Best example today. Now Jio is a price leader. If Jio increases price, Airtel will also increase. Your VA will also increase. If Airtel decreases, they will also. That means Jio is acting as a price leader. Next, full oligopoly, boss. I'm not following any price leader at all. I will follow my own pricing strategy. Same applies here. Competitive. Boss, you guys sell at a common price, but I'm not selling at any common price. I'm like Shell Petrol Bunk. I have my own price. You guys sell Indian, HP, Bharat and all. You guys sell at same price. But I will not sell at the same price. I have my own pricing strategy. Clear? So that is collusive and partial. This is important. Collusive and partial. This is where most of the times the questions have come. Next comes syndicate and proper match fixing. It is Pushpa movie. Best example. Everyone will form their own cartel or syndicate, and everyone will be selling through syndicate. That is called syndicate. Everyone has a common seller. Everyone has a common distributor. Organized, we will only decide who should sell where, at what price they should sell, at what quantity they should sell, how much they should produce. They will only fix the price, quantity and quotas. That is called organized oligopoly. All these few firms will come together, they will decide upon themselves and they will only perform as per the discussion, that is called organized oligopoly. So these are the 5 types of oligopoly. One question for sure is there in every attempt from oligopoly types of. And again, in oligopoly also we have a kink demand curve, but this time the reason is, and this time the nature of kink demand curve is concave, but in monopoly it was, in oligopoly it is concave. And see, above the kink, what is it? Now this is most important. Above the kink is relatively elastic, below the kink is relatively, and it is dashed to the origin, concave. Why? Because of price. If any one fellow reduces, others will reduce. But if anyone increases, others will think before increasing. Clear? So that is the concept of oligopoly. What is it? There are few sellers in the entire economy. How many sellers are there? Next comes monopolistic competition. Today, whatever the market that we are witnessing, that is which market? There are large number of buyers as well as large number of, and it is a combination of dash and dash. Whatever we just discussed, Nala, perfect and monopoly, it's a mixture, combination of both. We'll also find the elements of both here. See, in this monopolistic competition, manufacturer has a full freedom, which he has to bring any number of changes and any number of modifications. See, for example, Lifebuoy, just a red color soap it was. Next, they bought in all rainbow color soaps, all white color, blue color, green color, Dettol, not just antiseptic liquid. Now Dettol hand wash is there, Dettol soap is there, Dettol sanitizer is there. Tomorrow they will come up with Dettol toothpaste, kills 99.99% germs. You guys will buy. See, you can bring any new product, any new modifications in your product, because you have a full control. Since you are not the only person, along with you, there are also a lot many sellers who are fighting for the same number of profits and market share. See here, a manufacturer will have a complete control over the product, but manufacturer will not only be the, instead he has to compete with in order to sell this. So he has a complete control to bring any changes and any modifications in this product in order to compete with. Clear? And see the characteristic features, large number of buyers and large number of, they have free entry as well as free, and they always try to bring dash differentiation. They will always say that I am best, I am superior, I am the good one, I am different, my competitor is different. They always try to differentiate it, and there is an existence of dash cost, advertisement and transportation cost, and there is something called as, people are brand loyal. Best example, your mom, cooking oil. She asked you to get sunflower cooking oil. By mistake, if you take sun pure, will she accept? Oh, what did I say? Sunflower. What have we got? Go exchange it and come. See, people are more and more brand loyal in which market? Monopolistic competition. See, since it is a combination of monopoly and perfect. In monopoly short run, what is it? Monopoly? See, my intention is to only run a business for a shorter duration of time, not for a longer duration. So when your intention is only short run, you will try to make supernormal profit. If people buy the product, you will earn which profit? If they don't buy, that's it. Same happened in monopoly, na? Same to same condition of short run. What happens in monopoly? Monopolistic competition also happens the same, only in which run? But in perfect competition market, long run, which profit was there? Here also only and only that normal profit, but the extra topic is you need to maintain dash stock. Excess capacity left out. See, I have a capacity of producing more, but still I am producing less. Shashikiran can produce 1,000 bottles in a month, but intentionally is only producing 800 and I'm maintaining this buffer stock. I can make supernormal profit, but no, I will only and only earn a normal. Why am I maintaining this buffer stock? If any competitor comes to my market, any strong competitor like Jio tomorrow, stupid fellow, he will come and give it for free of cost or reduce the prices. Even I should reduce my selling price now. For that, my cost of production should go down from point A to point B. See, minimum point of ACCA. For that, I will maintain this buffer stock. Once my cost of production goes down, automatically selling price will also. We know that when price decreases, automatically demand will. So in order to reduce that price, I need to maintain the buffer stock. See, final conclusion. If any strong competitor enters the market, we will utilize that as stock. Why? To reduce my cost of production as well as when my selling price, when price decreases, automatically demand will. See, in a long run, if the realistic firm, that means what we are actually seeing in the today's world, if they want to be in equilibrium, they should always and always maintain a that is buffer. In short, they're operating at normal profit. AR is equal to, even though they can make supernormal, but they will not. They will maintain which stock? Buffer stock and operate in which profit? Clear. This is monopolistic competition market. Which market? Clear. So this is what the topics we have learned. And there are some basic differentiation between all the three types of market. Let us have a look into that. See, behavioral principles is also what we call them as. See, already I have done both the behavioral principle. One is shutdown point. What is it? What is shutdown point? When a firm is unable to recover back their dash cost, variable cost or average variable cost or total variable cost. And when will a firm produce their maximum profit level of output? Firm equilibrium, MC equals 2. That is where they will make which profit? And MC should cut MR from below, not from. And see, there are a couple of basic differentiation will be asked in the exam. Simple. See, this whole table is important. And they are merging with demand concept also. See, perfect competition market. Which market? My first question, what is the difference between perfect and monopolistic competition? In both places, large number of buyers in. What is the major differentiation between perfect competition and monopolistic competition? Product. See, everyone are selling same goods in perfect, but in monopolistic, is it same? In perfect, homogeneous, but in monopolistic, heterogeneous goods. Clear? That is a major differentiation. See, in both the places, there are many sellers, but product differentiation is not at all there. But here, there is a product. And see, here P equals AR equals MR. That means graph was horizontal. When it is horizontal, infinite. Now E is equals to infinite. But here, monopolistic competition, AR curve is flatter. That is E greater than 1. Flatter curve. Flatter means E greater than 1. Degree of control. Where control is there for manufacturer. Complete control. You can bring any number of changes now. But here there is no control. Prices are purely decided by market forces. Next comes oligopoly. How many sellers? And product differentiation. Yes, to some extent they can bring in. Price elasticity is very less. That means price rigidity concept is going to work there. And degree of control only to some extent. Only to. In monopoly, you are the only single seller. You are always coming up with a unique. And prices are elastic, very small. That means even though if they increase very large extent, you still have to buy from him only. You will only reduce the demand by some small extent. People, either few people will stop buying from him, not everyone. No. You are the only seller, except to no other option. And degree of control, very considerable degree. High degree of control is there. What is there? See there, perfect competition market characterized by many sellers with dash product. Monopolistic competition, it represents only one aspect, that is mainly many sellers are there with dash product. In monopoly, there is only one single, but there are large number of, and you will come with the necessary extremely differentiated, or let me say one common product. There is no common product. Actually, you are the different guy. You are the only one who is selling this product. No one else is there. Next comes oligopoly. There are how many sellers? By this entire chapter 4 comes to an end. Any doubts in any topic of chapter 4? See, that is why revise and come. See, this is the speed in which the revision goes. Clear, Ram? We are covering everything, but we are going little fast. Clear?
Yes, sir.
Any conceptual clarity, any conceptual topic you guys have a doubt in chapter 4? Okay, let's go to MCQs.
Yes, sir.
Okay, now come to the May 24 attempt paper. Now, see there. Some donation of marks is going to happen in chapter 4 also. Calculate marginal revenue. Which revenue? When average revenue is 45 and price elasticity is third formula, when there is information given about selling price is also called as, and elasticity is given. So which is the third formula? ARE minus 1 by, so simple, 45, 3 minus 1 divided by 3. 3 minus 1 is 2. Now 2 by 3 into 45. Answer. See, if you just know the formula, you will crack off the question. Next, which of the following is not a feature of? Not a feature of perfect. Homogeneous goods. Yes, everyone are selling homogeneous. Very large number of sellers. Yes, firm is just a price. Yes, inelastic demand. Hello, highly inelastic it is. E is equals to infinite. Now P is equals to AR is equals to MR. It is not inelastic. That is highly inelastic. What is it? Highly inelastic or highly elastic? See, when I say inelastic, everyone 3 times also. Highly inelastic, yes. Highly inelastic. Highly inelastic, yes. Highly inelastic. Stupid. Highly elastic. What is it? That is E is equals to infinite. Clear? Next. Which type of a market allocates productive resources to producer and helps ensure that those resources are factor market, factors of production, land, labor, capital, and organization. Next, the firm will make dash profit by extending output to the level where MC and MR should become maximum profit level. I said now a firm will earn maximum profit level until MC becomes equal to, and MC has to cut MR from firm equilibrium condition. Next, I've already did this. Chapter 4, unit 2 question it is. Next, which of the following is not a feature of single seller, large number of buyers? Barriers to entry is there? Yes. No close substitute? Yes. You are the complete maker of price? Yes. Single buyer. Single buyer is monopsony, not monopoly. What is monopoly? Single seller. So option B. Next, which of the following is not a condition for charging different prices to different customers for the same type of goods? And not a condition, they are saying. Now the seller should be able to divide the markets into at least, yes, essential conditions of price discrimination. Next, the seller should have a, that means you are setting the prices. Next, a price elasticity of the product should be different in the different, yes, different market, different elasticity. Next, it should be possible for a buyer to pay lower price markets to come in the products in the high price. Is it possibility of resell? No possibility of resell. Option D is the answer. Next, under second degree price discrimination, first degree based on consumer supply, second degree based on volume of transaction. See, location, no. Customer segment, no. Each individual customer, no. Different quantity sold, yes. Volume of transaction. I said, types of price discrimination and degree. From there, questions are going to come. Next, here. Assume when the price is rupees, the quantity demanded is, and when price is 28, quantity demanded is, what is the marginal revenue between 19th and 20? Simple. First calculate 20, then subtract it with 19. So first 30 into 19. How much is that? 570. Next 28 into 20. Hey, calculator man, take out 560 minus 570. Minus 10. 560 minus 570. What is the answer? Minus 10. Next, the oligopoly market in which few firms comes to common understanding with each other to fix the common price. Which price? Common price. Which oligopoly? Collusive. I think that's it. Just calculate how many number of questions had come. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 and 11. 11 questions in total. Wait, let us check. That's it. 11 questions. How many questions? Said, usually average is 10. Either they can go down till 7 or they can go up even beyond 10, 11 and 12. Sometimes worst scenario up to 15. Clear? Okay. Now let us see in the September attempts also. Jan and September. Jan 25 and September attempt. Question number 15. In oligopoly, when the industry is dominated by one large firm, in oligopoly, one single industry, one single firm is dominating. Price leader, which is that? Partial oligopoly. Next, when a perfect competitive firm earns a dash, when average revenue is more than average total cost, AR greater than AC. See, donation of marks. Next, with a decrease in demand, with a decrease in chapter 4 unit 2, already we have done this. Next, average revenue curve is also known as selling price. Next, assume that the price is rupees 20, quantity demanded is. When price is 19, quantity demanded is 10. On the basis of information, identify the increase it from the output to 9th to 10th unit. Now MR of 10th unit, simple. 20 into 9 is how much? Next, 19 into 10 is how much? 190 minus 180, positive 10. Which 10? Positive. Next, market characterized by the single buyer. What is it? Not single seller. Single buyer means monopsony for the product or services, and it is mostly applicable for dash market, which there is a single firm is the only and only buyer. If there is a single buyer, what is it called as? Single buyer, single seller? So don't get confused. Understand the question properly. Next, downward sloping, highly inelastic. What is it? Highly inelastic. That means even though price increases by large extent, only some people will stop buying. Monopoly market, na? Table, I said, na, the table is important. See, monopoly. Price increases by large extent because you need to make supernormal profit. You will increase the prices by exorbitant. But except you, no one else is there. Only few people will stop buying. Not everyone will. Na? Highly inelastic demand. Which is it? If it is highly elastic, perfect competition market. P is equals to AR is equals to MR. E becomes infinite. Clear? Next, market for the soaps and detergents. There are a large number of people who are selling that. Next, identify the correct below mentioned conditions for the equilibrium of the firm in a simple firm equilibrium. MC should be equal to MC should cut MR from simple. See there, MR equals to MC. Yes, possible. MR greater than MC, not possible. MR lesser, also not possible. MC should be positive slope. That means upwards. Cutting from below means upwards, going upwards. Now, yes, 4 and 1. 1 and 4 is the answer. Next, when both demand and supply increases, chapter 4, unit 2, already done. Next, the total revenue will be TR maximum, MR will be 0. When MR is 0, elasticity is. Already we did that with the graphical explanation. See here, TR is maximum, MR is E is equals to basic bachu question it is. Next, identify the correct relationship between MR, AR and elasticity. That means new formula of MR. What is it? AR E minus 1 divided by that formula. See, even from the formula questions have come. Next, many sellers operating with the which sellers? Many sellers but different product. To many. Many seller, many buyer, different product. Many seller, many buyer, same product. That's it. Next, price elasticity of demand for the firm under perfect competition. P is equals to AR is equals to MR. That is E is equals to. Such a easy question. See, in this attempt, they have asked more questions from chapter 4 and all the questions were easy. And still students have made blunders. There was nothing difficult in chapter 4. Full on easy. See, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. See, one more. Chapter 4, unit 2. 15 questions. How many questions? Literally jackpot. Jan 25 attempt. 15 easy questions from chapter 4. And still blunders. Clear? Understood? Okay, one more attempt. We will check. That is September 24 attempt paper. The supply curve is perfectly competitive firm in the perfect competitive firm in the short run. That is MC curve, supply curve, MR curve, AR curve is a demand curve. They are speaking about MC curve there. So the supply curve in a perfectly competitive firm in the short run. That means the portion of MC curve will lie above the minimum point of average variable cost. This is actually connected to even chapter 3. Chapter 3 and chapter 4 both are connected. This question is little advanced. Clear? Next up. 3 major smartphone manufacturers, Alpha, Beta and dominating the smartphone market. These companies are in the constant competition in the market share and innovation. Which type of market structure? Oligopoly. Only Alpha, Beta, Gamma. Few na. Next up. If the marginal revenue, if the unit 1 is 10, unit 2 is 5, unit 3 is, they're asking just total concept is cumulative of marginal. Just add all the 3. 10 plus 5 plus 3. How much? 18. 10 plus 5 plus 3 is? 18. That's it. 18 is the answer. Next term. Which market covers a wide area? Which area? Such as few adjacent cities, part of state, and cluster of the state. That means they're speaking inside the country only. City, state, which market? If they're speaking about multiple states, if they're speaking about the outside the country, if they're only speaking about one locality, clear? See, such a basic questions. Next, what happens to the equilibrium price? Already we did this, chapter 4, unit 2. Next, this is also chapter 4, unit 2. Next, talcum powder market is an example of, see, talcum powders. That means few people are doing or many people will be doing. Talcum powder is an example of, they are only speaking about oligopoly. Which type of oligopoly? Is it collective? No. Is it open? Maybe. But here they are never speaking about is it open or closed. That means any new firm getting entry or is there any restriction. Nothing is mentioned in the question about any openness or closeness. So answer cannot be between open and closed. What do you mean by collusive oligopoly? Everyone comes together and sell for a same price. Will all the powder manufacturers are selling at same price? Then only remaining is, they are imperfect. They are not same. They are selling different powder. One for skin sensitivity, one for odor, one for soft skin, one for sensitive skin. Like this, imperfect oligopoly. What is it? Next comes a software company engaged in the price discrimination for its product. Now you tell me, where do we follow price discrimination? That's it. In the first line only we can actually tell the answer by looking into the option. Next, according to kink demand curve theory hypothesis, why does the demand curve faces an which market? Concave or convex? Concave. In monopoly it was? In oligopoly it is? See, they're asking in oligopoly. See there, according to kink demand curve, why does the demand curve facing an oligopoly have a at the prevailing price level? See, in case of oligopoly market, the segment above the kink is E greater than 1, below is see, below is inelastic, above is highly elastic. Option C. Next, a market structure in which there is only one single buyer and one single buyer, single seller. Next, monopolistic competition is characterized by many sellers selling identical product, many sellers selling differentiated product. Clear? Identical, differentiated. That is the main difference between perfect and monopolistic competition. Conditions for an equilibrium of a, what is firm equilibrium? MC should be equal to, MC should cut MR from. Clear? Next, a market structure in which all firm individually are a, all the firm are a price takers. Where? What was difficulty in this paper? And students have made blunders here. See, that's it. Chapter 4. Just calculate the number of questions which has come. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 questions approximately. Only one question was little tricky in the chapter 4. That's it. Except that one question, bloody every other question was full on easy. You just have to need is conceptual knowledge. When you have a conceptual knowledge, it is very much easy to crack off. Clear? By this entire chapter 4 comes to an clear. Understood? So, if you see the flow, yesterday I gave you the flow. First we'll do with demand, supply, chapter 4, unit 2, consumer behavior, production, cost, chapter 4, unit 1 and 3. So, only remaining a small putty portion of micro now, 1 and 5. Chapter 1 and chapter both put together 1 hour is enough to finish it off. It will not take even beyond 1 hour. See, chapter 1 is Kutisa unit. Only and only 5 topics are there to remember there. Okay. Economics is derived from a dash language, Greek language. Which are those 2 words of Greek language? Oiko, that means household, nomia means. So what is economics? Art of household. Economics was earlier studied as a part of political economy. For the very first time, Adam Smith gave a proper definition to for the economics in the book called as An Inquiry into a Nature Causes, popularly known as, since he was the first person to do that, he is also called as Dash of Economics. And the modern father of economics is, see, Alfred Marshall spoke about welfare. Who spoke about welfare? Who spoke about wealth? That's it. Human ones are, resources are. So in short, in economics, how are we going to use together the scarce resources to transform our dash ones? And also we need to speak about which economics? Simple concept, taking right decisions at right time. What is business economics taking? Called as rational business decision making. See boss, my resources in the business is also limited. Inputs, land, labor, capital, and I can't perform every other business. I should select only those business which will make me to achieve objective as a profitable. Only that I should select. I can't do every business. I can't do each and every business whatever I see. So I should select the right alternative, reject the wrong alternative. See, first evaluate what all alternatives are there. Collect basic information about that alternative. Choose between the available productive resources. What are my productive resources? And which are dash in nature, limited in nature. Clearer. So in short, most effective alternative should be chosen. Less effective alternative must be. So in short, what is business economics? Rational business decision. Taking right decisions at right time. Why? In order to fill the gap between economic theory and Alfred Marshall, Adam Smith and all. They have given theories in 1776, 1821. Those theory may be applicable today or may not be. So don't keep on following the same theories. Today, whatever practically we are facing a problem, for that come up with a solution. That is called pragmatic in nature. Which in nature? And this concept of business economics will also consider various economic tools. Which tools they will consider? Which are those tools? Demand, supply, cost, price, competition. This is chapter 2. This is chapter 3. This is chapter. That is why I took this chapter 1 later. Clear? That means microeconomics is mainly dependent factor for decision making. That is business economics. So business economics is highly dependent on dash economics. Microeconomics for a decision making purpose because they use dash tool. Such economic tool belongs to micro or macro. That's it. This concept of business economics was introduced by John Dewey. What is it? John Dewey. Clear? He was the person who introduced it. Next comes difference between micro and micro is price theory. Macro is, in micro we study individual aspects in detail, but in macro we study entire economy as a nation's income, whole nation's income, poverty in the country, unemployment in the country, like entire economy as a whole. But in micro, demand, entire demand in detail, supply in detail, competition in detail, and microeconomics is full of, and but macroeconomic is realistic and there is no, micro is inside the organization, macro will be, micro is called as worm's eye view and macro is called as a difference between micro and clear. Next comes, is economic science or an arts? Both. Simple. To call any subject as science, 5 conditions are there. Systematic body of. Answer should be, there should be utility, utils was a tool to measure, and last but not the least, universally. But the problem with economics is it is not universally acceptable. Demand what is there in India is not the same in US. Demand what is there in Kormangla is not the same in, let's say, Delhi. It will not be universally acceptable. It is, let me say, regional biased. What is it regionally? That means economics will satisfy the first 4 conditions. Yes, we have a systematic knowledge. Step by step we will learn. Not everything we will learn together. And answers are measurable, law of demand, elasticity of demand. We were quantifying the answer. Even answer should be, if price increases, demand. See, you are able to easily predict now. And there are tools to measure the, respond, man. When you give a pause, that means you are answering there. Stupid fellows. Last but not the least. So we don't have universally acceptable in economics. Henceforth, economics is no doubt a science, but not a pure science. Economics is a why it will not satisfy universally. Okay, we learned in a theoretical way. Now it is time to apply that in a practical manner, execute that in real life. That executing in real life is called as practical application of knowledge or practice of which you acquired from the science is called as art. Yes, in day-to-day business of economics, we face lot of economic and we also provide a practical. See there, economist, we find that there is a feature of art also in various branches like consumption, production, public finance, etc. It provides a solution for various economic problems that the firm faces in day-to-day. Science is theoretical, art is economics is both. That is why Big Billion Day, Amazon Festival sale, Munyappa sale, Rangappa sale, Marappa sale and all we will give and we will attract customers. They know. If people will not come and buy straight away from you, start giving discounts and offers. Why? Increase MRP and say flat 50% off. They will come. That is art. What is it? So economics is a combination of both science as well as a. Now under science there are two things. Now this is what is most important and this is where exam questions are coming. Positive science and simple concept. Doctor example in the class I have given. Let's assume I am teaching to doctors. To my left hand side, all senior doctors. Already created well name and fame, good reputation in the market. Right hand side, junior doctors. Which doctors? Okay, now Shashikiran is a patient. I am unable to eat water, drink food. What is it? Unable to eat water, drink food. That is the symptoms of Shashikiran. First, I will go to senior doctor, reputed people, not. I will say, this is my problem. They will ask me to go and get a blood test done and scanning reports and all. I will get my blood test scanning reports. After looking into that, they are tuppifying me, stupid fellow, Shashikiran. In your body, more than water, alcohol is there. They are drinking alcohol like a water. See, they will explain about what is the cause, what is the effect. They are more concerned with blood test report. See, the report is saying, your scanning reports are saying, they are more and more concerned with. They will say why it has happened and what all effects are it was going to create. That means your liver is going to get damaged completely. Now we need to operate. If not, to white one red, you will meet Mr. Venki very soon. See, they will speak about the facts. They are more concerned about. And they will only just describe my problem. So they are called as. Now I will say no money. They will say tata bye bye honey, get lost. For operations. Yeah, if no money, who will do operation and all? I was fed up with all the senior doctors. Almost everyone is same. I went to multiple senior doctors. Same things happened. See, they all are uniform. Their main objective, all senior doctors' main objective is being. And they exactly said what is my problem, what it is. What is it? See, systematic body of knowledge which will speak about. Their main objective is. They will just describe my problem. They don't give any solution. So they are called as descriptive. They don't pass any kind of judgments or solutions. And they are more concerned with. They will speak about cause and. That is senior doctors. That is positive science. Now comes junior doctors. Now name, fame has to be created in the market. Good reputation. By just looking into my condition, no blood report, nothing. I think this is your problem. What ought to be? What is it? And they need to create good name and fame. Now they want to become like a role model, idol in the society, ideals. And they will also give me solution. Don't worry, Shashikiran. Early morning, as soon as you get up, now stand upside down for 30 minutes. They are prescriptive in nature. What are they? They will give me a suggestions. They will give me what? And they will pass value judgment. But who didn't pass value judgment? Who will pass value judgment? And these guys are not at all concerned with facts. Junior doctors, no blood test, nothing, full like Babaji. They will do now like this. Wow, I am able to see. Yeah, in previous janam you did this mistake. That is why in movies and all they will show na. They will take this videdale. They will put that white color. What is that? Sunna. We call it in Kannada. And they will say, see, I can see what all sins you have done in your previous janam, this janam and all. I can clearly see this. Like this, facts. They are not at all concerned with the facts. Next, they only give a suggestion. They will suggest how things should be. Now in an exam, how to identify positive and normative statement. Suppose any given statement, let's say for example, in India, 37% of population doesn't have a basic necessary of life. Or like drinking water facility, proper sanitation facility. That means they are speaking about the. What is it? They're saying there is a heavy rain expected in Bangalore for next 10 days. They are just defining. They are just descriptive. Suppose there is a heavy rain expected in Bangalore for next 10 days. Schools and colleges are advised to close. They are also suggesting prescriptive. If they are speaking about facts, any cause and effect relationship, just defining the problem, they are as science. If they are giving any solutions along with dissipating the problem, they are Clear? Like this, you need to understand which statement is that and then you should mark the answer. From this, definitely the question will come. Get ready. Clear? Positive and normative. Next comes pragmatic in approach. Which in approach? So what is this pragmatic? Simple. We should practically solve the problem rather than just following the theory given by Adam Smith, Alfred Marshall 200, 300 years ago, which may apply or. So business economics is more and more of dash in approach. And it is interdisciplinary and incomplete element. That means not just by having a knowledge of business alone is sufficient. You should also have a knowledge of management theory, statistics, history. All this knowledge should be there in order to run a business in a complete manner. And boss, you are incomplete element. That means you should also know about your nation's income earning capacity of your people, employment level in your, let me say, country, government policies, tax rates, interest rate, industry relations in order to perform the business in better way. Business knowledge alone is not sufficient. You also need to have a knowledge of other elements. So you are an incomplete element and you are dependent on other subjects for the knowledge. So interdisciplinary in nature. That means business economics is not independent. It is interdependent. What is it? Last but not the least, based on for decision-making aspect, we consider a lot of demand, supply, cost, all this analysis, which are assumptions in nature. See, based on micro, business economics is largely concerned with. As a business manager, my main objective is to achieve my profitability. That is my achieving the of the organization. Since economics is considered with the decision-making, individual establishment heavily relies on. That means they use a lot of economic tools, demand, supply, cost, price, profit, everything. That is mainly dependent on, again, assumptions and unrealistic in nature. Clear? So this was unit 1 of chapter 1. That's it. Now major question actually comes in unit 2, not in unit 1. Basic problems of economy and types of economy. What is it? Types of economy and so if I ask you what are the problems in India, you will give me a big list: are poverty, unemployment, roads are not good, stupid fellows, blah, 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 like this. But from an economist point of view, that is not a problem. From the economist point of view, what is the biggest problem? Because resources are limited, but human ones are. So since allocating the resource becomes a challenging task and based on the allocation of resources, there are 4 problems. Number 1. Number 2. Number 3. Number 4. Wait for economic growth and development. Clear? So first one, what to produce, also called as problem of. That means what type of goods and services should be produced. Is it durable goods or single time use or superior goods or? See, because we are human ones are, but resources are. Even in terms of quantity as well as quality, my resources are limited. I can't produce each and everything. First, we should decide which type of good should I produce. That is choice. Shashikiran, should you want to produce chocolate or you want to open cloth shop or you want to manufacture benches or you want to manufacture water bottle? What type of goods you want to produce? That is problem of choice making. What to? Okay, I decided bench manufacturer. Who is Shashikiran? Okay, now after deciding how will you produce that? By using a more and more labor or by using more and more of? See, India is a labor rich country or capital rich? So by using labor, I can produce my goods at a cheaper cost. But USA? So simple. Capital intensive nation will choose which technology? Labor intensive country will choose? Simple. After choosing the product, now it is a choice of technique of production. Next, after choosing the technique, okay, India, you will be using more of labor. Next, third problem. For whom to? For whom are you producing? Is it for school goers? Is it for college goers? Is it for tuition center? Is it for co-working space? For whom are you producing this bench? Who exactly is your targeted customer? Or which class of society are you targeting? Lower class, middle class, or what is their ability to purchase your goods in? Are they having enough income to buy your goods in? All this has to be decided. That is third problem. For next comes the beautiful problem. What economic provisions have to be made? That means sustainable. You are using lot many resources from the society. What are you preserving? What are you storing it back? You can't use every resources for just present production alone. You should also save it for the simple meeting the needs of present generation without compromising the needs of future generation. That is sustainable. Clear? Understood. So these are the 4 basic problems of economy. What to produce, how to produce, for whom to produce, and what provision has to be made for economic growth. And this brings to the last topic of chapter 1, types of capitalistic Simple concept. Capitalistic means private run economy. Complete power is in the hands of private enterprise. Government interference is almost that is called laissez-faire or free market. See, entire ownership, property, everything is in the hands of the private people, and government interference is almost, and all these private people are dash motive, and there is an existence of competition between they're competing between each other. Their intention is profit motive, and customer has a choice making ability. If not from one person, he can buy it from the consumer. Sovereignty is not restricted. What is sovereignty? Choice making ability of a customer is not. He has a choice. He can choose it from anyone. Next, there is an inequality in distribution of income and wealth. Rich becomes more richer, and poor remains. Wow. Because exploitation is there, and the main intention is dash motive, not a welfare motive. So these are the merits and demerits. See, encourages economic activity maximum. Dynamic. Economy keeps on changing very fast and rapid economic. But what are the disadvantages? Inequality in distribution of income and businesses, unstable consumption, consumers are getting exploited because profit motive. Next, misallocation of. So these are the advantages and disadvantages of capitalistic. Now comes a socialistic economy, complete opposite of capitalistic economy. That means completely controlled by government. Such government is called as CPA. CPA stands for Central Planning Authority. Which authority? Central Planning. So it is also called as CPA run economy. Which run economy? CPA. And this concept of socialism was introduced by Karl Marx and Friedrich in their book called as Communist Manifesto, published in 1848. In today's world, remember, in today's world, there is no country which is purely, but the elements of socialism to some extent is followed by Vietnam, China, and once upon a time, USSR, presently called as Russia, used to follow socialism between 1917 to 19. See there, the complete public ownership is there. Every property, every asset is completely owned by CPA. That is public ownership. There is no freedom to private enterprise. Complete control is in the hands of. And main intention of government is. And price mechanism, demand and supply will not at all work. Who will work? CPA, central planning. They will decide everything, and there is no competition at all. Everyone will get the same product, same price, same particular goods and services, and there is no consumer. It is completely whatever CPA decide, only that the product is available in the economy, and a restriction to the freedom of. Private people have no freedom. Everything is decided by. And in this economy, there is a equitable distribution of income and see the advantages and disadvantages. Advantages, optimum utilization of satisfaction of consumer, equitable distribution of income and disadvantages, inaccurate calculation of. Government will never calculate the cost in a proper manner. Bureaucratic setup, hierarchies are there. One stupid fellow will agree, other fellow will not agree. Policy making is not fast, and also concentration of power only in the only government people. One who is having influence of government will get a faster and better services than a common man. Clear. Next comes dash economy. Combination of both private as well as public. Best example, India. Today, most of the economies are following a mixed economy. There is a coexistence of both private as well as, and still planning will work. That is, demand and supply is going to work. Planning mechanism as well as a price mechanism. Both are existing. Both are. That is coexisting, and they will try to bring a balanced regional. Cities are concentrated by private, government is concentrating on rural. Next comes dual pricing existing for the same goods and services. Government prices are different, private prices are. See, government schools and colleges, different fees. Private schools and colleges, government hospitals, different kind of charges. Private hospital, different kind of. And there is a freedom for an enterprise to the private sector, but there is no freedom in the. And private sector produce with the dash motive, but public sector produces with the. In the private sector, dash will work, and that will solve the basic problem: what to produce, how to produce, for whom to produce. But in case of public sector, who is going to guide? That means CPA will work, and competition is existing, but the competition is limited only to. And still, consumer is having a sovereignty. You can choose from anyone, either private, government, or foreign goods, whichever you want. At freedom of. As private people still have a freedom, more than advantages. Disadvantages is most important. See here, Schumpeter, he will say this mixed economy is nothing but a capitalism in the. For a time being, you are giving just advantages. That is temporary advantages. Which advantages? like providing social security, upliftment of deprived class and all. But the reality is, it is just a trick of a, in order to cheat the, and in such kind of mixed economy, there is a dash taxes. And mixed economy is difficult to operate because bringing balance between these two stupid fellows is not that easy task. Clear? These are the disadvantage of mixed economy. So by this, entire chapter 1 also comes to an end. See, this differentiation is most important. Ownership. In capitalism, who will be owning the properties? In public, that is government. It mixed both. Next, freedom of occupation to private, where it is existing. Capitalism, where it is not existing. In mixed economy, only freedom is there in private sector, not in the. What is the motive of production by private people? By government. In mixed economy, both profit as well as welfare motive. Profit by private, welfare by who will govern the production. That means who will control the productivity and economic activity. In capitalistic, that is price, demand and. But in here, planning mechanism. The planning mechanism is called. Here it is both price as well as. And where competition is existing. Capitalistic economy. In socialistic economy, there is no. In mixed economy, competition exists only in. And distribution of income, unequal distribution in capitalistic, equal distribution in socialistic, and see there still considered to be unequal in mixed economy. Next, role of government, no role, laissez faire economy, here complete. Full role in public sector, limited role in the. Clear? This is chapter 1. Simple topic, easy topic, and also most easy to score also. Next comes chapter 5. Which chapter? Chapter. My favorite chapter. To understand macro, you should also understand the business cycle. Without understanding business cycle, it is not easy to understand chapter 6, 7, 8 and 9. Clear? Business, also called as economic cycle, or see, each and every country will go through fluctuations in their economic activity and their nation's performance. How many stages are there in the business cycle? 4 stages. Stage number 1, expansion. 2, 3, 4. And recovery is not a phase. And there is one more element which is not explained deep in your chapter 5. But that is helpful to understand chapter 7 and 8. There is something called as depression. What is there? Depression. This depression is clubbed along with the trough in your syllabus. But actually these are 2 different phases. Clear? So recovery is not a phase. What is it? Recovery is not a. So what happens now? Overall economic activity will fluctuate. If any one factor changes out of this, everything will change. The trigger can happen either in demand, standard of living, bank credit, employment, profit, wherever. If any one element changes, all these elements will also change. So each and every country will go through the. And because of such fluctuations, it will impact on the all the economic well-being activity, all the economic. And these statements are most important. Business cycle is dash. That means it comes again in, but not always at dash interval, not always at a. That means I cannot say, sir, January will be in expansion, February peak, March contraction, April depression, June trough, July again recovery, August again expansion. No, we can't predict like that. Highly impossible. I know it is recurrent, but not always at a regular interval, but they will occur periodically. One after the other, it will definitely occur. Some particular stage can be just for 1 day, 1 week, 1 month, 1 year, 1 decade, or even beyond that. We can never predict business cycle even before they occur. Few business cycle are having dash ending, and few business cycle are having. There is no specific duration of time for any business cycle to get completed. It can be short term or it can be, but definitely that will impact all the economic well-being, all the economic. And the most important factor, during expansion phase, economy faces. During the downward trend, that is contraction phase, economy faces. And manufacturer will become negative mindset during the deflation, and he will become positive mindset when there is an upward trend. In recovery and expansion, where will we become positive mindset? Recovery and expansion phase. Is that clear? So remember, these are the important areas, and every stage-wise explanation is important. And most important is unemployment. The questions have been asked. During expansion phase, which phase? When things are working properly, unemployment problem will be almost zero. Which unemployment? Involuntary unemployment. What is voluntary? There is a work which is available, but I am not willing to work. That is voluntary unemployment. Clear? But what is involuntary? I am ready to work. I am capable to work, but unable to get the job. Such kind of involuntary unemployment is almost zero. See, when things are performing well, that means now all these factors, even demand increases, output increases, employment increases, price increases, profit, income, bank credits, standard of living, GDP will, and even interest rates will also, because inflation is there in the economy. Inflation is there in the, if you remember, in the class I would have explained in deeper with the Zimbabwe case study, everything I would have explained. See, every economy has their own economic policy. Which policy? Now, such economic policies are classified into two kinds. Number one, fiscal, and who will create fiscal policy? Government of the nation is the one which creates the, and who will create monetary policy? Central bank. In India it is. Now, under the fiscal policy, there are two important tools. Such two important tools are government expenditure and under monetary, in short, we call it as interest rates. Suppose in an economy, if there is inflation, what is the main root cause of inflation or deflation? Money supply. If money supply increases in an economy, for example, you will go and ask your parents a pocket money of 50 rupees. If they give 500 rupees, full jolly, sir. Rather than eating one masala dosa, I will go to my favorite cafe now. Rather than just roaming around, I will go to movie. That means you will spend more. The main root cause of inflation or deflation is money supply. What is it? So if people have more money in the hand, they will start spending more and demand will increase. Production should. Employment should. Automatically price will. That is the problem. If there is more money supply, inflation will occur. General price level in the economy will. To control that. Now already there is more money available in the economy during inflation. Should government spend more money? Government expenditure should. Now Nirmala aunty will come. Excuse me, pay me more tax because I know you have more money in the hand. So I want to discourage people to buy more because general price levels are increasing. So because of that, purchasing power of money will go down, standard of living will decrease. That should not happen. To control that, tax rates will increase. And in the banks, interest rates will also. See, if you spend more, you should pay more tax. Suppose if you come and put money in bank, you will earn more. Attractive, na? So during inflation, when there is more money in the economy, interest rates will, tax rates will. Hey, open up your mouth, stupid fellows. Respond, everyone. Should I stop teaching? I'm serious on this. If you guys are sitting silent like a stone, I'm going to stop. And this is a final warning. Next time, if the voice stops like this, straight away I'm stopping the class. On a serious note, I'm saying. Am I teaching for bench and all the books and all here, or am I teaching for you guys? See, no also, no response. Hey, should I stop this? No. Then what is wrong to open up your mouth and respond, stupid fellows? When there is inflation, dash will be more in the economy. Like this, respond, open up your mouth. So when there is more money in the economy, should government spend more money? What they should do? And what will happen to tax rate? Interest rate? Clear. Next, when there is deflation, when there is no money at all in the economy, who should spend more? Now tax rates will, interest rates will. Clear. See, in the inflation, what is happening to interest rate? That is what I said. Because of inflation, interest rate is. All these elements are when during expansion phase. All these elements will be decreasing during the, because in the economy there is a clear. So every business cycle starts from where? Trough. It starts from where? From trough it will come to recovery. From recovery it will come to, from there. From there. Again back to, again from there. Again. That is what? Recurrent. What is it? It occurs again and again. It occurs again and. Is that clear? So every business cycle is recurrent, but doesn't occurs always on a regular interval. No doubt it is recurrent, periodical, but not always at a. These two statements are most important. These two lines. From this, most of the times the questions are coming. Clear? And see explanation. Involuntary unemployment will be almost. There is expansion in output, income, employment, price, profit, high level of output, trade, effective demand, income, employment. Interest rate is also rising. Why? Because in the economy there is a inflation and large expansion of bank credit, optimum utilization of Because economy is facing in the peak level, topmost point. Usually it will be for a shorter duration of time. There is a rise in price, profit, everything upswing. It is also called as boom. Next is a downward trend, contraction phase. Things start getting bad. That is also called as recession phase. Which phase? Now everything will start declining. Slowly stock market will be closing down. See, stock market starts falling. People starts losing there is a dash mindset. See, manufacturer will become negative mindset, depression or trough. Biggest problem occurs. And almost there is a financial crisis. People start holding liquid money in the hand rather than keeping money in the bank account. Why? Because interest rates are. Upon that, they have lost their jobs. Upon that, interest rate is also low. So I'm not getting anything in return. Moreover, I need to spend on basic goods and services now. So government is also increasing more money. Tax rates have also. And moreover, I've lost my jobs. And bloody rascal fellow bank, you're also not giving me good interest rate. So should I keep money in bank? They will withdraw. See here. Due to less interest rates in the bank, unemployment is also there in the economy. People start holding so that bank credits will. And the economy is facing finally complete bottommost point is trough and slowly recovery. Turning point, new invention, innovation will happen. Slowly expenses will increase. Businessman will become. This is business cycle. There are only 5 topics in business cycle. From all the topic, one question is going to come. Total 5 questions will come. 5 topics are there. Next comes economic. See, it is highly impossible to predict business cycle even before they occur. Even before that. Highly impossible. But still, our economists will not sit silently. They will try to predict. What they will do? Predict. By using. What are they predicting? Or further performance of business cycle, and they are not just to predicting and remaining silent. They are also, and such stupid fellows are called as. They always try to predict the next phase of. They are not always. Not always. So there are 3 types of indicators. One question compulsory that comes from this area in every attempt. You can see any question paper. One question will be there either from any of these 3: leading, lagging, and leading indicator. As the name says, leading. You will change even before economy starts to follow some change. Okay, from tomorrow COVID 4th wave will come. Shashikiran will go, you will buy all sanitizer, mask, everything, and I will stock in my shop so that I can make a sales and a nice profit. But nothing happened tomorrow. I am changing even before economy changes. Example of leading indicator. See, including examples are important. Meaning, example, see, changes in. Suppose if stock prices are changing, that means demand is increasing. That's the reason. Next up, new order for capital in. We are producing more and more. That means demand is increasing in the market. Next comes lagging indicator, tube-light fellow. He will change only. Oh, closing stock is increasing. Sales is not happening. From tomorrow, 5 of them don't come, fired. Because economy is not performing well. Like tube-light, I will realize later. I will change after the economy changes. Unemployment is the best example. Corporate profits and labor cost per. And coincidental indicator, neither they will change before or later. They will change along with the. And they always speak about the current state of. See, these are the measurable factors which speaks about the. These economy is going to move along with the changes in the economy, but they will never show which way the economy is. But it will tell us where we are at. What is our present GDP, present inflation, present industry production. These are the examples of coincidental. Clear. Understood. All the 3 are important. Leading, lagging, coincidental. Leading indicator will change even before economy. Lagging indicator will change. Coincidental will change along with the economy. Examples are also important. From this, definitely 1 mark every single attempt there is there. You check any question paper. Types of oligopoly, definitely 1 for short question. Types of indicator, 1 for short question. There are certain questions are there. In every attempt from the topic, questions are coming. Easily you can, if you identify the pattern of question paper, 50 marks is in your hand already. You can analyze the question paper and you know which are the main topics it is coming. See, shutdown point question comes. Definitely comes. Firm equilibrium question definitely comes. Already you saw in that particular question paper, types of oligopoly question comes. And also you are getting questions from MR calculation. Every attempt 1 question is there from MR. See, like this, if you analyze the paper pattern, approximately 50 marks is already in your hand. Already there. That is why learn the concept. That is most important. Next comes the concept of features of. See, whatever we learned, same to same applies. But 3 extra points we should remember. So which are the 3 extra points we should remember? Simple. It starts in which kind of economy? That is capitalistic. It starts in one nation, also affects the, and more effect is there to secondary and tertiary sector, less effect is there to. That's it. See, rest other occurs periodically. It has different stages. It is difficult to predict business cycle even before they occur. It affects all the economic and also affects the. Only the 3 points extra you should remember. Starts in capitalistic, affects one country and also the another. And it will be more affecting to secondary and tertiary rather than. Yes, primary will also get effect, but comparatively, primary has less effect, secondary and tertiary has a. And why do we need to understand this business cycle for a decision-making purpose? Market as important in ICM material, in my material also, one big page full explanation I have given. Taking right decisions at business economics. To take such decisions, I should know where exactly our economy is standing. How are they performing? Should I invest money or not? Should I go aggressive or not? Should I be in a positive mindset or negative mindset? When I should keep money in bank? When I should borrow money from bank? When I should invest in stock market? When I should not invest in? To understand decision making in the organization for policy creation, profit and wealth maximization, in short, taking right decisions at. We need a business cycle. Without understanding business cycle, we can't perform in the economy, especially business operations. And there is something called as cyclical business. Which business? Another favorite question to ICI. Most of the times they have asked. Business whose fortune is closely linked to the rate of. They are called as which business? If economic growth rate increases, even this business performance will also. If economic growth rate reduces, even these business performance will also. They are called as which business? Next comes last topic and the most important topic. Every attempt the question is going to come from this area. Causes of business cycle. What is it? Internal cause and external cause. Internal, what happens inside the country. External cause, what happens outside or between the countries. Internal cause, due to change in dash. Next, due to change in. Next comes Khatarnak one, due to change in. Somewhere you saw this government spendings and tax rates. That is why we have to explain macro also here. In your entire ICA material, even if you take length and breadth of your chapter 5, you will never find this economic policy, fiscal policy, macro policy explaining in chapter 5. But connection of that is given in the causes. See? Whenever government spendings and tax rate changes, that means when will it change? Because of inflation and government expenditures and tax rate changes. That means even entire business operations are going to change. Economic performance are changing. What is the root cause of inflation or deflation? Even because of change in money supply, business cycle is going to change. That is internal factor. Last but not the least, psychological mindset of a manufacturer. Either pessimistic or pessimistic, negative mindset, optimistic, positive mindset. These are the internal causes. Now the question comes, which among the following is not the internal cause of business cycle? They will ask question. You should identify. Next comes external cause. Number 1, when there is a war going on between two countries. Now Russia, Ukraine. Will Ukraine come and say, India, come, let's do business. Hey, stupid fellow, first win the war. Concentration is winning the. Okay, now after the war is done. Now India, let's come do business. Hey, first rebuild your country. What is there to do business with you? Post-war. External cause. Next. Automatically demanding capacity will. Next, because of when technology gets changed, way of conducting business also. Last but not the least, all the disasters like drought, famine, earthquake, COVID-19, even these all are external. Volcanic eruptions, earthquakes. Now, presently, what is happening in Russia? The problems. What is happening in Indonesia? The entire belt of Japan, Philippines, Indonesia, Taiwan. Volcanic eruptions, earthquakes. This is the trouble. Clear? See, these are the external causes. Which causes? Internal cause, external cause. See, topic number 1, question will come. Topic number 2, question will come. Topic number 3, question will come. Topic number 4, question will come. And topic number 5, the main, the concepts here. Question will come. Only 5 topics are there. 5 questions are going to come in the exam. 5 topics, 5 questions. Every topic, one question. Clear? By this, micro comes to an Khatam. Yesterday, this was the speed which we were supposed to go. But because of you guys, we went slow. Now, most of them got the trailer, how the Shatabdi Express will be. See, yesterday it was a shuttle train first. Later it became Little Express after the lunch. Now today, proper Vande Bharat. That's how. Next, by the time we come to the last chapters and all, full Air India Express will be there. Either crash or either landing. Anything will happen. Clear? Let's go to the exam questions. I hope everyone are able to understand. Is the speed sufficient? Comfortable? Let's continue the same way. Chalo, we'll solve the MCQs and then we will take a break. After the break, we are going to continue with the macroeconomics. We'll start with the national. Most of them have never understood in their life properly. No. How many of them didn't understand national income? Please raise your hands. National income. Only solution, please watch my regular class. Because there we can't cut down the time. By chance, if I reduce it, minimum it takes to explain is 10 hours, whole chapter. What is it? Whole chapter is 10 hours syllabus it is. Night, don't sleep today. Sit and study full. Tomorrow morning, come to class and sleep. That is what ideas and all. See, okay, let's come back. Chapter 1 and chapter 5. We'll do the MCQ. See there, which of the following is not a merit? What is it? Of dash economy. Faster economic growth, yes. High degree of operation efficiency will be there, yes, because private people are operating now. Profit motive. Increases from, incentives for innovation and technological. Yes, but collective ownership, is it there? No, collective ownership is CPA. Socialistic economy. So not a merits of capitalistic. Yes, option A. Next, which of the following is not correct about the business? With reference to the business economics as a narrow scope for comparison to economics. Yes, only deals with micro elements and decision taken are based on my micro elements. Next, business economics helps in a proper decision making in a pragmatic in approach, not just considering theory, also the present scenarios. Next, economics is an applied branch of. No, it's not at all an applied branch, only part of it. Next, business economics includes the analysis of like demand and. Yes, option C was wrong. Next, command economy.
One question left, sir.
One question we left. Where? Where?
Still.
26. Okay. The microeconomic theory mainly does not deal with which of the demand and supply, micro, production and cost, micro, inventory management, yes, micro, stock, production, all these input factors of production. Next, stages in. Not a micro. Clear, option B. So that's it, I guess. Just check how many questions have come from the chapter number 1. 1, 2, 3, 4, 5. No, 4, that's it. No, 4 questions. No, chapter 5, around 5 questions will be there. We'll go. Next, chapter 5. Chapter 5. Where did it go? During the upswing of business cycle, involuntary unemployment, the level of national income and the government expenditure declines rapidly, declining rapidly. Rough and depression, that means worst phase. Which phase? I said now in your syllabus they have merged rough and depression together. They didn't do it separate. Next, all kinds of businesses. The different phase of business cycle generally occurs at no fixed time, but they occur periodically, but not always at regular intervals. There is no particular fixed time. Next, an indicator which gives information about the rate of in the expansion and contraction of the economy. They're speaking about the present. This is there in the ICA metal, same to same words. That is coincidental indicator. Meaning of coincidental it is. What is it? Meaning of the see, simple. What did we say? It will go along with the. It will never say which way the economy is heading. It only speaks about the. See, it is giving information about the rate of changes of the or contraction in the economy. Presently, what is happening? Expansion or contraction. That is coincidental. Next, see there is a war going on between country A and country B from the last two.
Yes.
Now the current year, both the countries have signed a peace agreement and the war has come to an end. Now both the countries have started to rebuild the cause it due to the with their own which type of changes it is happening. Post-war reconstruction, external causes. Clear? That's it, I guess. Yeah, that's it. Just calculate how many questions have come. 1, 2, 3. Wait. 3, 4, 5. 5 questions. Clear? So 5 questions was there in the May attempt. Okay, now let us go to the September attempt. September 24 attempt. Chapter 1, year only, chapter 1. Price in capitalistic economy is decided by demand and next see there. Sarah runs a lemonade stall and she decides to process innovative access to demand for her lemonades, price strategy and maximizing her profit with the limited in her small business. Which level of economy does Sarah lemonade stall? Micro, only and only about one single organizational analysis. Next, in which economics the material means of production, that is factories, capital, mines, etc. are owned by the whole community, represented by that whole community means CPAs, Central Planning Authority, socialistic. Which of the following is related to the total from the production and distribution of goods and services? See, which of the following is related to the total arrangements from the production until the of goods and that is economic system in which we operate, where we produce, we sell in the entire economy. It is there. The statement is there in the ICA material. One nook and corner particular statements they will give like this. Next up, business economics is basically concerned with. I think that's it. Just check 1, 2, 3, 4, 5. So 5 questions. Next chapter 5. See there. When there is a fall in the level of, as well as producers do not instantaneously recognize the pulse of the, we are unable to recognize, but later we will get to know which indicator is this. Which particular phase is this? Contraction, decrease. Now there is a fall in the level of investments and employment is going down, investments is going down, production is also going down. That is contraction phase. Next, what is the what is the term for the lowest point of the trend? Business whose fortune is closely linked to the rate of economic growth rate is called as. During this time, the production of weapons and arms will increase. When? Next, in the recovery phase of business cycle, the process of reversal. What the process of reversal is? Initial, that is in labor market, employment opportunities. That we will get to know first. See, 1, 2, 3, 4, 5. Again, 5 questions. Okay, last but not the least, Jan 25 attempt. See, approximately 5 plus 5. That is the question number, chapter 1 and chapter 5. You can expect. Now, when entrepreneurs are pessimistic about the future market, what do you mean by pessimistic? Negative mindset about the market condition. It does not impact the economy. Expansion phase, economy faces a and investment tends to increase. Negative mindset is contraction phase. Next, which of the following is not an internal causes of fluctuation in demand, fluctuation in investment, government spendings, technology? Is an external. Next, change in stock price, new order for capital and consumer good is an example of variables that changes after the real output changes. Next, which of the following is not a characteristics of business cycle? They occur periodically, they are recurrent, they occurs at a regular. They have a different stages, peak, contraction, trough. Is it always regular? Not always at regular interval. Option C. See, 1, 2, 3, 4, 5. 5 questions. Chapter 1, chapter 1, chapter 1. Buyers ultimately determine which goods and services they will be producing and in what quantity. Buyers are deciding. What is that? Ability for a consumer to choose. Next, which of the following is not one of the 4 basic problems in the economy? What to produce, where to produce, whom to produce, what provision? Where to produce. Next, the following is an example of a dash statement. Positive and normative. Positive will only define problem. Normative will give suggestions along with defining the. See, government should increase taxes on liquors to reduce its consumption. Clear. Next, which of the following does not describe the nature of? It is normative in Yes, give suggestions now. What to do, what kind of resources to use, and next it is abstract and purely. Is it only theoretical? No, pragmatic in approach. Which approach? Yes, it is an art. It also incorporates the elements of analysis. Yes, they will do analysis, but majorly decisions are taken by micro. Yes, it is not purely theoretical. It is practical. So option B. I think that's it. Yes. So these are the questions from chapter 1 and chapter 5. Approximately, if you see that, 5 questions from chapter 1, 5 questions from. See, just now, see, if you just see the pattern, vague pattern, chapter 1, 5 marks. Chapter 5. So 10 marks will come from chapter 1 and chapter 5. This is the least weightage. And chapter 2, chapter 3, chapter 4. This is the major game changer. Either it will be average of 10. What is it? Sometimes lesser than 10. Sometimes even greater than. Up to 12. Worst scenario, 15. Sometimes any one chapter, definitely 15 will be there. Either 2, either 3 or either. Any one out of this 3 will be for. That means 10 marks will from one chapter 1 and chapter 5. Any one chapter will be 15. 25 gone. In remaining 2 chapters, 25. That means another 2 chapters, it will be 12, 13. 12 and 20. One single chapter 15, another chapter 12, another chapter 13, chapter 1 5, chapter 5 5. This is the pattern of micro. See, you can easily analyze it. You know which chapter can be given more importance. See, more importance should be given to chapter 2, chapter 3 and clear. Chalo, take a break. Now the time is 9:40 as I said. So 9:42, 10, half an hour break. Kindly have your breakfast, come back. We are starting class at 10:50. What time we are starting? On dot 10:15 we are going to start with the class. 10:15 to 12:15. 12:15 to 12:30 break. Again 12:30 to 2:30. Clear up? Okay. So before the break we had finished with the entire concepts of microeconomics. Now we shall get started with the macroeconomics. Clear? So the very first chapter of macroeconomics, that is the determination of national income. So there are 2 units in this particular chapter. Unit 1 that speaks about national income accounting and Unit 2 that speaks about Keynesian theory of determining national income. So here most of the things I will be explaining in the shortcut manner. So in detailed discussions already we have done it in the normal class and also we have done it in the previous marathons too. So I'm not going little in brief here. Clear? So I will be explaining from the point of view of a shortcut. So to understand the concepts of national income, there are 8 concepts. How many concepts? And there are 3 methods of deciding national income or calculating. First one, value added method or also called as product method. Which method? Or industry origin method. Second one is income method. Which method? And the third one is expenditure method. So this whole unit, we need to understand about the 8 different concepts and the 3 methods of deciding national income. The very first concept is GDP, gross domestic. Second one is GNP, gross national product. Third one is NDP, net domestic product. Fourth one is NNP, net national. Fifth one is personal income. Sixth one, disposable personal income, private income per capita. So let us understand the first 4 little in detail because that is what will make us to understand the concept of national. See, the very first concept is GDP. What is it? So what is the very first alphabet? G stands for? See, gross. Remember from the accounting point of view, gross profit, net profit. See, in the trading account, you will get gross profit. In the P&L account, you get. That means from your trading account, once you get the gross profit, you need to subtract indirect expenses. Which expenses? Indirect. In economics, we have one single indirect expenses, that is depreciation, also called as capital consumption allowances. What is it? When you subtract depreciation from gross, we get net. So kindly keep this in mind. The very first alphabet, whenever it is G, G stands for gross. Gross includes depreciation. Suppose if you subtract the depreciation, what do you get? Net. This will be NDP. What is it? NDP. So in short, the very first alphabet, how do you convert first alphabet G to N? Minus depreciation. That is gross minus depreciation will become net. Clear? So first I will explain both the concepts, gross domestic product and net domestic product. Simple. When I speak about gross domestic product, there are 3 elements which we need to consider in the definition. Number 1, sum total value added. It is also called as gross value added. What is value added? of final goods and services. We never consider the semi-finished goods. We only consider the final goods of produced within a domestic territory where it is produced in. So these are the three important aspects of definition. For this, we'll be making plug and play. See, simple, it is a gross value added or sum total value added of dash goods and services where it is produced in a given time period in a 1 year. See, since first alphabet is G, G stands for, that is including. And remember, this GDP concept can be understood in a two different way. How many different way? GDP based on expression and GDP based on calculation. Based on expression, we have a nominal GDP and a real GDP. Which GDP? Nominal GDP and real GDP. Clear? GDP based on calculation, we have GDP at the factor cost and GDP at market price. What is it? GDP at the factor cost and GDP at and remember, every time whenever we are calculating GDP concept, the very first outcome is going to be GDP at market price. Which price? See, that is why market value. Which value? Of dash goods and services, final goods and services, since it is growing. And now comes most beautiful topic. This is what is most interesting, which also includes foreign companies producing goods and services in That means, let's take an example. Assuming this is India map, assumption. Category A, category B. There are two types of earnings which has been happening. One, Indians earning inside India. What is it? Indians earning? Inside. Second one, all these multinational companies coming to India producing in India. That is inside India. So both will come under GDP. Indian companies or Indian individuals producing goods and services in foreign companies producing in India. That is inside the political boundaries of the country. Even that will form part of GDPC, which includes foreign companies' income earned where? In India. And GDP can be understood in how many ways? Based on expression. Based on expression, nominal GDP. Based on calculation, factor cost and clear. First, let us understand based on expression, nominal and real GDP. Clear? First, we will go with the nominal and real. Now, what is nominal? First, let me give an example. Listen to this example. I'm going only with the shortcuts. I'm not going in detail. Clear? Let's assume Shashikiran started teaching in 2015. In which year? 2015. Okay, when I was teaching 500 students. How many students? And let's say I was charging a fees of 2,000 rupees for economics. This is the fees. Now, what is the total value? That means revenue earned by Shashikiran. 5 2s are 10 and 5 zeros. 1, 2, 3, 4, 5. That means how much? 10 lakh. Okay. Now, let's say in the year 2025, 2000. Let's assume Shashikiran is still teaching 500 students. Still teaching. Because I have one single classroom. In that classroom, beyond 500 students, I can't teach. Now, my fees is 5,000 rupees in a year. See, in 2015, how much was the fees? Now, what is the revenue earned by Shashikiran? 25. Now, you tell me, is the GDP of the Shashikiran increasing? Let's assume this is the GDP of the country. Shashikiran's example. Is the GDP of the nation increasing? Actually, no. GDP will consider, or when we are calculating real GDP concept, which GDP concept? We need to consider the increase in productivity. Increase in what? Productivity. Not increase in price. Not increase in price. See, in reality, Shashikiran is teaching how many students? 500. When? 2020. Now also how many students? 500. Did he taught any extra students? That means production capacity is not at all increasing. Then why did this value increase? Because of increase in. And this is what we don't need it. We need increase in productivity. What do we need? Increase. That is most important. Now let's assume that this is the present year quantity, present year price. What is it? Present year quantity? Okay, Shashikiran is teaching 500 students. He is charging a fees of 5,000. This is 2025 data. This is called as nominal GDP. Which GDP? Nominal GDP. But in reality, Shashikiran, you tell me, when he is teaching 500 students in 2015, will he be still teaching 500 students? He will be teaching much more students. Now let me make your life little confusing. So listen to this carefully. Now, let's assume Shashikiran, in the year 2025, 2000, I am teaching 1500 students. How many students? 1,500. And my fees is 5,000. My fees is 15 paisa. Now, how much revenue Shashikiran is earning? 75. By charging 5,000 rupees, I am teaching 1,500 students. Now, my present revenue, this is 2025 quantity, 2025 price. This will give me dash GDP. Nominal, but I don't need this nominal GDP. Why? Because in nominal GDP, the prices have been increased because of inflation. Because of I don't need this inflated price. Then Shashikiran sir, what do you need? I need base year price, but present year quantity. Which year price? Present year quantity. Now in 2025, if I need to identify real GDP, which GDP? I will consider productivity of present year. What is the productivity of present year? But prices of base year, prices of which year? 2000. Now, how much is this? This is real GDP. Now, remember, real GDP will consider only increase in productivity, increase in dash, but not increase in price. Simple concept. If I consider present year price, present year quantity, what is it? Present year price? I will get dash GDP. But if I consider present year quantity, but which year price? Base year price. Which year price? Some selected base year price, then I will get which GDP? That's it. For me, real GDP is important. I don't need increase in price. I only need increase in production. Shashikiran was teaching 500 students, now he's teaching 1,000. This is real GDP. Clear? Sometimes we can't straight away identify real GDP. Let's take up an example. Assuming COVID vaccine. Was it there in 2015? My base year is 2015. For every good, I don't have a base year price. So we can't identify real GDP straight away from the concept. So first we will identify with GDP. And we convert nominal GDP to real GDP. In order to convert, we have something called as GDP deflator. What do we have? That is measurement of inflation. That means how much inflation is there from one year to another year in that particular price. See, in exam, any one information will be definitely given. Either they will only give deflator value and they will give nominal value. They will ask you to identify real. Or if not, they will give nominal and real value. Which value? They will ask you to identify deflator. They will ask you to identify what? So what is the deflator formula? Simple. Nominal GDP divided by real GDP into 100. Nominal GDP divided by real GDP into. So this is GDP deflator formula. And this GDP deflator is also referred as price index. Which index? And for the base year, which year? Price index, PI, will be always and always 100. It will be always and always. Clear? For the subsequent years, they will give a price index. Now let's assume for a time being, for the sake of example, price index, what is it? Of 2025 is 119. Is 11. They have given. That means nominal divided by real into 100. They use this formula. They got 119. They got what? They have only given the price index. Now they will ask us to calculate real GDP. Which GDP? Real GDP. Now first we identified nominal GDP. Which GDP? Present year quantity, present year. We got to know nominal, but straight away we can't identify real GDP. Why? Because for every product we don't know the base year price. So we only have which GDP now. Now we need to convert that nominal into. So how do I convert nominal into real? Simple. Nominal GDP. Which GDP? Into 100 divided by price index. Into 100 divided by. Now let's say for example, nominal GDP was 75 lakh. How much is this? 75 lakh. Into 100, they have only given price index. How much? 119. So do it. 75 lakh into 100 by 119. Okay, let's consider for time being 63 lakh. So 63 lakh is a real GDP. But how much was nominal GDP? 75. That includes inflated value. We need to remove that inflated value. So what is the formula for real GDP? Nominal GDP into 100 divided by. What is deflator formula? Now by using the same formula, we can also calculate nominal GDP formula. Which GDP formula? Now nominal GDP. What is it? Nominal will be real GDP into price index divided by 100. So this is the formula. So these are the three formulas. One is deflator formula. Second one is real GDP formula. Third one is nominal GDP formula. See, shortcut to remember. In case of nominal GDP, it is divided by 100. In case of real GDP, it is divided by price index. Keep this in mind. Clear up. Real GDP divided by nominal GDP divided by any one you remember. Better remember nominal. For nominal divided by 100. For real opposite divided by price index. And what is deflator formula? Nominal divided by real GDP into 100. Clear? Okay, now solve this problem. Now I have already given. Take out just calculator. They are asking us to identify deflator. What are they asking us to identify? What is deflator formula? Nominal by real into. Take out calculator. 500 by 500 into 100. 100. If the index value is 100, which year is this? Base year. So this is going to be the base year. 2014 will be the base year. Clear. Next, take out calculator. 650 by 800 into 100. Hey, stupid fellow. Opposite I said. 800 by 650 into 100. 123. Clear. Next, 1150 divided by 800 into 100. 143.75. Next, 1300 divided by 950 into 100. Next, 1550 divided by 1190 into 100. 130. 1700 divided by 124. 1240 into 100. Got it? How to identify deflator? Now comes one more superb concept. Inflation. What is the concept? And multiple times the questions has been asked from this area. If you remember a few minutes back, I spoke about marginal revenue formula, MR. What is MR? Total revenue of present minus total revenue of N minus. That means present minus previous. Present minus. Same continuation. Present year deflator. Which year deflator? That is year 2. Year 2 is present year. What is previous of year 2? Year 1. So present year deflator minus previous year deflator divided by previous year deflator into 100. What is the concept? Present year deflator. Which year deflator? That means year 2. I'm just taking year 2 as an example. Present year deflator minus previous year deflator divided by into 100. Take out calculator. Now let us do the inflation year. Now, first the base year we can't identify inflation. Leave it off. Next year. Now 123.08. What is it? 123. Minus 100 divided by 100 into 100. 23.08 is the inflation rate. 23.08 is the. Okay, next year. See there. 143. What is it? 143.75 minus 123.08 divided by 123.08 into 100. 106. 16.7. 9. Clear? Next, see one more. Observe. See, deflator from 123 it increase it to 143. Next, from 143 it is coming down to. There won't be inflation. There is a deflation. What will be there? Deflation. Clear? Now calculate. Now it will be like 136.84 minus 143.75 divided by 143.75 into 100. Minus 4.806. Next, do it for 130. Again, it is dipping down. Again, there will be deflation. So it will be 130.25 minus 136.84 divided by 136.84 into 100. Minus 4.81. And next, deflator increase. Now again, there will be inflation. Now it will be 137.10 minus 130.25 divided by 130.25 into 100. 5.259. See, multiple times these questions have come in the exam. Let me show that. Inflation question. See, such easy questions these all are. If you remember the formula, straight away marks comes in. See here. Where is it? See here, they have asked about nominal GDP. Which GDP? Find real GDP is there. One more. Nominal GDP is also called as GDP at. And see here, find real GDP. Which GDP they are asking? What is the formula of real GDP? Nominal GDP into 100 divided by, they have only given price index 120, 720 into 100 by 120, 600. Wait, I will show the inflation formula, inflation problem also. To solve the inflation problem. Question number 42. Can you see that? If the GDP deflator of the country in the year 2020 is 140.75, in the year 2021 is, see, 2020, 2021, they have given both the values. They are asking us to identify the inflation rate for 21. Concept is very simple. 157.33 minus 140.75 divided by 140.75 into 100. 11 point. See, just you should know the concept. When you know the formula, straight away the problems can be solved. So easy problem. See, 4 different types of problems can come. Either they can ask question from deflator, either real GDP, either nominal GDP. If not, inflation. What is another formula? Inflation. See, this is the concept of nominal GDP and the real. See, simple. Nominal GDP, real GDP, difference is important. See, I've given here the difference. See, understand one thing. Real GDP will change only because of productivity changes. Only because of dash changes. Only when production increases, real GDP changes. But nominal GDP can change even because of price or as well as. Nominal GDP is also called as GDP at dash price. Real GDP is called as GDP at base year price, and which includes inflation. Nominal, which does not include inflation. And see, real GDP will rise. Which is that real GDP will rise only because of production. Only because of. That means it does not rise us without any real increase in physical output due to rise in. It will never happen only because of price. But here, it can also rise only because of price in. Only rise in price. Real GDP and nominal GDP, which is more and more proper, which is more and more true. Real GDP. See, it will give the better result, but nominal GDP will give the. Nominal will also called as GDP at. Real is called as GDP at. That's it. This is the very first dimension. GDP based on expression. GDP based on. Next comes GDP based on calculation. What is it GDP based on? GDP at factor cost and GDP at. See, simple concept. Factor cost. That means factors of production. How many factors of productions are there? Which are those? Land, labor, capital, and. Will land, labor, capital organization available for free of cost? What does land expects in return? Labor expects in return. Capital, organization. That's it. When you add rent, interest, wages, and profit, all the 4 together, rent plus wages plus interest plus, that is GDP at factor. So that's it. So easy. Yes, but life cannot be so simple with ICAI. It has to be complicated. Now, same formula has been made into a beautiful formula. Whenever I ask you FC formula, which formula? FC. This is what you should remember. The very first component. Compensation of. That is nothing but. Or. Salary. Next, operating surplus. Which surplus? That means remaining 3 things. Rent, interest, and mixed income of self-employed. Which income of dash employed? That means a country like India or a developing nations will be having lot of mixed income. What is that mixed income? When capital and labor both are provided by a same person. What is it? Capital and labor both are provided by a same person. Now it is highly impossible to distinguish between what is capital income, what is labor income. Let's take up doctor as an example. Now after clearing his MBBS, he will set up his clinic in one of the local area. Now whatever patient that is coming, he is taking consultation fee. Now he has only set up that clinic. He has only invested money, that is capital. And he is only providing services, that is labor. When capital and labor both are given by same person, now in this consultation fee, 150 rupee because setting up of clinic, 50 rupee because I'm giving consultation. Like this, can you divide? That is mixed income. Which income? When capital and labor is provided by a same person, and if we are unable to divide that, that is called as mixed income of self. And what is the very first alphabet? G stands for? That's why added depreciation. That's it. So 3 important components. Compensation of employee, operating surplus, mixed income of self-employed. Since first alphabet is G, first alphabet is G. We are adding Is that clear? That's it. This is GDP at factor cost. One more formula is there. I will explain. After explaining market price. After explaining which price? Simple. Market price. That is the price at which the product is sold in the market. Price at which product is? Simple. First you will produce goods. First you will? That is GDP at dash cost. GDP at was first we have produced goods. So we have incurred GDP at factor cost. After that, Nirmala aunty will not be silent if at all we are selling in the market. Now she will come and say my share. Indirect tax. It has to be added. And suppose if any subsidy received by the government, any financial assistance, what is it, any? In order to produce some basic necessaries or essential goods and services, government will only give a subsidy. If you have received subsidy, your cost of production would have gone down. And that you will not collect it from general public when you are selling in the market. When you are. So you should subtract the subsidy. You should subtract. Simple. When you are calculating GDP market price, what is the GDP? For that base is GDP. That means from the factor cost. What is it? From the GDP factor cost, you should add indirect taxes and subtract. You will end of the day get GDP market price. Simple conversion of factor cost to market price. What is it? Conversion of differences indirect tax and you should know when to add it and when to subtract. Simple. When you are selling goods in the market, Nirmala aunty will come. So indirect tax added. If you are not selling in the market, that means reverse. Let's say they have given GDP MP. What they have given? GDP MP. I should go back to GDP FC. What I should go back to? GDP FC. No, very simple concept. Minus Nirmala aunty plus subsidy. That's it. See, simple. Difference between market price and factor cost is always indirect tax and we should know when to add it and when to. Sometimes in an exam, they don't give a separate information of indirect tax and subsidy. Let's assume we should pay the indirect tax of 500 rupee. We have got a subsidy of 200 rupee. Adjusted value, how much? This is called NIT, net indirect tax. Which indirect tax? That you should know when to add it and when to. Now, concept is very simple. First, we will identify GDP MP. What do we identify? GDP MP. That is what we get in real. Clear? Now, suppose if I need to convert GDP MP to GDP FC from market price. Now, I don't want to sell. I need to go back to factor cost. What should I do? Minus indirect tax. Suppose we are producing goods. That is GDP FC is there. But now I need to sell this in the market. That is GDP MP. Add indirect tax minus subsidies. Clear? Simple. When to add, when to subtract, we should know. That's it. Clear? So whenever you are selling in the market, Nirmala aunty present. If you are not selling in the market, Nirmala aunty absent. Clear? If you are selling, Nirmala aunty included. If you are not selling, Nirmala aunty not included. That you should keep it in mind. If you are subtracting indirect tax, you will add the. If you are adding indirect tax, you will subtract the. Simple. There are totally 3 formulas for GDP FC. GDP. See, first one simple formula. I said not to remember this. Life has to be complicated with ICI. It cannot be so simple like this. So what is the GDP FC main formula? Compensation of employee, operating surplus, fixed income or self. First alphabet is G. That's the reason we are adding. And what is the another formula? GDP FC will be GDP MP. What do we need? Market price or factor cost? Factor cost. So Nirmala aunty minus indirect tax plus subsidy. Sometime they will give the adjusted value of this that is called as NIT. That time minus NIT. What is it? Can you see the third formula? GDP market price minus indirect tax plus adjusted value is called as NIT. Net indirect. Same to same. Opposite is market price. Here GDP market price from the factor cost. Add Nirmala aunty minus that's it. That is GDP MP. So this is the formula for MP and FC. We can convert from MP to FC or we can convert FC to. We just have to know when to add and when to subtract indirect tax and that's it. This is GDP factor cost and GDP. And if you remember yesterday when I was discussing about PITCAT PCs, demand concept, I said in India there are 2 types of tax. Direct and even under indirect there are 2 kinds. Now we will bifurcate that production and product. That is called as the concept of factor cost, base price, market price. What is it? Factor cost? Base price. So simple. See, very first one is factor cost versus base price. Which price? versus market price. Simple. In between, we are bringing something called as a
base.
So what is that in between something called as base price? First, we will identify factor cost. What do you identify? Simple. Now, what do we have? Simple. GDP. What is it?
GDP.
At factor cost. What is it? GDP at? Now, if you need to produce goods and services, you should take license from the government, right? Is it production tax or product tax? So simple. Plus production. What is it? Plus tax. Suppose if there is any subsidy given for that also. Production subsidy. Which subsidy? If you subtract that, you will get dash price. Base. Now from this base price, what is it from the? Now if you add product tax, that is GST. What is it?
Yes.
And if you subtract product subsidy, if you subtract which subsidy? Ultimately, we will get this market price. Which price? Market. See, in between, we are bringing base price. Simple. We have just splitted off the two types of indirect tax, production tax and that's it. That is the concept of factor cost, base price and market price. Clear? How do you identify factor cost? Same to same thing. Compensation of employee, operating surplus, mixed income of self. Since first alphabet is G, we will also add a depreciation. That's it. This is the concept of GDP based on calculation. GDP based on GDP, factor cost and GDP. See, each and every place formula plays a major role. If you don't remember the formula, you are monkey and your friend is Venki. On case. If ICA wants to donate some mark and if you don't know formula, you will not get the donation. Clear? Understood? So this is the very first concept, GDP. Any doubt? I know, it went very fast. Understood or not? Actually, the concept is easy. If you watch the main recordings, that there even maza will come. Because full concept I will explain first. It will take 1.5 hours. After that, I will teach shortcutting just 5 minutes. And everyone will be like, that's it. For this, you explain 1.5 hours. Yes, because in ICI, they want to complicate your life. Before complication, you should know what complication will come. Then you will teach the shortcut. Then you will be like, that's it, man. That's it. Clear? Now, simple concept. First, we will always identify as GDP. Outcome is always dash. First alphabet is what? G. First alphabet is what?
G.
So if I subtract a depreciation from G, what do I get? Net. Now that is net domestic product at market. Simple. From the GDP, when you subtract depreciation, that will get net domestic product at market. Clear? Okay, sir. Instead of subtracting depreciation, sir, instead of first alphabet, this first alphabet, why don't you change the second alphabet? Simple. GDP is there now. That is market price. Let us convert second alphabet. That to GNP. Which NP? Now I am converting which alphabet? Second alphabet. D stands for domestic. N stands for simple concept. If you remember, I said you this. One small topic. Wait, let me write it once again. Wait. This is India. What is it? Category A. Indians. What is it? Category A? Producing goods and services in India. Category B. What is it? MNC companies producing goods and services in. We have one more. Category C. Indian MNCs. What is it? That means Indian companies who have gone abroad and producing goods and services outside India. Let's assume Indians producing goods and services inside. Value created 1 lakh crore. How much? Foreigners in India. Value created 20,000 crore. Indian company went abroad and value created 25,000 crore. How much? See, end of the day, all these foreigners, whatever they're producing goods and services inside India, this money, they will take it back to their respective country. Do you agree?
Yes, sir.
Factor income payable to abroad. What is it? Payable to same way. Our people who are working in abroad, whoever is, let me say, starting the company outside India, they will bring this money to inside. Factor income receivable from abroad. What is it? Factor income? How much we should receive? How much we should pay? 25 plus 20 minus net effect. That is NFIA, net factor income from abroad. What is it called as? NFIA. That is factor income receivable from abroad minus factor income payable to abroad. That is called as net factor income from abroad. Simple concept. For GDP, MP, if you add this NFIA or subtract NFIA, whatever the values can be, NFIA can be either positive or NFIA can be either. Because that is just a difference between money receivable minus money. Just assume receivable is 15,000, payable is 20,000. It will become minus 5,000. Na? So usually NFIA, we believe it will be positive. Even it can be negative. So in short, what is GNP-MP formula? Simple. For GDP, if you add, what do you get? GNP. That's it. See here, you just have to add NF. Automatically, second alphabet gets converted. First alphabet, how do you convert? Minus depreciation. Second alphabet, how do you convert? That's it. And how do you convert market price into factor cost? Minus indirect tax plus. That means let's go step by step. GDP, MP is there. That is the very first step. Let's go alphabet by alphabet. I will convert first alphabet now. GDP is converted into NDP, MP. What do I convert it into? So what should I do? Okay, now first alphabet is done. Now let's go to the second alphabet. Let's make the second alphabet from D. We will make it as N. So from D we will convert into N. What should I do? Plus NF. Clear? Anyone having doubt? Now ultimately, let's say for example, we'll convert market price into factor cost. I need NNP-FC. What do I need? NNP. I don't need NNP-MP. I don't need NNP. See, this MP has to be converted into FC. How do you convert? Minus Nirmala Aunty plus. That's it. We got NNP. Other name of national income. That's it. What is another name of national income? If you know three differences, national income comes to an end. First difference, gross and net depreciation. Second difference, domestic and national, NFIA. Third difference, factor cost and indirect tax and. Simple. From GDP concept. From which concept? GDP. Ultimately, we should come to which concept? NNP-FC. NNP-FC is also called as Kelkatam Dukan Band. That's it. This is national income. Only three differences. For these three differences, people scratch their head like crazily in their 11th and 12th exam. Second POC. That's it. This is national income. We will start from GDP-MP. We'll start from GDP. Ultimately, we should come to NNP. We will start from market price. We will end at simple three differences. Clear? That's it. This is national income concept. NNP, FC. What is it? NNP? If you want, write down this shortcut. Yes, ma'am.
Can you put the macro notes to the
Same main material from ArivuPro application. Download my main material I'm using, not the crash course material. Because they said you guys have to watch the recording. Still, that's the reason I'm using the main material.
So,
Yes, madam.
market price add product tax at minus production tax with basic price.
Base price.
Base price plus product,
Product tax, GST, minus product subsidy. Clear? Understood? Yes, that is what adjusted figure. Rather than doing it separate, we can do it as NIT minus NIT because this is minus NIT. That's it. Clear? Understood? Let's go back. See, first one is GDP. I explained GDP concept, factor cost, market price, base price, relationship, everything is done. Next, GDP deflator also we did. What is GDP deflator? Measurement of
Inflation.
So for us, what is important? Real GDP. Remember, always and always, real GDP will represent the economic well-being in the economy. Which well-being?
Economic well-being.
And I explained you about the formula of deflator, nominal and also real and also inflation. We solved a problem. Next, there is one more problem. Solve this quickly. Solve it. See there, the nominal and real GDP represents the country in a particular year is 3,000 and 3,000 is nominal. Real is 4,700. See, this is the sequence now. First nominal, then real. So nominal 3,000, real. They are asking deflator. How much? Nominal by real into 100. That is 3,000 by 4,700 into 100. That means lesser than 100. Deflation. What is there? Next, find nominal GDP. If real GDP is 450 and price index is 120. What are they asking? Identify nominal GDP formula. Real GDP into price index by 100. 450 into 120 by 100. That's it. Next, suppose nominal GDP for the country in the 2010 is given as 600 crore. The price index is given for the base year 2010. That means I don't need this 2010 600. Not required. That is base year. Next, what will be the, okay, suppose if the nominal GDP increases to 1,200 crore in the year 2018, price index for 2018 is, identify what is the real GDP formula? Nominal GDP into 100 by price index. Now 1,200 into 100 divided by 110. Clear? Understood? That's it. See, while calculating GDP, we include few elements and we exclude. Simple. More than inclusion, exclusion we should be careful. See, in inclusion, we only consider final goods and services or finished goods and we only consider dash added. Not the entire complete value of the product, only value added by the manufacturer and only dash period production and only net change in inventory. This should be closing stock minus opening stock. What is it? Closing stock minus? And depreciation of only present year. Depreciation is also called as CCA, capital consumption allowances, production boundary and own account production. Even if you are produced and consumed for self, value creation has been added now. Include that value. Next comes exclusion list. Which list? Very first one, transfer. Listen to this carefully. Incomes received but not earned. Incomes received but not earned. That means we are just getting the money. We are not leading to any production of goods and I didn't contribute for any production of goods and services, just money received. Scholarship received by students, transfer payment. Old age pension, transfer payments. Money has just been transferred from one person to. Has it led to production of goods and services? No. So transfer payment is excluded, not from GDP, even from national income, even in NNPFC, we will never include the transfer payment. Second one, non-economic activity. Which economic? See, your mom preparing breakfast at home, lunch at home. Will she ask, hello, 50 rupees breakfast, 80 rupees lunch, 100 rupees dinner? No. That means no doubt leading to productivity. It is leading to what? But market value like this 50, 80, 90, we can't decide it. So non-economic activity is also not included. But there is one exemption. Government expenses. Which expenses? If the same non-economic activity is done by the government and if it is a huge expenses to government like policeman salary, soldier salary, every time you are incurring a huge expenses where actual market value cannot be decided. Now let's say policeman is getting salary every year. But you tell me, is it policeman getting the salary for the quantity of services what he is providing or just a fixed salary? Are you quantifying the amount of work what he is doing and then are you paying to him? No. You can't actually identify market value. Now for a soldier safeguarding the borders, can you quantify the quality of work he has done? See, quantity, that means market value cannot be decided, but still expenses to government, that is a huge expense. Only in that one area, even though it is non-economic, exempted. Only when such expenses are done by government, only done by the, if any private institution, NGO, we do it, not considered. Next, second-hand goods. Simple, car. Now let's say I bought a car in 2020. I'm selling in 2025. When was the car manufactured? When am I selling? Is it present year goods? So you cannot include. Suppose if any commission made, royalties earned, profits earned, that is earned this year, na? Only that profits, commissions, royalty should be considered, not the value of second-hand good, not the value of. See, any intermediate good, that means semi-finished goods value should never be included. And financial transaction, which are economic bets, betting, gambling, which are illegal transaction, should never be included. That is GDP. Clear? GDP comes to N. Next comes G. Second alphabet is from D. How do you go to N? Adding NFIA. So simple. For GDP, just add. You will get GNP. That's it. See, this NFIA can be either positive or either it can be. Suppose if NFIA is negative, NFIA is, that means GDP income will be greater than GNP. My domestic income will be greater than national. Suppose if NFIA is positive, national will be greater than domestic. That is GNP will be greater than GDP. That's it. Even this one, outcome is always a market value. Which value? That means first time when we are calculating, we get GNP MP. What is that? See, question I have given. An IBM company. Is it an Indian-based company or a foreign-based company? IBM. International business machine, not Indian business machine. International business machine. An American-based company owning or earning profits where? Inside India. Foreign company coming to India and producing in India. Where will it come? GDP or GNP? GDP. Stupid fellows. One motte, category A, category B. As neat explain madadmele el barutte GNP. Where will it come? That is category B in that example. Clear? Next, Shashikiran company, an Indian-based company doing business where? Category C. What is it? GNP. Clear? Next, NDP. What is the first alphabet? Hey, first alphabet N means net. First alphabet N ಅಂದ್ರೆ national ಅಂತೆ. ಯಾವ್ದೋ ನಿಮ್ದಲ್ಲಿ first alphabet is N. N stands for. What do you mean by net? After depreciation, that means less. That's it. From GDP, just subtract depreciation. Everything else same. See, sum total value. Added. Final goods end. Where it is produced. Simple. For that, you just have to subtract depreciation. And even this outcome is always a dash value. See, the second alphabet is still D because of that foreign company is producing and earning where? That's it. For GDP minus depreciation, you will get GNP. NDP. From GDP minus depreciation, what you will get? First alphabet is N. Okay, now let me ask you the formula of NDPFC. What is it? Three important components was there now. What is that? Compensation of employees, operating surplus. That's it. See, first alphabet is N. Don't write it as minus depreciation, not required. Sir, inside the classroom, students are not there. That's it. Inside the classroom, students are there. That means plus students. Classroom plus. If students are not there, only classroom. Don't write as minus students. Clear? If nothing is mentioned, let's say for example, if nothing is, that means depreciation is not there. Depreciation is, since first alphabet is dash, first alphabet is N. We are not writing anything. If it is G, then we will call it as plus depreciation. Clear? Now, same formula. My question. GNPFC. What is it? Think and answer. First alphabet is G. Second alphabet is N. But FC, compensation of employee plus operating surplus plus depreciation because first alphabet is G. Second alphabet is plus NFIA. That's it. Depending upon the alphabet, you should just include things and exclude things. That's it. First alphabet was G, so you added depreciation. Second alphabet is N, so you added. If second alphabet is P, nothing. No minus NFI and all. Just leave it empty. If first alphabet is N, no minus depreciation and all. Leave it empty. Clear? That is FC formula. See, NDPFC. What is it? Compensation of operating mixed income of. That's it. Since first alphabet is N, we are not calling it as minus depreciation and all. Is that clear? Understood? Now see one more formula. They are given NDP MP. What are they given? They are converting MP into FC. How do you convert MP into FC? Minus Nirmala aunty plus subsidy. That's it. Minus Nirmala aunty plus. Clear? Last but not the least, NNP. First alphabet is N. Stands for net. What do you mean by net? Second alphabet N. What is that second alphabet N? That's it. See, same to same definition. It is a net value added or sum total value added of dash goods and services where it is produced. Domestic territory. Since first alphabet is N, minus depreciation. Second alphabet is N, including even this one. Whenever we are producing, outcome is always a. That's it. This is NNPMP. What is it? NNP. Since it is market value, we will write it as NNP. But what is national income? How do you convert MP into FC? Simple. Minus Nirmala aunty plus this will become NNP. NNPFC is also called as. That's it. National income is a factor income because if it is FC, FC stands for factor. That is factor income. And second alphabet is N. Second alphabet is. That means category A, category B minus, category C added. That means NFIA gets included. What gets included? See, simple concept. First, we will identify NTPFC. What do we identify? What is second alphabet? For that, we will add. Now, what it will become? That's it. This is national income. What is national income? It is a net domestic factor earned within the country plus NFIA. What is it? Net domestic factor earned plus see here, sum of domestic factor income. Which factor income? Sum of domestic factor income. That means NDPFC. For that, what are they adding? That's it. That will give us NNPFC. NNPFC is called as dash. National income. See, that's it. This is the concept of national income. Straight away, very first page. We'll go to the national income meaning. See here. What is national income dash value? Because it is NNPFC. What is the very first alphabet? N. So they are calling it as net value. If it was G, gross value. See, it is a net value of dash goods and services. That is final goods and services or economic goods and services where it is produced. Including dash. That's it. This is called national income. First, we are only and only speaking about domestic territory. Which territory? That means NDPFC. For that, you are adding dash. Abba, what is NDPFC plus NFIA? What is NNPFC is also called as? That's it. This is national income. For this, lot of people struggled. Lot of people skipped this chapter. That too in 12th standard, most of them almost went upside down for this chapter. Huh? That's it. Only 3 differences. How many differences? Gross and net difference. Hello, for you guys only gross and net difference. Domestic and national difference. Market price and factor cost difference. That's it. You should know when to add them, when to. And we will get ultimately NNPFC. We start from GDP MP. Ultimately, we should get NNP. That is national income. That's it. Nothing else other than these 3 differences in the whole concept of national. Clear? So we have done the first 4 concepts. How many concepts? Kindly solve this problem. Now I will get to know how much you guys have understood national income. FIA, factor income. FI means factor income receivable from abroad, factor income payable to abroad, earned abroad, paid abroad. Now let's see how many of you can solve this. Done? Completed. Answer. 413. ಆಮೇಲೆ next. Next. 4 a nice number. ಯಾವ್ದು ಇಮಾಮ್ ನಿಂದ ಇದು? ಆಮೇಲೆ next. Oh, one question, 4 answers. So ICA will also give 4 answers. 4 options. Okay, let's see. Now what are they asking us to calculate? NDP. What is given to us? GNP. Okay, let's go alphabet by alphabet. We have G. They are asking for. So minus. Okay, now we have is N, but they want reverse. That is minus NFIA. Okay, now what we have is MP, but they want us FC. Market price to factor cost minus Nirmala Aunty plus subsidy. Clear? Now simple concept. Now we will put across all the data available. Now 400 and minus depreciation 12. Next minus of. Now we need to
minus 2.
1 second. Receivable 16. Payable
Minus
18. 16 minus 18.
minus 2.
Now it is minus of minus 2. Minus indirect tax 22 plus subsidy, no information. Simple. 430 minus 12 plus 2 minus subsidy, where it is? Subsidy given now. Plus 15. Simple. 430 minus 12 plus 2 minus 22 plus 15. How many of them got 413? Please raise your hands. Others, how many of them didn't get 413? Please raise your hands. Calculation error. That is what? Minus 2. Next problem. Now let's see. Now this is net indirect tax. What is it? Net indirect tax, and this is minus 10 million. Net indirect tax minus 10 million. Answer. 410. 410 is what I got as an answer. Others? 410. Paka. Answer. 410. 415. How much? 410 only, yeah? Okay, they're asking us to identify NDP, MP. What we have is NNP. So first alphabet matching, second alphabet N to D. That is minus FC to MP plus Nirmala Aunty minus subsidy. So it will be 450 minus 30 plus NIT is given plus of minus 10. So 450 minus 30 is 420. 420 minus 10 is 410. Clear? Understood? Okay, next. Let us go with the numerical problems and all. We don't want. Okay, leave it. Personal. Simple concept. What is income earned by the household sector? Income earned by which sector? Even including non-profit institutions who are serving the household. That means NGOs. Simple concept. From the national income. From where? We will start calculating. We will include transfer payments. What do we add? Transfer payments. TR we call it as transfer payments. Clear? Minus incomes earned but not received. See, first understand the difference. Incomes received but not earned. Transfer payment. Incomes earned but not. Sir, I have invested on company, sir. The company has not yet declared dividends. Income yet to be receivable now. Or else I am working. Provident fund contribution is going. Now immediately I will not get that money. Once I leave a job, later I will get that money. So incomes earned but not. So minus incomes earned but not received plus incomes received but not. All of these are getting adjusted from where? Why? Because national income does not include transfer payments. Transfer payment is only a part of which income? It is never a part of national. Clear? See, remember, national income does not include transfer payments. Why? Because transfer payment will not lead to production of goods and it is just a money transferred from one person to. Clear? There is one more adjustment. See, interest on national debt. That means from the general public, government has borrowed a loan by issuing some certificates, national saving certificate, national depository certificates. On that you are receiving interest. On that you are. So this should be added. This should be current transfers from government. Money is coming from government. Add it. Clear? So like this, you should know what to add and what to subtract. And end of the day, adjustment has to come from where? See the given information. NNP, MP is given, not FC. What is national income? NNP. First identify national income and then make the adjustments. What to add, what to subtract. Clear? This is personal income. Next comes disposable personal. Already we have done personal income minus. That is direct tax. Which tax? Clear? Next comes. Okay, numerical problems I have given here. Next, private income. Income earned by which sector? From all the sources, either within the country or that is called which income? Last but not the least, per capita, also called as average income of population. Simple, total national income, that is NNPFC. What is it, NNP? Divided by population of the country. We will get to know the average income of the population, how much each person is earning in this country. And that represents standard of living. What does it represent? Same way, we also have one more concept called as real GDP per capita income. What is it? Real GDP? Per capita income out of real GDP. That means real GDP divided by population. What is it? Real GDP divided by? And what does real GDP represents? Economic well-being. What is it? But what does per capita income represents? Is that clear? So these are the 8 concepts of national income. Is that clear? Understood? Next 3 methods. How to calculate national income. First one, product method. Second one, income method. Third one. See, there is one more concept. Even before going ahead with these 3 methods, there is something called a circular flow of income. What is it? Circular flow of income. Production, distribution, disposition. Simple. We are producing goods and services. What is it producing? That means we are creating value. What is it? We are creating value. So that is what we are adding value. That is the first method, value added method. In the process of producing, we are creating value. We are creating value. To produce goods and services. What is your inputs? Factors of production, land, labor, capital, and are they available for free of cost? What does land expects in return? Labor, capital, organization. So, in order to create value, you are using factors of production. Are they paid factors or free factors? Now, you will pay payments to the factors of production. That itself is a factor income. That is what? Income method. Which method? Income method. Now, who owns all the factors of production? Households. End of the day, land belongs to? Labor is nothing but the same money which is saved by the household, which is in bank. You are taking as a loan as a businessman. CMU, yesterday, creation, mobilization. End of the day, interest will also go to whom? Household. Say, end of the day, factors of productions are owned by. When household gets income, will they sit silent? What they will do? Spend. That is expenditure method. Disposition. Whenever they are making the spendings, again they are creating demand. For that, again, we should produce. In order to produce, we need factors of production. Again, they earn income. Since household earned income, again they will spend. Again we produce. Again income gets. Again spendings happens. Again we produce. Again income comes. Again circular flow of income. That is production, distribution. Clear? Now let us understand one by one. What is value added method or product method or also called as? See, concept is very simple. It is connected to the shortcut. Now we will divide the entire economy into 3 sectors. How many 3 sectors? Primary sector, secondary sector, tertiary sector. Further, every sector is divided into subsectors like subsector 1, subsector 2, subsector 3, 4, 5, 6. I don't have a space, so I am restricting to only 2 subsectors. Every subsector is further classified into units. Unit 1, Unit 2, Unit 3. Let's assume Shashikiran is a bench manufacturer. Which manufacturer? Bench. Primary sector, secondary sector or tertiary sector? Which sector is that? Manufacturing. Now let's assume in that furniture manufacturing is subsector 2. In that furniture, wooden furniture, steel furniture, iron furniture, plastic furniture, like this unit 1, unit 2, unit 3. Like this multiple things are there. So for me only value added is important. What is important? Value added. First I will calculate value added by all the units. Value added by? I will get to know the value added by individual subsector. Like this value added by all the subsectors. Value added by? I get to know the value added by individual sector. Value added by? Value added by all the sectors in the economy. I will get to know the gross value added by the entire economy at the market price. What is it? Gross value of entire economy at? That is nothing but GDP MP. What is it called as? GDP. Concept is very simple. Let me explain it once again. Listen. Entire economy is divided into how many sectors? Further, every sector is divided into. Further, every subsector is divided into. We need only value added by all the. We get to know value added by. Value added by all the subsectors. We get to know the value added by the. Value added by all the sector. We get to know the gross value added by the entire economy. What is the gross value added is called as? And already you guys are punters. Once you get GDP MP, how do you convert that into NNPFC? Simple. 3 differences. Finished. First we should get what? And we convert that into. That is national income. Now to get GDP MP. What is it? GDP? That is gross value at market price. That is GDP MP. What is it also called as? Wait, let me write this at the below. This is also called as GDP. We can identify this in one more different way in value added method. Simple. Value of output minus value of input. What is it? Let's say in order to produce this water bottle, all my raw material expenses put together 150 rupee. How much is this? But I'm planning to sell this for 200. Output is 200. Input is 150. 200 minus 150. That is value added. I only need value added. Now, sometimes they will not give you information about this value of output. Rather, they will give 2 information. Number 1, sales. Number 1, plus change in stock. Plus change in. Somewhere you saw this change in stock. How do you identify change in stock? Closing stock minus. That's it. This is how you will get to know value of output. Minus value of input is also called as intermediate consumption. What is it? Intermediate. Clear? This is how we will get to know gross value added. Which value added? Value of output minus value of input. But sometimes they don't give straight away value of output. They will give information about closing stock and see sales, closing stock, opening stock. By using this 3 information, we should identify minus value of. That can also be given as intermediate. Now, kindly solve this. Now, they have also given that. Wait. The question was there. Question number 27. See that? Question number? Calculate gross value added at dash price, market price. If sales is 750, opening stock is 300, closing stock is 200, intermediate consumption is 250. Now value of output minus value of input. Value of output, sales. How much is sales? Plus change in stock. Closing stock is 200 minus opening stock is 300. So minus value of intermediate consumption 250. So it is 750 minus 100 minus 250. End answer 400. That's it. See, 1 mark. Free donation from ICA. You should know how to solve it. That's it. You should know the formula. Like this, free questions will come like this. Free donation of marks will happen. Clear? So how do we identify the gross value added? Simple. Value of output minus value of. How do we get to know value of output? Sales plus change in. How do you identify change in stock? Okay, now my question for you guys. When value added is given, gross value added, first alphabet is G, gross. If you subtract depreciation, what do you get? That is called net value added at market price. Instead of market price, later they will convert into FC. So every time when you are understanding value added method, they will call it as net value added at factor cost. What is it? Net value added at? For this, they will just add NFIA. For factor cost, net value, what do you get at final? NDPFC plus NFIA. What is it? NNP. What is NNPFC called as? That's it. That is what is explained here step by step. See, primary, secondary, tertiary. So let me say, later we'll divide that into subsector. Subsector into units. We'll get to know gross value added. From gross value added minus depreciation. And final, see here, net value added minus net indirect tax. What is net indirect tax? MP is converted into FC. Finally, at last but not the least, NNPFC, NDPFC. What is it? NDPFC plus what do we get? That's it. This is called as value added method. Which method? Next comes income method. Which method? Simple. FC formula was there, na? Main components of FC. 3 important elements. Which are those 3 important elements? Okay, my question for you people, think, analyze and then answer. If you just add this 3, if you just add only those 3, what do you get? NDP. Hello, excuse me. Only the 3. Is there a depreciation included? No, na. If first alphabet is G, then you will add depreciation. Did I add depreciation here? See here? Is there any depreciation? So what is this? NDP. For NDPFC, if you add NFIA, what is it? That's it. This is income method. Straight away, one single step, national income gone. NNP, FC. Which method? Clear? Understood? See, value added method, you have to take 2 single steps. One, value of output minus value of. First, we'll identify GDP MP, that is gross value added at market. And finally, we'll convert it to NNP, FC. But in income method, simple, straight away FC formula. For that, just add NFIA. If you just add NFIA with 3 components, straight away you will get NNPFC. NNPFC is called as. Last but not the least, expenditure method. Already you guys know the formula. C plus I plus G plus X minus M. What do we get in written here? GDP MP. So once you get GDP MP, you know how to convert that into NNP. C stands for consumption expenditure done by household. What all spendings will be made by household. Second one, I stands for investment expenditure made by business people. Investments made on business. G stands for government expenditure. Fiscal policy, government expenditure. X stands for export, M stands for this is international trade. This is called as net exports and net imports. If the values are in positive, net export. Values are in negative, net imports. So by adding all these 4 components, expenditure incurred by household, expenditure incurred by business, expenditure incurred by government, expenditures of international trade, adjusted figure we get GDP. From GDP MP minus depreciation plus NFIA and next to Nirmala aunty kick out. And plus the subsidy, what do we get? NNP. That is nothing but national. That's it. These are the 3 methods of calculating national income. Any doubts in the 3 methods? Next comes the beautiful concept system of regional accounts in India. Simple, like how we are calculating nation's income. Which income? You should also calculate state-wise and union territory-wise income. Which income? They respond. This is important. State-wise and that means how you are identifying GDP for the entire country, na? Like that, you should identify GDP for every state. You should identify what? And not just GDP. You should also identify for every state. Now, this is the most important. Now, in order to calculate the state GDP and state per capita income, who is responsible? Central Statistical. They are responsible for getting the state incomes done. And who will prepare that? Preparation will be done by state income estimates. Who is doing it? State income estimate. Or we can also call it as, wait. State Directorate of Economics, and they will be preparing it. They will be. But who will assist them? Who will be responsible for assisting them to prepare? Central Statistical. This is most repeated question. What is it? Most repeated question. So who will prepare? State Directorate and Economics and Statistics. Who will assist them to prepare? Central Statistical. See, there are certain central government services which cuts the borders of the state. Let's say railway. Sir, from Bangalore we are going to Chennai. From Karnataka we are going to Tamil Nadu. Now, how do we divide this income between 2 states? Such kind of transactions are called as supra-regional sectors, and we will divide it based on relevant indicator. Which indicator? This is system of regional accounts in India. So this is your main concept of national income. Year after next, whatever comes ala theory, GDP and welfare. Read this and go. That means GDP is different, welfare is GDP and welfare is not one and the same. We are excluding various other factors while calculating GDP. We can never consider GDP of the country as a welfare of the people. What is called as economic welfare? Real GDP, na? But in reality, that real GDP and welfare is not actually one and the same. We will miss out lot many aspects while calculating GDP. We only consider production. We only consider non-economic activity is not considered, but that is also important for a person. Na? Happiness is important, his leisure time is important. That you will never consider. Did you consider your nation's crime rate? Day by day, accidents are increasing in national highway. Because of that, hospital services increases, policemen services increases, lawyer services increases. No doubt contributes to GDP, but is it good to economy? No. All your illegal transactions, smuggling, drug, betting and all, you will never include illegal income. But if that is increasing day by day in your country, is it good to economy? See, welfare is totally different. GDP is totally. See, GDP and welfare is an inadequate measurement of welfare. What is it? Completely inadequate measurement of. It is not at all an adequate measurement. And also, we have listed on certain limitations and challenges. Read only concept. Very rare of the rare chances, but you might get one question from this area. See, conceptual difficulty, all this, and usefulness, international comparison. We'll get to know what policy government should bring in. Government will decide what to be done, which state is performing well, which state is not performing. Because we are identifying state incomes also, na? State per capita, state GDP, everything. And how is our neighbors performing? How is the other countries in the world is performing? How are we performing? How was our production last year? How is it now? How was it 10 years ago? How is it now? What are we expecting to become in the future? What all we should focus? That is usefulness and significance. What is it? Usefulness. By this, chapter 6, unit 1 comes to an end. Flip back the page, have a look. Any doubt? Let us know before going to Keynesian theory. Which theory? Keynesian theory is much more interesting. Superb. From chapter 6 alone, you can expect 15 marks. From both the units together. 10 to 15 marks is what you can expect. Clear? Abba? That means, see, you are only occupying your own property. Let's say you constructed a building. Ground floor, you are there. First floor and second floor, you have given it for a rent. Now, rather than you are using it, suppose if you give it to someone for rent, how much money you will get? That is imputed rent. Because self-consumption, na? Value of that self-consumption should also be included because it has created value. That is imputed rent. Clear? Let's go to the Keynesian theory. Simple 4 concepts are there, but most interesting and also confusing topics. C plus I plus G plus X minus M. What is it? C plus G plus X minus M. The same formula we extend it now when we understand C and I, 2-sector model. Now C, I and G, 3-sector model. C, I, G, X minus M, 4-sector model. Clearer? Now there is one basic understanding first you should know even before starting this unit. See, before Keynes, what is it before? Now he will become your best friend in macroeconomics. He is called as father of macroeconomics. Who is he? Father. And he has written a book in the year 1936. The book name is General Theory of Employment, Interest and Money. What is it? General Theory of? Now Keynes said, see boss, economy may achieve full employment equilibrium or may not achieve full employment equilibrium. Sir, what is this full employment equilibrium? First we will draw supply curve, demand curve. See, this is the point of equilibrium. Now, at this point of equilibrium, every time we were focusing on this price line, now equilibrium price, but now we will focus on x-axis. Now, x-axis will represent 2 things. Number 1, quantity and income. That means whatever that you are producing at this level of quantity, now we believe, before Keynes, all classical economists, which economist? Keynes and later is called as neoclassical economist. Clear? All the classical economists said at this point of equilibrium, whatever output we are achieving and whatever income we are earning, that is because of full employment level. Which employment level? Economy will always achieve equilibrium at a full employment level. Government intervention is not at all required. Economy will self-adjust on its own. Economy will adjust. because of inflation and deflation, government intervention is unnecessary. Economy will always and always achieve dash equilibrium. But Keynes said, boss, it may happen, or economy can achieve equilibrium even lesser than your full employment, lesser than your. That means in an economy, demand is much more lesser. See, this will become new equilibrium now. See, this will be the new equilibrium level. Or economy can go even overperforming, much more beyond the full equilibrium. So now this can become a new equilibrium. So there is no rule that every time economy will achieve a full employment equilibrium, always and always. At the point of this equilibrium, there can be either unemployment problem or overemployment. And that is what happened in Great Depression of America, 1929. Heard about 1929 Great Depression? See, that is where connection of Keynes comes in. After the Great Depression, all our classical economists who said, government intervention is not at all required. Economy gets self-regulated on its own. Economy gets, there will be always full employment. There is always equity balanced, price stability is achieved. Everything is achieved. Government is not at all needed. We are following a capitalistic economy. Which economy? Laissez-faire approach. That means zero intervention of government. See, which intervention? Zero. All the stupid fellows who used to say that, no, all absconded. After 1929 Great Depression, no solution at all. That is when John Maynard Keynes, who is that? He was the person who came up with this concept of counter-cyclical fiscal policy. Which policy? He said, in order to tackle inflation and deflation in a counter-cyclical manner, government expenditure and tax has to operate. See, if government expenditure is reducing, tax has to. And this has to be adopted during the. And if government expenditure is increasing, tax has to be decreasing during the deflation. So this is called counter-cyclical fiscal policy. This entire concept was taught to the world by John Maynard to tackle the inflation and deflation problem. So in the 1929 disaster started. In 1936, which year? 19. Keynes gave the entire world this counter-cyclical fiscal policy through his famous book called as The General Theory of Employment, Interest and. This is the base. Remember, economy need not be at full employment equilibrium. Economy? There can be underemployment or overemployment. There is no rule that economy should always be at full employment equilibrium. That is what Keynes said. And to prove that, various theories came up and that was actually followed by everyone. And the same Keynes also spoke about two-sector model, four-sector, and also he introduced a concept called investment multiplier. My favorite topic of this chapter. Which multiplier? Investment. Now let's get started one by one. The very first one is a two-sector model. This is hypothetical. That means unrealistic. What is it? Hypothetical, unrealistic model. That means in the overall economy, there are only two people. Who are those two people? Households and there is no government at all. You tell me, is there any country without government? No, that is why this is hypothetical. Just to understand the base. Understand the? We need to understand two-sector model. See, who owns all the factors of production? Household. Accepted. See, there is only household and firm. See, household will be having all the factors of production. They will give that factors of production to whom? In return, firm will make the factor income as a payment. That is, land expects rent, labor expects wages, capital expects interest, organization expects. Once household gets money in their hand, what will the household do? Spend on whom? Who is producing that? So, household will spend that money on firm. Firm, whatever the goods and services produce, that will come to. See, there is a proper exchange between these two guys. There is no leakages of money, no savings, nothing. Whatever household gets money, that will be given to. Whatever firm gets that money, again they will buy factors of production from. Like this, there is a proper distribution of all the factors between firm and. This is what two-sector model. There is no government. See, when we say there is no government, three elements will be absent. Which are those three elements will be absent? Number one, government. Second one, see, one, government expenditure. When government spends money, government, that will come into the system. This is called as injection. What is it called as? When government collects a tax, taxes will withdraw money from the system. That will act as a, let me say, leakage. That means when you pay taxes, disposable personal income minus tax, to the amount of tax you can't buy the goods in. Your ability to buy will decrease. Now this will act as leakage. What does it act as? Leakage. Or in very simple words, AD is a government expenditure, aggregate demand. When we demand, that means we spend. Even government is spending. AS, aggregate supply, is a leakage. That means income stream. Which stream? Tax is a income to government. Tax is a income. See, now AD, AS. In that, government expenditure, tax is missing, and even transfer payment. Which payment? See, when government is not existing, three elements will be missing. One, government expenditure. Second one is tax. Third one is transfer. These three elements are totally missing. In the economy, there is only and only households and business firm. Households and see the total income produced. What is it? That itself is called as disposable income. Since you are not paying anything to government, your Y itself is called as YD. What is it? Y itself is called as? There is nothing to pay to government. Income itself is called as disposable. And the people, especially business people, they don't save anything. There is no corporate savings, nothing. Every money, whatever they are earning as a profit, they will distribute it to the in the form of. And since government is not at all existing, there is no concept of tax, no concept of government expenditure, no concept of transfer. There is no exports and import also. Closed economy. Prices of all the goods and services, factors of production, technology, everything remains. By mistake, if household create any savings, that will go to bank. From the bank again, who will take the loan? Autonomous investments. Your savings of the household will automatically convert into investments. Clear, simple concepts here. AD equal to AS. AD equal to AS. That is the concept of equilibrium. Aggregate demand. What is it? Aggregate should be equal to aggregate. AD is an expenditure side. AS is a income side. Now leave about that. Let me ask you a basic question. When you are earning income, what will you do with this income? Sir, either I will consume or either I will save. Clear up. Consumption plus savings is going to happen. Now, AD component. Which component? Now, that is C plus I. Household consumption plus business investment. Expenditure. Na? What is it? There are only two people in the economy. Household and business firm. So, household will also spend money. Business will also invest money. And what is that income side? Again, C plus yes. What is it? C plus? Yes. This is income side. How? Income formula. C plus Yes. Just now I wrote na. Income is what? C plus? AS component is income. Now simple concept. CC gets cancelled. CC gets? So ultimately, whatever investments will happen in the business, that is a savings created by household. That is what circular flow of money. Creation, mobilization, utilization. Now instead of writing yes, what is it? Instead of writing in the place of yes, can I write it as I? Definitely. That means rather than writing y is equals to c plus s, I can also write it as y is equals to c plus, because s is equals to clear. So now I can write instead of yes, I can also call it as I. Now this is two sector model equilibrium. What is it? Two sector model? Equilibrium. End of the day, I is equals to yes. Clear? Now listen to this carefully. National income equation. Y. National income means y na income. C plus I. What is it? C plus I. You know why I wrote as I rather than yes, because S is equals to. Now C stands for household consumption. I stands for business investment. Now in the place of C, now this is interesting. Listen to this carefully. Consumption. C stands for what? Now this consumption is of two elements. Now C is equals to A plus B of Y. C is equals to what? A stands for autonomous, B stands for induced. Let's say for example, now for a time being, I am earning a income. What am I doing? Earning a 15,000 rupees of income. I am staying in a rented home. I am staying in a which home? Every month I should pay a rent of 5,000. And my lifestyle expenses, my shopping, going out, eating food and all, that is another 7,000. So what is my total consumption? 12,000 I am spending money. Next, what is my savings now? 3,000 is my savings. Do you agree? See, in this income of 15,000, how much am I spending? 12,000. In that, how much compulsorily I should spend? This is autonomous. Whether you earn income or whether you don't earn income, you have to spend. That is autonomous. But my induced is dependent on income. Suppose instead of 15,000 salary, if I get 20,000, will I still spend only 7,000 for lifestyle? I will increase. See, that is induced. So induced is dependent on income. Autonomous is not dependent on. Same thing yesterday, demand function. D is equals to F of I said this can also be written as Q is equals to A plus B of autonomous. A stands for autonomous, B stands for C connection. Clear? Understood? Same to same, we also discussed a numerical problem. So this is consumption function. Which function? And remember, this A stands for autonomous, B stands for induced, and B has one more name. B is also called as slope of consumption curve. What is it, slope of? Or it is also called as MPC, marginal propensity to consume. What is it called as?
Marginal propensity.
So what is that marginal propensity to consume? Change in consumption because of change in income. Change in consumption because of? Is that clear? And there is one more thing. Average propensity to consume. Total consumption divided by total income. What is the total consumption by? That is called average propensity to consume. What is marginal propensity to consume? Change in consumption by change in income. Complete opposite of this, of consumption, is savings. What is complete opposite of consumption is? Initial formula. When you earn income, either you will consume or either you will. See, C stands for? Consumption. And S stands for? Savings. Clear? I just explained you the C. What is C equation? A plus B of Y. Same way, S will be complete opposite. After spending A, so minus A. And later, after spending B, that is 1 minus B. What is it? 1 minus B of Y. This is savings equation. Clear? What is consumption equation? A plus B of? Savings equation? Plus 1 minus B of? Now, B is also called as dash. B here it is also called as MPC. Here 1 minus B is called as MPS. What is MPC formula? Change in consumption divided by, same way, MPS will be change in savings divided by, and the concept is MPC plus MPS put together should be equal to, value should be equal to, and that means the value of MPC will be always between 0 and 1. MPS will also be between 0 and 1. So MPC plus MPS put together is equal to, same to same way. Next comes APC, total consumption by total. Again, APS, total savings divided by total. Same to same. APC plus APS put together should be equal to. That's it. This is the concept. Clear? Understood? Savings equation, consumption equation, APC, APS, MPC. All these formulas are important because questions will come from these formulas. Numerical problems are there. I will show. You have to solve it now. Clear? Understood? Now, national income equation Y is equals to C plus I. Y is equals to? See, this Y is a AS side. Which side? C and I is a AD side. Which side? Equilibrium is AD equals to AS. So, in the place of C, what is it in the place of? Can I write it as Y is equals to equation of C, that is A plus B of Y plus I. This is the national income equation. From this equation, you will get numerical problem. Clear? Understood? Now, same thing can also be represented in the form of graph. See, this is how the graph will be. So, this is the C line. This is the portion of A. What is it? Autonomous. Even if your income is 0, this much you should spend. This much you should. And this is B. This is slope. What is it? Slope. And if you want to represent same for the savings, savings will be like this. This is minus A. What is it? Minus A. Until spending this minus A, you can't create savings. Only above this. This is 1 minus B. This is slope. What is it? Slope of savings curve. Which curve? Is that clear? So here graphical questions will be very, very less. See, minus A. This is slope. That is B. C is equals to F of Y. That can only be written as A plus B of Y. Clear? So same to same explanation. MPC I just explained. Formula is important. APC is also formula important. Explained. Next, savings function also explained. APS also explained. MPS also. Now, kindly solve this table. Now, you know the formulas. See here, income is 0. We are not at all earning any income, but consumption is how much? That means savings is minus. From the past savings, I should bring money. 100 is the income. Say, let me say consumption is 25. Savings will be next 200 minus 200. 300 minus 275. Next 400 minus 350. Next 500 minus 425. 70. Next APC formula, consumption by income. Consumption is 50, income is 0. 50 by 0. Math error, infinite. Any numerical divided by 0. Next 125 by 100. 1 point. Next 200 by 200. Next 275 by 300. 0.91. Next 350 by 400. 0.87. Okay, 0.87. Next 425 by 500. 0.8. Next MPC, change in consumption. First one we can't identify. This is undefined. This we can't identify. Change in consumption. How much is that? 75. Next change in income. How much is that? 100. So 75 divided by 100. Do it for next one also. 0.75. 0.75. 0. That means what you should observe here is, listen, whenever income increases, APC. Whenever income increases, APC. Same question I said yesterday, na? Proportion of consumption. Whenever income of a consumer increases, proportion of keeps on decreasing. That is the last question which we explained yesterday. Somewhere I wrote that with example. Proportion. Somewhere we wrote that yesterday with percentages and all I wrote now. Unable to find that. Somewhere we have written. Where is that? Where? Not here. It's not there. Okay, chalo, leave it. Yesterday we did that. If you remember that percentages and all I wrote. See, proportion keeps on decreasing. I said now connection is there with APC concept. Which concept? APC concept. Clear? So remember, whenever income of a consumer increases, APC keeps on. Now observe, whenever income is 0, APC will be. This can be a question. Be careful. Clear? Next, observe, whenever income is increasing, MPC remains. See, I have given this as a note in the next sheet. At the 0 level, APC will be infinite. When income increases, APC decreases. As income rises, APC decreases, but MPC remains. Clear? Understood? Now, solve this problem. First problem, simple. They are asking to identify average propensity to APS. What is the formula of APS? Savings divided by income. Savings by income. Income is 1000, consumption is 200. That means savings is 800. 800 divided by 1000. What is it? 800 divided by 1000. How much is that? 0.8. Next, 450 by 1200. 450 divided by 1200. 0.375. That's it. 0.375. Clear? And this is how the exam questions are going to be. Clear? Now, listen to this formulas carefully. Now, we are only focusing on AD side. We don't focus much on AS side. So, remember, Keynesian theory will focus on which side? Keynesian theory will focus on AD. That means AD component is C plus G plus X minus M. This is AD component. This is expenditure component. AS is an income component. Which component? Income component. That is C plus S. Clear? In 2-sector model. In 3-sector model, tax is an income. What is it? Tax is an income to government. And this minus M will go to the RHS side. This will become plus M. It will become what? That is what the AS components are. I shall explain it. Clear? Now listen to this carefully. There are couple of problems which you have to do it in the exam. Usually you will go wrong in only one area. Change in income, change in savings, change in consumption. What is it? Change in income? Change in consumption. Now, what is income formula? Consumption plus savings. Do you agree? Now, can I say change in income can be change in consumption plus change in savings? Possible? There is one more formula I will explain when I come to investment multiplier. There the connection comes. Now, okay. By using the same formula, can I call consumption is income minus savings? What is it? Consumption is Okay, now change in consumption can be change in income minus change in savings. Do you agree? Or this is most important. Change in income into MPS. What is it? Change in income into? MPS. Kindly remember this formula. This is where you will go wrong. Many a times we will use the same to same. Again, whenever we are identifying, now change in savings. What does it change in? Okay, wait, let me first explain the savings formula. Savings, income minus consumption. Do you agree? Same way, can I say change in savings can be change in income minus change in consumption? Or else change in income into MPA. Wait. Here we made a mistake. This should be MP. See, here it is MP.
Yes.
Clear? Understood? So kindly copy down this formula. This formula is where you will go wrong. And one more formula will come here. For change in income, one more formula will come. Kindly leave a space. Kindly leave a space. One more formula is going to come there. Clear? Understood? Let's continue. Okay. Now this graph is not needed. See, already explained about AD equals to AS. AD component C plus I, AS component C plus S. CC gets cancelled. I is equals to S. Same thing is represented in the form of graph here. See, graphical representation. This is equilibrium. C plus I is equals to C plus. CC gets cancelled in the savings equation. S is equals to I. Clear? Now, this note is most important. Listen to this carefully, especially last 4 points or 5 points. See, the condition applies only to those economy where there is no government and no foreign trade. That means two-sector model. In this case, whatever the income we earn, either we consume or either we save, either spent or either. And when we speak about AD equals to AS, that is AS is equals to AD. C plus S is C plus I. CC gets cancelled. I is equals to. Okay, this we have already learned. Now see the Keynesian equilibrium with equality of planned aggregate expenditure and output. What is this? Need not take place at. That is what I first explained. Nah? Classical economists said that economy will always be at equilibrium at dash employment. But Keynes said need not take place at. And he said even though we don't have a full employment, see there is a possibility that in an economy still there is a unemployment which is much more higher. And in the Keynes model, dash and dash is not going to change. Neither wages nor will decline. Why? Suppose now see unemployment problem is there now. Let's assume Shashikiran is a laptop manufacturer. Who is Shashikiran? Let's assume there are 1,000 people in the economy who is capable to work, willing to work, and also ready to work. Only 1,000 people. Let's say I'm taking example. Now by using all 1,000 people, by using how many people? 1,000 people. Full employment. 1,000 people are full employment. I can produce 50,000 laptops. How many laptops?
3,000.
But in an economy, demand is only 40,000. Demand is only. How much should I produce? But by appointing everyone, how much can I produce? But now how much I should produce in the economy? Do I need all 1,000 people? 200 people, I will throw them out of the employment. That means 200 people are unemployed. Now, still high unemployment is there. 20% of people are unemployed in the economy. Still, even though unemployment problem is there, I will not reduce wages. I will not reduce. Why? Now I can blackmail the existing employee. If you don't want to work for lesser salary, get lost. There are unemployed people. They can come and work for a lesser salary. Yes, I can blackmail like that, but we don't do it. Why? If you reduce wages, income earning capacity of households will decrease. If they don't earn income, will they spend money or will they save money? Stupidity. Where will they save? Even they don't have income. Now, they full on. Brain is dark. When they don't earn income, where will they spend? Even their spendings will. When their spending decreases, still demand. Even from 40,000 laptops, it will go down to still 25 or 30,000 laptops now. That will create a problem. That means wages should be increased to the people. They should earn more. Only when they earn more, they will spend more. If I reduce wages, they will not get income. If they don't get income, will they spend money? They respond. On a serious note, I am saying I will go fast. If you really don't want to apply, you know the speed, how it went. Keynesian theory, most of them said you have not understood, so I'm going little slow. If not, I will go fast. What do you want, speed or fast? Both are same. I know, end of the day you will be choosing anyone. Respond, stupid fellows. Now, I will not reduce wages because if I reduce wages, income earning capacity will decrease. That means automatically demanding capacity will also. Still more demand will. Unemployment problem will. That is why wages should not decrease. Why interest rate should not decline? If interest rate goes down, people rather than keeping money in bank, they will keep it in hand. And when their interest rate reduces, when the interest rate, no doubt they have to spend. They have to spend money in the economy. But they are saying interest rates will not decline. Interest rates will decline. Because boss, economy is now not in a deflation phase, not in a deflation. That is why I'm not even decreasing interest rates there. See, simple. If I reduce interest rates, their income earning capacity will decrease. People, why will they keep money in a bank account or they will invest it in bond? Returns will be there. What is that returns? Even if you reduce that interest rate, they don't earn income at all. If they don't earn any additional income, where will demand get created? Only when you earn income, you will create demand. Na? If you don't get additional income, where will you create demand? So neither interest rate nor wages will decline even though there is unemployment problem in the economy. This is connected with inflationary gap and deflationary gap. Which gap? Inflationary gap. See there, output will remain less than as long as there is dash spending. Why is this all problem is occurring? Because of insufficient spendings by the people. They are not spending adequately. Earlier they were, let me say, buying 50,000 laptops, but now only insufficient spending. See, Keynes argued this is what precisely happened in the Great Depression of America. Is that clear? Now look at the board. Solve this problem. See there, calculate marginal propensity to and marginal propensity to from the following data in the economy which is in equilibrium. National income, they have only given Y. They have given autonomous, that is A. Investment, I. What is national income? C plus I. In the place of C, we will write it as A plus B of Y plus I. They have only given national income 2,000. 2,500 is equals to A. How much is A? 300. So we should identify this B. B is nothing but MPC, na? They have only given national income 2,000 plus I. How much is I? Solve this equation now. Solve it. Simple. 300, 100 gets added. 300 plus 100, 400. 400 will come to LHS side. So this will become 2,000 of B of 2,000. So simple. 2,100 divided by 2,500 is equals to B. End answer. B is 0. B is 0.84. We know MPC plus MPS put together 1. So 1 minus B is MPS. So 1 minus 0.84 is 0. So the 0.16 is MPS, 0.84 is MPC. That's it. Next problem. Solve it. In an economy, equilibrium, calculate national income from the following. Autonomous consumption. This is A. Marginal propensity to save. This is MPS. What is it? Yes. MPS is 0.2. That means MPC will be 0. Investment expenditure is how much? 200. What are they asking us to calculate? C plus I in the place of C. A plus B of plus I. Now Y is equals to A. That is 100 plus B 0.8. What is it? 0. Of Y plus I 200. Now solve this. So 100 plus 200 is 300. Now the 0.8 will go to LHS side. 0.8Y will come to LHS side. This will become 0.2Y is equals to 300. So Y is equals to 300 divided by 0.2. Y is equals to. That's it. And we know that I is equals to yes. So how much is I? 200. That means yes is 200. In 1,500, if 200 is savings, how much is consumption? 1,300. Common sense questions like this. Clear, huh? Next, fourth one. Solve it. Suppose the consumption of an economy C is 20 plus 0.65, I is 10 plus 0.2Y. What will be the equilibrium level of national? Y is equals to C plus. Now Y is equals to, how much is that? 20 plus 0.6Y plus 10 plus 0. Simple. 20 plus 10 is 30 plus 0.6 plus 0.2 is 0.8Y. 0.85 will go to LHS side, so it will become 0.2y is equals to 30. Y is equals to 30 divided by y is equals to 150. Clear? Next, the fifth problem. This is even more easiest problem. Do it. Suppose the consumption function C is equals to 7 plus 0.5i. Investment is 100. Equilibrium, consumption, savings. See, you need to identify savings because I is equals to S. Savings will be how much? 100. Clear? Now solve it. Y is equals to C plus I. So y is equals to 7 plus 0.5i. 7 plus 0. Plus 100. 0.5i will come to LHS. It will become 0.5i is equals to 107. Y is equals to 107 divided by 0.5. Y is equals to 214. Savings will be 100. Consumption will be 114. That's it. When you know the formula, when you know equation, you can easily solve it off. Clear? Another 2-3 problems are there. Even in my material, it is given. Kindly solve them. Clear? Next, we will take up exam questions. Not a problem. Clear? Next, inflationary gap and deflationary. Yeah. Clear? I will extend little till maybe till 12:30 and then I will give a break. 12:30. Clear? Okay, listen. So, inflationary gap and deflationary. Yeah. So, what is that inflationary, deflationary? Let me take same laptop example. Now, listen to this carefully. This Q star is a full employment. What is full employment? Q star. 1,000 people can work. So with that 1,000 people, I can produce 50,000 laptops. How much laptops? 50,000. But in the economy, there is a demand for 60,000 laptops. How many thousand laptops? 50,000. Maximum, how much I can produce? 50,000 by appointing how many people? 1,000. There are only 1,000 people in the economy who can work, who is having the capabilities to work. I'm appointing each and every person and I'm only able to produce how many laptops? But demand is how much? Can I produce more? Highly impossible. Only left out option is increase the. Whenever price increases, nominal GDP will increase. Nominal changes only due to change in price, but real changes due to change in. But now what is changing? That means only nominal income, nominal output. See, x-axis represents output and income, na? Because of increase in price. Because of, let's say this 50,000 laptops, rather than selling for 1,000 rupee, now I will sell it for 1,200 rupee. Income is going to increase. That is, nominal income increases, nominal output increases, but real output, real income remains. That means now demand is at point G, but actually we can only produce at point F. Now there is a gap created, that is inflationary gap. Which gap? So how do I tackle this inflationary gap? Only by increasing the. That's it. This is inflationary gap. And when will this happen? Inflationary gap when there is a business cycle expansion. During the expansion phase, economy faces dash inflation. Complete opposite is deflationary gap. See, I can produce 50,000 laptops. How many laptops? 50,000. By appointing all 1,000 people. But in the market, now presently, demand is only and only for 40,000 laptops. How much laptops? How much should I produce? Hello, how much is demand? How much should I produce? But how much I am able to produce? Now what should I do? Throw people out of the job, get lost, 1,000 people not required, only 800 people enough to achieve this equilibrium of 40,000. So now equilibrium income reduced, equilibrium output reduced. Why? Because unemployment problem. Which problem? And such unemployment problem which is created because of insufficient spendings, that is called as cyclical demand deficient unemployment. Since demand reduced, instead of 50,000 demand became. Because of that, there is an unemployment problem in the economy. Such unemployment is called as cyclical unemployment. What is cyclical unemployment? Demand deficient is called as a. And when will this happen? During the business cycle contraction. That is called deflationary gap. We can produce 50,000 but demand is only 40,000. There is a defective gap of how much? 10,000 laptops. That is deflationary. Clear? So this is the concept of inflationary gap and deflationary. Next comes my favorite topic. What is it? Okay, common sense question. Now, let me ask you a question. You guys have to answer me. Simple. Now, Shashikiran is planning to establish one stationery shop next to college or a chat shop. All this Pani Puri, Bel Puri, Masal Puri. Which one should I open?
College.
College. A day next to college. ನಾವು ಅಡಿಗೆ ಮಾಡೋ ವಿಡಿಯೋ ನೋಡ್ತಿದೀವಿ ಅಂದ್ಮೇಲೆ ಗ್ಯಾಸ್ ನ ಆನ್ ಮಾಡ್ಕೊಂಡಿರ್ತೀವಿ ಅಂತ ಅರ್ಥ. ಫಸ್ಟ್ ಏನ್ ಮಾಡ್ಬೇಕು ಅಂದ್ರೆ ಸರ್ ಒಲೆ ಹತ್ತಿಸ್ಬೇಕು ಅನ್ನಂಗೆ ಇವ್ರು. Stupid friend. Now I have a 2 business plan. I have a 2 business. That means next to college. What is it next to? ಇವೆಲ್ಲ ಆಟ ಆಡ್ಕೊಂಡು ಫ್ಯಾಕಲ್ಟಿ ಆಗಿದೀವಿ ಕಣೋ. ರೆಗ್ಯುಲರ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಇವೆಲ್ಲ ಡೈಲಾಗ್ ಹೊಡೆದಿದ್ದಾರೆ. ಇಷ್ಟೊತ್ತಿಗೆ ಕಥೆನೇ ಬೇರೆ ಆಗಿರೋದು. ಮ್ಯಾರಥಾನು ಏನ್ ಮಾಡ್ತೀರಾ, ಟೈಮ್ ವೇಸ್ಟ್ ಮಾಡಂಗಿಲ್ಲ. ಚಲೋ ಫೈನ್. Now I have an option of 2. One is opening stationery, another one is opening a chat shop. Which one should I open? Why? Because people will come and buy more and more of chats, and who will come and buy more stationery, sir? Even though if I don't have a pen, I will borrow from my friend. But I can't borrow that masal puri from my friend. That is why. That means where people are ready to spend more, where people are ready to spend more, we will invest more. That means why am I investing? What is the intention of investing? Earning more and more income. That means there is a change in income. There is a because of change in investment. Because of change in this is multiplier formula, and that has a direct connection with MPC. Direct connection with MPC. What is MPC formula? Change in consumption because of simple. Strike of change in income, change in income. Simple concept. Where people are ready to spend more, that is where we are interested to invest more and more. Interested to invest. See, that is what. Where people spend more, there we are interested to. Why? Because we can earn more income. We can earn. When people spend more, when people so there is a direct connection with MPC. Direct connection with MPC. See, simple concept. Now there is one more formula for investment multiplier. 1 divided by MPS. What is it? 1 divided by? Yes. Or else it is called as 1 divided by 1 minus B. What is 1 minus B called as? MPS only, na? Now, okay, let me take some random example. MPC, MPS multiplier. That is 1 divided by MPS. Okay, suppose if MPC is, let me say, 0.3. This will be 0.5. Okay, 0.6. 0.7. Okay, 0.3. Now 0.9. 1. Now kindly calculate the multiplier value. Now 1 divided by, what is 1 by 0.7? 1.42 times my money will increase. How many times my money will increase? Next, 1 divided by 0.5. Next, 1 divided by 0.4. 2.5. Next, 1 divided by 0.3. Okay, next 1 divided by 0.2. 5 times. Next 1 divided by 0.1. 10 times. 1 divided by 0 infinite times. That means observe. When people spend more, when people, number of times my money getting multiplied is increasing. Rather than spending by mistake, if they save more, my multiplier will. So that is why it's a direct relationship between MPC and clear. If MPC keeps on increasing, multiplier will also keep on. So there is a dash relationship. MPC and multiplier has a positive relationship. Simple concept. How many times my income will increase? How many times my income will? 2 times, 3 times, 5 times, 4 times, 7 times due to change in dash, due to change in. That's it. That is investment multiplier. Formula is what? K is equals to change in income divided by. By using the same formula, can we identify change in income? Change in? Okay, change in income will be multiplier into change in. If you remember, I said, nah, there is one more formula. I will explain it later. I will explain it. Come back. What is change in income? Multiplier into change in investment. Multiplier into. Clear? Multiplier into change in investment. Multiplier into change in investments. Clear? Understood? Finished? Okay. Okay, look at the board. So what are all the formulas for investment multiplier? Change in income by change in investment, or 1 divided by MPS, or 1 minus B. MPC is also called as B. Clear? Now, what did I say? There is a direct relationship. Higher the MPC, higher the multiplier. So there is a dash relationship between MPC and multiplier. MPS and multiplier is negatively related. See, what will be the maximum value of multiplier? Whenever MPC becomes 1, multiplier will become infinite. Multiplier will become dash? Infinite. Clear? Just now we solved it. See here, whenever MPC is 1, multiplier will become. So what is the maximum value of multiplier? Infinite. When will that happen? When MPC becomes complete money is spent rather than saving. See, MPC is the main determinant of the value of the. There exists a dash relationship between MPC and the value of multiplier is nothing but reciprocal of. That means formula, reciprocal of MPS. There is a negative relation between MPS and multiplier. Clear? But now see that effect, whatever the multiplication happens now, that will not go endlessly. There will be some kind of stoppage. That is because of leakage. What are all the reasons for leakages? See, if you pay taxes to Nirmala aunty, it will act as leakage. That proportion of money, rather than buying goods and services, you are giving tax to government. Next, if you are keeping, simply if you keep cash at home, will it put extra 10 rupee note for every 100 rupee? No, no. That means buying already existing stock. That means last year closing stock is there now. You are buying from existing stock rather than buying from present year produced goods in. And one more danger is there. By mistake, if you money is only going outside country, money is going. And also problem if you buy shares in. This is not issued now. It is not an IPO that you are buying. Already issued some year ago. You are just buying from some person who is ready to sell. Next, undistributed profits of. That means I've invested on companies. Your company has made profit, but the stupid fellow not declared dividends. Next comes, what is it? I take a loan from my friend. I'm giving back. Rather than spending on goods and services, you are giving back that money to your friend. That proportion of money has not come to spending on goods and. Now comes the most important of all. When economy is already at. If you pump in any extra money into the system, that is investment multiplier. If you invest more money now, that will lead to inflation because money supply will increase. People get more money in the hand, they will start demanding more, but you can't match the supply. Prices will increase. That will only act as inflation. If economy is already at full employment and if you pump in more investment to the economy, that will act as dash. Leakages. What is it? Leakage. So when economy is already at full employment, where Keynesian theory is not proven, all your classical theories are proven. That means before they said, economy will always be at full employment. When economy is already at full employment, 50,000 laptops demanded, 50,000 produced. And there is also full employment. If you pump in more money now, people will get more money. Now they will demand more. 60,000 laptops, but we can only produce. What is the only left out option? Increase the price. Why price increase? Because of inflation. So these are the leakages. So in short, what do you mean by leakage? A simple concept. If the income is not spent, if the income is on current produced goods and services, then it is regarded as leaked out from the income stream. That is called as leakages. Clear? So this is the concept of two-sector model and leakages. Clear? Understood? Do one thing. 2:15, the time is already. Take a break. Better. Come back. We'll do 3-sector model, 4-sector model, and chapter 7. We'll try to finish unit 1 and unit 2. Couple of numerical problems are there. 1 or 2 will solve it in the class. Later, I will show it in the exam question. See, in an economy, investment expenditure is increased by how much? That means change in investment is. Stop speaking, enough, break is done, concentrate here. And marginal propensity to consume is 0 point. They're asking us to calculate total increase in income and increase in savings. They're asking for change in income and change in savings. That is what they're asking for. Now we have information about change in investment and MPC. So we know that 1 divided by MPS is also called as multiplier. So with that respect, 1 divided by 0.2, how many times? 5 times. Clear? So what is change in income? Just now I said you the formula now. Before the break, new formula. What is it? Investment multiplier into change in investment. What is multiplier? 5 times into change in investment is how much? 400 crore. 4 5s are. So 2000 is the change in income. Now they're asking us to identify even change in savings as change in income minus Change in consumption, but I don't have that. But we have MPC and MP. Yes, so change in income into MP. Yes. How much is change in income? 2000. Just now we identified. And how much is MPS? MPC is 0.8. So MPS is 0.2. Next answer is 400. See, we got this. Like this, the questions will be coming in the exam. Clear? So next question, last one. Next either. An increase in investment by
100.
So investment has increased by, and national income is how much? That is change in income is 1600. Investment is there, income is there. That means multiplier. First we will identify. They're asking for what? MPC, not for investment multiplier. What is investment multiplier? Change in income. What is it? Change in income because of change in investment. 1600 divided by 400. 4 4s are 16. So how many times? 4 times. So I got the value of K. That is 4 times. Clear? And there is one more formula for K. 1 divided by 1 minus B. So already I have a 4. 4 is equals to 1 divided by. So this will go. I will write it here. So 1 minus B is equals to 1 by 4. What is 1 by 4? 0.25. So B will come to RHS. 0.25 will go to LHS. 1 minus 0.25 is equals to B. So ultimately B is 0. So B is also called as MPC, that is 0.75. This is how the questions will be asked in your exam. You need to solve it. Clear? So let us go to the next topic. That is 3-sector model. Which model? See, straight away, let me go to the equilibrium concept. AD should be equal to AS. AD is an expenditure side. Now government is existing. Who is existing? So C plus I plus G is equals to C plus S plus T. See, whatever government spends, that is equal to the tax money received. Which money received?
Tax.
And C gets cancelled. So end of the day, it is I plus G is equals to S plus. That's it. Clear? And now national income equation, Y is equals to C plus I plus G. What is it? C plus? Clear. Now in the place of C, we can write it as A plus B of YD. What is it going to be? Because government is existing, income minus tax, that is direct tax. Clear? So ultimately national income equation, A plus B of Y minus T plus I plus G. So this is going to be the national income equation. Clear? So this is 3-sector model. Y is equals to C plus I plus in the place of C. What is it in the place of? What should you write? A plus B of Y minus T, because it is YD now, because government is existing. Government expenditure will come, tax will come, and also there is a concept of transfer payment. Suppose if there is a transfer payment, it is Y minus T plus TR. Clear? So 3-sector and 4-sector is typically a mathematics class, not even a economics it is. See, same to same explanation. Y is equals to C plus I plus G. Ultimate equations here. A plus B YD. What is it? YD. That is disposable income. YD is a disposable income. Clear? Same to same graph. This is only C. Next C plus I. Next C plus I plus. One more extra line. G will come into a picture. Now tax is also collected. T will come into a picture. See, observe. S plus T is equals to I plus D. Usually you don't get the question from the graph. Now 3-sector model flow chart. Simple. Government, business and household. Now same to same. Household will give all the factors of services to whom? Business. Business will give the factor income. They will buy goods and services from business. They will give goods and services to household. This is the simple line. But now we are complicating it. We are bringing it as a product market, finance market. Now household will bring all their factors of services to the which market? From there it will go to whom? Business. And in return, business will make the payment in the factor market, that becomes income to the household. Once they get income, now they will also spend to buy goods and services in which market? And whatever goods that they have produced from the business, that will come to product market. These people will buy it from the product market. Income goes to the business. So in between, we are bringing something called as product market and financial market. Clear up? Now, whatever income that household will earn, they should pay also taxes to whom? And government can also give a transfer payment to whom? If any money is left out, that will come to the savings. That is which market? Now from finance market, government will also borrow, business will also borrow. Now government will collect taxes from both, gives transfer payment to household, subsidies to, and government will also purchase goods and services from, and raw materials are also bought by the business from Product market. That's it. This is the flow chart. Usually you will never get it, but you should understand. You should what? See, there are 3 types of problems that can be asked. Number 1, government expenditure or the government sector in income determination. See there, income determined with lump sum tax. Which tax? See, no complication. Same to same. This is the portion of C. This is I. This is G. Now, when we derive this equation, end of the day, the derived equation looks like this. See, 1 divided by 1 minus B. What is this? Multiplier formula. Which formula? Clear? See, usually this is inter-level problem, which I usually make students to solve in the class. Advanced level problems. Next, the second type of problem, lump sum tax and transfer payment. I said now, in the place of YD. What is it in the place of? It is Y minus tax plus TR. That's it. Now, the third option is little interesting. See, tax is given as a function of income. What is given as a function of income? See, if you remember, consumption will be A plus B of YD. A plus B of? A was autonomous, B was induced. Same way, even tax will be having autonomous and induced part. This T dash is autonomous, small t is induced. T dash is? Small t is? So rather than giving just a tax, they will give equation for tax. What they will give? See, ultimately this is a derived equation. And see the multiplier formula? Now multiplier formula has changed. When tax is given as an equation, 1 minus B of 1 minus T. The small t is the induced part of tax. What is it? See here. Now tax 25 plus 0.1y. That means when you are writing this equation, y is equals to c. In the place of c, what you should write? Plus 0.5 of y minus t. That is 25 minus. It should not be plus induced part. When you are writing inside the bracket, it becomes minus. So minus 0. That's it, plus I. How much is I? 80 plus G. How much is that? See, this is equation. Now for this, in order to identify multiplier formula will be 1 divided by 1 minus B of 1 minus T. Clear? So here, in this case, what is the small b? Let us calculate. 1 divided by 1 minus b. What is the value of b? 0.5. What is small b in small t? That is 0. So 0.5. And 1 minus 0. See, this is where ICU students be careful. This is where you will go wrong. Do you know what you will do? Sir, 1 minus 0.5 is 0.5. Next, 1 minus 0.1 is 0.9. 0.9 into 0.5. Wrong. This is wrong. You should never do it like that. First, what is there inside the bracket? First, you should solve that. That means, first you should solve this. This will become 0. Then you should multiply that with 0. So how much it will be? Calculate. 1 divided by 1 minus. Now 0.9 into 0.5. 0. So ultimately, this will be 1 divided by 0.55. Answer is 1.82. Clear? Like this, multiplier questions will come when tax is given as an equation. What is given as equation? And upon that, they will give transfer payment. Which payment? Now that means plus TR. What is it? Now see there, YD. What is it? Income minus T dash minus TY plus TR. This will be in the equation. See, whenever transfer payment comes, at last you should just add that transfer payment plus TR. And since tax is equation, now see the multiplier formula. Still multiplier formula is 1 divided by 1 minus B of 1 minus T. That's it. This is 3-sector model. Clear? Last but not the least, which sector model? So in the 4-sector model equation, see AD should be equal to AD component. Which are the AD component now? C plus I plus G plus X minus M is equal to AS component. C plus S plus T. Now CC gets. Now observe, this minus M will go to RHS side. Why? If you remember, I said AS is a leakage. What is AS? Import is also a leakage. When you import money, money will go outside the country. It is a leakage. And whenever you export, we should receive money. This will be injection. This will be what? Injection. So that's the reason. Now it will be C got cancelled. Now it will be I plus G plus X is equals to S plus T plus M. This is 4-sector model equilibrium. 4-sector model? Now when you're writing national income equation, which equation? So Y is equals to C plus I plus G plus X minus M. when you're writing this in the place of C, A plus B of YD. Why? Because government is existing. When government is existing, we will be having YD. What is that YD now? Income minus tax. If there is a transfer payment plus TR. So ultimately, what is equation? Y is equals to A plus B of Y minus tax plus I plus G plus X minus M. Clear? Now, there is one more twister in this. Sometimes they will give import as an equation. That M is given as a equation. M dash plus small m y. M dash plus this X minus M. Last one. Observe this X minus. This M is given as an equation. Suppose if M is given as an equation, remember this carefully. Now multiplier formula will change. Which formula will change? 1 divided by 1 minus b plus small m. 1 divided by 1 minus b plus. So total 3 multiplier formulas are there. How many multiplier formulas are there? See, in normal scenario, which scenario? What is the multiplier formula in normal scenario? 1 divided by MPS, or else it is also called as 1 divided by 1 minus B. Clear? That is MPC. Next, second one, when tax as equation, what is it?
Tax as equation.
That means now 1 divided by 1 minus B of 1 minus T. Now this is the formula. Now third one, when import as equation, what is it?
Import as equation.
Import as. Now 1 divided by 1 minus B plus M. Clear? Kindly copy this down. So these are the 3 different multiplier formulas for 3 different scenarios. You have to be careful. 3 multiplier formulas for 3 different scenarios. Three multiplier formulas for 3 different scenarios. Clear? Okay, let's go to the exam questions. See, 3 sector and 4 sector, more than concepts, you need to understand this logic. Clear? So, we need to understand what is leakage, what is injection, what comes under AD and what comes under AS. That's it. 3 and 4 sector, there is nothing much over there. Clear? Okay, now let us go to the exam questions. Okay, first let us see the May attempt. Chapter 6, yeah. See there. Which of the following organization is responsible for computing state incomes? Who will prepare? Directorate of Economics and? But who is responsible to assist them? Central Statistical. Okay, next. From the following data given table, calculate the formula for inflation. Present year deflator minus previous divided by previous into. Take out calculator. Now they are asking the inflation for which year? Only for this third year. See, we have a deflators already. So 144 minus 125. What is it? 144 minus 125 divided by 125 into 100. 15 point. Clear? Such an easy question. Next, which of the following defines the gross national product of the country under the concept of? What is asking? Gross national. Second alphabet is N. That means NFIA should be included with the GDP. Clear? See, it is the market value of all final goods and services produced within the domestic territory of the country, excluding NFIA. It is a market value of all final goods and services produced within the domestic territory, including NFIA. It is the production cost. Which cost?
Production cost.
No way. It is always a market value, not a production cost. It will not be factor cost. Production cost is factor. Option B is the answer. Clear? Next up, the gross domestic product at factor cost. GDP FC is calculated by which of the following formula? Here, GDP MP stands for gross domestic product at. They are asking which formula is correct here. See, GDP FC. What is it? GDP? From GDP MP plus NFIA minus depreciation. If you add NFIA, second alphabet D will become N. Wrong. Next, GDP FC. GDP MP plus NFIA. Same problem. This will become N. Wrong. Next, GDP FC is GDP MP minus Nirmala Aunty plus subsidy. Okay, next, GDP FC, GDP MP plus Nirmala Aunty minus subsidy. Already MP. Why will you add once again Nirmala Aunty? Wrong. So, which is the correct formula? See, even from formula you will get. That is why shortcut I thought how to remember. What is the difference? 3 important differences. Next, which of the following is included in the calculation of? Which is included in the calculation of? Under the concept of national retained earnings of the organization. That means business organization. Retained earnings means reserves. No, is it your personal income? Personal income belongs to whom? Households. Unemployment compensation. Yes, transfer payments. Next, indirect business. That goes to government. Next, contribution towards. These are incomes earned but not received. PF. So what is the answer? Unemployment compensation. This is transfer payment which should be included in personal income. Next, which of the following is true in relation to the private income under the concept of? So who will get this private income? Private sector from all the sources, whether inside the country or it is the income, both factor income as well as accruing to which sector? From dash sources, either inside the country or clear. Next, which of the following is true about the dash price? Market price, factor cost, base price. In between, 2 types of indirect tax will come into picture. Production tax, product tax. We did that. Where is that? Here, see. Already we have done this. See, base price. Now see, base price is factor cost minus depreciation. Is it true? Next, base price, factor cost minus manufacturing tax plus manufacturing. Is it true? No. Next, manufacturing means product tax. Which tax? GST. Next, factor cost. Base price is factor cost plus NFIA. Next, base price is factor cost plus production subsidy. No, this should be minus production subsidy. There was an error in this attempt. For this, they have got a grace mark. Answer is option D. It should be minus subsidy. That is production subsidy plus production tax minus. Next, which of the following is an indicator for the standard of living? The amount of money in the hands of the individual that is available for their either consumption or disposable personal in the hands after payment of tax, which you can dispose. Disposable personal. See, under the Keynesian theory of determination of national income, the assumption is that the consumption increases when the increase in the but the increase in consumption will be less than APC. Whenever income increases, APC keeps on decreasing. That is what yesterday also we discussed now. Same demand concept. Proportion of income. When it is increasing, proportion of consumption keeps on decreasing. Lesser than. Next. Which of the following statement is true? MPC plus MPS should be equal to 1. Yes, MPC is equals to MPS. No. MPC plus MPS 0. No relation between MPC and MPS. Which is the answer? Clear? Next. Which of the following is not a sector in the 3-sector model? That comes where? 4-sector model. Next, under the Keynesian theory of national income determination, which of the following term is given in the demand for money? That is liquidity preference. Connection is there in chapter 8. Keynesian theory of liquidity preference for money. This has a connection with chapter 8. Speculative demand for money, liquidity preference, holding money in the hand. Okay, next. I think that's it. Yeah, just calculate how many questions have come. 1, 2, 3, 4. Wait. This is not there. Supra-regional sector. Chapter 6 only. See there, in the preparation of state income estimate, certain activities like railway, banking, I said now, one state it will cut the borders of the other state. How are they going to be considered as supra-regional sector? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. One more year, 15. See, which of the following is not a significance and usefulness of national income? I said the theory part. One question may come. See, that is what? To assist for making related to proper population growth. No, not. And national income speaks about productivity growth. Which growth? Not about the population growth. Clear? Total 15 questions. How many questions? I said, nah, chapter 6 alone will carry 15 questions. See, 15 questions was there. Okay, let's go to the September attempt paper. Straight away, we got chapter 6 here only. The consumption function. Which function? Is a dash relationship between aggregate consumption and aggregate disposable. AD should be equal to AS. Aggregate expenditure is AD. Income is AS. Clear. Next, the value of the final goods and services produced where? In the country, within the given period of time. GDP. Where it is? In the country. Where is it? In the country. Next, if the GDP MP is more than GNP, what is it? GDP is more than. That means NFIA is negative. You know, GDP plus NFIA should be GNP. Suppose after doing that, GDP itself is greater than GNP. That means NFIA is negative. Next, which of the following is not true about the? It is an income received by household sector. Yes. It includes non-profit institutions serving household. Yes. It is a measurement of actual current income received of a person only from the, although not even production activity, even incomes received but not earned. Earned means after leading to productivity. That only happens in national income, not in personal income. It is a excludes of retained. Yes, retained earnings means company has not yet issued it. That means still it as a reserve. That means incomes are earned but not received. Yes, option C is not true. Next, calculate average propensity to. What is asking? Average propensity to save. What is APS formula? Savings by income. Consumption is 300, income is 1000. See, 1200 minus 300, savings will be 900. So now 900 divided by 1200. 0 point. Marginal propensity to consume will always be greater than 0, lesser than 1. Between 0 and 1, greater than, always less than 1. Unity means 1, but greater than. Greater than 0, but lesser than 1. That is the value of MPC. MPC plus MPS put together. See, what is another name for value added method? Industry origin method. Now calculate this. In a 3-sector model. Which sector model? That means C, I and G. Now C is 8 plus 0.6 YD. What is it? YD, disposable income is there. I is 60. G is equals to T. T is also how much? G is also how much? 10. Now calculate. Equation will be what? 8 plus 0.6 Y minus 10 plus 60 plus 10. Do this. Solve this problem and let me know the answer. C plus I plus G. See, this is why I didn't go much detail with 3-sector. Only simple problems will come. Solve it, let me know the answer. Everyone got 180? Are you guys getting 180? Others respond. Hey, simple maths problem, man. Next, see, 25th one. In an economy, investment expenditure is increased to how much? That means change in investment is how much? 300 crore. And marginal propensity to consumers. They're asking what is the total increase in? That means change in income. What is formula of change in income? Change in income formula. Change in investment into multiplier. I said, nah, this is where the formula comes in. You guys will make it wrong. See, first identify multiplier. K has to be identified. See, they have given MPC given. We know that MPS is required. 1 divided by MPS. So MPC is 0.6. So MPS will be 0. What is 1 by 0.4? 2 point. So 2.5. They have only given change in investment. So 2.5 into 300. 750. Answer is how much? Clear? Anyone finding it difficult? See, easy problem. Next, already we solved this 26th one. 27th one is also done. Nominal GDP is also called as. See, the investment multiplier is defined as the ratio. See, whenever you see this word ratio, that means they're speaking about formula. What are they speaking about? What is investment multiplier formula? Change in income divided by change in Option D. Clear. Next, the ratio. What is it? Ratio means formula. Total consumption to total income. What is the total consumption to total income is called as average propensity to consume. See, the questions are coming from formulas. Next, question number 32. See, while using which method? Which of the following is included in calculating national income? Capital gains. No. By selling property, whatever we earn. Windfall profits. TV game shows and all earning. Income from sale of dash goods. No. But if there is any commission in, yes, commission and brokerages included. These things are not included. That's it. See, calculate how many number of questions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. See, 15 questions. So, chapter 6, you can't ignore at all. Unit 1, unit 2 put together, how many questions will come? 15 questions will come. Okay, in the next attempt, let's see how many questions are there and what all questions were there. So, September 24 attempt question paper, this is. The ratio, again, once again, what do you mean by ratio? Formula. Between nominal GDP divided by real GDP is GDP deflator. What is the GDP? Deflator. Already we solved this problem already. 42 done. Next 43. Solve this. See there. If GDP MP 6,700 crore and depreciation is, they're asking what? GDP NDP. What is the difference between G and N? They have only given simple problem. 6,700 minus 530. 6,100. See, donation of marks. What is it? Donation of marks. Simple. 6,700 minus 530. Next, suppose the consumption in the economy is given as C is 30 plus 0.5I and I is 12 plus 0.15I. What is the equilibrium level of national? Simple. C plus I. Simple. 30 plus 0.5I plus 12 plus 0.15I. Do this. Easy problem. Such an easy problem it is. Answer. 1. Everyone got the same answer? Next, which of the following refers to the mixed income of self-employed? First tell me what is mixed income? Capital and labor both are provided by the same person, and when we are unable to divide between capital income and they respond between capital income and combination of factor income which are not distinguishable. What does disposable personal income? Personal income minus direct tax. Income earned by the individuals which have for consumption or after the payment of tax, either we use it for consumption or for. Next, which are the phases incurred in the circular flow of income? Production, distribution, disposition. Which of the following is not the limitation in computation of national income? This theory you have to read. I said na read only concept. One question will come from that area. See, quality improvements due to technological. See, that is not a limitation. That is actually advantages. Next up. Which method measures the contribution to the each production entity in the domestic territory? Which territory? Over the accounting year by considering the production of each industry less intermediate purchase. Output minus intermediate purchase. Which method is that? Value added. Now, in the 3-sector model of closed economy, 3-sector model of? What are the 3 components in the 3-sector model? C, I and G. C, I and G. Next, according to Keynesian theory of income and employment, national income depends upon aggregate demand. I said na, AD side. The entire focus in Keynesian theory is on which side? AD side. Next, which of the following is not a correct formula? Which of the formula is not a? NNP MP. GNP MP minus depreciation is G minus depreciation is N. Next, NNP MP. NDP MP. D is there plus NFIA becomes N. Correct? NNP MP. GDP MP. G is there. N means plus minus depreciation. Here D is there. Here N plus Yes, it is correct. Next, NNP-MP is NDP. Here D is there. So plus NFIA should come to become NNP-MP, but they have made minus already. And why will you subtract depreciation? Once again, this is wrong. See, even from formula questions are coming. You should know how to identify the correct formula and which is the wrong formula. Next, the state level estimates are typically prepared by who will prepare? Who will assist them? I said now this is most repeated question in the off-late attempts. Next, what will be the total income? What will be the? That means income they are asking there. If the value of average propensity to consume is 0. Already they have only given APC value and total consumption is given. They are asking for total income. What is the formula for APC? Consumption by income. They have given 0.45 already. Consumption is given 900. So we need to find that below X. So X will go to LHS and it will come to down. 900 divided by 0.45. Answer. See, donation of marks. Next. What will be the GDP at market price from the following data? What is the information we have? What are they asking for? So N is there, D. How do you go back from N to D? Minus NFIA. Simple. 1100 minus. That's it. Again, donation of marks. Simple concept. See, such a simple concept. That's it. See how many questions have come calculated. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Every single attempt, chapter 6. How many questions are you guys getting? 15 marks. You can't ignore chapter 6. So 2, 3, 4, 6. Put together, you will get how many marks? 55 marks. How many marks? 50. See, chapter 1 and chapter 5 is 10 marks, na? Chapter 1 and 5, you just remove that, 10 marks. That means 2, 3, 4 put together, you have 40 marks. 6 alone, you have 15 marks. 40 plus 15. Along with the chapter 1 and chapter 5, another 10 marks. 65. There only you got 65. Out of 100, in first 6 chapters, in first, you are getting 65 mark. Already you have crossed 60, na? All 6 chapters was easy. There was nothing difficult in that. So easily, that is what I said. With aram, with ease, you can score 60 mark. See, still another 4 more chapters are pending. Chapter 7, 8, 9, 10. From that remaining 40 marks is going to come or 35 marks is going to come. Clear? Understood? Okay, now let us go to the next chapter. That is chapter number 7. So any doubts in entire chapter 6? Before moving to chapter number 7. So minimum, chapter 7 and all, it will not take much time. Full storytelling. What is it full? I will give you the only trailers. No full stories and all. Only trailers. Because full story and all, we should do the class. Now, only highlight important areas I will cover here. Clear? It hardly takes 45 minutes to finish the chapter 7. It will not take much time. 4 units are there in total. How many units are there? Where and all questions are coming, important areas, I will say. You have to sit, you have to study in detail. Clear? We will do just a normal revision. See, 4 units are there. First one, public finance. What is it? Public finance. In that, fiscal functions as an overview. Now, simple. See, why government has to intervene? Why government should perform? See, rich people will not contribute to the poor people's welfare. Now, let's say Shah Rukh Khan, rich individual. Will he come and identify the poor people and will he help them? No. So, government will come. Government will collect tax from rich and they will provide benefit to the in the form of social welfare activities. That is why government should need it. Let's go back. Keene said, classical economists said that government intervention is not at all. Government, let me say, economy will always and always be a dash employment, full employment level of output. Always stability will be achieved. And that is why they say the role of government is either limited or full. Capitalistic economy, no government intervention. Socialistic economy, complete government intervention. And that will define the basic problems of economy. What to produce, how to produce, for whom to produce. And 3 types of economic system is there. Capitalistic, socialistic and... Now, this is important. From the words of Adam Smith. See, Adam Smith said, even I am a follower of a free market economy. But there are 3 areas. How many areas? 3 areas. The resource allocation role has to be compulsorily done by whom? Which are those 3 areas? National, maintenance and justice of establishing and maintaining public institutions and Only and only in this three area, exclusively government has to allocate the resource. In remaining, we will follow. That means demand and supply, private players will operate. And see, in 1930, because of Great Depression, importance of government role has been made. Even today, few countries have a major control, few countries have a lesser control in the nation's government. So, government role has become importance only after the Great Depression, only after the and that is why Richard Musgrave came into a picture. Now, Richard Musgrave said, boss, I have introduced a concept called as three-branch taxonomy. Now, that three-branch taxonomy will be useful to understand. Number one, allocation of resources. Number two, redistribution of income and wealth. Last one, stabilization. That is macroeconomic stability. Which stability? The first two speaks about microeconomics. Which economics? The last one, stabilization, speaks about. See, I will just give an overview. What all happens here? Here, allocation of resources. See, if at all we give resources to the hands of private people, these stupid people, they will not allocate resources properly. Either they will overproduce something or either they will. We believe that perfect allocation of resources can only happen in which market? But in real life, do we follow perfect competition market? No, we are following monopolistic competition. But the problem is for private goods, there will be sufficient allocation. But for the public good, there will be insufficient allocation. So government has to take the control. Why? For private people, if the resource goes in their hand, either they will underproduce or either they will overproduce certain goods and services. So that will lead to ultimately dash failure. So government should intervene. Government should do the allocation of resources. How they will do? They will intervene. They will decide who and what will be taxed, how it will be spend that particular money. Resource allocation is from the hands of private to public. Like this, we will follow certain things. We will only directly come to the market and we will produce things. And government will influence the private allocation, what to be done, what not to be done. We have Competition Act. According to that, we will regulate. In short, we will do maximizing of dash welfare. That is allocation role. Next comes redistribution of income and wealth. Simple. Collect more taxes from rich and give that money, whatever you have received, benefits to the poor people. Redistribution of income. What is it? See, both income and wealth has to be distributed in a fair manner, especially in a democratic welfare state like India. First, by the people during election. After winning, for the people. If they speak more, kill the people. That is in reality. But our three pillars of constitution speak something else. Clearer? In short, all this. See, examples they have given. How do? We collect progressive tax. If they earn more, they will contribute more. And we are using the progressive tax for all the welfare of the below poverty line people, lower income people. And also we will give employment reservation. And also we will provide the welfare to the citizens in the form of providing proper health and well-being. And also special schemes for whom? Backward region. And also for democratic welfare state, free and subsidized. See, our governments and all forgot this word subsidized. Karnataka government especially. One and only. Next, Karnataka is also free. Anyone can come and purchase. Next comes, what is it? Stabilization function. Which function? This is macroeconomic stability. Which stability? That means here again your best friend will come. Who is that? Kings. See boss, business cycle is a natural phenomenon which keeps on occurring and that will make the economy to fluctuate. We need to bring stability in dash. Employment, capital utilization, usage of output and income, general price level in economy, international trade and rate of economic. These all gets fluctuated because of business cycle. We need to bring balance. And such balance will not automatically happen to generate a full or to bring a price stability. So government should invariably come, they will follow dash stabilization policy, deliberate stabilization as per the will and wish of government. See, especially because of instability, there will be a recession or if it prolonged and it will create a lot of trouble to the people who are having a hardship. Which are those people who are having hardship? So, and there is also a problem of stagflation, lack of growth and development, inflation as well as unemployment will exist side by. And there is also one more problem called as contagion effect. That means problem starts in one country. It also affects the business cycle. That is what we studied now. It starts in one country. It affects the. So that is also called as contagion effect. So what government should do now? Government should come up with their. What is it? Government expenditure. Already we spoke about this now. See what they have to do here. Keynesian theory. Where is it? See here. When there is an inflation in the economy, government expenditure should, tax rate should, or follow both, combination of both. What is it? See, the entire fiscal policy, this is what chapter 7 is all about. Entire monetary policy, this is what is chapter 8 all about. Now we are only speaking about these two. Fiscal policy tool. When there is inflation, decrease government expenditure, increase. When there is deflation, increase government, decrease the. See, that is what on the expenditure side, when economy is not performing well, government expenditure has to be injected. That will bring more money. Reduce the tax rate. People will get more money in the hand. In order to combat recession, in order to combat, government should increase its expenditure and cut down all type of taxes or adopt combination of both. During inflation, complete opposite. Cut down government expenditure and raise the taxes. In terms of budget, what you should do? You should not spend more in inflation now. You will have left out money. So there is surplus budget. Which budget? During inflation. During deflation, there is a deficit budget. We'll study that. Next third unit. Clear? That is unit number 1. Just a intro. Just a. Now comes the major movie. That was trailer. Unit number 1 was. Hello, full storytelling. That is what I'm saying. This is revision. What is it? Revision. In detail, if you want to go, tomorrow Allah, even after 1 week, we will not finish. Chalo, next. Market failure and government intervention to correct market failure. What is it? Market failure and government intervention to correct. So, first of all, why do markets will fail? Already we said now, if resource goes to the hands of private people, stupid fellows, they will not allocate resources properly. Either they will overproduce or either they will. So that leads to market failure. Like that, there are 4 reasons. How many reasons are there? 4 reasons. Number 1, monopoly power. Because private people are becoming super big and they are becoming monopoly, stupid fellows, they will lead to market failure. Second one, because of Shashikiran, manufacturing bottle, chemicals and all, discharge to river water, externality, pollution, because of those. Next, because of incomplete. All of these are important. This is where major questions will come from this chapter. Marked on, full on, entire unit 2 important. Full, unit 2 full important. Very first one, market power. Which power? That means all these private players, they will become super duper big. They will become a price maker. They will become what? And he will become the only producer or maybe small number of producer. They will intentionally create inefficiency in the market by charging dash prices and intentionally producing dash output. See, intentionally produces less, sells for high price. That will lead to market failure. Second one, externalities. There are 4 types of externality. Positive production, positive consumption. Negative production, negative. I will explain all the 4. See, what is externality? That can either happen in consumption or either happen in. Either it can bring the negative effect or either it can bring the. Both are possible. See, spillover effect is another name, neighborhood effect is another name, third party effect, and famously known as. Such externality can be passed on just one person to other person or both, creating disturbance for each other. Simple. Let's say, for example, you are going to study, but your sister and brother is not allowing you to study. They are playing a loud noise in TV and disturbing you. You got irritated. First, it was only. Later, you will say them multiple times. They will not listen. You will go out, take the remote, turn off, and bang on their head once in that same remote, and you will come back. Reciprocal. Clear? See, such externality can be either positive or either. See, mainly positive externality and negative. Positive production externality. Because of production, there is something positive that is happening. Now, Shashikiran, let's assume I will take you people in my market research firm, in my business, and I will train you people. And after training, I will say, I will give you a full-time opportunity, 30,000 salary per month. But 30,000 salary? Your competitor is giving 50,000 salary per month. Shashi sir, tada bye. Now, who trained you? Shashikiran. But who is getting benefit? Competitor. See, because of our contract, third party getting affected. Same fisherman. Where is our fisherman? No, fisherman. Jaga changed. Like that. See, always and always third party gets affected. Who gets affected? Such effect can be either in positive way or it can be the. See, positive production externality. I trained you people, but who is getting benefited? Competitor is getting benefited. Positive production externality. Next, positive consumption externality. What is it? Positive? Let's say early morning you will go for gym or yoga classes and all at 6 o'clock, 5 o'clock in this chilled weather in Bangalore. And your mood improved, your productivity improved, your energetic whole day. Because of that, you are able to do better work. Now, because of your private gym subscription, who is getting benefited? Your boss at the, let me say, office. Positive consumption. Next, negative. Shashikiran, water bottle, discharging into the river water. Fisherman is unable to catch fish. Negative production. What is it? Next comes negative. Cigarettes. Acid smoking. See, the person will go at 8 p.m. to the bar and he will drink 8 p.m. and he will come to home at 10 p.m. and start fighting with wife at 10 p.m. Neighbors will getting entertainment. Negative consumption, externality. Because of his consumption, there is a third party getting affected. Who are the third party? Neighbors. Pakkan manevaru. Clear? See, are the 4 examples. Now, for us, biggest headache is negative externality. Which externality? This has to be controlled. When there is a positive externality, we should encourage its production and consumption. Encourage the production and in detail, same to same with the example I have given here. Clear? Private cost and social cost, external cost. Already we did with theory of cost. If you remember, fisherman, whatever that bottles I'm selling to who's my customer, by the way? Who was the customer? Dev. Now I'm selling to Dev. That is only just a dash cost. Did I include any external cost? No, but real cost to the society is like economic cost, accounting plus opportunity, same way, private plus that is the social cost. Conclusion, the biggest trouble comes with which externality? So a competitive market will provide either too little output or that is not desirable for a social optimal. So this is a clear case of where price fails to provide a dash signal. Next comes public goods. Simple and most important concept. Simple. Public goods will create utility. Private goods will also create. But you should buy the private goods. Will you get for free of cost? No. But public goods will not pay anything at all. Street. Next day you are walking on the street light in the road. Night time. Are you going to pay 1 hour 10 rupees? 1 hour 50 rupees. Like this. No. That means you are not contributing for that sufficiently. That means there is non-rival, non-excludable. What is it? Non-rival? Someone cannot come and stop you from using it. Non-excludable. And even though if you don't pay, you can still use it. Non-rivalrous. When you are using, someone else can also come and use it together. And it is collective in nature. There is no requirement of direct payment. Suppose if 10 people are walking on the road, if the 11th person comes in, does government incurs any additional cost? No. Additional resource cost is 0. And biggest problem, no one is willing to contribute, but everyone wants to enjoy. But that will not happen in private goods, because in private goods we have only if you buy that, only if you are having it, you can use it. Even that will create utility, but you must purchase. And it is rivalrous. When you are using it, others cannot also not use it simultaneously. And it is also, if you don't pay the fees, will ArivuPro Academy allow you to come and sit in the class? No. See, private consumptions are excludable. You have to pay. And there is no problem of free rider, but there is an additional resource cost involved. If 50 students have taken admission, if 50 first student take admission, as for him also one seat, material, Shashikiran should clarify the doubts. Additional resource cost is involved in the private good, but additional resource cost is not involved in the, this is the main difference between public goods and kindly mark it as important. This is the important topic. The most problematic in public good is dash problem. Simple. See, people are not willing to contribute, but they want to enjoy. If everyone wants to do the same thing, now private market, which market? That means free market economy. Private players, will they come up with any public facility? No. If you are willing to pay, I will come up with that facility. If you are not willing to pay, why should I come up with? Simple. Now I will say, see boss, I will come up with one public park. Full nice gardening, everything, water fountain and all. I will create full new beautiful environment and all, like all our flower shows and all there now. Like that I will maintain. But entry fees is 50 rupee per person. Entry fees is? You will say, get lost, I will not come. Okay, I will also not provide. That means private market. Which market? That means free market economy will never come up with public facility if you guys are not willing to pay for it. That is the problem of free rider. Problem of? Or even if you want to provide it, like our nice road. Bangalore has nice road, na? That is private road. You need to pay excludable public good. Which good? Only if you pay the entry ticket, then they will give you access for nice road. If not, will not give you access for. See, that is a private road, not a government belonging road. That is a private property where you need to pay and then you need to get access. If you're not willing to pay, excluded. Even government does the same. If you're not willing to pay, excludable public goods we provide in order to tackle the free rider problem. Next comes, last but not the least, most important. Market. Questions have been repeatedly asked here. Questions has been asked here. Repeatedly the questions have been asked. Incomplete. See, first understand what is complete information. What do you mean by complete information? When both buyer as well as seller has an adequate knowledge. As a dash knowledge? about what transaction they are entering. That is called as complete information. But there is an incomplete information. How? Let's take second-hand car example. Assuming now Shashikiran is a car dealer. Who is Shashikiran? Now Dev, he wanted to buy one second-hand car. I will inform Dev, hey Dev, this car is superb. Just press button like this. It goes like rocket. Full I will bluff. I know that car has met with an accident. That car has a damage. Full repair work is there. But I will bluff and I will sell it to Dev. Now Dev, did he had a complete information before buying? But who had a complete information? Shashikiran, seller. Seller knows more information. Buyer does not know more information. This is incomplete information. Because of incomplete information, buyer will take a wrong choice. Buyer will take a that is called incomplete information. Sir, why will that incomplete information happens? Because the customer is asking something highly complex informations. Like for example, sir, you said now investment is good, mutual fund and all. Okay, I will invest. After 3 months, what will be the return? Can you say? How will I know? Market performance, na? How will market perform? How will I know? How will it perform tomorrow? How will it perform after 15 days? In between, stupid fellow Trump is there. He will come in between into this policy sometimes. When everything is going good, he doesn't like that. He wants to interfere every time. What to do? So we can't, because the information what you're asking is highly. Sometimes you don't get the information dash quickly, cheaply, find a dash information. Sir, I want to join good college. According to you, what is good college? Even if you bunk, they should not ask. Even without asking any penalty, they should give you all tickets during the exam time and all. Such good colleges and all, cheaply, quickly and all, we don't get. The next, consumer misunderstands the true cost and true benefit because they are uncertain about the true cost and true. Now I will say to them, this car is worth 1 crore. For you, I will give just for 3 lakh. Just for. In reality, that car is not even worth 50,000 after accident. That is what happened. Most of them, all these Rummy circles and all, Rohit Sharma's Lamborghini car they gave, na, full. That people who has particular knowledge, they will never buy that. Next, people are ignorant. People are what? Power. People doesn't know many things. Or they don't know many matters in the. That is why we put to white one, right? Whoever has knowledge. Simple. Next, they will end up taking a dash choice because they are not having a incomplete data. They have a which data? And consequently, they will potentially make a dash choice. So there are 2 types of incomplete information. First one, asymmetric information, also called as nimbe handina tondare. Lemon's problem in Kannada. Nimbe handu means lemon. Problem. Nimbe handina tondare. What is that? Simple. Car example only. Only one person has full knowledge, other person don't have a. He will end up taking a wrong choice. Lemon. Lemon means wrong one. That means market is completely filled with lemon. End of the day, market is nothing but offering only and only lemons. Only and only. See, because of asymmetric information, imbalance in the information. What is it? Next one, adverse selection and moral hazard. See, because of asymmetric information, because of what? Now they will make a dash choice. Wrong choice. Because of wrong choice, markets are going to fail. That means in a second-hand car market, there is nothing but only lemons. Whatever is there in the second-hand showroom, only defective cars. Any good car comes to the market, Shashikiran will call up his friend separately and backdoor only he will send off that car. It will never come to showroom. Assumption, I'm not doing that. She's like, oh, you don't listen all that. Assumption. Next. Next comes moral hazard. Which hazard? See, sometime party who has a knowledge, he will be neglecting. What is he doing? Because of the neglect of a person, the other person takes advantage. Other person takes patient and doctor example. Let's assume patient has a health insurance. He is least bothered whether doctor uses simple procedure or complicated procedure. Who will pay the bill? Insurance company. Now, if doctor does unnecessary procedures and all, later insurance company will say, I will not pay. Now, who has to pay? You should have observed whether doctor is giving a proper treatment. You had a problem in heart, but they are doing brain scanning. Why? To increase the bill. Stupid fellow, you should have questioned, right? Now, insurance company will say, why should I pay? His problem is related to, why did you take leg scanning, brain scanning, kidney scanning? Why was it needed? No, I'm not paying. See, moral hazard. Moral. See, it is characterized by informed person taking advantage of less informed person through unobserved. Informed person is doctor. Less informed person is taking, that is patient. Now, doctor is taking actions of unobserved actions of that patient. That's it. This is moral hazard. Even insurance company example will fit in. So, these are the 4 reasons for market failure. What is it 4 reasons for? Now comes government intervention. What is the government? to correct market failure. When market fails, now government has to intervene. Now government has to come and government has to say, boss, I will be there, I will be rectifying the problem. First one, how do you tackle market power? Simple. We will come up with a Competition Act. Which act? Under that act, each and everything gets regulated. Now, no one can cheat others. Everyone should get a fair chance. So, everything, we will make sure that monopoly power should not be there in our country. Everyone has to get the equal chance. And like this, market liberalization, controlling on mergers and acquisition, bringing price cap and price regulation, profit and rate of return regulation, tough investigations on cartels, and also restricting the monopoly power. Which power? Only just a single buyer, and also reducing the import control, ultimately taking the control full in the hands of government. Next, government intervention to correct. Simple. For us, biggest headache is negative externality. We should discourage that. Positive externality should be encouraged. So, how do you do that? Market-based control and direct control. What is direct control? Straight away come to enter the market and prohibit certain things, certain activity. Smoking in public places prohibited. No one will smoke in our country. Have you ever seen anyone smoking in front of bakery? That too in the corner? No one. Prohibition. See, government has done prohibited. It will attract penalty. See, like this. And government will also pass law to evaluate the effect of its externality. See, we have Environment Protection Act and all. According to that, our government officers will come. They will protect environment if under the table suitcase has not come properly. Next, government may fix dash standard. Government will only say how much you should emit. That means how much you should pollute. We will only tell. According to that, you should pollute. Next, government can charge dash fees. And government may also form a special body, special board. Why? In order to extract all robbery. Ministry of Finance is there now, Nirmala Akka, like that. Ministry of Environment and what do? Oh, they will forest. Whoever is destroying the forest, they will come. Whoever is going to destroy environment, they will come. And also Pollution Control Board of. Where are they? Don't ask me, even I don't know. State Pollution Control Board. In life, we have never seen them working. Next, government may. What is it? Government? Limit the amount of certain pollutant released into water body, air body, like Shashikiran releasing into water, air and all, like this limit. What is it? Because they will only fix emission standard. They will only say how much to pollute. Next, see the government may also insist some mechanism should be installed, some new machine should be installed that will show how much pollution is happening. Based on that, we will charge tax to you. If not, under the table dealing we will do later. All this for that pollution abatement mechanism. What is it? Pollution. Next comes market-based policy. Which policy? This is most important. See, in this two things. One, pollution tax. ACCA. ACCA said, see boss, for these kind of people and all, if you call them and sit and negotiate, they will not listen your words. Straight away put the tax. Straight away. For every product that they are producing, tax. Every product that they sell, tax. But the problem with taxes, if tax rate keeps on increasing, these foreign companies will set adababa in our country. They will go to some other country. Employment will. GDP will. And tax will discourage people to work and save. So, right amount of tax calculation is highly impossible. And if the good is inelastic, if the good is like alcohol, cigarettes and all, people don't mind. Even if price increases because of tax, still they will buy. Instead of buying 5 beer bottle, he will buy. But he will never stop buying. He will never stop. That is another problem. Because of inelastic demand, right level of tax identification is the problem. They will shift the tax burden in the form of high prices. It creates a inflation. This method of taxing the polluters has many limitations, and this method does not provide any genuine. And these pollution tax will have a negative consequences on employment and investments in the form of GDP part. And that is why they bought something called as cap and trade system. Tradable emission permits. Which emission permits? Okay, I will give license. I will give you permission to even sell that license to someone if you don't want. And the person who actually sells the license, he will make more profit rather than producing the goods and selling in the market. Now, let's say intentionally government will give lesser license to everyone. You ask for 100 license, we give only 70. Like this, for everyone, we will create shortage. And the person who has little brain, rather than producing and polluting environment, he will sell his license for exorbitant supernormal profit price. One who bought that license for high price, his cost of production will. One who sold a license already made a profit even before selling the product. Now, his product intentionally will sell it less price in the customers for the market. They will get attracted customers. One way already made profit. Another way, intentionally, is few products, whatever he produced, he will sell it for lesser price. He will sell it for, and customers gets attracted. One who bought more license, he has to sell at high price. Automatically in market, he has a disadvantage. Like this, we will control by issuing what? Cap and trade. system. Tradable emission permits. Which emission permits? See, intentionally fewer permits will be issued than a permissible limit. Now, high polluter has to buy more and more permits, and the lower polluter will get an extra revenue by just selling that surplus permits, whatever he have, and he will make profit. And intentionally, he will sell it for lesser prices for his commodity. In India, we are experimenting this under the various schemes, cess, carbon tax, renewable energy. Even in India, we are doing that. So this advantage is also there, even for the cap and trade system. Clear? Next, positive. Simple concept. Whenever there is a positive externality, we need to encourage its production and consumption. What we should do? Encourage the. So how do we do that? By giving subsidy. By giving what? Either to the producer or either to the. Best option is giving subsidy to the producer. So automatically his cost of production will decrease and he will start selling more and more units. Next comes merit goods. Which goods? See, we understood public goods. Now, like that, merit good is there. What is merit good? Best example, you guys are chartered accountants. After becoming chartered accountant, whom will you serve? General public only. Na? After opening up your office, that means your private consumption. Which consumption? Provides public benefit. Which benefit? Like doctor, you learned, you became MBBS. That means you spend crores together money. But whom are you serving? General public. So which is bringing dash benefit? Public benefit. But these are excludable and rival. They are limited in supply. They are rejectable if you are not willing to. It has characteristic features of all the private goods. But you are bringing dash benefit. Public benefit. Since there is a cost involved, market will not sufficiently produce this. So government should involve. Government should encourage to produce more and more of dash goods.
Merit goods.
See, education, healthcare, welfare services, housing, fire protection, waste management, like these all are merit goods, which brings public benefit. Which benefit?
Public benefit.
So how do government will create a public benefit? By way of rules and or by giving subsidy to the producer, or straight away government will only provide that public goods in combination with the private markets. So government will only come, government will only enter, government will only do it like what? Producing their own electricity. See, private activity should be conducted by whom? Government through regulation. Through what? Government will also prohibit some type of goods and activity. They will set test standards to issue. Government will have a compulsory immunization like COVID vaccine. Compulsorily you should take because it brings a public benefit. Which benefit? See, government can use a legislative to enforce the consumption of the goods which are having a positive. Compulsorily you should wear a seat belt while riding a car and while riding a vehicle, helmet, all this. Additional options, all given child rights, free and compulsory education to children up to the age of 14. And also having a contagious is like COVID-19, forcing them to take the. And there is also some demerit goods. Which goods?
Demerit.
Socially undesirable, alcohol, cigarettes, like this, which brings lot of pollution in the economy. See, every demerit goods are not socially undesirable. Let's say manufacturing of steel, manufacturing of iron and rod, steels and all. No doubt, pollution will happen, but that is not socially undesirable. Socially undesirable means alcohol, cigarettes, such goods, production and consumption should be discouraged. It should be socially undesirable goods. For demerit goods, we should make sure that such kind of pollution has to be controlled. How? By placing certain ban on demerit goods or through any kind of persuading. That means negative advertisement will be given. Like our movie example, Nanu Mukesh, Gutka Jagadide, दुरादृष्टवशात ನಾನು ಉಳಿಸಿಕೊಳ್ಳಲು ಆಗಲಿಲ್ಲ and Akshay Kumar will come क्या कर रहा है हॉस्पिटल के सामने करके फूफू बीवी बीमार है like this advertisement. Next, through legislative, prohibiting the advertisement and promotion of demerit goods in whatsoever. Alcohol, cigarettes and all should not be advertised in whatsoever manner. Strict regulation on limiting the access of demerit goods to whom? Vulnerable, such as children and adolescents. It should not go to the hands of children and all. Next, regulatory control. Which control? To a spatial restriction, 100 meters from schools and colleges should be tobacco free. Yes, come to Bangalore. Right opposite the college, there is a bakery.
Yeah.
Next, imposing high taxes. So GST Council 28%. See, car, luxury. Simple. 14% GST, 14% SGST, 28% tax. And government will only set the minimum price below which demerit goods should never be. So government is only going to fix the price. Hello, this is demerit good. One beer bottle, how much? 30 rupees. Hey, no, 30 rupees and all. 180 rupees. How much?
180.
That is the real cost. 30 rupees is the actual price to manufacture one single beer. Government will make 130 rupees from that. Production cost is how much? Government contribution? Government to 130 rupees for a tappa. I mean, profit 20 rupees for manufacturer. That's it. Total. That is why beer price is 180, 200. That is why. Next. How will I know? Voice. Next. Government intervention in case of dash goods. Which goods? What do you mean by public goods? Non-excludable, non-rival, but there is one big problem. What is that big problem? So what we will do, we will only come up with excludable public goods. Best example, National Highway toll charges. Only if you are willing to pay the toll charges, we will give an entry. That the government will not do that. Government will outsource the work to private guy. Now that private guy will do this activity by having the control by government. Government will say how much entry fees to charge, how long you should charge. Government will provide only excludable public good. Which public good? Clear. And there are still certain goods which will never be given to the private people, even though it has a free rider problem like atomic energy generation, strategic concerns and all, drug approvals and all. Only and only government does that. Only and only. Next comes non-market pricing. This is important. Price ceiling, price floor. See, simple concept. MSP. Have you heard? Minimum support price. Farmers. Don't worry. Farmers in the market, if the price goes below, let's say now government will say minimum support price 150 rupee. Let's say you are growing some food grains like pulses, dal, cereals and all. In the market, because of demand and supply, if it goes even below 150, suppose in the market now it has become how much? Don't worry, I am there. I will buy the product from you and I will store it for 150 rupee. I am guaranteeing you how much? This is called price floor, minimum price. Which price? Which government is guaranteeing. Government will only buy it from you. If the market price goes below this minimum support price, what is price ceiling? Complete opposite. Ceiling means top. This is the maximum price. Which price? Beyond which product should never be sold, especially basic goods. Which goods? This happens during the basic goods. So in case of a basic goods, price ceiling. Which is it ceiling? So price ceiling is going to operate. Which is going to operate? Price ceiling. Clear? So remember, in case of a price ceiling, wherein which prices should never go beyond that level. Even in the market, if demand and supply reaches to 150 rupee, 1 kg rice, rice basic essential, it should never go beyond 75. Government will decide that ceiling. That means maximum price that can be charged. Price floor, minimum price definitely you will be getting for a farmer. Minimum support price. Which price? Suppose if it is undesirable good. Which good? Desirable. Now this price floor will be set by the government, below which it should never be sold. Beer bottle, now I know 75 rupees you can sell. No, minimum you should sell it for. That is undesirable good. Which good it is? Clear now. Next up. Government intervention to correct the information failure. Which failure? Clear now. Now, in the information failure, which failure? See, now we need to have a complete disclosure. What is it? Complete. That means accurate labeling, content requirement. Clear now. So there has to be completely mandatory disclosure of information behind all this food products and all. You would have seen complete label, complete disclosure is there. Clear on. So you have to compulsorily disclose information like labeling on cigarette packets, like it is harmful, it will lead to cancer and all like that. Next, displaying nutritional information for food packages. Now SEBI has mandatorily given in the prospectus, you should mention who is your director, for what purpose you will use money, what all you will do, and also public dissemination of information for improving the. That means, hello, be careful, cybercrime is happening, caller tunes and all you set now. If anyone calls you by saying judge, police officer and all, don't worry, they are scamsters and all, don't get panicked and all. See, public dissemination of information for dash, improving the knowledge. Clear? 1 second. Next up. Regulating the advertising. What is it? Regulating the and setting the dash standard. Advertisement. To make advertisement more and more informative and less misleading. Yes, Horlicks, taller, stronger, sharper. Tayari jeet ki. Bullshit. Tayari diabetes ki. That is what the amount of sugar what it has. All chemical ingredients. See, advertisement should give a proper information and it can be less misleading. What is it? What is it? Clear. So this is government intervention to correct information failure. Which failure? Clear. Next, government intervention for providing equitable distribution of income and simple boss. Collect from rich people in the name of progressive tax and give benefits to more and more poor people in the form of various benefits. See, unemployment compensation, transfer payment, subsidy, social security scheme, job reservation, land reforms, gender sensitive budgets. Clear? Understood? So this is how government will collect from rich and give benefits to them. But there is one more beautiful information here. Listen to this carefully. Every single time, government intervention will not solve the problem. Sometimes because of government intervention, there is a failure that happens in the economy. What is it? Failure that happens in the government intervention will only create a trouble. Government failures. Clear, Ram? So that is also one of the information. Clear?
Yes, sir.
So this is unit 2 of chapter 7. Clear? We will go to unit 4. Unit 4 as a continuation. Connection is there. Budget will take it tomorrow. Fresh. Even that will not take much time. Half an hour it will take. Clear? Now, fiscal policy. Budget you read and come tomorrow once. Which policy? Fiscal. Okay, look at the board. Okay, unit number 4, fiscal policy. So fiscal policy, that is the policy adapted by the government in order to bring stability in the economy. What is it? In order to bring dash? See, every fiscal policy has its own objective. Automatic and discretionary fiscal policy we will study. Already I've spoken about this. Before Keynes, classical economist, they said automatically things get adjusted on its own. Government intervention is not at all required. But after Keynes, there came a discretionary fiscal policy. Intervention of government is needed as per will and wish of a government. Instruments of fiscal policy and types of fiscal. See, inflationary gap, deflationary gap. Again, same thing. Types of fiscal policy. Clearer? Let's go ahead. See, always and always, fiscal policy is a dash-sided policy. That means C plus, I plus, G plus, X minus M. And if economy is already in full employment, fiscal policy is not required. Any deliberate action by government. Which action by government? By the government is not required. Same like leakages. If there is already full employment, if you pump in more money, it will act as inflation. Same way, if economy is already in full employment, like however classical economists are saying now, suppose let's assume it is happening. Now government unnecessary intervention is not needed. If already economy is at dash employment. See, all the governments are pursuing innumerable policy to accomplish their economic goals, such as equitable distribution of income and reduction of price, exchange rate, full employment, balanced regional. See, these are the main objectives of fiscal policy. This is what they try to achieve. And our classical economists, they said, nah, we don't even need the intervention of government. Economy will self-adjust automatically on its. That is what classical economist. Which economist? Same thing. But later it got disturbed and 1930 Great Depression happened. All these people who are following the laissez-faire approach, full gayab, no solution. Later in 1936, John Maynard Keynes in the book called as General Theory of Employment, Interest and Money is the one who came up with the concept of counter-cyclical fiscal in order to resolve the problems of global financial crisis and the recession which many countries are facing because of the active fiscal policy. This can be eliminated. Clear? Now comes objectives. What are all the objectives of fiscal policy? We need to achieve dash employment, maintain dash stability, accelerate the rate of economic and bring equitable distribution of income. But the problem is we can't achieve all the 4 together. Suppose if I need to achieve equitable distribution of income and wealth, we can't achieve rapid economic growth. It is contradicting with each other. So a developed country, which country? Will have their own priority. First stability, later equity. For a developing nation, first is economic growth, later employment and Equity. Like this, priorities are there. Next, automatic stabilizer. Already spoke about this. It is built-in fiscal mechanism. Things will get adjusted automatically on its. Government intervention is not at all needed in the form of taxes and government spendings. Next, deliberate. Yes, we need it. In order to bring what? In order to bring stability. To bring what? And most importantly, to control the nation's GDP in an appropriate manner. See there, the changes in government spendings and tax, its purpose is to expand or shrink the as needed by the either by following expansionary fiscal policy or it is a dash policy action by government. That means will and wish of a government to control expenditure, tax, output, employment, and price form of borrowings. That is discretionary. For that, we use which side? Demand side. C plus I plus D plus X minus. Clear. Next, types of fiscal policy. What is it? Expansionary and already we spoke about this. This is what we call contractionary fiscal policy. During inflation, government expenditure reduces, tax rates will or adapting combination of both. That means economy is overperforming. Economy is now we need to cut down that performance. That is what contractionary fiscal policy. Which fiscal policy? This we do at the time of inflation. When do we need to expand our economic operation? At the time of when there is a deflation, government expenditure will increase, a tax rate will decrease. When there is an inflation, government expenditure will decrease, a tax rate will increase. Clear. So this is what expansionary and contractionary fiscal policy. See, government expenditure will reduce all types of government will reduce all kinds of taxes and increase all kinds of government or adapt a combination of both. That is expansionary. What is contractionary? To reduce the performance because of inflation. What are all the issues? There is a high demand, increase in consumption spending, rising price levels. So what do? Decrease all the government spending or increase all kind of taxes, personal tax, government tax, all the kinds of corporate tax or adapt a combination of. That's it. Now comes instrument. Same to same thing. Budget alone, I have to explain it tomorrow. Clear up. See, whenever there is an inflation, red color I will write for inflation, blue color I will write for deflation. When there is an inflation, government expenditure should decrease. Tax rate should increase. Government is spending less, but government is receiving more money in the hands. Say I'm getting 10,000 rupee, but I'm spending 7,000 rupee. Money left now. Which budget? Surplus budget. Now, when you have a surplus budget, money left out. Last time you borrowed money, na? Kindly repay that back. Kindly. External loans has to be repaid. Which loan has to be repaid? But here we are speaking about which debt? From our own public. Increase that public debt. That means people have more money in the hand. People have. Because of inflation. So people have more money now. Open market operations. RBI. So sell bonds, collect that money from the public, whatever extra money they have, increase your public debt during inflation. And collect that money, settle your external debt. Settle your external debt. Next, during deflation. During what? Deflation. Government expenditure should. Tax rate should. Now there will be which budget? And public debts will. That means people also don't have money. Now kindly give back that money to the public, take that bond. Whatever you sold the bond, collect that back. See, this is what is called as instruments of fiscal. Simple. Now government expenditure will act in a two different way. Advantages and disadvantage and direct effect as well as indirect effect. See, government has current expenditure to run their day-to-day government, capital expenditure to build some infrastructure projects, and next comes dash payment. See, government expenditure will impact in the direct manner. How it will impact? When government spends money, it will go to the hands of general public. If it goes to the hands of general public, they will also demand more. Economic activity will increase. Now, what is indirect effect? Even the government expenditure will work as a multiplier is directly dependent on. They respond directly dependent on. If people spend more, money gets circulated more number of times. Automatically, government expenditure will also act as a multiplier. How? Let's assume 1,000 crore is a shortage in the market. We need to bring 1,000 crore. But government, no, money gets circulated 5 times. How many times? 5 times. They will bring only 200 crore. 200 crore multiplied by 5 times. How much money now? 1,000 crore. Clear? Huh? So it will act as multiplier. So during inflation, government should spend more or spend less? More. Next, government expenditure during recession, spend more. So your fiscal policy will work only and only during your inflation and but there is one more worst phase called as a your government fiscal policy will not work. Then what is going to work? You should follow pump pricing and one huge money government will spend inside the economy. All of a sudden, everyone starts getting more and more money in the hands. Like all of a sudden, just assume tomorrow you will get some 5 crore rupees in road, in gunny bag. What you will do? Sir, first I will change my home. My neighbors will become rich. That means you are going to rich colony, na? Your neighbors will become. And you will buy one property, one car, full on expenses. Like this, if everyone in the economy starts getting more money in the hands, that means government is pumping huge expenses. Government is pumping. That means it is like an electric shock. The person who is about to die, Allah, like that, they will go and put on their chest that too. Shock treatment. They will bounce back now. That is a pump pricing. What is it? Pump pricing. One huge expenses government will make. Because of that, money automatically gets circulated and everyone starts demanding more. And to match the demand of production should. Employment should. Economic activity will bounce back. Or else compensatory spending. What is compensatory? See, the stupid fellows, C and I is not spending money. Instead of them, who is spending money now? Only and only government will spend and government will only bounce back the economy slowly. This is immediate effect. They're like shock treatment. This is slow effect, like your government hospital treatment. This is private hospital treatment. Bill is also more. This is government hospital treatment. Effect is less. Treatment doses is also very less. Clear? Next comes government. Where will the government find the resources to spend so much? One, either borrow inside or borrow. That's it. Next, taxes. Taxes reduces the disposable personal income of a person. If they levy more tax on the company, automatically the retained earnings will also decrease. When do we need to do the stabilization tax? During the recession in economy is not performing well, tax rate should decrease. At the time of inflation, levy new taxes or extend the existing tax, increase the tax rate. Next comes budget. I will explain this tomorrow. Clear? Surplus budget, deficit budget. Next comes, what is it? Public debt. When will you borrow more money? When people have more money in the hands. When will you repay that money? When people don't have money. That means you have a place of borrowing, form of borrowing. Place of borrowing inside the country or outside the form of borrowing. Either small savings or market loan. Market loan for large purposes, small savings, chota mota savings of the people. So like this, external loan, internal loan. Market loan. Either you will fund for any capital projects. That is either for long-term purposes, you will issue the bonds, or for short-term purposes, you will issue the treasury bills. Small savings of general public is there. Such small savings of general public are to be collected by the government, like savings bonds, tax saving certificates, NSC, national certificatory deposits, all the small savings. See here, national developmental certificate, national saving certificates. This cannot be again traded in the market. Government will take money, government will repay. But in case of bonds, you can also sell that in the market. This is non-negotiable, but this is negotiable. This is a negotiable instrument. This is a non-negotiable instrument. Clear? So this is public debt. See there. In order to have a long-term economic growth, we need to follow dash development. We should build more and more. Which kind of infrastructure? We should focus more on research and development. We should have a well-designed tax structure. Tax can either act as positive or. So well-designed tax structure is important. Now tax money, whatever you collected now, on what you will spend, what all you will give, subsidy and environment tax, protect your environment, especially externality, and also give subsidy to whom? Farmers, and especially input and support. These are to be concentrated for a long-term economic growth of any economy. Long-term economic growth of. See, in our country, there is a high unequal distribution of income, and how do you tackle that? Simple, progressive tax. Collect more from rich and give the benefit to the. That is the first way, direct tax. So next, indirect tax, Nirmala auntie. Full rich people will buy luxury items, full 28%, 18% tax. Papa, poor people will buy this paneer, butter, masala, milk, masala item and 5% tax, which was not even there earlier. Now, new tax. See, necessary goods, lower income people have to pay lower taxes. Luxury goods, higher income people will pay higher tax. Okay, what we will do after collecting this money from tax? We will provide welfare programs. Which program? So like this poverty eradication programs. We will give free or subsidy. Karnataka government forgot this. Free, which treatment? Medical treatment. Yes, we will give. When? Don't ask me. Next term. Education. No, not it. Housing. What is it? Essential. And improving the quality of which people? Because they should vote you. We will improve. When? Don't ask. After winning 3 times. Until then, you should make us to win. Next term. Infrastructure on selective various social security schemes under the people and entering the old age pension, unemployment benefits. See, Karnataka government is giving 2,000 rupees unemployment benefit, sickness allowances. Next, stabilizing public procurement policy, strengthening which capital and enhancing the. See, even this has a problem. What is the problem? Simple problems. If you collect more and more tax, if you collect what?
More and more tax.
Problem is, rich people are neglected to work and save more, or they will not be interested to produce more because you are collecting dash taxes.
Progressive tax.
I will not be interested. And same way, if you give more and more fiscal facilities to poor people, they will also be neglected to work in. Say, hey, Amma canteen is there, Chittappa canteen is there, 1 rupee breakfast, 2 rupee lunch, 1 rupee dinner, 4 rupees enough for the day. Next, free disease also. And for that, free medical treatment also. When government is only giving full of free, why should we work? Hey, I don't want. Even my son will also get free in the next generation because my Talaivar is there. He will next, his son will come. He will become mini Talaivar. And next his grandson will come. He will become disaster Talaivar. Don't worry. Tamil Nadu government and Karnataka government, we don't have much differences. Their family politics, here, nation itself is full of politics. Clear? So this is our major concept. Now comes the most interesting topic. What is it? Listen to this carefully. Most interesting topic it is. Crowding out. See, when economy is not performing well, what is it when economy is? Now, who should spend more money? Okay, if government does not have money, what they should do? Where? External or internal. How is that internal? When internal government, let me say internal economy is not performing well, government should spend more. To spend more, where government should get money? But like that stupidity, government borrowed internal. So when will general public like you will give money to government when interest rate is more or when interest rate is less? Now you tell me when economy is not performing well, when economy is interest rate should, but the stupid fellows, thumbs up fellows, they will increase the interest rate. Why did they increase interest rate? Because they want money from you people, So first they will increase interest rate. So you people, hello, economy not performing well. We lost employment. Upon that, bank is also not giving good interest. But government is giving me. What I will do now? Give money to whom? Why government took money? To spend in the economy. Why government should spend in the economy? Ultimately, money comes again to whom? Hey, wait. Hey, what you had in the breakfast? Full on confidence reverse answer. See, when government is borrowing funds from public with the intention of spending that money in the economy to boost economy, when government spends money, for whom it will go to the hands. So what public should do with that money now? Spend on goods and create more and more demand. So economic activity should. But you will not do that. Why? Interest rates are. Rather than spending, you are saving. That is what? Full reverse plan. Listen, stop discussing everyone. Listen first. This is most important topic. When economy is not performing well, when there is a contraction phase, when there is a government has to borrow from external market, but stupidity, they started borrowing internal. So in order to borrow within the country, stupid fellows, what they did? Now people started giving loan to government. Why did government bought loan? To spend in the economy. Why? If money goes to people, people will demand goods. So demand increases, production should. Employment should. Overall economic activity will. With that assumption, government borrowed loan, government spent money in the country. As government spent, you got money in your hands. Now, will you spend money? Why? What you will do rather than spending? That means consumption decrease, business investment also. Because interest rates are during the contraction phase of business cycle. That means now like stupidity, only government is spending money. General public will not spend, business will also not. Crowding out, limitation of fiscal policy. What is that? Limitation of? While fighting recession, if at all you make one small mistake like this, you will only and only be spending, but people will not spend money. Rather, they will start saving money. So consumption will automatically decrease. Even business borrowings will automatically. In the overall economy, aggregate demand much more. For this, what is the main root cause? When during recession. So during recession, interest rate should never. It should. Clear? So one small mistake by this thumbs up fellows. That means in Kannada letter ಬೇಜಾರಾಗತ್ತೆ ಬೆಟ್ಟನ್ ಮಕ್ಕಳು ಅಂತ. ಅದಕ್ಕೆ in English ಅಲ್ಲಿ neatagi thumbs up fellows. What is it? Thumbs up fellows. So for that thumbs up fellows, they should know when to increase interest rate, when to decrease interest rate, when to borrow inside the country, when to borrow outside the country. Is that clear? Understood? So this is the concept of crowding out. Whenever this crowding out happens, that will have a deep impact on the economy, not for a short term, even for a long term. Even in the long term, this gets affected. So make sure that when interest rates are increasing during the recession phase, governments are going to fail. Governments are going to clear up. That is called foolishness. That is called. Is that clear? Now, and this crowding out will not work during the hello. It will work during recession, but not during a what is deep recession called as? Depression. What is it called as? During depression, pump pricing and compensatory spending. That is the only left out option. Clear? Now, last but not the least, limitations of fiscal. Very first one, just now we discussed now. Crowding. Next, decision making lag. Always great decisions will be taken. They will never take a correct decisions at correct time. Upon that, recognition lag, decision making lag, impact lag, and also implementation also. Total everything is late and lack of and certain uncertainty about the informations of. And the biggest problem in our country. Simple. Today's example. See, Modi is coming to inaugurate yellow line of metro. Before that, 1 week only, Karnataka state government went and inaugurated on their own because we did this. Already metro construction finished 3 years ago. Stupid fellows, they didn't inaugurate. Now they waited until now. See, integrity. Hello, our government did this. Hello, our government finished. Hello, our government sanctioned. Like, end of the day, for whom are you giving that? No, political interest. Self-interest is more interest than public interest. Integrity issue. Which issue? Stupidity. Next, where use costs are involved and intentionally changing government spendings in. That will not work. And there are few gestation projects like huge dam, roads and all. All of a sudden, we can't reduce government expenditure. Now we will say inflation is there in the economy. We should reduce government expenditure. But we can't. In few times, we can't reduce government expenditure because there is a long gestation projects. We cannot postpone for the reasons of expenditures and also deficit financing. Sometimes money will not be there. We will bring from outside and then we will spend. Because intentionally we have to spend now because we need to complete the projects. And if at all, governments also start competing with the for what will happen? Why? Because interest rate keeps on. Demand for credit is increasing. Now interest rate keeps on. And if that happens during contraction phase of business cycle, crowding out to white, one red. Clear? So this is your unit 4. Unit only unit 3 budget spending. Which is spending? So tomorrow timings will be informed in the group. They will inform you from the academy side, but it will be there. Maybe 3:30 or 4 o'clock. 3:30 or consider better 3 o'clock. Consider and keep in your mind as what time? Consider 3. Anything after 3. I will speak that. Don't worry. Consider class post 3 o'clock. Post how many o'clock? 3 o'clock to 8:30. I will speak to Nitin. They will inform. Wait. They will inform you in the group. But consider class shall be after. Consider final time they will inform you. But anyway, whenever we start, 8:30 we are going to end. 8:30 we are going to. Clear? Chalo, close your books. Bye-bye. Get lost. So in the previous class, we had completed until chapter 7, unit 1, unit 2 and unit 4. We had left with unit that speaks about budget making, budget process. Another half an hour, we will also finish with the budget. See, in this budget unit, the first half of the chapter is most important over there rather than second half of the chapter. Is it clear? Okay, now let us understand the concept of budget. Remember, budget is a financial blueprint. What is budget? Of the government. It includes anticipated income and anticipated. See, it's not an actual value. It is just an anticipated. That means what will be the budget that is going to be spent in the next upcoming year. Let's say, for example, when I speak about the budget, so budget is mainly classified into 2 kinds. What is it? Budget is classified into how many kinds? Number 1, revenue budget. Which budget? Revenue budget. Second one will be capital budget. Now, under this revenue budget, again it is further classified into 2 elements. Revenue receipt, revenue expenditure. Same way, capital receipt and capital expenditure. Is that clear? So, revenue receipt and capital receipt put together is called as a total receipt. Which receipt? So, revenue receipt plus capital receipt. Same way, when we speak about total expenditure, which expenditure? So, it is revenue expenditure and capital expenditure. So, remember, revenue expenditure plus capital expenditure put together is called as a dash expenditure. Total expenditure. So, remember, there are 3 basic concepts which we need to remember. In case, if at all we are analyzing the whole budget, Suppose if our total expenditure is greater than total revenue. What is it? Total expenditure is greater than. This is called budgetary deficit. Which deficit? Now, for this budgetary deficit, if I exclude borrowing, what does it exclude? See, remember this word, excluding borrowings, then it becomes fiscal deficit. Which deficit? So remember, from a budgetary deficit, if you exclude dash, if you exclude borrowings, it will become dash deficit. Now, from this fiscal deficit, if you exclude interest liability, which liability? That means on the past loans, we need to pay an interest. Suppose if I exclude such interest liability, we will get dash deficit. Primary deficit. Which deficit? Primary deficit. Clear? So this is the main important topic. Remember, when the total expenditure is greater than total receipt. Now, whatever that we are spending in the whole year, such expenditure is greater than total receipt, we call it as dash deficit. From that budgetary deficit, if you just exclude the amount of borrowings need for the present year, we will get which deficit? From that fiscal deficit on all past loans, we have to pay interest every year. If I exclude that interest liability, which deficit I will get? Primary deficit. Clear? See, this is the major important topic. This is where usually question comes. And especially the questions are coming repeatedly, numerical problems from primary deficit and fiscal deficit. So from the fiscal deficit, if you just subtract interest liability, which deficit? For primary deficit, if you add interest liability, what will you get? Fiscal. Is that clear? So remember, this is the one important area you have to understand. And when we speak about the concept of budget, there are mainly two types of budget. One is balanced budget. Which budget? Balanced budget. In case of balanced budget, total expenditure is equal to total revenues. In case of imbalanced budget, which budget? So there are two elements. One is a surplus, second one is a deficit. So in case of surplus, total receipt is greater than total. In case of deficit, in case of what? Total receipt is lesser than total. See, every single time in India we have this deficit. Deficit refers to shortage. What does it deficit refers to? Clear? And remember, whenever we have a deficit budget, we need to borrow. So such borrowings will usually be from the external market. Which market? Or inside, not inside the country. You will be doing outside the, and we also borrow within the country. So there is internal borrowings as well as external borrowing. So whenever we are preparing a budget, now budget duration. What is it budget? It starts on 1st of April. Let's assume 2025 to this particular financial year. It goes up to 31st March of the next year. That is 2026. But for this particular budgetary period, when is the budget announced? 1st of February 2025. So when is budget announced? So on every single year, 1st of February, budget gets announced. Only during an election year. Only during which year? Budget is announced twice. One as planned on 1st of February, that is interim budget. Which budget? So once the election is done, the new government comes to the power. Later we will announce an actual budget. Which budget? So very first budget. Which is the very first budget which we are announcing? Interim. That is as planned on 1st of February. Once election is done and the new government is formed, then we are going to prepare an actual budget. So only during an election year, budget is presented how many times? Twice. If not, budget is only and only announced on when? 1st of February every single year. Is that clear? So remember, budgetary period is 1st of April to 31st of. And these are anticipations. What is it? See, that is what we said. It is a blueprint which speaks about anticipated income and anticipated expenditure. So in this chapter, we only speak about union budget. Which budget? Union budget. Clear? And the budgetary period is 1st of April to 31st of March. As I said, see, remember from 2017 onwards, budget was started to be presented on 1st of February. Before that, budget was presented on last day of February. When was it presented? Clear? Only during the election year, budget is presented how many times? Twice. One interim budget as planned. Once the election is over, then it is going to be presented on. After the election is done and the new government is formed, that is called actual budget. Only during election year, budget is presented twice. Clear? And the preparation of budget will start 6 months in prior of presenting. When is the budget presented? 1st of February, right? So 6 months back to February, budget preparation is going to be started. And the budget preparation has 3 stages. One is we will prepare the budget, and then we will present the budget, and then we will execute the budget. So in order to prepare the budget, first the budget division, which comes under Ministry of Finance, they will send a circular. They will send what? Containing detailed information regarding to all the state governments, all the central government bodies. They have to send the estimation of receipt and estimation of expenses. After collecting all the data, pre-budgeting concessions, or let me say consultation, will be held. So we'll also meet all the various stakeholders, experts, interest group in agriculture, labor association, social welfare, Niti Ayog, economists. We will take their suggestions, if any. What is it, suggestions? And finally, we'll prepare the budget and we'll present the budget as planned. So what is the budgetary period? 1st of April to and we present the budget for the upcoming financial year. Which financial year? And budget is a dash document. Clear. So in the budget speech, there are 2 parts. Number 1, that is speaking about the macroeconomic situation. That means what is the present inflation, present population, present unemployment rate, what should be the redistribution, all that present scenario. Which scenario? That is macroeconomic situations of the country. Second, and the most important, that speaks about the, so what all new taxes we are levying, what all continuation of existing taxes happening, and all those we are going to discuss. Is it clear? And next comes the most important, budget document. Which document? Mainly there are 4 documents in budget. How many documents are there? The very first document is annual financial. So in this annual financial statement, 3 more elements will come. Consolidated fund. Which fund? Second one, contingent fund. Which fund? And the third one is public account. Which account? And this is important. Consolidated, contingent, public account. The main important account of the government is this consolidated. Each and every single rupee that you are going to withdraw, that has to be backed with Parliament's approval. Which approval? Without Parliament approval, you can't even withdraw a single rupee. All the receipts raised by the government in the form of money, any loans taken, money borrowings, or any kind of other receipts, either tax receipt or non-tax receipt, everything will come under which fund? And all the top officials, especially the President of India, all these judges, let me say high official ranked people, there, let me say money, everything, their remuneration will also be a part of consolidated fund. That means even 1 single rupee should be withdrawn from this consolidated fund. Dash approval is needed. And next comes contingent fund. That is emergency fund. How much will be in the control of President of India? That means you can use this whenever there is an emergency. Let's say tomorrow COVID will come. It will return back again. All of a sudden, there can be some unexpected emergency. What will be there? So whenever there is such unexpected emergencies, we can use this fund subsequently after using out of 500 crore. How much ever money that we have used, we should give it back from the consolidated, from after using. See, subsequent approval of the Parliament is needed. Clear. Last but not the least, which account? In the public account, that money belongs to general public. Only government is acting as a banker. Government is acting as a best example, Provident Fund, PF accounts. That is the general public money where the government is going to have that money. They have to give it back to the customers, or let's say the rightful owners of that fund. Whenever they are retiring, whenever they are leaving that employment, they have to give back that money. Clear? So that is PF is a one best example of dash account. Public account. Clear? So this is just a banker. Government is acting as a what? This is not a government's money. This is general public money. So you need not require a Parliament approval. See here, expenditures is not requiring the approval of the Parliament. Clear? So budget is mainly classified into how many kinds? Revenue budget, and under revenue budget, revenue receipt, revenue. Capital budget as capital receipt. Listen to this carefully. I will give you in a very shortest way to understand. But meaning, examples, all are important in this case. Like how our coincidental indicator, leading indicator, lagging indicator. Like that, the meaning of revenue receipt, meaning of revenue, meaning of capital receipt, meaning of with example. That is important. See, revenue receipt, that means on a regular basis. Which basis? Government receives an income. Best example, tax revenues. Which example? See, regularly government receives the tax. Other than tax, there is also non-tax revenue. But the major sources of income to the government on a regular basis is dash. See, revenue receipt can be defined as receipt which neither creates any liability nor causes any assets of the government. They are called as which receipts? See, they will like this, they will give a statement and they will ask you to identify which statement is this. Is it revenue receipt, revenue expenditure, capital receipt or capital expenditure? See, on the receipt side, all the receipts and expenditure that are general, which will not make any kind of a sale or creation of an asset is called as a revenue receipt, and that comes under which account? And the major source of revenue receipt to the government would be, see, tax is the most important revenue receipt. That means which comes on a regular basis. That means day-to-day expenses are also met through the revenue account. That is called revenue expenditure. Which expenditure? See, this revenue expenditure is included for the particular purpose other than creation of dash or the expenses which is used for a particular purpose other than physical or financial assets of the central government. What is it called as? Best example, salary paid to the employees of a government. That is revenue. That means every single month you will pay that salaries. See there, it relates to those expenses incurred for the dash functioning of the government. Normal functioning of the government departments and various services, interest payments and also debt incurred by whom? Debt incurred by the, and also grants given by which and any other parties. That means central government will give some funds to state government. That is grants given. Every single year they give. It is on a regular basis. So it comes under which expenses? Revenue expenses. See, salary payment is a revenue expense. Subsidy is a revenue expense. Interest payment is a. These are all the good examples of which expense. Next comes capital receipt. That means one huge money received. See, in this, there are two classifications. Kindly remember this carefully. One is in terms of money borrowed. What is it? That is debt capital receipt. Which capital receipt? And there is one more, non-debt capital receipt. What is it? What is this non-debt capital receipt? 3 pointers will come. If you want somewhere, write it down. It will come. There is alignment problem. Actually, it comes in the next part. I will show that. See here. Above primary deficit, I have mentioned non-debt capital receipts. What is it? Non-debt? That means, sir, we have given loan. Let's assume Indian government had given loan to Sri Lanka. Let's assume for Nepal, for Bhutan, Myanmar, or maybe for our own state governments. Let's say Karnataka government has borrowed, Tamil Nadu government had borrowed. Now, we are recovering back the loans given. What are we doing? Recovering back the loans given. So, recoveries of loans. What is it? And advances by the government. And also sale proceeds of government asset. Some government assets which we are not using, we would have sold it. Like OLX may bej do. Like that, we have sold government asset and we are receiving huge money. Or we are selling our PSUs. That is called divestment of government equity in the public sector undertakings. See, there are 3 non-debt capital receipt. Rather than taking a loan, we are receiving a huge money. What are the examples of non-debt capital receipt? Recoveries of loans and advances by the and sale proceeds of any divestment of PSU stakes by the government. These are non-debt capital receipt. What are this? What do you mean by debt capital receipt? Borrowings. We are taking a loan and we are borrowing money. What are we doing? Borrowing money. That is called debt capital receipt. Which capital receipt? So remember, in case of capital receipts, which receipts? So there are 2 kinds. One is debt capital, other one is non-debt capital receipts. Clear? See the meaning of capital receipts. These are loans raised by the government in the form of public borrowings by the government. Either such public borrowings can happen with Reserve Bank of India by way of selling a treasury bill. In short, open market operations, or raising a loans from which body? Foreign bodies. We are taking a loan from which bodies? Foreign. And also some foreign governments. And recoveries of loans. See, we have only given loan. We are recovering back such loans granted central government to whom? Or union or any other. That is called capital receipt. That means, remember, capital receipts can either create a liability or an asset. What is it? Either create a liability or a. Same way, capital expenditure, one huge expenditure incurred for building any infrastructure which creates an asset. What is it which creates a? Or reduces some liability. Creates an asset or? See, an expenditure by the government which results in creation of dash, physical or reduction in the financial That is the meaning of dash. Capital expenditure. Which expenditure? All the four are important. Revenue receipt, revenue expenditure. Capital receipt, capital
Expenditure.
clear. So I was discussing about the budget document. Which documents? See, the very first budget document is annual financial statement. Under AFS, how many documents are there? Which are those three? Consolidated, contingent, and now that is the very first document. Second one is demand for grants. What is it? See, when budget division send a circular to all the ministries, now you should say how much is your expenses, how much is your income. You need to send them a data. Like that, you would have also asked some funds from the central government. See, boss, you said we need to implement that Mahatma Gandhi Rural National Employment Guarantee Agency. 100 days of guaranteed work in rural. What is it? 100 days of? Under SIDB, Small Industry Development Banks. Now, boss, I need money. Kindly grant that money to implement that plan. So, which department, which institution, which government body is asking for how much of funds? That is demanding for grants. What is it? And most important, Nirmala aunty will levy taxes, na? Any new taxes, continuation of existing taxes, or we are extending the period of that tax collection. Now, see, income tax due date got extended from July 31st to September 15th. See, all this will come under which bill? That means vitaminium. From where is the money going to come to the government? What is the tax that we are collecting? Because tax is the major source of income to the government. Last but not the least, FRBM statement. Which statement? FRBM Act is there. That is Fiscal Responsibility and Budgetary Management Act. See, what do you mean by demand for grants? That means which particular organization, which department is asking for how much of money? How much of? And sometimes, see, even including article number, we have to remember. See, annual financial statement, article 112 of the Constitution requires governments as to present to the Parliament the statement of estimated receipt and estimated
Expenditure.
for their particular upcoming financial. That annual financial statement includes consolidated, contingent. See, even including article number, you should remember. Even the questions have come from the article numbers. Clear? See, demand for grants will also come under the article 113. See, demand for grants is the form in which estimation of dash, estimation of from which account included in the annual financial statements are required to be voted upon in the. That means once you are allocating the funds, that funds has to get voted. It has to get what? After getting voted, then only the funds can be withdrawn from the consolidated fund. Which fund? Next, see there, any kind of grants given to state government, any facilities given to union territory government, or any kind of loans given, or any kind of advances given, everything will come where? Demand for. Next comes finance bill. Which bill?
Finance.
Most important, Nirmala auntie's favorite bill. Existing tax structure beyond a period, or coming up with any new taxes, or modification of existing tax structure, or continuing the existing tax structure. Everything related to vitaminium, that is tax, will come under which bill? Clear? Now, what do you mean by demand for grants? It is like how much which department is asking money. Once Parliament votes on that bill and they get an approval, that is called as appropriation bill. Which bill? And see, Parliament has got a fixed time to vote on this bill, discuss, debate and all. Once the time period is getting over, see here, Speaker of Lok Sabha, what is that Speaker of? Puts all the outstanding bill of grants, whether discussed or, in order to vote for the, in Kannada we call Gumpal Govinda concept. That is how it is. See, because they say that we have a limited time for discussion. Once that discussion time gets over, whether bill is discussed, whether bill is not, we will put everything together and we will pass together at a time. That procedure is called as guillotine. What is it called as? In exam, the questions have come from this. Be careful. Next, cut motions. What is it? Okay, now let's say Nirmala aunty has allocated 500 crore for women and children safety. But they asked only 200 crore. But how much she allocated? Now, highway infrastructure development funds will be like, hello, excuse me, I asked 1000 crore. You gave me only 800 crore. They only asked 200 crore. How much are you giving? Hey, no, we don't agree this. Take it out. Remove. Why are you giving extra? That means there is some difficulty. There is some differences. Now, in order to voice the difference, what is it in order to? We will have something called as cut motion. That is seeking to reduce the sum sorted. What is it? Motions in order to reduce the various demand for grants made in the form of That is, in order to seeking to reduce the sum sorted by the government on the economic or differences of opinion on the matters of the. Now someone is not agreeing, we are unable to prove majority in the parliament, because of that we are reducing the fund. That reducing the fund is called as dash. Cut motions, clear. So that is first one. That happens in the presentation part. Now see. First, this is just a see. Whatever we just discussed now, how it is presented. Now first gets prepared. Second stage, it will go to the Lok Sabha. It will be presented. This is only read-only concept. Which concept?
Read-only concept.
What happened to this now? All of a sudden, read-only. See everything. Finance bill will come into picture. Cut motions will come into picture. Gulaitin will come into picture. See appropriation bill. This is like a story. See Gulaitin, 75 days after introduction, it has to be passed in the parliament. These all are read-only topic. Clear up? And next see, balanced budget I spoke. In balanced budget, total expenditure is equal to. In imbalanced budget, surplus receipts are greater than expenditure. In deficit, expenditure is greater than. See, budgetary deficit, already explained. When total expenditure is greater than. See, in this total budgetary deficits and all we are speaking now. Let's say for example, now, if at all we are understanding only and only revenue budget. Which budget? I am not considering the whole budget. I am only and only considering which budget? In this revenue budget, let's say if revenue expenditure is greater than revenue receipt. What is it? Revenue expenditure is greater than. This is called revenue deficit. Which deficit? See, revenue deficit should never be more, because, boss, in your country, in order to do the day-to-day operations of your government, you don't have money. For revenue expenditure, you don't have a sufficient money. That is more, but your revenue receipts are less. That means your tax money is nowhere sufficient to meet your day-to-day. This is the very bad state of the country. See, if the capital budget comes deficit, we can understand some infrastructure project is going on. We are investing money on some big projects. Yes, that is accepted. That is for dash budget. Capital budget comes deficit. But if revenue budget becomes a deficit, that is a very bad state. Which state?
Bad state.
Clear? Next, see there, fiscal deficit. One word you should remember. Excluding dash. Excluding. See, there is no difference between budgetary deficit and fiscal deficit. Now, see the meaning. Excess of total expenditure over the total is called as budgetary deficit. Now, same to same dialogue. Excess of total expenditure over the excluding. This word excluding borrowings is extra. If you just see this word excluding borrowings, whenever total expenses are greater than the total, and we are excluding dash, which deficit is that? And remember, fiscal deficit is always and always calculated as a percentage of GDP. What is it? And this is important. See, every time the question comes from fiscal deficit and primary deficit. Which deficit? See, fiscal minus net interest liability is a primary deficit. This is actual shortage of this year, excluding borrowings. What is it? Stupidity. Is it excluding borrowings or excluding interest? See, after explaining. Now when I say excluding borrowings, two people are agreeing. Clear? So, primary deficit, fiscal deficit. From these two areas, the questions are coming on a repeated basis. Clear? Understood? There is something called as outcome budget. Which budget? Okay, see. Let's say when we are announcing budget on 1st of February 2025. This is, we are announcing a budget for 1st of April. What is it? 1st of 2025 up to which date? 31st of March 2026. 2026. Accepted. But when we are announcing this on the 1st of February, there is still 2 months pending for the ongoing financial year. Na? That means for which budget is already announced. Now the present financial year, which got started on 1st of April 2024, which is going to end on 31st of 2025. Still this 2 months is pending. Na? We are not speaking about this. Even before this, there is one more. Previous year. Which year? See, this is present year. Which year? This is upcoming. What is it? Upcoming financial year. Now we are speaking about previous. What are we speaking about? So what was the previous year? 1st of April 2023 to 31st of March 2020. This financial year is already done. Na? For that particular financial year, now we are giving actual value. Which value? That means how much money we have spent. How much actual budget we had allocated. That is called as outcome budget. This is like a progress card or report card. What is it? Progress card or? For a previous annual budget. Which annual budget? See, upcoming financial year is what? We will prepare a budget. Ongoing financial year, still 2 months is pending. Previous year. Which year? For that actual values. That is called as outcome budget. Which budget? And see, this is important. Sources of revenue. What is it? See, in our country, where exactly the money is going to be received. The major source of income to the government is dash. Such tax sources are two types. Direct tax and so under the Ministry of Finance, we have one more division called as Revenue Division. Which division? Department of Revenue. Under this Department of Revenue, there are two boards. One handles the direct tax, that is CBDC, Central Board of Direct. Second one, CBIC, Central Board of Indirect Tax and Customs. What is the Central Board of? Now, these two are the major sources of to the government. That is tax sources. Which sources? See, corporation tax or corporate tax, wealth tax, customs, union duty, GST, taxes on union territory. These are the major sources. And there is also something called as, best example, your IPL telecasting, railway, police fine, broadcasting. See here, interest received. Let me say government had invested some money, bonds, PSUs. They will also get their dividend income, profit, receipts from union territory, and there are also some non-tax revenue. Which are those non-tax revenue? Government hospitals will provide medical services, public health, broadcasting, education, sports, culture, housing, economic services, communication, energy, transport, science, technology and environment. See, railway, general administrative services, your local authority body, permissions and all you should take now. General administrative services. But this is very small portion. What is the biggest sources of revenue to the government? Taxes. So these are the different types of taxes. Clear? Next, sources of capital receipt. Which receipt? See, this is revenue receipt. Whatever we just discussed now, that is revenue which comes on a regular basis. Which basis? That is revenue. But capital, we will get a bulk amount now. Already I spoke about non-debt capital receipt. Now we are not borrowing, but still we are receiving huge money. How? Recoveries of loans and for whom did we give loan? PSUs, state government, foreign governments, union territories. Or we are selling the government stakes in PSU, selling the government stakes in. That is non-debt capital receipt. Or there is something called as debt capital receipt. We are borrowing loan. What are we doing? Market loan, short-term loan, treasury bill, security against, state provident fund, public account. We discussed now. Which account? And the net external debt, outside borrowings and all, any other kind of receipts by issuing SGB. Heard about SGB? Sovereign gold bonds or any other kind of savings bonds. Which bonds? That means we are borrowing money. What are we doing? Clear? That is debt capital receipt. See, until this is the first part of your budget chapter. This is important. Whatever we have discussed till now. Year after we'll discuss about expenditure management. Which management? See, like how under Ministry of Finance we had a revenue department. We also have a department of expenditure. What is the department of? Under Ministry of? See, every year we have a shortage. Every single year we are having a deficit. What do we have? In the budget. In order to reduce that deficit, now we are to take certain steps. Unnecessary subsidies has to be reduced. Unnecessary government expenditures has to be controlled. Like this we need to reduce. So for that we have come up with something called as public expenditure management. We should control government expenditure. So what happens if you don't control? What are all the problems? What are all the? See, we will be having a larger and high level of and lower economic and fewer resources will be available for and greater burden not just for present, even for. So we need to control all this. So how do we control? Expenditure profiling. Expenditure. See, there are certain central government expenditure that has to be cut down. And there are some sponsored schemes and other transfers which will be given to state government. Now, we should control that. And especially unnecessary subsidies. What is it? That has to be controlled. And we have something called as public debt. We have to manage the debt. See, some portion of debt will always fall due. So what government will do? Public debt management. What do you mean by public debt management? Simple. See, first we will take one loan. To repay that first loan, we will take second loan. To repay that second loan, we will take the third loan. To repay the third loan, we will take the. To repay that fourth, we will take the That is called public debt management. What is it? And from whom we will take? From our own citizens. What money? Their savings money. See, mobilizing savings. What is it? Of whom? In the form of. We also repay that in the with. See, that is what we will take first loan with interest. To repay that, we will take the. To repay that second loan with interest, we take the. To repay third, we will take the. To repay fourth, we will take. Like this, we never repay that at all. This is called public debt management. Which management? See, public debt management strategy. What is it? Public debt management. As a broad pillar, see, lower interest rate should be there, risk should be minimum, market should get developed. Which market? Bond market. Which market? Because government issues bonds. By issuing bond only, they will take the funds. See, institutions responsible for public debt. This is important. Any loan that you are borrowing inside the country from your own general public, who is responsible? See, RBI has also got a powers. See, this point is important. Next chapter, I will ask you this. RBI has also got a powers to issue dash loans for all our governments and the banking systems for both. And such money is called as WMA, that is Ways and Means Advances. Which advances? Or is also called as overdraft facility. Which facility? Clear? And any loans borrowed outside India, that is responsibility of the Ministry of Finance. Clear? Next comes FRBM Act. I said now there is one particular act. According to that, budget has to be prepared. These objectives are important. Once the questions has come from the objectives. Clear? That's it. This is the major area. So see there, what is the amount of loan that we have borrowed within the country? See, by 31st March 2023. And these rupees are in crores. See, 1,47,000 crore internal debt inside our own country. External debt, 4,83,000 external. And by next 1 year, see how much it increased from 147 lakh to. And inside the country, 4,83,000 to. See, why are you taking so much of loan? For developmental aspiration. Expenditures are more, what to do? And also, why did you borrow so much in between? Because of, especially in 2021 to 22, there was lot of trouble in the country to match with the health problems and all. And also, we have come up with something called as G security market. How general public will invest in the stock markets. Like that, straight away they can buy the government securities by opening the account in which market? See, encouraging the retail participation. What is it? RBI Retail Direct. This is the facility which is created for dash investor. Like people like you and me. See, that means official begging. What is it? Paisa de bhai, paisa. Mere ko paisa chahiye. Government will ask. By issuing bonds. Which bonds? Government security bonds. They will borrow a loan from you. So this is your budget chapter. Which chapter? Clear? One of the most easiest unit, but also most important from exam point of view. Which point of view? Clear? By this entire chapter 7 comes to an Katam. Clear? Okay, we'll go to the exam question. See there, exam question straight away. So yesterday we finished with already unit 1, unit 2 and unit 4. So today we begin with budget. See there, in the present, the state income estimate. Which income estimate? Like railways, banking, insurance, etc. Which cuts the borders of the hey, this is supra-regional sector. Where did we study the supra-regional sector? Chapter 6, this is actually chapter 6 question. Now chapter 7. Lemon's problem, Nimbe hannina tondare. What is it? Asymmetric information, Only one person know about the quality, other person does not know the. And we always pay the price based on the dash quality of the car, average quality of the used car. Next, which of the following is one of the key functions of which policy? Aim for a dash, macroeconomic, 3-branch taxonomy, Richard Musgrave, allocation, redistribution, stabilization. Which was macro? Allocation and redistribution was. So which is macro? Next, what is social cost formula? This also we studied in chapter 3, also in chapter. Next, which of the following is not a characteristics of a indivisible? Yes. We cannot divide it. Next, non-rival, yes. More valuable to externality, yes. Yes, externalities are there. Production and excludable, non-excludable. What are they? Only private goods are. So they are asking not a characteristics of a Public good. Next, which of the following is a nodal development for overseeing the public financial management? Public financial management expenses handling department of under the Ministry of. Now the statutory disclaimer: mutual fund investment is subject to market risk. Please read all scheme related documents carefully before. Like Center for Advertisement, it will come now. In all that, mutual fund investment, that is how they will say now. What is this? Complete disclosure of. In order to tackle information failure, you should disclose that full information. What you should do? Next, Article 112. I said now, including article number is important. Indian Constitution provide with respect to finance for the president shall be laid by both the houses. What is that? Annual financial. Next, which of the following information regarding the receipts and expenditures of the government is not present in the See, budgetary estimates of ensuring financial year. Yes, upcoming financial year. Next, budgetary estimates of the still 2 months remaining now. We will make changes and revision estimates of the ensuring. Yes, actual expenditures will be show actual. No, anticipation. What is it? See, that is what not present. Anticipations. It is not actual values. What is it? Of the current financial year. Next, during the budget proceedings, the Speaker of Lok Sabha, once the prescribed time for putting that all the things are over, Gumpal Govinda concept. What is it? They will put all the outstanding bill for voting. What is it called as? Gulaitin. Next, which of the following is not true regarding the policy of the government? That is a deliberate policy of government. Yes, fiscal is a deliberate. And tax policy is a part of fiscal policy. Yes, government expenditure and tax. These are the tools of fiscal. Fiscal policy is a supply-sided policy. No, fiscal policy is a demand-sided policy. Which sided policy? Yes, this can be the answer. See here. An economic producing at full employment. Economy is already producing at does not requires government actions in the form of fiscal policy. Yes, I said na. If they are already operating at full employment, government intervention is unnecessary. So what is the answer now? Option D. It is a demand-sided policy, not a supply-sided. So for this question, 95th question, answer is option D, not option A. Clear, ra? I think that's it. Just check how many questions had come. One. Wait, that's it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. No, not 11. This is chapter 6 actually. 10 questions. How many questions? So 10 questions are there in the May attempt. Okay, now let's see the September attempt. See there. Sarah is considering to purchase a used car from the private seller name. John claims that the car is in the. It has never been into any. However, John is aware that car had a significant due to when, but it has been repaired without the disclosure of the information too. Based on this case study, which problem is this? Nemen's problem, asymmetric information. See, this is GK question. No, easy questions here. What is? How do we get primary deficit? Fiscal deficit minus interest. Primary deficit is how much? And interest liability is how much? What are they asking? Now what you should do? Add. Simple. These two has to be added. See, donation of marks. Such a easy question. Donation of marks. What is the answer? Next, which article of Indian Constitution contains specific provisions regarding the distribution of this is GK question. This is actually GK question. Some nook and corner of your textbook they have given this. Next, Richard Musgrave. Which Musgrave? 3-branch taxonomy concept. Introduce the 3-branch. Describes the role of government in the market economy. Which economy? So what are those? Resource allocation, income redistribution, macroeconomic. So this is 3-branch taxonomy. Again, this is GK question. This is a little bouncer question it was in this attempt. They are asking which particular verdict of a Supreme Court has given powers to even state governments to make the changes in the GST Council. To be frank, this question should never come for you guys. But one question like this full toss, I said now 1 or 2 questions will be always full toss. Some nook and corner of your book they will ask or some GK question. Next, under institutional responsibility for a dash management, external debt. Which debt? Who is responsible for external debt? But to be frank, under Ministry of Finance, Department of Economic Affairs, they are the one who will actually look out external debt. Both they have given. So in this attempt, both were answers. If you have marked B also answer, C is also a. To be frank, both are answers here. Next. What actions can be taken during the? Now first simple question. During inflation, government expenditure should? Taxes should? That's it. We know that now. Already people have more money in the hand. We should cut down that money. See, introduce subsidy and reduce tax rate. Will they? Next, implement measures to. That means all strict measures and reduce the. Yes, levy new taxes and raise the rates of. Yes, we will do both. We will do. Stupid fellows, both are answers here again. Once again, see in that attempt, some 2-3 questions was error. Two options are there. And introduce government borrowings. Will they borrow? And stimulate demand. No, highly impossible. Already economy is overperforming during the inflation. We should not stimulate. We should reduce demand. So B and C both were. Next, which of the following are considered tools of dash policy? Tools of fiscal policy. Tax, government expenditure, public debt and budget. Clear. Next, which of the following figure identify the primary deficit? Which deficit? How do you identify primary deficit? Fiscal deficit minus interest liability. Such easy question. See, donation of marks. 24 minus 2. 22. See, all revenues received. What is it? All? That is on a regular basis. Revenue received. Loans raised. And all the money received by the government is repayable of loans, and credit will come under which fund? That is the main account of government, na? I think that's it. Just calculate the number of questions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 questions. How many questions are there? So 10 questions have come from chapter 7. Clear? Okay, let's go to January attempt. Let's see in the January attempt how many questions have come. See here. Look at the word. Government's direct production. Government is only straight away coming and producing of the economic good like electricity and transportation services. An example of government is only allocating that by producing. Next, non-debt capital receipt. What is it? Non-debt capital receipt of the government. I said my example important. Recoveries of loans and advances. Next, when the outcome of the policy is not visible, that means impact lag. We are unable to get to know the result. That result is which lag? Next, the excess of government total expenditure over its total receipt excluding borrowing. I said now this is the key word. If the word excluding borrowings is there, fiscal. If the word excluding borrowing was not there, budgetary deficit it would have been. Since the word excluding borrowing is there, which deficit? Next, the receipts which neither creates any liability nor any reduction in the assets is called revenue receipt. I said now meaning, example, both are important. See there. Next, the progressive direct tax system. Which tax system? That means collect more from the rich and give benefit to the those who have the greater ability to pay, contributes more to the tax burden and distribute that to fairly among the. Next, which constitutional body aims for dash federalism? That means giving liberty, all this. That is Financial Commission. GK question it is. Now, one more. The cap and trade method of using government to ensure that the pollution is minimized in the most cost effective way. Which was that? Minimizing the externalities. That's it, I guess. Just calculate how many questions here. 1, 2, 3, 4, 5, 6, 7, 8. Just 8 questions. In this attempt, only 8 questions have come from chapter 7. Clear? See, approximately 8 to 10. Usually 10 marks will come. Sometimes if you are lucky, 12 and even 15 also. But bare minimum average is how much? 10 questions. How many questions? 4 units, 10 questions. By this entire chapter 7 comes to an. Any doubt in chapter 7 before moving to chapter 8? Any doubt? Let's go to chapter 8. So it takes solid 1.5 hours to complete. Before your break, chapter 8 is done. After the break, chapter 9 we will start. Chapter 10 is full of data and information. What is it full of? Full on data and information. I will instruct you how to prepare for that. I will not be doing that. Full on, full information, full data over there. Clear? Okay, let's start. Okay, what is chapter 8?
Money market.
Which market? Money market. So there are 3 units in total. How many units are there?
3 units.
Unit number 1 that speaks about money demand. What does it speaks about? Unit 2 speaks about money supply. What does Unit 2 speaks about? Unit 3 monetary policy. Which policy? Unit 1 is money demand. Now, my first question, do you guys want money? Do you demand money? Why? For what purpose? For living. That means spending on what? Goods and? Okay, only to spend on goods and services you need money. Investments, okay. That means end of the day again investment, services, goods and services. Other than that, any emergency purpose you need money? See, any emergencies can happen. Tomorrow I might not feel well, or my family members not feel well, or today alone I will not buy goods and services. Maybe I will buy goods and services after some 10 days, 15 days, clear? So I will not be going with general concept of money. What is money? Liquid financial asset. What is it?
Liquid financial assets.
And which has means of payment, measure of value, store of value, means of payment, all this barter system and all basic things are there. All your 12th standard syllabus. And there is also concept of dash money. Materially worthless. Already I would have explained it in detail. Paper note is a negotiable instrument. Which instrument? The currency note, what you are holding in your hand is just a sheet of paper. It is considered as a legal tender. What is it considered as a? From the eyes of law. Since law recognizes this as a legal tender. Which tender? We are using it as a money. If law stops recognizing that is just a sheet of paper, materially worthless, that is called fiat money. And all this nature of money, generally acceptable, old form of money, purchasing power, liquidity, it has no intrinsic value. That is what? Fiat money has no intrinsic. That is what? Next, legal tender. Money is not necessarily always a like a paper. It cannot be physical. Even digital currency, CBDC. Already I have explained in the class. Central bank digital currency. It is also called as e-rupee. Which rupee? It will come in unit 2. Next, general characteristics of money. These all are same. Your 11th and 12th syllabus. Clear? It is the most liquid form. Blah 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 blah. Functions of money. Medium of exchange. Store of value. Standard of deferred. And all this now. Same. 12th standard syllabus. Same basics. No difference. Just a generic topic it is. Clear? Should you want me to explain all the generic topics? Okay, now straight away let me come to the concept of demand for
Money.
Primarily there are 2 demands for money. How many demands is there? Number 1, demand is for liquidity preference. Demand is for dash preference. That means you will hold liquid money in your hand. That means that cash. Sir, why do I hold liquid money? Tomorrow I might have to buy something. After 10 days I might have to buy something. And second one, in order to buy goods and that is derived demand. Which demand? So why do we demand money? For 2 reasons. One, liquidity preference. Another one, to store value. That is derived demand. Which demand? Boss, income comes only once in a month, but expenditure is done throughout the. I will buy after 5 days. I will buy after 10 days. So that is derived demand. Which demand? And what are the characteristics of money? See, determinants. Money is represented as a income. If you are earning more income, you will demand more and more goods. So for that, you should hold more money in your hand. And money acts as a dash. General level of all the values, prices are decided based on money. And money gets affected because of rate of. How much money you will hold in your hand, that gets affected because of rate of. If interest rate is more, will you keep more money in your hand? No. Where will you invest? Bank or bonds? Next, degree of financial involvements like ATM, Phone Pay, Google Pay. If that is more, you will not keep cash in hand. Rather, you will invest it in the bank. Next, it forms part of. And now comes the most important topic of the chapter. All the 6 theories are important. This is the main topic of Unit 1. What is it? Main topic of. See, there are total 6 theories. How many theories are there? First 3 theories are most important. First theory, QTM, also called as quantity theory of money or a Fisher theory. Which theory? Quantity theory of money or a. And the second one, neoclassical approach, or also called as cash balance approach. Which approach? Or Cambridge approach. Which approach? And see, QTM was also called as which theory? Our classical economists before Keynes. Economy will always be at full employment. Those stupid people. Next, third one. Keynesian. Now Keynes is the most important. And after Keynes, another 3 more people explained the extension of a Keynes. That is post inventory theory by Baumol and Tobin. Next, Friedman's restatement theory. Next, demand for money as a behavior towards. That is also introduced by Tobin. See, this Tobin is different. Here Tobin is different. Here, Baumol and Tobin. What is it? Baumol and after Keynes. Clear? Now let me go straight away. Let me explain the first three theory in the form of example. So listen to this example carefully. What is it? Listen to the example. Okay, now let us take an example. Assuming there are three friends. One is Mr. Second one is Mr. Dev. Clear? And third one is Shweta. Shweta, right? Still I remember by mistake. That is what I usually don't remember students' name, but I'm remembering. She's from Chennai. I know that. My Chennai batch student. Chalo. Now let's assume Shashikiran and Dev and Shweta. All the three are colleagues. Who are we? Colleagues. Now we are all earning, let's assume 15,000 salary. How much as a salary? Okay, 15,000 salary we three are earning. Okay, chalo, nice, good. Now Shashikiran, stupid fellow. He will roam around with his girlfriend. He will not even save single rupee also. Full money has spent. Full money is for a transaction purpose. Which purpose? No savings, nothing. Full money spent. Always and always roaming out with girlfriend. Clear? But Dev, his parents keeps on scolding. Hey Dev, you should also save. You cannot spend more money like this. That means they will also use it for transaction purpose, and also he will save money. That is precautionary purpose. Which purpose? Now Shweta is much more smarter than Shashikiran and Dev. She will use money for three different purpose. Transaction, precaution, speculative purpose. Which purpose? Now let's say for example, now Dev, he will spend 12,000, he will save. But Shweta, she will spend, she will save, she will invest. See, this is first three theory. The very first theory, Shashikiran example is a QTM. Quantity theory of money only focuses on dash motive, transaction motive. Next one's Cambridge theory. Which theory? That is Dev example. Money is used for both transaction as well as precautionary motive. Now Shweta's example is a Keynesian theory. Which theory? Money is used for all the three, transaction, precautionary and. Now listen to this carefully. First two, this transaction and precautionary money is mainly dependent on income. Mainly dependent on income. But speculative money is dependent on interest rate. What is it dependent on? Remember, transaction and precautionary money is dependent on income. That means if you earn more income, you will spend more money to buy goods, and if you earn more income, you will also save more money. Clear? So that is mainly dependent on income. But speculative, when will you interest more? Sorry, when will you invest more? When interest rates is high in the market. When you will not invest, when interest rates are low in the market. So speculative money is dependent on interest, but transaction and precautionary money is dependent on. Okay, now let me take the QTM as an example. So listen to this carefully. Most of them have never understood this QTM concept in a proper manner. See, there is a direct relationship between price of a goods. What is it? And money supply in the economy. Which supply in the economy? And same way, transaction has a direct connection with velocity. What is a transaction has a direct connection with? See, QTM example was Shashikiran, always going out with girlfriend, spending money. Money is only used for a transaction purpose. Which purpose? Okay, now let's say for example, Shashikiran is giving chocolates to his girlfriend. 100 rupees one chocolate. And in a week, he will meet his girlfriend for 5 times. How many times? That means how much money Shashikiran is spending in total in a week? How much? 500 rupees Shashikiran is spending. So this is demand for money. What is it? Aggregate demand side. See, Shashikiran is spending 100 rupees 5 times. 100 rupees. That is demand side. QTM will never focus on demand side. QTM focuses on supply side. Which side will QTM focus? See, now let's assume in an economy there is only and only 80 rupees available. How much is available? 80. In the country only there is 80 rupee available, but chocolate price is 100 rupee. Can people buy the chocolate? That means, boss, people have in the hand is only how much? But how much is the product price? Now can they buy the product? No. That means even money supply should be equal to price, na? That means in an economy if there is 100 rupee, even if the product price is also, yes, demand gets created. That is why I said price and money supply is directly connected. Suppose in an economy, if money supply changes, what is it? Suppose if RBI prints more currency and distributes more currency inside the country. Now automatically 100 rupee, let's say that now I have 120 rupee. How much? That means now we will start demanding more. Na? What is the main root cause of inflation or deflation? Money is demand. Who is that? Mahan Baba. What is the main root cause of inflation and deflation? Money supply. What is that? If money supply increases, money supply, automatically product price will also, because of inflation. Accepted? See, that is what money supply has a direct connection with dash price of goods, and if more money comes into the system, automatically product price will also. Now Shashikiran, just assume instead of meeting his girlfriend for 5 times, if he meets 7 times, how many times? So 100 into 7, how much will be the demand now? 700. That means number of times this money getting circulated will increase. That is velocity. What is it called as? That means Shashikiran is buying chocolate for how many times? That means this 100 rupee is getting circulated by how many times? That means if number of transaction increases, velocity will also. That means money is getting circulated in economy how many times? 5 times. That means even supply of money is how much? So this is AS. So this is called as actual demand money, actual supply for money. This is actual money concept. Which concept? So in terms of actual money, which money? Actual money. The formula is MV is equals to PT. What is it? MV is equals to? See, this MV represents supply side. Which side? This PT represents which side? And whatever I just explained, this whole concept, they have also given a numerical problem. Which problem? From this theory, they will give numerical problem. Wait, let me show that numerical problem for you guys. Chapter 8, chapter 8, chapter 8. That was one super problem. Most of them went wrong. Look at the board. Question number 71. What is it? Question number? In an economy, money supply, that is what? M. M is how much? 500. So M comes under which side? Supply side or demand side? MV is equals to PT. Supply side. Money supply is how much? 500. And velocity, number of times money is getting circulated, how many times? 5 times. That means this 500 rupees getting circulated how many times? 5 times. And the total number of transaction is how much? 10,000. Calculate the average price level. Calculate what? Now listen to this very carefully. There is one more shortcut to remember. What is it? One more. So just now I explained MV is equals to PT. In this, what does M stands for? Money supply. What is money in circulation? What does V stands for? Velocity. That means number of times. That is average number of times the money is getting circulated. What does P stands for? Average price level. T stands for? Now see this. Price, that is average price level, can also be understood by MV divided by Clear? Now what are they asking for? Just understand, they are asking average. Now what is the formula for average price level? MV divided by Clear? Now in this MV, how much is M? 500 into V, how much is V? 5. So 500 into 5. 2000 divided by T. How much is T? So 2500 divided by 10,000. 0 point. Now kahani mein ek aur twist. Listen to this very carefully. In the question, what is given? Crores. But in the options, what is given? Thousands and. Now students will go wrong. Sir, we got 0.25, but 0.25 is not there. That means you should convert that crores into lakhs or crores into thousand. Now simple. See, common sense question is, see, suppose, let's say I have 1 crore rupees. How much crore rupees I have? How much is 1 crore is also called as? If I say I have 50 lakh, how much lakh? That is 0.5 crore. 0.5. Clear? Now, let's say for example, if I have 25 lakh, if lakh, that is 0.25 lakh. 0. Hello, lakh only. Wait. Pakka. We are just reducing the decimals there. That means 1 crore. What is it? Is representing how many lakh? But in the option, is it given in crore or is it given in lakh? and thousands. Lakhs and that is why I didn't write here as crore. Later I started calling it as lakh. That means 50 lakh is 0.5. What is it? If I consider 1 crore as 100 crore as 100 crore or 100 lakhs. 100 lakh as, if I say 0.5, it is 0.25 as. Now how much answer you got? 0.25. What is that 0.25? That is the first way of answering. What is it? First way of answering, sir. Okay, sir, I didn't remember this formula. P is MV divided by T. I didn't remember this formula. Now, how do I get to know? How do I solve this question? Leave about that. At least you know this logic, na? What is it? MV is equals to PT. Kindly write that. Okay, now we have M. We have V. M has a direct connection with P. Next, this has a direct connection with T. Okay, now what is the money supply? 500. How many times they are buying? 5 times. That is number of transaction was 5. Hey, wait, first see the question. Wait. Money supply was 500. And next, velocity is? Okay, velocity is? Okay, 5. Now the number of transaction was how much?
10,000.
Okay, 10,000. So they have given 10,000. Clear? We know that 500 into 5 is how much? 2,500. Clear? Now 10,000 into dash. 10,000 will be 2,500. We know that AD should be equal to AS. Clear? Hey, wait. We wrote other way around. P into T. This is AD. This is AS. AD is equals to AS. Now 10,000 into dash value will become 2,500. Just do the experiment. 10,000 is there. 10,000 into 1, 10,000. 10,000 into 2, 20,000. Clear? So you are getting higher values. That means now we should go to the lower values. Now 10,000 into 0.1. 10,000 into 0.1. 1. Clear? What is 10,000? Take out calculator. You guys have calculator in your hand. At least answer. Open up your mouth and answer. Why do you want to get scoldings from me? 10,000 into 0.1. How much? 1,000. But what we need? So 10,000 into 0.2. We got it. Next 10,000 into 0.25. We got now 0.25. Clear? Again, convert that. What is 0.25? Everything is given in the form of crores. What is it given in the form of? That crores has to be converted either into lakh or either into the 1,000. Clear? So already we decided. Now what is that? 1 crore is equals to 100 lakh. We just have to reduce that to single decimal. That means if I have 50 lakh, 50 lakh can be written as 0. That is 50% of 1 crore. So if I am writing 25 lakh, 25, that is 0. Answer is 0.25. See, both the ways. Either by remembering formula you can solve it, or even though if you don't know the formula, but you know this logic, MV is equals to PT. Even by using that MV is equals to PT, you can solve the problem. Clear? Understood? So this is only with respect to actual money. Which money? See, with respect to actual money, what is the formula? MV is equals to PT. But now we don't keep money only and only in cash. Sometimes we also keep money in bank. Where do we keep money in? So we have one more element called as M dash. What do we have? And also V dash. Even the credit money, whatever money you keep in bank, even that money gets circulated in the form of giving loans. In the form of giving? They respond in the form of giving loans. Clear? So we should consider both. Not just M and V, even M dash and V dash. So with respect to actual money and credit money, what is it with respect to? Actual money and credit money. We have to consider both. That means now MV plus M dash V dash is equals to P into T. This is the formula with respect to actual and only with respect to actual money. What is the formula? And now in case of Fisher theory, they are giving more and more focus to supply side, not focus to demand side. That is QTM. What is it? See here, MV is equals to PT. Only with respect to which money? Next to actual as well as credit money. See, clear? So the focus is only given for a transaction motive, and the main focus is on supply side. Which side? See, MV and M dash V dash, this is supply side. P and T is just a demand side. See, Fisher did not specifically mention anything about the dash of money. He just said that the theory is dependent on number of transactions. What is the number of? Along with its price. Along with its. So, price into number of transaction. That is P into T. That is called as aggregate demand side. But he never spoke any given importance to which side? Aggregate demand. He gave importance to which side? Aggregate supply. Clear? So, that is the very first theory, QTM. Get ready. Last 3 bench boys. Now, questions will be asked. You're not even opening your mouth. You guys are sitting like a stone. Yesterday only I clearly said, if not interested, better don't come to the class. If you are coming, I said you to respond, be active in the class. Next comes classical approach. Sorry, neoclassical. Which classical? QTM was a classical. Now Cambridge is a neoclassical. That means after Great Depression of America, 1936, John Maynard Keynes. What is it, John Maynard? See, even J.M. Keynes is also a part of a Cambridge approach. See, who all will come here? Alfred Marshall, A.C. Pigou, Robertson, John Maynard. I have put forward a different approach to QTM. That is quantity theory of. That is called as which approach? See, boss, money is not only just used for a transaction purpose. We also use money for a precautionary purpose. This precautionary money and transaction both are dependent on income. If we earn more and more money, we will set aside more money. See, whatever money that we are earning, in that some proportion. What is it? Some. Let's say some 20%. Just a random example. Suppose if I am earning 10,000 rupees, 20%. How much is that? 20,000. In 10,000, what is 20%? Someone is scolding very nicely for me. So 2,000 rupees is kept aside as a precautionary money. Which money? Now let's say, for example, my income increased. Now it is not 10,000. Let's say it is 25,000. Now what is 20% of 25,000? 5,000. Earlier I was keeping 2,000. Now I am keeping. That means when income increases, your demand for money for dash motive will also increase. That's it. That is neoclassical approach. See, conclusion. We need money not only to meet our, we also need it for, and income will take place only once in a time. So we need to create temporary abort of money. See the concept here. What is it? Temporary abort of value. That means we will buy goods even after 5 days, 10 days, 20 days. For that I should store money. I should. Even that is for a precautionary purpose. Which purpose? Say difference between QTM and Cambridge approach. What is the difference between what? Cambridge approach. See, in case of QTM, it was only focusing on dash side. But in Cambridge, we are focusing on demand side. In QTM, money was just a dash concept. But in Cambridge, money is a. In QTM, money was only here transaction and clear. This is second theory, Cambridge approach. Now comes the beautiful one. What is it? See, already we discussed about the first two. This is dependent on dash. Speculative money is dependent on interest rates. So how it is dependent on interest rates? So remember, straight away we'll explain speculative demand for money. Now simple concept. Now let's say, for example, on 1st of January, what is the 1st of 2025, I will invest it on a bond market. Which market? See, the bond price, let's assume it is rupees 100, and the interest rate, which rate? Let's say it is 10%. Good, no sir, 10% really high. So should I keep money in my hand or should I invest it on bond? Invest it on. That means when interest rate is more, what is it? Interest rate is? I will not keep money in hand. That means speculative demand for money will be lesser. I will not hold money in hand. My holding of money in hand will be lesser. Why? Because interest rate is. When interest rate is more, speculative demand for money will be less. Now let's say after 6 months, on 1st of July, 1st of 2025, now this bond price became 500, which was 100 rupee, which increased it to how much? Now interest rate is only and only. Interest rate is more or less. Now I will sell this bond. If I sell this bond, I will make a profit of how much? 400 rupees. That means when interest rate is less, will I keep in bond or will I take out that into cash? That means when interest rate is low, demand for speculative money will be high. I will keep money in hand. I will keep money in. That means bond price. What is it? Bond price and interest rate. Even they are inversely related. What is it? They are. See there, when interest rate is more, bond price is less 100 rupee. When interest rate became less, bond price is more, 500 rupees. Same as interest rate and speculative demand for money. Speculative demand for. When interest rate is more, I will not keep money in hand. I will keep money in hand will be lesser. When interest rate is less, I will convert that into cash and I will keep money in hand will be. Which demand? Speculative demand for money and interest rate are dash related. Same as bond price and interest rate. Both are negatively related. Both are. That means there are two types of income for me now. Number one, interest income. Which income? Second one, capital gain. See, by selling this bond, I bought it for 100 rupee. Now I am selling for how much of money I made? That is capital gain. Suppose 10% of 100 is 10 rupee. 4% of 500 is 20 rupee. This 20 rupee is a interest income. So I have both the income. Which income? One is interest income, other one is a capital income. Where is capital gain? But we focus on dash. So based on interest rate, we will take a decision whether to invest or not to invest in the bond market. Which market? Bond. See, because this theory is given in 1936. At that point of time, equity trading was not that great. Bond trading was highly in practice. So explanations of theory is given in bond market. Which market? Bond. See, if the interest rates in the bond market is more, I will not keep money in hand. Rather, I will keep less money. I will convert all my speculative money into bond. Clear? Suppose in the bond market, if interest rate decreases, by that time bond price would have increased. So I will convert this bond into cash. When interest rate is more, cash into bond. When interest rate is less, bond into negatively related. Negatively. That means I am taking advantage of future change in interest rate. Which change in interest rate? So listen to this carefully. Presently interest rate is how much? In future how much it will become? That means I am investing money when it is. I will take out money when it becomes. That means in future it will become lesser. Na? Presently I am investing to take advantages of dash changes. Same as future change in bond price. Future change in? Simple. Initially bond price was less, interest rate is more. In future interest rate will become less, bond price will become more. Same, nothing but I am investing money to take advantages of future. Advantages of either change in bond price or either change in interest rates. Both are one and the same. Clear? So speculative money is mainly dependent on dash. That means how much money I will hold in hand as a speculative money is dependent on interest rate. If interest rate is more, will I keep more money in hand? Less money. If interest rate is less, will I keep more money in hand? Yes. I will convert my bond into cash. That's it. That is speculative demand for money. See, speculative motive refers to the people desire to, in order to, equip to exploit attractive investment opportunity for which we need a. According to Keynes, people demand to hold money balance. That is speculative demand for money to take advantages of dash changes in dash rate of interest. It is same as future change in. Simple. I am investing at present to take advantages of future. So the impact of Keynes theory is based on. That is also called as returns on bond. Interest rate changes is nothing but also changes in the bond price. Both are one and the. So final assumption, we expect there is no returns on money. Money returns is zero. If you just simply keep money in your hand, will it put any extra money? But if you keep that money in the bond, you have two types of income. Number one. Number two. Clear? So when will you convert your cash into bond? When your present rate of interest is higher. See here, current rate of interest. What is it? That is 10%. And critical rate in future, this critical rate of interest will become. Presently, how much is this? Now, what you will do? Convert your cash into. See, at the higher rate of interest, we will convert our cash into. Suppose opposite. If your current rate of interest is only 4%, which is lower, and critical rate of interest in future, it will become. So, at the lower interest rate, you will convert your bonds into. Clear? This is speculative demand for money. See here. Transaction and precautionary is dependent on, but speculative is dependent on. So according to Keynes, it is a sum total of transaction motive plus precautionary motive plus a speculative motive. All the three put together. What is it? All the three is the demand for money. Is the demand for. That is what? Speculative demand for money. Which demand for money? Clear? And yesterday we discussed something called as crowding out. Which out? What was crowding out?
Taking money from inside
When they are taking money.
during recession.
Superb. During the recession phase. Which phase? When economy is not performing well, stupid fellows, thumbs up people. All our government are stupid fellows. Rather than borrowing loan from outside, they are borrowing loan from. So what did they do for interest rate? Increased. That is crowding out. That was a disadvantage of which policy? Fiscal policy. Now complete opposite to that disadvantages of monetary policy, we have something called as liquidity trap. Which trap? That means interest rate is almost zero. What is it? Interest rates are? In an economy, interest rate is almost zero now. What is it almost? Like 0.5, 0.2, just 1%. Would you like to invest in bond market? When interest rate is extremely low, will you invest money or will you hold money to buy goods and services? That is what. Money is getting trapped in the hands of people. Liquidity trap. What is it? See, when economy is not performing well, when we are at the contraction phase, I know interest rate should decrease. But if it decreases to such a large extent that if it becomes like almost zero, what is it? This will have as a dash trap. In real world, Japan has experienced this Keynesian liquidity trap. At that point of time, whatever money that government is going to pump inside the system, at that given lower rate of interest, people are not interested in investing money. People are not interested in. They will hold everything in the form of cash. So it will become parallel to which axis? That means graph will be like this. See, this is x-axis now. This is y-axis. That means E is equals to infinite. What is it? E is equals to? That means speculative demand of money will become dash infinite. Parallel to which axis? That is what we call perfectly. See, speculative demand for money will become perfectly at the given rate of interest and it will be parallel to x-axis. That is why we call it as a dash trap. Clear? Complete opposite of crowding out is called as which trap? Liquidity trap. Is that clear? Understood? So this is the first three theory. See, QTM will focus only on transaction motive. Second one, Cambridge will focus on and precautionary motives. Keynes will concentrate on transaction, precaution, and in Keynes theory, which will define the interest rate capacity, speculative motive of demand for money, that is mainly dependent on interest, but transaction motive and precautionary motive is dependent on income. Clear? So this is the first three theories. Next comes post-Keynesian theory. Which theory? See, concept is very simple, which was introduced by Baumol and Tobin. Who introduced it? Now these two guys said, see boss, we cannot just hold money in the hand, because if I keep money in the hand now, it will have an opportunity cost in the form of lost interest. Rather than keeping money in your hand, keep it in the bank or invest it in bond, you will earn interest now. But every time when you convert from cash to bond or bond to, there is a fixed monetary charges called as brokerage charges. Which charges? So because of brokerage charges, many people are hesitant to convert more number of times, because if you convert more number of times, you will pay more and more brokerage charges. So we cannot pay more and more brokerage charges. So we have to reduce that brokerage charges now. So what we will do now? We will hold the optimum combination. We will hold which combination? Both. Combination of both. We will also hold bond. We will also hold cash. We will make sure in such a way that that foregone cost in the form of opportunity cost should not be higher, or we should not even pay more and more fixed charges. We should not pay more and more. So we should hold in such a proportion that we also came out with a formula called a square root rule. How much money to be held in cash and how much money to be invested in bond, so that you are not losing more money in the name of opportunity cost, or you are not converting more times and you are paying the fixed charges. Which charges? That is Baumol's proposition. Which proposition? Clear? Next comes QTM, that is Friedman's restatement theory. What is it? Friedman's? And this is where exam question comes. Be careful. Baumol and Tobin. What is it? Baumol and? See, the first theory, whatever we just discussed, post-Keynesian theory, that is inventory approach. Which approach? They said cash is like any other inventory. Cash is like? That means whatever the money you guys have in your hand, Allah, that is real cash balance. What is it? Real? Is like a inventory held. Which held? Like any other closing stock will be there now, goods closing stock, like that, even cash closing stock. It is like an inventory head, which held? Now comes Friedman theory. He extended the Keynes theory. What did he extended? Of speculative demand for money. See, Keynes spoke about present income. Keynes spoke about which income? But Friedman spoke about permanent income. Which income? That means identify all your future incomes present value. Which incomes present value? Future incomes. That means, let's say now Shashikiran will buy a car. In next 5 years, this car will fetch me a revenue of 15 lakh rupees. How much? What is the present value of car? Let's say 7 lakh rupees. How much is that? So presently I'm investing how much? By using that 7 lakh rupee car, in next 5 years, how much I will earn? That is in next 5 years, na? So bring that down to present value. That means in 5 years you will earn 15 lakh. What is the value of that 15 lakh today? Bring that down. Let me give one more example. Let's assume today one plate of pani puri is 40 rupees. How much is that? In 2025. Now let's assume in 2030, one plate of pani puri will be 100 rupee. How much it will be? Can I say what is 100 rupee in 2030? Today it is 40 rupee. Yes or no? They respond, man. They, on a serious note, I'm saying if that energy doesn't come, examples will cut down. I will make it more speed. Now, what will be in future for 100 rupee? Today's value is just that is what? Bring down future income's present value. Shashikiran, you will earn 15 lakh rupee in 5 years down the line. That is in 2030. Now in 2025, what is the present value? What is the of that 15 lakh rupee? Let's say it is only 6 lakh rupee. How much is that? But presently, how much are you investing on car? Is it good investment? Bad investment, don't invest. Suppose that 15 lakh rupees present value is 9 lakh rupee. How much is that? But how much are you investing on car? Good investment, go ahead. Identify future income's present value and then take a decision of investing or not. That is the speculative demand for money. That is called Milton Friedman's quantity theory. See here, demand for money affects because of same factors which affect the demand for other. One, permanent income. In future, what you will going to get and what is the rate of returns on that asset. And it has also got a risk. See, identify dash income and bring that out into a present expected value of all the future income. Clear? So there are different class of asset. Kindly identify the discount rate and bring that down to the discounted rate and then identify. See, either you are keeping money in your hand or investing on or any physical like land and all or any human. So bring that down. All that future income's present value. Which income's present value? Comes present value. Clear? And there is also called as dash rate. So because of inflation, money will be losing its value. Purchasing capacity will be reducing day by day, year by year. So you cannot keep money just in the form of hands, in the form of cash. That will have an effect. That will have a dash effect. What is that effect? If you simply keep idle cash in your hand, you will be losing out opportunity to earn interest. Opportunity to earn. So there is a inflation rate. There is a positive inflation rate which will eat your money. So kindly don't keep money in your hand. You have to invest. Invest in such a way that in your future, whatever income is there now, that should be greater than present value. That should be greater than. That is the Friedman theory. Which theory? Last but not the least, behavior towards risk. What is it? So what is this behavior towards risk? A simple concept. See, not everyone is ready to take a risk. Some people will take more risk, some people will take. Or you need to always have a combination of safe assets and risky assets. So I am playing safe game. Yes, I will also invest safely and I will take little risk. I will take a. And there is something called as risk aversion theory. Which theory? That means my intention is to always take a less risk. First, later I will slowly start increasing that and I will go to the. That means like a logical thinking. First, I will not take more risk. Sir, first I will join CA Foundation. I will see to it. If I can able to crack CA Foundation, then I will think of doing CA. Straight away, I will not learn CA finals and then I will come to Foundation. First, we will learn what? Then we will go to next articleship. Then later, like this risk aversion. First, slowly we will start taking risk. Slowly we will start taking torture from Shashikiran, from Akhilesh sir, from Nitin sir. Like this, slowly we will start taking torture and next we will go to greater tortures. First lesser torture, then go to greater torture. So low risk to high risk, that is called as dash theory, risk aversion theory. But some people are there, straight away they will take the, and then slowly they will start reducing the risk. That is more risk to less risk. But any risk aversion guy will never select this strategy. More to less. And there is something called as dash risk. I am not ready to take risk at all. I will keep everything in the form of cash. I know there is opportunity cost. Even though if I don't earn income, that is okay for me. But I will not invest. I will not. That is zero risk. Which risk? Zero risk, zero returns. What is it? Zero risk? That is the last one, zero risk. That is behavior towards risk introduced by James Tobin in his book called as Liquidity Preference of Behavior Towards invented in 1950. By this, unit 1 of chapter 8 comes to an. That's it. Total, how many theories are there? 6 theories. First 3 theory, QTM, Cambridge approach and Keynesian theory. Post Keynesian, how many theories are there? For all the 6 are important. What is it? All the 6 are clear, understood. Just flip back the page, have a look. Any doubt, let me know before moving to unit 2. Either someone will bang outside or someone is banging inside. Okay, let's go to the next unit. Unit number 2, money supply. What is it? So numerical problems will come. Here one of the interesting topics are also there. Formulas are there. M1, M2, M3, M4. You need to remember formula. Money multiplier concept, credit multiplier concept. One of the most interesting topic. Which topic? Only if you have learnt concept. Clear? So totally there are 4 elements which we will be discussing. Number 1, sources of money. From where in the economy money will get supplied. Second one, measurements of all that M1, M2, M3 and determination of money. Last but not the least, concept of money. See, money is the concept where we are discussing. In short, we need to first understand the definition of. See, simple. What do you mean by money supply? Money supply is the money which is in the hands of public. Money is in the hands of. See, in that stock variable, flow variable, 2 things are there. What is stock? Simple. How much money is printed and circulated? What is it? That is called as. Out of that printed and circulated, how much is in the hands of public? How much is in the hands of? For a transaction purposes. That is called as dash variable. See, flow is always a part of stock. What is it? Flow is always a. Sir, why? Because some portion of money will be in the government. Some portion will be with the banks. That is bank money and government's money. That will not be a part of public money. That will not be a part of. So public money is a dash variable. But currency printed and circulated is there. So there is a difference. So now we will understand the definition of public. What is the definition of? See, remember, rather than understanding who is included in public, understand who is not included. Who is? That will make more sense. Simple. Producers of money. What is it? Are never included in the definition of public. Who is producers of money? Simple. Government and banking system. Who is not included in the definition of public? Government and banking system. Money held by government, money held by the banking system is not a public money. Is not a dash money. Clear? Now, sometimes even the question is coming from this public meaning. And from the theory, they are asking numerical question. Which question? See, except these 2. Everyone else is called as a public. Who is that everyone? All local, non-banking financial, non-departmental public sector, foreign central banks and foreign. And IMF money which is held in India with the RBI, even that is public money. Even that is which money? See here, let me show the questions. Question number 93. Calculate currency with whom? Currency with whom? Only and only with public. See, note in circulation, yes, it will be with the public. Coins in circulation, yes, it will be with the public. Cash on hand with whom? Is it with public? Subtract. Next, cash on hand with whom? Subtract. Add this two, subtract these two. What is it? Add this two, subtract this two. That's it. See, from the theory, they are asking numerical question. Add this two, subtract this two. What is the value? Hey, do it, man. Where is calculator? Stupid fellows. Do it. 2,62,000. 540. Wait, let me show one more question. Do it. Do it now. That is primary deficit. Wait. Now, question number 56. See there. Calculate currency with whom? Currency with from the following data. Notes in circulation. Yes, in the public. Currency in rupee coins. That's with public. Currency with small coin. But currency in and with whom? Simple. Add this 3, subtract this last one. That's it. Donation of marks. What is it? That's it. See, we understood theory. From that theory, they are asking numerical question. Clear? So remember, even like this, some bachu questions will come in your exam. Clear? You should take out calculator and solve. Everyone, clear? Next. Then who is called as government? Government is inclusive of central and all the state, including local. Next comes, who is the banking system? One who accepts a dash deposit, CASA deposit. What is CASA? Current account and savings account. Which account? Current account and savings account. That is called as which deposit? CASA deposit. One who come under the Reserve Bank and also Reserve Bank. See, Reserve Bank of India and all the bank which accepts a dash deposit. That means we can also withdraw money with the use of check, mainly because of CASA deposit. Current account and savings account deposits. Clear? Next, the sources of money supply. What is it? Sources of? Simple. There are two sources. One primary source, that is from the central bank. Which bank? And such money is also called as or also called as monetary base. Which base? Write this down somewhere. Monetary base. It is also called as monetary base. High powered money, fiat money, or monetary base. And who is the primary source of money supply in the country? Primary source of money supply is the central bank. Which bank? Clear? Money issued by the central bank is the primary source, and it has got a proper reserve and backup. That is why in your currency note, I promise to pay the bearer a sum of rupees so and so. The dialogue statement, gold reserves, foreign exchange reserves will be kept now. That reserves are there. But money created by the in the process of lending and borrowing. In the process of what? That is called credit money. Now let's take an example. Let's assume Mr. Shashi, he will go and deposit 1,000 rupees in his bank account. How much in his bank account? Now RBI will say, commercial bank. Now this has gone to bank A. This has gone to which bank? Bank A. Now RBI will say, you should keep a reserve. You should keep what? Reserve of 10%. What is it? Reserve of how much? 10%. That means how much money they will keep it aside now? 100 rupee. Now what is the balance? Now balance is rupees 900. Now let's say this balance 900 rupees is given as a loan. For whom? Let's say for Shweta. For whom it is given? Now Shweta, we will be taking dash loan of how much? Rupees. Now Shweta has got a loan account with the bank A. Shashikiran has a savings account with the bank A. Clear? Now in total, bank has how much of money in hand? But Shashikiran can withdraw how much? Shweta can withdraw how much? In reality, bank has only, but liability of how much? 1,900. Sir, where this extra 900 rupees has come? That is what? In the process of lending money, they have created this 900. It doesn't have any reserve. It doesn't have any. This is credit money. Which money? So, who will create such credit money? In what process? In the process of lending and borrowing. What is it in the process of? The total supply of money in the economy is determined by the extent of created by which bank? In the country. That is called as which money? Credit money. So banks create money supply in the process of borrowing and lending transaction with the Money so created by the commercial bank in the process of lending activity is called as a. So who is the secondary source of money supply in the country? Who is the primary source of money supply in the country? That's it. These are the two sources of money supply. CBDC, e-rupee concept. Already I said now in the form of digital currency. Which currency? Appa, it's not your UPI transactions. Digital currency is totally different. Instead of printing note, they are giving in the form of digital form. That is called CBDC. Even that is illegal. Issued by the central bank. Have you seen the digital currency? Not at all seen, huh? Nice. Wow. CBDC note. See, this is how. Instead of printing in the form of paper, they will issue it in the form of digital notes. Which notes? This is CBDC, Central Bank Digital Currency. Already 15 plus banks have their own applications which has been issued. I already have it. Wait, I will show. Nice fellows you guys are. You people don't even know what is CBDC. See here, let me show it in the camera. Wait. Okay, load. Can you see this? This side. See, same to same note. It is not taking a proper zoom. See, 5, 10, same to same. It will be like this. See, this is CBDCs. It is a digital note. You can have, there is a separate application for this. Like your how Phone Pay, Google Pay is there. Every bank has released a separate application already. Even this is a legal tender. Adi keladu newspaper odbeko, finance news, another. It already bit 2 varsha aitu. From 2 years, it is a legal tender in our country. Most of them doesn't even know. Next, going further, this is going to be the currency of the country. Currency of the, and the paper currency nalla, they will reduce it off. They are going to reduce paper currencies going further, and they will introduce more and more of digital currencies. Instead of printing in the form of paper, they are giving it in the form of digital form. There is a separate application, bank account application, where you can receive and send money from one another. In a day, maximum you can do a transaction of 50,000 rupees. How much? You can't do beyond 50,000. Maximum you can load is 1 lakh rupees at one single time to your wallet. Same like your Phone Pay, Google Pay wallet is there, na? Like this CBDC wallets will be there. And it will never come and record in your passbook. Like suppose if at all you're making payment of UPI, now even it gets entered in your passbook, 2 rupees paid. Now it will not get entered like that. There is a separate digital passbook, separate passbook in that application. Only in that you can track records. So this is CBDC. Legal tender in our country. Clear? Next, measurements of money supply. Now this is the most important topic. M1, M2, M3, M4. See earlier, until 1967, 1968, RBI itself used to supply, let me say, measure the supply of money in the form of narrow money concept. Which money concept? That is M1. But after 1967-68, they came up with aggregate monetary supply, little more broader concept. But from 1977 and onwards, after the recommendations of the second working group of monetary money supply, they came up with M1, M2, M3, M4. What is it? M1, M2, M3 and M4. M1 being the least liquid. M1 being the least liquid. Hello, most liquid. Abba, day, revision class. Even after one round of revision, intentionally, if I say opposite, you are like M1 is least liquid. Yes, least liquid. Stupid. M1 is most liquid. What is it? M3 is least liquid. M3 is? See, M1 is also called as narrow money. Which money? M3 is called as a broad money. M3 is called as a? M1 is a narrow money. M3 is a broad money. Now, this formulas of M1, M2, M3, M4 is most important. M1, M2, M3, M4 is most important. Strike off that word net. It was there in inter earlier. I used to explain in the class what happens if that word net comes in, what you should do and all. Clear? But foundation level, they will not give it. See, what is the formula of M1? Currency, notes and coins with the M1 also includes demand deposits. Which deposits? With whom? Banking system. That is also called as dash deposits, CASA deposits and other deposits with. So this is the formula for M1. Formula for what? Calculate. Question number 49. See, exam question. Calculate M1. See there. What is the formula of M1? Currency notes plus coins in circulation plus demand deposits with the bank plus other deposits with. RBI. See, just donation of marks by ICAI. You should know the formula. If you don't know the formula, gone case. What is the answer? 5 lakh. 68. Simple. You should add 1, 2, 3. That's it. Only these 3 should be added. Nothing else. Clear? See, formulas are important. You should know what is M1, what is M2, what is M3, what is. See, M1, currency notes plus coins with public, demand deposit with the banking system, other deposits with RBI, plus M2 is M1 plus savings deposit with post office savings bank. M3 is M1 plus net time deposit. Which deposit? All your FDs. That will come under M3. Next, M4 is M3 plus total deposits with the excluding NSC, National Savings Certificate. Which certificate? That is a borrowings made by the government from you, general public. That money is used by government, not by public. So exclude NSC. What does it exclude? Which is called as narrow money. Which is most liquid. M4 is M4 is least liquid and M3 is called as broad money. It is not M3 pa least liquid, M4 is least liquid. But broad money is called as M3, but M4 is least liquid. M4 is dash liquid. Now you should know this formulas. The question can come either from M1, M2, M3 or question can come from anywhere. But you should be knowing formulas. If you don't know formula, to avoid one right fix. And that too easy 1 mark question will come. What is it? Easy 1 mark question is going to come. See, numerical problems I have given some 2-3 problems as there in my material also. Clear? Next, let us go to the concept of money multiplier and money supply. What is it? Money multiplier and? So what is this money multiplier, money supply? Straight away, let me come to the concept. See, there are 3 people's behavior what you should understand. How many people's behavior? So simple. First behavior. Wait, I need this. We will take this later. Okay. Now I will write here. Now first behavior of central bank. What is it? Behavior of? Now see, central bank has to print more currency and they should issue in the form of high powered money, or it is also called as monetary base. Which base? Or high powered money, fiat money. They will be printing more currency and circulating more and more currency. If central bank prints and circulates more currency, that will act as a money supply getting multiplied. Money supply getting? I will explain how it gets multiplied. Clear? And money supply is the primary source, comes from whom? Central. Now, central bank is responsible to create more and more money in the economy. That means adequate money in the... See, if the money supply increases beyond needed, inflation. Lesser than what it is needed, deflation. But adequate money flow should be there. Now, who is the issuer of the money supply in the country? RBI. Next comes behavior of a commercial bank. Behavior of which bank? Commercial bank. So what is this behavior of a commercial bank? Simple concept. Listen, first look at the board. Excuse me, uncle. Listen here. Now what is commercial bank behavior? If you remember, I said, now RBI will ask commercial bank to keep dash. Required reserves. That means every money, whatever you receive in the form of deposit, you can't give it as a loan. Some portion you should maintain as dash. Some portion you should maintain as. Now RBI will say, you need to keep reserves. What you should keep? Such certain amount of reserves has to be kept by commercial bank. Let's assume now RBI said keep 10% of reserve. This is required reserve. Which reserve? Required. But sometimes this commercial banks will show extra talent. RBI said to keep 10%. That stupid fellows kept another 2% extra. This is called extra reserve. Which reserve? Or excess reserve. All of that put together is called as total reserve. Now total reserve is how much? Now RBI said to maintain a reserve of how much? But these commercial banks show extra talent of how much? Now when you keep more reserves, automatically money multiplier approach will decrease. Same like investment multiplier, connection with MP. If MPC reduces, multiplier value will also. Same way, if the required reserve is 10%, that means 1 divided by 10%. What is it? Do it 1 divided by 0.1. 10% can be written as 0.1. 1 divided by 0.1. How much? 10 times. That means money could have circulated 10 times. How many times? But the stupid fellows commercial bank showed extra talent of how much? Total reserve is how much? Now 1 divided by 0.12. How many times? 8.33 times. That means now money will circulate only by how many times? But earlier if they have kept only just 10%, how many times it will get circulated? Now you tell me, should we keep more reserve or less reserve? RBI said to keep just 10%, but commercial bank showed an extra talent and they kept another 2% extra, so it became 12%. Now money will only circulate 8.33 times rather than 10 times. So we believe that commercial bank is not showing this extra talent. Whatever Reserve Bank is saying to keep as a reserve, only that much they will keep it as a reserve. Next comes general public behavior. Whose behavior? So we believe that general public will not hold more cash in the hand. Will not hold. Rather, they will deposit more money in the bank. Rather, they will deposit what? More money in the bank. That means they will keep less cash and they will deposit more money. So small c is equal to capital C divided by D. That means they will not keep more cash in the hand. Rather, they will deposit more and more. Same way, the formula to identify excess reserve. Which reserve? That is small e will be excess reserves divided by deposit. What is it? Excess reserve divided by? Clear? Now these formulas are important. Small e, small c. How do we get to know required reserve? That RBI will only say, let's assume 10%. That is 0.1. 0. Clear? Required reserves will be issued by whom? RBI. Excess reserve will be created by whom? We believe in economy that commercial bank is not keeping any excess reserve and they are only and only maintaining the reserve which is informed by. And we believe general public is not keeping more and more cash in the hand. They are depositing more and more money, because if you keep cash in your hand, will it put extra money? But if you deposit that money in the bank, you will earn interest. So we want you to deposit more rather than keeping more cash. Clear? So these are the combined three behaviors put together. We will get to know the concept of money supply as well as multiplier. What is it? Money supply as well as? Okay, left side I will write money supply because three formulas will come. And multiplier. What is money supply? Simple. Multiplier into monetary base. What is it? How do we identify multiplier? Simple. 1 divided by RRR. What is it? 1 divided by? Required reserve ratio. In my example, 10%. What is it? Required reserve. In my example, 10%. Clear? So RRR means required reserve ratio. Not your stupid movie. Raudram, Ranam, Rudiram. All that bakwas movie of Rajmouli. What is it? To be frank, as per my point of view, it was bakwas only. Nothing. See, in Magadhira, Ram Charan Teja will hit 100 soldiers. And he will be a great warrior. Okay, assume he is a great warrior. That ancient time they had a powers. Now, during the British rule, he is one inspector. He will go in crowd who is of 1,000 people. He will target one guy, he will hit him and he will come inside. Wow, what a nice. And bridge scene, rope scene. That small kid saving. Next level stunt. Even Salman Khan should feel ashamed. He has not done it. Physics and Salman Khan is two opposite poles. Now Rajmouli and physics is also becoming opposite poles to each other. What a nice movie. And the climax scene. You should see Ram Charan Teja will be having NTR on his shoulders. And he will be running. He will be, wow, what a nice strength. No human, normal human can have that power. Only Rajmouli can create that. Oh, what a nice movie. Sometimes I will be teasing my friends for this. And in Kannada also, we have full superheroes only. If we hit JCB handle will only fall. We will be having a very thin hero. If we lift a person, even a Pailwan, he will lift like this in left hand and he will go like this. We have it. Even we Sandalwood people are not enough. Even we have Balaya Pro Max. You don't know. That's it. Okay, chalo, let's come back to our topic. Okay, listen. Money supply. What is the formula of money supply? Multiplier into monetary base. What is it? Multiplier into? How do you identify multiplier? 1 divided by RRR. That is actually RR only. Only 2 R's are there. Only to make you people remember. Required reserve ratio. What is it? Or else by using the same formula, we can identify one more formula for multiplier. Same to same. See here, money supply divided by monetary base. What is it? Same formula converted into multiplier formula. Is that clear? Understood? So what is the money supply formula? Multiplier into monetary base. Clear? And what is multiplier formula? Two formulas are there. 1 divided by RR. And multiplier can also be said as money supply divided by monetary. Is that clear? So these are the two formulas. Understood? Now new addition. There is one more beautiful formula. So listen to this carefully. multiplier is equals to 1 plus C, 1 plus divided by R plus E plus C. What is it? Multiplier is 1 plus C divided by, for the same formula. What is it? For the 1 plus C divided by R plus E plus into H. What is H called as? I powered money. That will become money supply formula. Which formula? Clear? So these are the money supply, not multiplier. Multiplier is just 1 plus C divided by R plus E plus C. That's it. For the same formula, if you multiply that with H, what you will get? First write down the formulas. And this is where you guys will go wrong. From any of this logic, you will get question. Clear? There is one more formula for money supply. I will explain. So total 3 plus 3 it is. What is it? 3 plus. So as of now, I have explained 2 plus 3. Clear? So these are the formulas. Now see, total behavior of joint behavior of what? Joint behavior of a central bank, general public. See, combined behavior. Which are those combined behavior? Behavior of a central bank, commercial bank and general. That will define the concept of money multiplier approach. So what is that concept of money multiplier approach? First we will identify money. What is the formula of money supply? Small m into MB. By using that, we will identify money supply. Money supply, we will use it and we will identify multiplier. Money supply divided by. That is what I said now. Money supply divided by monetary base is small m. Clear? And see there. We assume. What is it? That banks are not keeping dash reserve. So that multiplier value will increase. Instead of 10 times, if you keep excess reserve, it will become just 8.33 times. So we want more and more reserves to be kept by bank or less reserves. So when there is a less reserve, money multiplier will become more. We want general public, individuals, general public to hold more cash or hold less cash. Hold less cash. They should deposit more. See, assume money multiplier are as follows. We have certain assumption. We assume whatever central bank is printing the currency note and circulating in economy. What is it? Printing the currency note and circulating in the economy. Such excess money, whatever that is printed and circulated, that is not held as excess reserve by commercial bank. Not held as. And general public, all our non-banking financial institutions and our individuals are never holding the excess cash. Which cash? Clear? Now, can the money multiplier, can it become zero? Yes. When these stupid people holds more and more money in their hand rather than depositing. Just assume RBI printed 10,000 crores of currency. How much? Now, 10,000 crore is held as excess reserve by the commercial bank. One way credit, another way debit. Done. Nullified. Effect got nullified. Or now commercial bank is not showing their extra talent, but general public is showing the extra talent. RBI printed 10,000 rupees of currency and these stupid fellows is holding 10,000 rupees worth of cash. One credit, one nullified. What is that? Nullified. And one more question will come. What is the size of money multiplier? What is the size of? Same. 1 divided by RR. Can you see that? Money multiplier 1 divided by RRR into 100. That is the formula. Already I explained you. 10% was there and we made it as 12%. How much? See, already you decided 1 divided by 0.12. It became how many times? 8.33 times. If it was 10%, how many times? Suppose if it becomes 5%, how many times? See, if the required reserve ratio, RBI drops it down to just money gets multiplied by how many times? That means whatever money central bank has printed and circulated in the economy, that gets multiplied by how many times? 20 times. If it is only and only. If the interest rate becomes, that required reserve ratio becomes 10%, how many times? By chance, if a commercial bank shows extra talent of another 2% and total reserves become how many times? Now you tell me, should the reserves increase or should it decrease? If it decreases, money multiplier will clear. This is the concept of money multiplier. See, behavior of H, that is with respect to which bank? Behavior of E, this is not R, E. That is excess reserve. That is excess reserve divided by deposits. Next, small c, cash divided by, that is behavior of general public. See, three people's behavior is there. First one, behavior of a Second, behavior of a. Third one, behavior of a. Clear, ra? So all that combined behavior put together. See, summary. The size of money multiplier is determined by the joint behavior of dash, dash and dash. Central, commercial and lower these ratios are. These stupid people, if they hold lesser ratio, then automatically money multiplier will become larger. Clear, ra? Next, see the new formula. See, into h. What is it? If you remove this into h, if you just remove this into h, see that? Money multiplier. Clear, ra? So that is the new formula. There is one problem here. See, in the Grady's land, required reserve ratio is how much? 0.1. Currency in the hands of people, 400 billion. Deposits, 800 billion. Excess reserve, 0.8 billion. What is it? 0. Okay, let me give one twister. Assume they have not given the 0.8 billion. Instead of giving in billion, they have given in. Now we should convert million to billion. What does it convert to? How much is 1 billion? Papa? 1 billion is equals to 100 crore. How much is that? 1 million. What is it? 1 is 10 lakh. That means let's assume Shashikiran has 100 crore assumption. What is that? And I will give, let's say 10 lakh rupees to donation. 10 lakh rupees to assumption. What is it? Assumption. Now, how much percentage of my wealth I donated? That is the question. See, simple logic it is. Common sense here. When I said 1 billion is 100 crore, 1 billion is, and 1 million is 10 lakh. Can I say 1 crore? What is it? As 100 lakh. 1 crore as 100 lakh. Now, out of 100 crore, out of how much? 1 crore is 1%. 1 crore is how much? Do you agree? But 10 lakh we need. That means still more 10% reduction. That means 10 lakh. What is it? That means 0.1 crore. 0. That means in comparison to 100 crore, 1 crore was 1%. 1 crore was. But 0.1 crore is 0.1%. What is it? 0. What is it? 0.1% is 1 million out of 1 billion. How much percentage? 0.1%. That means very simple concept. Listen. Let me write it here. See, whenever we have 100 crore, which crore? We will write it as 1. If it is 50 crore, we will write it as 0. If it is 10 crore, we will write it as 0. If it is 1 crore, we will write it as 0. If it is 0.1 crore, we will write it as 0.001. This is million. What is it? This is? And this is billion. That means it is 0.1%. What is it? 0. Appa, this looks like G, but this is CR. What is it? CR. In fast writing, it will lend like a G. Don't get confused. Later, our YouTube students will get confused. What is a G there? Clear? So, if at all they don't give this value, now we should know how to convert. See, 800 million. What is it? 800 million. 800 billion. What you will do? Sir, simple. 800 by 800. Bullshit. Here it is million. Here it is. How can you convert? We should bring it into common values. So, how do you convert million into billion? Simple. Into 0.1%. Into how much? That means in form of decimals. If you are writing in form of decimals, 0.001. Kindly do it. 800 into 0.001. 0.8 billion. That is what? See here. 0.8 billion. Clear? By chance. If they have not given, your ICA know how to play with you guys sometime. So you can play like that. Already you saw na. MV is equals to PT. QTM problem was there na. In question it is crore. In option it is lakh and thousand. What is it? Lakh and? So they will play around with you guys like this. So be careful. Clear? You should know how to convert million to billion, billion to? Okay, chalo. They have already given, let's say billion is given. So forget this at the moment. There's 800 million and all. 0.8 billion. What is it? 0.8? Okay, let me erase this all. Now let us solve the problem. So what is the formula? Appa, what is the formula? First one. We already have R. What is the value of R? 10%. That is 0. So already we have a R. R is 0. Now we should identify E. What is the formula of small e? Excess reserve divided by deposit. How much is the excess reserve? 0. How much is the deposit? That means it is 0.8 divided by 800. Answer is 0.001. Accepted. Next, what do we need? C. What is small c? Capital C divided by capital D. How much is the cash in the hand? 400 billion. How much is the deposit? So it is 400 divided by 800. Answer is 0. So what is the formula of M? 1 plus C divided by R plus E plus C. So simple concept. 1 plus C. How much is C? 0.5 divided by R. How much is R? 0.1 plus E. How much is E? 0.001 plus C. How much is that? 0. So ultimately M is equals to 1.5 divided by 0.601. What is the final answer? 2.49 times. So multiplier value is 2. Even from this exam questions have come. Clear? This is another way of asking question. See, first the simplest way. They will just give the R. What is it? They will just give the assuming there is no excess reserve. Assuming there is no. Now life is very simple. Only and only if R is there, 1 divided by R. This will become the formula. Clear? Understood? So this is the another way of asking question. Next comes change in money supply. What is it? Once the question has been asked, this formula. How come change in money supply happens in the economy? Because of overdraft facility. Which facility? I said now RBI can issue loans to governments and the commercial banks for a short-term requirement. Such short-term loan given is called as overdraft facility or ways and means advances. Which advances? Or we can also get it through open market operation. Which operation? What is it? Buying and selling of government securities by RBI to control money supply. When there is inflation, people have more money in the hand, RBI will sell security. So your people will buy security, money will come inside the bank. When economy is not performing well, so money is not there in the hands of people, RBI will come and purchase back that security what they sold. Now RBI is buying security, money will go outside. Clear? Now because of open market operation, what is it because of? They are injecting money. That means economy is not performing well. RBI is coming and buying. RBI is coming and say they are purchasing security. See, purchase of government security will inject high-powered money. That means RBI is coming and purchasing security from open market. So that money will go to the open market. You will take security from open market. Clear? They are purchasing. Now there is a change in money supply. See the formula. 1 divided by R into change in reserves. 1 divided by R into kindly see the 50. 1 second, not 55th problem. Wait. 1 second. Not in this paper. 1 second. Now look at the board. Stop discussing. Question number 73. What is that question number? If the required reserve, which reserve? If the required reserve is 0.1, that means 10%. There is an increase in reserve. What is there? That means there is a change in reserve by how much? What will be the change in? Hello, what will be the change in? They read, stupid fellows, everyone. That means they're asking what is change in money. What is the change in money supply formula? 1 by R into change in reserve. What is it? 1 by R into change in reserve. What is the reserve given? 1 divided by 0.1 into how much is the change in reserve? Rupees 1000. That means 10 times of 1000. Donation of marks by ICAI. For that you should know formula. If you don't know formula, gone case. Clear? Understood? See, from each and every small numericals have been asked from the small chota mota topics. Now the question comes, can the money multiplier become 0? Yes. I said now, whatever high powered money is circulated by the central bank. Now my commercial bank, like stupidity, they are keeping excess reserve. They created 10,000 crore excess money. This guy created excess reserve worth of 10,000 crore. 1 credit, 1 debit, nullified. Or when commercial bank is not showing their extra talent, my general public will show the Extra talent. They will keep excess reserve in hand. They will keep what? See, it may happen when the interest rates are liquidity trap. That means general public is holding more and more money in the hand. Why? Interest rates are too. So the general public is keeping more and more cash in the hand, and our banks prefer to hold the newly injected reserves in the form of. That is what. See, either general public will hold more and more money. Why? Because liquidity trap is happening. Or else my commercial bank is showing that extra talent in the form of. Clear? Yes. In that case, money multiplier approach can become clearer. Next, effect of government expenditure on money supply. Simple concept. RBI has already maintained stability. Now, Karnataka government will come and ask loan from RBI. See, pa, I need to pay salary for my government staff. Or some expenditure is there. Give me money in the form of dash facility or ways and means advances. Which advances? Ways and means advances. Now, RBI will say, hey, I have already maintained stability. I don't know that and all. Give money. Now, if RBI gives loans to governments, Karnataka government. Now, if Karnataka government gives that salary to their staff, money supply this will create imbalance. Now, what RBI will do? Okay, RBI will give loan to Karnataka government. Now, what Karnataka government will do with that money? They will pay salary. What they will pay? Salary. To whom? Accounts of the government employee. Where is the government employee's bank account? Commercial bank or RBI? That means now RBI will say to commercial bank, see, I have given 1,000 crore rupees to Karnataka government. You guys create 1,000 crore excess reserve. 1,000 crore. Already we have maintained balance. Now additional 100 crore or 1,000 crore, if it gets entered into system, that will increase money supply. So whatever I am giving credit here, now you guys create the debit in the form of excess reserve, in the form of. So one way credit, one way again neutralized. That is effect of government expenditure on money supply in the form of ways and means advances. And see, when the Reserve Bank of India lends loan to whom? Under which facility? Or over? It results in generating dash reserve. With to whom? And end of the day, this commercial banks, wherever they will create excess reserve, they will put that money to whom? That means, in short, RBI gave money to government. In return, a commercial bank created excess reserve of same money and they gave it back to. Now, sir, what if Karnataka government comes and gives back that money? Simple. I will give this excess reserve, whatever they created, back to commercial bank. Simple. Next, credit multiplier. Which multiplier? Okay, we'll go back to the topic. See, Shashikiran. Now, he deposited 1,000 rupees to his bank and 10% RBI said to keep reserve. Remaining 100 rupees was taken as a loan by whom? Shweta. Now, Shweta will go and let's say she will buy some goods from our Imam. Correct now? IMM. Okay, Imam. Now, Imam got 900 rupees. He will go and deposit this in his bank. Let's say Bank B. Where? Bank B. How much? 900 rupees. Now, as expected. What is it as? Now, Bank B. What is it? Bank will also create a reserve. How much Bank B will create a reserve? 10%. How much is 10%? What is the remaining money now? 810. Now, Dev. He will go and take loan from Bank B. How much Dev is taking loan? 810. Now, they will go and buy, let's say, some goods from Mr. Dhoni uncle. Which uncle? Or Kohli uncle. Now, Kohli uncle will go and deposit this to Bank C for 810. Now, Bank C will also maintain 10% reserve. How much? And what is the remaining money? 729. Now, the 729 will be taken as loan by Mr. Kohli uncle. Which uncle? And Kohli uncle will take this loan of 729. Again, Kohli uncle will go and buy goods from, let's say, Anushka auntie. Like this, the process keeps on continuing. Every time when the bank receives the money, they are maintaining reserve of how much? And the remaining money is lent as a loan. Now listen to this carefully. Credit multiplier has a capacity of multiplying by dash times 1 divided by RRR. 1 divided by, even that is called as credit multiplier. Now in my example was reserve of how much? That is 1 divided by 0.1. How many times? So initial deposit, which deposit? Will get multiplied by n number of times. That means initial deposit Shashikiran made how much? 1,000 into 10 times. So that money will become how much? This is credit multiplier. That's it. Clear? Understood? By this chapter 8, unit 2 also comes to an. Unit 1 money demand is done. Unit 2 money supply is also done. Is that clear? So unit 3 is pending. And chapter 9 is pending. Chapter 10, I will just instruct you people how to prepare. Clear? Approximately 7 questions will come. Sometimes worst scenario, 10 questions will also come. I will instruct you. Clear? Already I am feeling little tired. We'll take a break. Better. 5:10 is the time now. What is the time now? 5:10, 5:11. Till 5:30 break. Till 5:30 is the 20 minutes break. Again, 5:30 to 7:30 class. By mistake, if you are unable to finish before 7:30, one more break for 15 minutes. 7:45 to 8:30 or 8:45 or worst scenario 9. Today we have to finish. No other option. Tomorrow again I can't come. It depends. See, I can go fast if you want. Chalo, take a break. Come back. 15 minutes break. We'll meet you guys at. Okay. So before the break, we had finished with the Chapter 8, Unit 2. Now let us get started with Chapter 8, Unit 3, the last topic of Chapter 8. So it speaks about monetary policy. So two major concepts are there. One, monetary policy framework and organization structure for monetary policy decision. So who is responsible to create monetary policy in the country? Monetary policies are created by central banks of the nation in order to bring price stability, control the supply of and adjust the interest rates. So these are the main primary goals of them. And when we speak about the monetary policy framework, the very first topic, there are 3 elements. Number 1, objective. Second one, analytics, or also called as transmission mechanism. Third one is operating procedures. So there are mainly 2 types of objectives in monetary policy. Very first one is primary objective, price stability, economic stability, inflation targeting. What is it? Inflation targeting and exchange rate stability. Which stability? So this exchange rate stability has been moved into a primary objective. So these are the 4 primary objectives: bringing that stability in the economy, and also economic stability in terms of full employment and output, and also inflation targeting and exchange rate stability. And the remaining, these are the other objectives. Next comes transmission mechanism. 3 concepts are there. Number 1, it is mainly dependent on interest rate. So with respect to interest rates and savings and investment channel, that means when savings are more, that means interest rates are high in the economy. When interest rates are high in an economy, people, rather than buying more goods and services, they will start investing more and more and saving more. And if interest rates are less, people will not be interested to save more and more money. Suppose if you need to borrow a loan as a business person, when will you borrow a loan? When interest rates are high or interest rates are low? See, lower interest rates on the bank deposit will reduce the households to. Same lower interest rates on loan will encourage households to borrow more and invest it on asset. Which asset? Same lower interest rate will encourage business people to invest it on a capital goods and capital projects. Second one, cash flow. Which flow? When will you hold more cash in your hand? When interest rate is less or interest rate is more? When you have more interest rates in the market, will you hold more cash? No. That is cash flow channel. Clear? So simple. All of them are expected with respect to interest rate. Asset price and wealth channel. Simple. If asset prices are increasing day by day, you will rather than spending on goods and services, you will save money. You will start buying such assets. Because when asset price goes up, people's wealth will also increase. When wealth is increasing, by using that same wealth documents, you can go pledge it as a collateral and borrow more loans. Borrow which loan? See, automatically available for banks to lend against a collateral will increase. When your asset prices keeps on higher asset prices, higher ability to borrow loan. Exchange rate, I will touch with chapter 9, unit 4. There I will explain. I will not touch it now here. Clear? Last but not the least, what is it? Operating procedures and instruments. Here they speak about RBI's operations either involving in a direct manner or. So there are 2 elements, quantitative tool and qualitative. In terms of quantitative, we have reserve ratio and open market. Already I spoke about open market operation, buying and selling of government securities to control inflation and deflation. That is called open market. Next comes reserve ratio. Which reserve ratio? That is what? Cash reserve ratio and statutory liquidity. See, simple concept. If 100 rupee gets deposited to the bank account, this gets divided into 3 parts. One is CRR, other one is second one, last but not the least, which can be used to give loans in. See, whatever the CRR is there, that is a portion of deposit. What is it? Portion of? Out of this 100 rupee, which a bank has to maintain with RBI. Bank has to maintain with. If you remember a few minutes back, I spoke about RRR. What is it? Required reserve ratio. That is like CRR. Clear? That means a portion of deposit bank has to maintain with whom? SLR, a portion of deposit bank has to keep with themselves, but it should be in the form of gold or RBI approved security. What is it? RBI approved securities. Is that clear? So in the form of gold or in the form of RBI approved securities, we need to keep. That is SLR. Next comes loans and advances. So whatever money that is remaining, let's assume that 10 rupees will be kept as CRR. 25 rupees will be kept as SLR. Remaining 65 rupees can be used to give loans and. So this is the concept of CRR, SLR, SLR. Portion of deposit which has to be kept with bank, cash reserve. A portion of deposit which a bank has to keep with themselves in the form of gold or RBI approved securities. SLR. Clear here, gold or RBI approved security. Banks are required to set aside a portion of liquid assets. Portion of which asset? Even though they don't earn anything out of this much, still, even though little interest is there, very lower amount of income has been earned, still they have to maintain it. So these are quantitative. Next comes qualitative tools. Which tools? Qualitative. Very first one, marginal. If you remember, I said when the asset price goes up, your ability to borrow loan will also increase by pledging as a collateral. But we will not get the 100% value of the collateral. Let's say if the property value is around 10 crore. Now RBI will say we need to keep 30% as marginal reserve. What if tomorrow real estate price decreases or something happens to that particular land? So we can't give 100% value. We can only give and reserve. That is marginal reserves or marginal requirement, 30%. Who will decide how much to keep as a reserve? RBI. Remaining can be given as a loan. Next comes moral. If you remember, we said, in case of SLR, where you should keep? Only and only in the form of or RBI approved. See, these RBI approved securities are always in. We know that in government securities, we don't earn much interest. There will be only earning interest, which is very low. But you can't keep it on any private securities or other stocks. I know it is attractive, but still you can't. We will morally persuade you, convince you to keep only and only in RBI approved security. Which security? Which is that RBI approved security? Rather than keeping money in certain sectors. And selective credit control. RBI will say for what purpose you should give loan and for what purpose you should not give. So who will select that credit facilities? What to give and what not to give? Next comes, this is most important. This is where the entire concept will come into a picture. See, market stabilization. Presently it has been scrapped. It is no more existing. Earlier we had it in the form of bank rate. Which rate? If RBI gives a loan to commercial bank for a dash term purpose by rediscounting eligible commercial bill. Which discounting? Eligible commercial bill, like bills of exchange, promissory notes. If they rediscount and give the loan for a long term purpose. Which purpose? That was called bank rate or policy rate. Which rate was it called as? Someone is scolding very nicely. New batch only, huh? Okay. So bank rate or policy rate. But now presently this bank rate or policy rate has been scrapped. It is no more existing. We only and only have a LAF facility. Which facility? LAF. That speaks about repo rate and reverse repo rate. Whenever RBI gives a loan to commercial bank, gives a loan to which bank? And it is for a short-term purpose. Which purpose? Now we don't have any long-term. Only and only short-term purpose. That is called as which rate? Bank rate. And usually such short-term is 2 weeks. How many weeks? 2 weeks. And even to get that loan, now commercial bank has to pledge a government security as a repurchase agreement. As which agreement? Even banks has to keep a government security as a collateral as a repurchase agreement. So that is repo rate. Let's assume. Now bank is borrowing some 50 lakh rupees. And RBI is charging 8% interest rate. Just a fictitious example, it is 8%. Clear up? That is repo rate. When RBI grants a short-term loan, RBI grants a by taking government security as a collateral from the commercial bank is called as repo rate. But earlier there was a long-term loan called as bank rate. That is rediscounting the commercial bill. Now it has been scrapped. It is no more existing. Then what is it used for? Bank rate. Now it is used as a penalty rate. Which rate is used as a? For not maintaining sufficient CRR and SLR. So presently bank rate is not existing. It has been scrapped. It has been now only and only which facility is there to give loan? Liquidity adjustment facility. Under that we have a repo and reverse repo. What is repo rate? When RBI grants a loan to the Commercial bank. That is lending rate of RBI. What is it? So it is a lending rate. Which rate? Who is lending? RBI. To whom? Commercial bank. Now suppose if commercial bank has more money with them, if RBI gets to know about that more money, this commercial bank will give unnecessary loans and they will increase money supply. Na? So cut that down. Now RBI will borrow money. RBI will from commercial bank. So RBI is borrowing money. Now commercial bank is giving money to whom? Now commercial bank will say, I will not give it for free. I need 1% lesser than your repo rate. So reverse repo rate is 1% lesser than your repo rate. Clear? So this is under LAF facility. Which facility? Now there is one more facility wherein which, remember, marginal standing facility. Which facility? That means, suppose if you have once again an emergency, see already you took a loan in the form of repo rate. In the form of which rate? Repo rate. Clear? Now once again there is an emergency for you. Once again you need a loan. Yes, RBI will give, but not under the repo rate scheme. Now this time under the MSF scheme. That MSF is called as a dash rate. That penalty rate was earlier called as dash or policy rate. Now this has been scrapped and converted as a under which facility? And that is always 1% greater than repo. What is it? 1% greater than repo rate. Is that clear? So this is MSF facility. Now these topics are important. This is where, and whatever this MSF facility is there, na, maximum you can take is 1% of your SLR security. How much percentage? Of which security? SLR security. Is that clear? So these are operationals of RBI. That is operating procedure instruments. Which procedure instruments? Especially this concept, liquidity adjustment facility, marginal standing facility, and market stabilization has been scrapped. It is no more existing. Bank rate. Earlier it was called as what? Rediscounting rate. Which rate? Of which commercial bill? Eligible commercial. Write that down somewhere. This is missing. It is a rediscounting of eligible commercial bill for a long-term purpose. Now that is no more existing. Now RBI will control all that money supply, everything in the form of loans and all, only and only in the liquidity adjustment facility. Which facility? Liquidity adjustment facility. Clear? Understood? So last topic of chapter 8, that is organizational structure for monetary policy. So listen to this like a story. This is enough. See, if you remember, I said the primary objectives of monetary policy: inflation targeting. Which targeting? Inflation targeting. Now that is what we are going to speak about. That means now RBI along with Government of India. What is it? RBI along with? Now they have entered into an agreement. See, Government of India and Reserve Bank of India has entered into an agreement through which they will be following something called as inflation targeting. Which targeting? Inflation. That means what should be the maximum tolerable inflation rate in the country in order to bring a dash stability. So under this agreement, that is monetary policy framework agreement, that entered between the Government of India and the RBI, now they have established something called as monetary policy committee. Which committee? Now under this monetary policy committee, now they are keeping something called as inflation targeting. Which targeting? Inflation. Now see, inflation targeting has been suggested by expert committee of the Ujit Patil, and they said we are keeping the target once in 5 years. Once in how many years? And primary objective it should become. See, inflation targeting has to become dash objective. That is why I made you to write that primary objective as inflation targeting. Now they say once in 5 years. Once in how many years? They will set the target. Now presently it is between August 5th, 2016 to March 31st, 2000. As per your syllabus, still they are maintaining the same. Now the maximum tolerable inflation rate is 6%. Least tolerable is. And the inflation target to be achievable is. See, achievable is 4% target of consumer price index inflation. Which inflation? CPI inflation index. Consumer price index inflation rate of maximum tolerable 6, least tolerable 2, but target achievable So target is 4%, worst scenario 6, minimum is 2. Clear na? Now once in 6 months. What is it? Once in? Now RBI will publish a report called as Monetary Policy Report. Which report? They will announce once in how many months? And they will say what all are the sources of inflation in our country for the next upcoming 6 to 18 months. Next upcoming. And they will also say in any 3 consecutive quarters, if we are unable to achieve the target properly and if it goes above upper tolerable, more than upper tolerable, that means we have failed. It is failure. Same way, if it goes below lower tolerable in any 3 consecutive quarters, then again we have failed. Again we have failed. And this inflation targeting of CPI index is not just in India. It is also followed by European Union, Brazil. Going further, we will also keep a target for. Clear? By this entire chapter 8 comes to an. That's it. This is chapter 8. One of the smallest unit but most important. But definitely the questions are going to come from this area. Is that clear? Understood? Okay, now let's get into the MCQ questions of chapter 8. See here, chapter 8. The term Y. What is it? The term Y represents MD is equals to proportionate of nominal income. That means Cambridge approach. Which approach? Money is also used for a precautionary purpose. That precaution is a proportion of your nominal income or national income. What does that Y represents in that? Real national income. Which income? Real. Clear? Next, which of the following is not included in M1? What all is there in M1? Currency notes, plans, coins with public, plus demand deposits with bank, plus other deposits with. But where will time deposits will come? M3. Next, liquidity trap occurs when interest rate is almost. Next, what is most likely to impact for the time deposits to demand deposit ratio? See, remember, when people keep more money in time deposit rather than, that means for sure next 1 year you will not come and touch this money. See, if you keep it in demand deposit, you can withdraw whenever you want. See, I want more people to keep money in bank rather than holding in cash. But when you keep more money in time deposits than demand deposit, that means that multiplier value will increase. That means if at all it is in bank account, yes, we can use it for credit purpose, but you can also withdraw whenever you want. But if you keep it in which deposit? FD, next 6 months, 1 year, definitely you will not touch that money. So it leads to higher availability of a free reserve and consequently volume of multiplier deposit will. Then monetary expansion will happen. That means more and more, let me say, number of times the money getting circulated will expand. Next, M3. Appa, this is little tricky question, which is there in some nook and corner of your ICA material. They said there are certain time limits which is issued for a short-term deposits, number of years and all this. See, broad money includes currency deposit which are agreed maturity up to. Which deposit? Broad money. That is M3. Agreed maturity up to 2 years, deposit relationship notice up to 3 months, and it is up to a dash debt securities up to 2 years of debt security. It is there in ICA material. This is little standard question. What is it? Little. Usually they should not ask, but little advanced level question also it is there in summary. Where it is there in? That is why I keep on saying you, even with including summary, you guys have to read. Including summary, you guys have to clear. Next, see there, we discussed this already. Next, banks avail MSF facility up to a maximum of what percentage of their SLR? Just now we studied that 1%. Clear? I think that's it. These are the chapter 8 questions. Just check how many questions. 1, 2, 3, 4, 5, 6, 7. So 7 questions have come. It should be 10 approximate. Let's check. Even it should be there. Or this attempt maybe only 7 questions. From chapter 6, 15 questions was there, na? That's it. Okay, let's go to the next step. Already we discussed this question. MV is equals to PT. Next step. If monetary base in the economy is how much? MB. Monetary base, high powered money is 250 crore through open market operation by the central bank, and the money supply is how much? They're asking you to identify money multiplier. So what is the formula of money multiplier? Money supply divided by monetary. Simple. 1000 by 250. 4. See, free question. Free marks by ICI. Donation. 73rd we did. Next, which of the following is not a function of money? It is easily reproducible. No, it is difficult to duplicate. Na? It is not easy to reproduce. All general topic of 12th standard. That's what that one this is. Next, the concept of risk aversion theory was given by James Tobin. Last one, behavior towards risk aversion, James Tobin. Next, which type of currency is used by the fiat money? Materially worthless, materially, or also called as high powered money or monetary base. And what is the formula for excess reserve? Total reserve minus what is total reserve? Required reserve plus excess reserve. 10% plus 2%, total 12%. Like that, how much excess banks have kept? Total 12 minus required was 10. So 10 minus, 12 minus 10. Excess was. Next, what does RBI publish every 6 months once? Reverse repo rate formula. Repo rate minus 1%. Next, real money refers to real national income, money demanded at the given rate of interest, nominal GDP divided by price level, nominal demand adjusted to the price level. Money demanded at the given rate of. Pakka? Sure. Homework question. Do it and come. I am not given the answer here. If not, you would have said, oh, this is the answer. Real money. Which money? Real money. Do it and come. Let's see. Option B was the answer. Yeah. Okay, see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. How many questions? 10 questions. I said the average is always 10. Okay, next attempt. Okay, have a look here. Which of the following is not a characteristics of? Same repeated question. Easily reproducible. No, it is not easily reproducible. The currency issued by central bank is called as? Same repeated question. Next, considering that the money multiplier is how much? Already they have only given money multiplier, and there is an increase in there has been an increment of 600 crore in money supply. That is change in money supply is how much? They are asking you to identify which? Monetary base. MB they are asking. We know money supply formula. M into MB. They have given multiplier 1.5. Money supply is given. What is money supply? 600. Clear? They are asking you to identify monetary base. Simple. Now it is 600 divided by 1.400. Clear? Next, already we solved this problem. Next, penalty rate. Now, which is used as a penalty rate? Bank rate. But bank rate is scrapped now. Under which facility? See, most of them will mark option B as answer. Wrong. That is scrap. No more bank rate. That is converted as a penalty rate under which facility? Now, liquidity adjustment facility, LAF facility was introduced by RBI under Narasimhan committee. This is there in the summary part. Where it is there? Summary. In ICA material, I said now sometimes even the question comes from the summary. Be careful. This is from the summary part. Next, money created by commercial bank is called as a... See, under the concept of money supply, the term public does not include. Who is not included in public? Government and banking system. Next, compute the total credit money. What are they asking total? When the initial deposit is 12 lakh, interest rate is 15%. Simple. 1 divided by RRR. 1 divided by 0.15 into initial deposit of 12 lakh. 1 divided by 0.15 into 12 lakh. 80 lakhs. That is the answer. Clear? Next, calculate money with public. Already we solved this question. Clear? That's it. See, now count the number of questions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. How many questions? 10 questions. Clear? So, average 10 questions are going to come. See, sometimes it can go. We can't predict. It can go up to 12 or even 15. So, that is the average number of questions from chapter 8. Is that clear? Understood? So now let us go to chapter 9, one of the most interesting topics, and it will take minimum 1.5 hours to finish this. Next 1.5 hours, I will be finishing the whole marathon. Chapter 10, I will instruct you what to do in that, what all are important. Clear up? Okay, see there, total 5 units are there. How many units are there? See, first unit, theories of international trade. What is unit number 1? So what is this theory? Simple. When we are doing domestic trade, there is only lot of complication. But when you are doing international trade, it is much more complication. Now in international trade, we don't just exchange goods and we also exchange resources between the country. And remember, it is more and more complex. What is it more and more? Why it is complex? Because multiple nations' currencies are involved, shipping business is involved, immense documentation procedures are involved, multiple legal environment, laws are different, tariff are there, taxes, quantity restrictions is there, other barrier, rules and regulations will be there. So international trade is much more complicated than the, and why do we conduct international trade? For dash benefit, or else next to that also write down, not a zero sum game, not a zero sum game. Clear? It should not be a zero sum game. What is zero sum game? Only one country will gain, another country will lose. Another country will, only one country will gain. That is zero sum game. So there are 5 theories. How many theories are there? See, simple. Mercantile view, absolute advantage, comparative advantage, H-show theory. That is extra-valent theory and new trade theory. See, very first one, mercantile view. It is a zero sum game. That means only one country will gain, other country will lose. That means we should only and only export. What we should do? Only and only. We should not at all import. When we export, we will earn more money. Earlier, it was a precious metal called as species. We should impose barrier. Import barriers. Which barriers? We should only and only. Not at all. That is mercantile view. But that is not mutually beneficial. This is zero sum game. But international trade should. Not a zero sum game. Clear? For that very first theory, theory of absolute advantage introduced by Adam Smith. That said was, yes, international trade should be dash mutually beneficial. How? Why will consider labor as an important factor? Which as an important factor? See, we are taking example of India and USA. Now in India, to produce let's say 1 kg of rice, we will take 2 hours. How many hours? 2 labor hours. But USA will take how many labor hours? Who is better? India will just take how many hours? But USA will take how many hours? Now in wheat productivity, India will take 20 hours, but USA will take. Who is better in wheat? Simple, mutually benefiting trade is possible. India, you produce rice and export it to US. US will produce wheat and they will export it to. See, number of labor hours lower the better. Now absolute advantage is possible. Now India is better in rice productivity. USA is better in mutually benefiting trade is possible. Sir, what if one country itself is specialized in production of both? Let's say India is only good in rice, India is only good in. Now, how come mutually benefiting trade is possible? Still it is possible. Simple. Take ratio. What you should take? Ratio. Now take out ratio. Can I say this is 5:1? Can I say this is 4:1? That means now we will give option to advantage country. Now India has advantage in both. Now India, you choose any one. You have to choose. What do you want? Rice or wheat? Now India said rice because my ratio is 1:5. Greater ratio I have. And in wheat I have a lesser ratio. That means in both I have advantage. But more advantage is there in which productivity? That is called competitive advantage. See, resources are limited. I can't produce both. So I should choose one, I should sacrifice another. So in terms of that, advantage country will give an option first. So they will take more advantage. No doubt USA has disadvantage in both, but lesser disadvantage in. So India will choose more advantage, USA will choose lesser disadvantage. Now mutually benefiting trade is still possible. That is according to David Ricardo. Which Ricardo? He considered again labor cost. Which cost? Labor cost. As most important. Again, same labor is considered here. Clear? Still it is mutually benefiting trade. Now comes HO theory. Which theory? Under HO theory. See boss, now we said only labor was considered. Only labor was in absolute advantage and comparative advantage. Now we should also consider capital, not only just labor. We should consider both capital as well as. So there are 2-step answers here. Same India and USA will take example. Now you tell me, in India we have more labor or more capital? USA? Simple. By using labor, if you can produce lesser cost, the same goods, India you produce it. Which goods USA can produce by using a capital at a least cost? USA will produce. Simple. Labor intensive goods will be produced by India. Capital intensive goods will be produced by USA. Then you exchange it. This is step number 1. Step number 2, what USA is not having? What India is not having? From India you send labor, USA you invest in. So first step we will send the product. First step we will send the. Second step we will send factors. What do we send? See there, production mobility will happen first. We will produce and we will send. Later it will lead to dash mobility. Factor mobility. So this is step 1. This is. Henceforth, HO theory is also called as factor price equalization theorem. Which price equalization? Under HO theory, we are considering labor and capital both. But in absolute and comparative, we only took clear. What is mercantile view? We should only and only export, not at all. We should impose barrier. That is mercantile view. Next comes last but not the least. Which theory? Now simple. Same product is exported, same product is imported. What is it? Same product is? Same product is? Sir, why do we do that, sir? Are we stupid enough? No, there are two reasons. One, economies of scale production. We have made a large scale production and we are selling it in some other country also. We are unable to sell everything in my country. This is also called as dumping. What is it called as? China does that to India usually. In next unit, I will explain that. And because of network effect or bandwagon effect, somewhere we have heard. Exceptions to law of demand, that is popularity. Because of what? Because of popularity, we are also exporting the same and we are also, no doubt, we also produce cars in India. We will export car and we also import the cars from other part of the world. See, because of popularity. So HO theory is nothing but we are exporting same product as well as importing the same product because of globalization, because of dash. So these are the 5 theories. And what are all the benefits of international trade? What are all the disadvantages of international trade? Biggest disadvantage is interdependency. You will become dependent on some other. Political issues will happen. Now presently what is happening between India and USA? Clear? Strategic importance is only to some industry. Not every industry will grow. And also my industries, infant industries of my country will suffer because of international trade. They don't have so much money and deep pockets and technology. And the problem is with dumping activity and trade cycle, business cycle will move very fast. And there is also risk in trade associations associated because of government policy. So these are the disadvantages. Disadvantages most important, clear? And these are the advantages, blah, blah, blah. So this is unit 1 of chapter 9. What is that? Very simple unit, small unit, chota sa unit. Clear? Next interesting topic is instruments of trade policy. What is it? Instruments of trade policy. Now when we do a trade with some other country, there are a lot of rules and regulations. Same way, we also charge taxes. Sometimes not just rules and regulation. We also charge what? So 3 topics we will discuss in this. Trade policy. When we speak about trade policy, there are 3 elements. One is tariff in the form of tax. Second one is non-tariff in the form of rules and in the form of export related rules and regulation. Clear? So 3 topics. So first understand what do you mean by trade policy. These are policies which are designed and implemented in order to regulate dash trade. That means what we will export, what we will not export. What all rules and regulations are there for export. What we do in bilateral agreement and what we do in the multilateral agreement. Bilateral means between 2 countries. Multilateral means between group of. And both of these are important. This is where the exam question comes. Most important area, tariff and non-tariff. Tariff means tax. These are visible measure. Which measure? Why do we put tariff? Because in order to discourage more and more import. Biggest advantage is who will get revenue? Government will get income. From that money we will do social service activity and all in our country. We will uplift our poverty of the country. Clear? And this is most visible and universally used measure by all the countries. We call it as customs duties on imports and exports. There are 15 types of tariff. How many types of tariff? 15. All the 15 types is important. First, let me explain bounded tariff. Which tariff? Bounded. See, between WTO members. Between which members? See, we have agreed, we have signed an agreement stating, boss, this is the taxes that I am going to charge between WTO members. There are 164 member country. How many member country? Between all the member countries, we have agreed to an agreement and we will charge only this is the amount of tax. That is called bounded. Once we are bound, it becomes permanent. It becomes what? If you want to change the tax, you should negotiate, you should sit, you should discuss. Later, first compensate for all the losses. Compensate for the other country because you are increasing tax now. They will incur some losses. Compensate them. Only after compensating them, you can increase the tax. Okay, sir, that is what we have agreed. What if I charge lesser than agreed? That is called applied tariff. Which tariff? Applied tariff. You already bound. But if you are charging even lesser than applied, that is called as what? Applied. Applied. Clear. But there are 2 exemptions for this bounded tariff. Even though you have a bounded tariff, you can still charge beyond that. You can still charge what? That is in case of tariff as a response to trade distortion, anti-dumping duty and countervailing duty. Which duty? And countervailing duty. Simple. Like China, they will produce in excess quantity in economies of scale. They are unable to sell in their country. They will start dumping into my country now. In order to protect my domestic manufacturers from such dumping, intentionally they will start selling at a lesser price than my domestic market price. So to protect my domestic industries from such dumping, throwing away into my country now, I will charge extra tax called as anti-dumping duty. Which duty? Clear? That is very much valid. Even though beyond bounded tariff I can charge and very much legal according to WTO. Next comes, suppose if exporting country gives a subsidy in order to dump. What is it? In order to? Now India does this to Bangladesh usually. Indian government will give subsidy to the textile producers to export more and more. Now Indian producers who are producing in excess textiles, unable to sell in India. Now these stupid fellows will start dumping to Bangladesh. Now Bangladeshi government gets to know, no, Indian government, stupid fellow, you are also supporting them. You are giving subsidy to them. Wait, whatever textiles that is coming from India to Bangladesh, we will charge additional tax over and above the bounded tariff called as countervailing. Only when the exporting country gives a subsidies to them. What is it? Now importing country will impose an additional duty over and above bounded called as dash tariff. Clear? Only in these two scenarios we can charge even beyond dash tariff. In any other circumstances we are not supposed to charge beyond. Then why is that Trump sir stupid fellow is doing all this? Appa, this is in books. Just take it to your brain. Don't take it to your heart. What happens in real life is different. What given in books is. World Trade Organization, we believe it has more powers. Yes. When in books. Next, which tariff? Specific. That means fixed monetary tax. What is it? Let's say for example, I will buy one car. Okay. On every car, let's say for example, 1 crore is a tax. What is it? Whether your car is 3 crore, whether your car is 10 crore, whether your car is 100 crore, it doesn't matter. On every single car, what is the tax? Or 1 lakh, whatever, the respective fixed monetary tax. What is it? On every unit, on every, that is on per unit. That is which tariff? Now fixed percentage. What is it? Fixed 10% on every car. Based on your value of car, 10%. See earlier, whatever might be the car, 1 lakh rupees a tax or 1 crore rupees a. But here fixed percentage. Based on your invoice value, 10% fixed. Even if your car is 1 crore, 10%. 5 crore, 10%. 3 crore, 10%. Next, ad valorem. What is it? What is it? Fixed percentage. What is specific? Fixed tax on per unit. What is it? Next comes, what is it? What is this word in between? First we will charge specific and next we will charge ad valorem. Whichever gives that we will charge as tax. We will calculate in both. Which will bring more revenue to government, that I will consider it as a tax. That is mixed. Next comes compounded. What is it? Now this not or and I need both. Earlier either A or now not A or B, A and B. I am charging both. That is called as which tariff? Compounded. Next comes variable tariff. Which tariff? You will ask your friends now who is going to USA and Dubai, get me one iPhone, 30,000 less in Dubai and USA and all. Oh, acha, is that so? How much less, sir? Pay that tax. What is it? Variable tariff. Whatever the difference between domestic price and international price, whenever you are bringing that good, whatever difference is there, that is collected as a tax. Sir, what if in India price is less, their price is more? Will they give money? Hello, you are dealing with Indian government. Even you want to pay, they will never pay you. Next comes which tariff? Escalated tariff. That means if you import raw material, less tax. If you import finished goods, more tax. Next comes, what is it? Most favored nation. Simple. Between WTO members, less tax. Between non-WTO member, see North Korea, not a WTO member, more tax. South Korea, WTO member, less tax. Next comes preferential tariff. Which tariff? See, all the nearby countries will form their new group, Chotasa group, Chotasa association. Between themselves, they will charge much more lesser than bounded tariff. That means it will be applied now. Applied happens only with WTO members. But in your group, there can also be a member who is not belonging to WTO. Only nearby country. Which country? Now, Asian countries like India, Sri Lanka, Maldives, Myanmar, Bhutan, Thailand, Laos, we will create our own association. BRICS association is different. BRICS, it is not nearby countries. What is it? But we have something called as SAR, South Asian Association of Regional Corporation. That is preferential. We will charge much more lesser. What is that? Much more? Than whatever we are charging either under bounded or any other applied way. Clear? Next comes technical tariff. Which tariff? Based on technical specification. That means if you are importing some car, on car engine different tax, car tire different tax, car body different tax. Based on various technical specification. That means spare parts, components, different specification, different tax. Next, tariff rate. Quota means quantity restriction. Up to certain quantity, no tax or limited amount of tax. Beyond that quantity, high amount of tax. Next comes which tariff? Now the name itself is saying which tariff? My intention itself is to prohibit you from coming inside my country. I don't want your goods to come inside my country. 300% tax, 700% tax, 1000% tax. Prohibitory tariff. Last but not the least. What is it? This is negative tariff. Government is not charging. Rather, government is only giving you some benefit in the form of clear. Such subsidy can be either on per unit. What is it? Or on the volume of your bill. Volume of your or total value. Which value? Total value, some percentage is given as a subsidy, or on per unit also will give a subsidy. Clear? So these are the 15 types of tariff. All 15 is important. What is it? Next, why do you charge tariff? As I said. And government will carry out which activity from that? And we are protecting which industry? And tariff will reduce the and also impact of tariff. What all will happen? Main intention is to protect my domestic people from international competition, earning revenue. See, tariff will increase government of the importing. Next comes the Khatarnak one. What is it? Non-tariff. Non-tariff. What is it? Now I am not charging a tax. Rather, I am restricting you through my rules and so in that there are two things. Technical and so under technical, we have some Khatarnak measures, that is SPS and TBT, most important, sanitary and phytosanitary technical barriers of. And under non-tariff measure, there are 13 way, 2 plus 13. How much total? Same, 15 type of taxes and 15 types of rules and. Under non-tariff, divided into two classification, technical and. Now under technical, we have SPS and TBT. Simple, because of your product, what I am importing. Let's assume India is importing some goods from Australia or from China. In your product, there is some additives. What is it? There is some or like COVID-19. If it is affecting, what is it? If it is in my country for any human life, animal life, plant life, even I can impose complete or prohibit you for a time being. I have full option. And remember, this non-tariff measures is there. I said Khatarnak measures. This you cannot impose always. Only and only under certain circumstances. Which circumstances? See, non-tariff measures. According to WTO agreement, non-tariff measure is allowed only under the. But you can't impose every time. Only some certain emergency cases like COVID, disaster, earthquake, war, something like this. Only at that point of time you can impose this non-tariff. Either technical or non-technical. So what is SPS? Protecting dash life, animal life, human life, plant life, biodiversity life from any addictive, pest, contaminant, toxins in. Either I can impose complete ban or. Next comes technical barriers to trade. See, I said you, for my shoe manufacturing is there I need packaging. I need bubble wrapping in round shape, but you said it in triangle shape, rejected. I said to give it in blue color, you gave it in transparent color, rejected. See, all shape, size, design, labeling, marking, packaging or any functional or performances. If it is not matching like how I have said it as a technical regulations and standard regulation, prohibited, get lost. I don't want your product. That is why I said Khatarnak measures. Indirectly, one or the other way, I don't want to deal with you. Next comes non-technical measure. Which measure? Quota. What do you mean by quota? Quantity restriction. I have a specific quantity restriction. Either up to some quantity, I will give you license and you can import it. Beyond that, if you want to import new license, what is that? Non-binding. But tax will be greater. And there is one more. Not just about the quantity restriction. There is also origin restriction. Which restriction? See, quantity has been specified, and there is no restrictions on origin. That is absolute quota. But quantity restriction is there along with origin restriction is also there. What is that? Tariff rate quota. Next comes embargo. Simple. What is it? Either for temporary or indefinite period of time. Either for any reasons, even including like health, even religious sentiments. I can completely ban your product into my country. Next comes government. In this, there is one superb duper case study where India lost. First, understand the concept. See, India has imposed many government procurement policies on various countries. Let's say, for example, if you are coming and establishing in my country, let's say Tesla. Now Tesla, okay, fine. But you have to at least take 30% or 40%, 50%, 70% or 80% up to some proportion, up to from my local people, local content requirement. What should be there? That means in your car, some batteries, spare parts, tires, nets, bolt, windshield, all this. At least in your total car, 30% or 50 or 70 or 80. Government will decide. Up to that particular percentage, you should domestically source the raw material. Domestically source the. That means up to certain percentage. Up to certain. Government will impose restriction. Let's say, for example, now tomorrow Tesla will come. 30% compulsory you should take it from domestic market. Yes, that is accepted. But India lost its case in WTO once. Under Jawaharlal Nehru National Solar. They said, boss, 100% procurement should happen from domestic companies. How much percent? There is something called as national treatment principle. Which principle? Or national treatment obligation. What is that obligation? Which says, see, when you have imported some foreign goods, what is it? Imported some? After the payment of tax. After the payment of? Now you can't discriminate between foreign goods and domestic goods. Both are one and the same. But you are saying, in order to set up the solar manufacturing unit, 100% raw material should be only taken from which company? If you are using any imported components, I will not purchase electricity from you guys. That is against the national treatment principle. That means you should treat your neighbor's goods as how you treat your own goods. What is it? Neighbor's goods as how you treat. Simple da. For boys, best example. Your mom and dad will be saying, nah, even next home daughter is like my daughter. What is it? Next home daughter is like my. So don't put line, square and all. Now she's your sister. Now she's your. Clear? No putting of line, star and all. No, even she is my daughter. Even you are their son. You are there. Not son-in-law. You are there. Only son. No in-law and all. So clear. Treat your neighbor's kids as how you treat your own. Same way, treat your neighbor's goods. That means foreign goods as how you treat your own nation's goods. That is national treatment principle. Which principle? Imam was full happy when I gave this example in the class. Full on, he was like full on happy that day. Alana? Okay, chalo, fine. We'll come back to the topic. So this is government procurement policy. Only up to some extent, some 30, 40, 50, you can impose. But you can't impose a 100% restriction. Clear? Next one, trade related investment measure. Which measure? Now simple. Now government will say, I know, let's assume our imam. Confusion happens. That is how in class also I used to get confused about his name. Always and always. They Hamam, sir, imam, sir. Okay, imam. Now let's assume he's an exporter. He's a of, let's say, exporter of leather shoes. What is it? Exporter of? He is also into leather business. He is exporter of leather shoes. Now last year, which year? He has exported goods worth of 100 crore. Goods worth of? Now government of India will say, yes, you can also import. But whatever you have exported last year, in that 70% or in that 30% or in that 80%, not what you are exporting this year. What you are exporting? In that 70%, in that 30%, like this, trading related investment measures, they will bring a barrier. Yes, you are exporting, no doubt. You are contributing to export. Yes, you can also import, but not complete 100%. Only after. Of which year? Not of this year. Next, marketing and after sales restriction. Yes, foreign company can come and sell their product in India. You can also do marketing, but you can't do. That means who will do after sales service? My domestic company. A foreign watch company can come and sell your foreign watch in India, but you can't open your service center. Who will do that? My Titan will do that. My domestic players will do that. So you are not allowed to do the after sales or marketing in India. Only my people can do, only you cannot do it. You can only come and sell. Next comes financial intentionally not allowing the foreign reserves for the companies to import, intentionally restricting you. I will ask you to pay 3 months in advance. How many months in advance? Even before the goods arrives into the country, or I will not give you foreign exchange reserves in order to pay that. Like this financial restriction. Which restriction? Next, what is it? Intentionally I will put some additional or some additional license to be taken. That license you will never get it on time, and non-automatic licensing. And last year I gave you license to import, but that will not renew automatically. This is non-automatic. Only last year I gave. This year there is no rule that I should also renew it, or I will prohibit from importing such goods. And measures affecting the, I will not give permission to import for everyone, only for selected people, like my state trading corporation, only for Adani, only for Reliance I will give permission. Others cannot import. Only some people can import, and I will affect competition. Only few people can import and sell that in India. Not everyone can sell it. And also distribution. After importing, not everyone can distribute it in the economy. Only few people with license they can distribute. And next comes administrative. Intentionally new rules, new regulation, new permission. In customs clearances, we will not delay. We will make it completely delay. We will not allow you to take that goods. See, irritating customers and red tapeism. See, requires license, additional delays. See, administrative delays, red tapeism, corruption in the, and what do? Frustrating the potential. I don't want you to import at all. Administrative challenges. Which challenges? And rules of, if it is coming from Pakistan, I will not allow. If it is coming from Syria, I will not allow. If it is coming from Iraq and all, I will not allow. Like this origin restriction is there. Which restriction? Rules on origin of the product. Next, a safeguarding measure for temporary purpose. What purpose? I will not allow your product inside my country. I am restricting the import only for a temporary purpose. Why? Because my domestic market has been injured. It happened during COVID-19. Boycott Chinese product. Boycott China. So they became smarter. Instead of making it as in the product made in China, they wrote it as made in PRC. Many people thought Persia. Hello, People's Republic China. What is it? People's Republic PRC. See, because it is injured, threatened, even from IPL, we removed their logo. Vivo IPL, removed as Tata IPL. Which IPL? Even though they were giving 750 crores for main title sponsoring, hey, we don't want you. Chinese brand, get lost. Because of you, we are suffering. We don't want you. But later we will support you. Don't worry, we will allow your cars inside our country. BYD. What is it? Build your dream. BYD. That is a Chinese car. Competition to Tesla. Clear? So these are non-technical measures. Which measures? Clear? So tariff, non-tariff. Under non-tariff, technical and especially be careful with technical. SPS and TBT. That is most important. Next comes export related measure. Which related measure? Simple concept. Even for exporting also we have a restriction. Very first one. What is it? Ban on certain products. We don't allow you to export from my country at all. Next, even if you want to export, you should pay the, or sometimes to export, I will only encourage you by giving some subsidies. And last but not the least, voluntary export. That means quota restriction, quantity restriction on export. Only up to certain quantity you can import. Beyond that you cannot. This is unit 2 of chapter 9. What is it? Unit 2 of? Clear? Flip back your pages. Have a look. Hello, it's not a break time. Come back first. Okay, we'll go to the next topic. Chota unit, it will get over hardly in 15 minutes. It will not take much time. Only 3 topics are there. So we'll understand about trade negotiation, GATT and WTO. That's it. And last, G20 economies. Okay. See there, trade negotiation. What is it? If you remember, I spoke about bounded tariff. You can't go beyond that agreed limit. If you want to go beyond agreed limit, what you should do? Negotiate with the trading partner. You should compensate them. What you should do? That procedure of negotiating. What is it? That is called as. and that is a complex interactive process. Which process? So that is not that easy. It is a complex procedure between nations having which issue? Conflicting issues or conflicting objectives in the international trade, and that will not get settled in just one round of meeting. It is a dash round of meeting engaged between the countries and the other stakeholders who are having that conflict, and also trade negotiation. After negotiating, it will formulate a new international trade rules that will lead to new development of rules and regulation. One such example is regional trade agreement, RTA. If you remember, I spoke about preferential tariff. Nearby countries will form their own group. They will charge lesser taxes like that. Now, no rule that nearby countries should only do that. Even the countries with different geographical location, countries with what? Now, they will also have an agreement in order to reduce dash barrier and in order to promote. Best example, BRICS Association stands for Brazil, Russia, India, China. Now even Iraq has been included, Iraq or Iran, some new country has been included, Saudi Arabia has been included. Now clear, new countries have been included. Now we need a new name for that to tackle against this USA stupid tariffs and all. Now we have a Brahmastra here, BRICS tariff. What is it? Between Asian countries, okay, you don't do business with us, get lost. We'll do it with our own Asian countries. That is enough. You be separate, stupid fellow, you be there only. Like that. See, there are 8 types of regional trade agreement. Which agreement? Usually I give that lunchbox example. Between school friends, there is a small group in the class. Between 4 or 5, they will be sharing their lunchbox with each other. So if you remember, between the members, no restriction. You can take full lunchbox of A, B and C. A, B, C are friends. What is it? A, B, C are? Now A can take B's lunchbox, B can take C's lunchbox, C can take A's lunchbox. Between themselves, no restriction. Suppose if A, B and C wants to share their lunchbox with X and Y, there is a common rule. Only 1 chapati, 4 spoons of rice. That's it. You cannot share beyond that. There is a common regulation. What is it? Or common external tariff with the other countries. Like this now ABC. Let's assume ABC is a country, European country. Let's assume Germany, France and Italy. Germany, France and Italy. Now if Germany, France and Italy wants to do a trading with India, or whether France wants to do, whether Germany wants to do, or whether Italy wants to do, they have a dash tariff. Common tariff. But between themselves, no tariff, nothing. Free movement of goods and services. Okay, next step number 2. Now, between members, between A, B and C friends, no restriction, full lunchbox can be taken. Earlier, there was a common regulation. Now, only 1 chapati, 4 spoon of rice. But now, nothing. Now, A can enter into separate rules and regulation with X. B can enter into separate rules and regulation with Mr. G. Like this, you are free to enter with your own rules. Free to enter to make your own. That is step number 2. That is free trade area, also called as preferential agreement. See, we are eliminating all kinds of tariffs and quota barriers, and you are common to enter relationship between others. Clear? Next comes customs union. What is it? Customs. Now that means between A, B, C, free movement of goods was there. Now, earlier if you want to share your lunchbox with other, only 1 chapati. Same way, even if you want to take their lunchbox and you need to eat food, same 1 chapati. Earlier only for export, now even for imports. Common regulation and common tariff. Clear? That is customs union. Which union? Also called as trade bloc, which is followed by European Union. Next comes common market. Which market? See, simple da. Between ABC, only lunchbox was getting exchanged. Now, not just lunchbox, even box, bag, notebook, anything can get exchanged. But between any outsider, common regulation. Only 1 chapati, 4 spoons of rice. See, free trade between the members. Between all the European country, free trade. Common regulation with any non-member of European Union. And now, not just free flow of goods and services, even free flow of factors of, like this bag, watch, shoes and all can be exchanged. Next, 5th step, last but not the least. Same. First, free flow between ABC lunchbox, free movement. With any outsider, common regulation. 1 chapati, 4 spoons of rice. And free flow of even like lunchbox can also be exchanged. Now, bag can be exchanged, watch can be exchanged, shoe can be exchanged, not anything else. What boys are thinking. Next, there is a common central bank and common. Only boys will understand that. Don't worry. She's thinking, what did that boys understand except me? Don't worry. Only they will understand. Now, common central bank and common European Union as a common central bank called as European Central Bank, and common currency called as Euro. Common currency called as Euro. That is monetary and economic union. Monetary and So remember the lunchbox example between the friends, that is connected between countries. Connected between European countries, I took an example. So that is the first 5 types. First one is trade bloc. Second one is free trade area. Next, common monetary and economic. Next comes unilateral trade agreement. Which agreement? Simple concept. One country will open its doors to other country without any rules, without any restriction, in order to support their economy. In order to what? Why? Because that nation's economy is not performing well. Best example, Sri Lanka, India. Now Sri Lanka will say, India, I will come and sell my goods in your country. Da, please, da. Okay, you come, please do it. I will not impose any tax, any rules, any regulation. Only for you. Not for that stupid China. Not for that Maldives. Only and only for you. Only one single guy. See, one country opening its doors to other country without any. Under this, one country is getting to offer incentives in order to encourage the exporting countries' economy. Exporting countries. In order to boost their economy. Next, bilateral agreement between two countries. Now, India wants to trade with Japan. Japan has also rules. India has also has a bilateral between two countries. What is between? They are having a trade negotiation. Multilateral between group of country or between particular region. Between group of country or between particular region. Clear? That is multilateral agreement. Which agreement? Clear? So, this is the concept of trade negotiation. What is it? Now comes the story of GATT. Simple. After World War II, your best friend of macroeconomics, Mr. Keynes, he wanted to stop the world from getting such further devastation. He wanted to establish 3 world-class institutions: IMF, World Bank, ITO. IMF and World Bank was established, but ITO was not established. ITO was not established. It was taking a lot of time to establish the ITO. Is that clear? So remember, in order to establish this ITO, there was a lot of trouble. The trouble country was, even then, even now, for every other alternative purpose in the world, who is the troublemaker? Stupid fellow. Clear? So USA didn't agree to become a member of a ITO. Henceforth, it was taking a lot of time as a secretariat. What is it as a? GATT was established in 1948 to take care about only and only trading in. That's it. It never considered services and intellectual property, copyrights, patents, trademarks. And GATT didn't have much powers. GATT didn't have. It had only limited powers. And even members was not taking GATT seriously. There were 123 member country. How many member country? And all this trade negotiation, if there is any dispute settlement forum and all was not there with the GATT. And GATT rules was not taken seriously. Later, member felt that we need a strong organization which covers goods, services, intellectual property, everything. In the 8th round of meeting which happened in Uruguay, which happened in where? Uruguay round. That is the 8th round of meeting. All the members met together and they decided to establish a new organization that is called as WTO. What organization? By mixing all these 123 member countries and making this GATT as a good council. GATT as a dash council. See, this is the structure of WTO. Top level is a ministerial conference. Once in 2 years, the stupid fellows will meet. Next is a general council. Every year they will meet several times. They are the one who will come and sit for all dispute resolution, everything. Under them, we have goods, services and TRIPS, trade related intellectual property services or intellectual property rights. Clear? Whatever we call goods council today, earlier it was called as a GATT was merged into a goods council. Clear? This was the story behind the GATT. So GATT started losing its relevance after 1980. Because services started service started increasing. It was not covering wide areas and all intellectual property rights was not there. And economy was growing very faster. Globalization trend was becoming more and more and it was going leaps and bounds beyond the scope of GATT. All this international trade and agricultural trade liberalization was dash. And not just in GATT, even today. Biggest, let me say, disaster in every international rounds of meeting is a dispute or let me say controversy of agriculture. Even today, many countries are unable to grow proper agricultural output. They are expecting some other country to export to them. So WTO said for a time being we will support you. But going further we will. Because in their own country, they are unable to feed their population. How can you expect to export it to some other country? So that creates a trouble. Even the heated discussion is always and always about the agriculture. See, Uruguay round, 8th round. Which round? 8th round. It was the biggest round. Later, it shaped into WTO. All the member groups formed 15 committee. These are read-only concept. Which concept? So, I said you the entire background story. Now, WTO established in Geneva, Switzerland. Geneva is in the Switzerland. That is the headquarters of WTO. There are total how many countries? 164. Out of that, 117 are developing countries, 24 are still negotiating countries. 95% of today's world trade is handled by whom? WTO, and that is the largest international economic organization in the world, which is ruling between the. That means it is an intergovernmental organization. Which governmental organization? All 164 member countries put together, they have formed it, and it is intergovernmental, not just saying by words. You should go back to your country's parliament and you should ratify. Stating in terms of international trade, WTO agreement is binding and final. Like this, you should ratify and come. And WTO will always and always support for developing country. Which country? See, these are the objectives of WTO that will act as a forum. Act as a what? For dash negotiation. Administrating the agreements, reviewing the national trade. National treatment principle, treating neighbors as how you treat yourself. Same example, next see. Which countries are they helping? See, shortcut to remember, which are the key 6 objectives of WTO. This is important. From this area, the questions will come. Get ready. You have to read this. Clear? Next comes structural areas. I have informed and see. Top level ministerial conference, they will meet once in how many years? 2 years. General council, they will meet several times in a year. We have goods council, service council, and intellectual property. Again, every single year, the dispute is only about the agriculture, and also India had. Which had? Yeah. Under WTO, we had something called as multi-fiber agreement. Under WTO, now it is changed as a, and always importance is given to national treatment principle. Treat your neighbor's goods as how you treat your own nation's goods. And now comes the guiding principle. These all are read only. You may get a question or you may not get the, along with this, even agreements of WTO. See, shortest way I have given, shortcut. What all key pointers you should remember about the principles of WTO. Clear? And these are the 13 agreements. How many agreements are there? See, agreement on agriculture, agreement on sanitary and phytosanitary measures, animal life, plant life, human life, those things, and TBT, textile and clothing, intellectual property rights, dumping, anti-dumping like China. All this 13 different, not 13, more than that, 16 different agreements. How many agreements? These are read only. So 8th round of meeting was Uruguay round. Now the 9th round of meeting. Which round of meeting? With a Doha developmental agenda. It was covering 20 areas, including agriculture and all. Again, heated discussion was only about the, see, the most controversial topic is, next comes G20 economy. Which economy? G20. Sir, what is it? FDI in the benefit, foreign direct investment. I will explain. Last unit that is. Okay. G20 economy. Which economies? Global 20 economy. Which economy? That means another 20 economies of the world have created their own one small group. These stupid fellows will meet several times in a year. Whenever some disturbance happens in the world, like COVID-19, Ukraine and Russia war, all these wars and all, in between they will meet. See, which are the members of G20? This is important. The questions have come. Which country is not the member of G20? Among the following. Now, who are the members? Argentina, Brazil, Canada, China, European Union, France, Germany, India, Indonesia, Italy, Japan, Republic of Korea, Mexico, Russian Federation, Saudi Arabia, South Africa, Turkey, United Kingdom, United States. These all are the members of G20 economy. First, initially they addressed the COVID-19 pandemic. Recently, in 2008 financial crisis, Iranian nuclear mission and Syrian civil. Now the supply chain has been disrupted in the whole world, initially because of pandemic, also because of war in the Ukraine and all various reasons, blah, 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 blah. Now we are imposing a new restrictions on WTO members. Export restrictions have been imposed first in the context of pandemic, subsequently because of, and also there is a food crisis across the globe. Again, agricultural trade, always and always agenda. See, controversial topic, food crisis. Still there are 54, 52 restrictions because of COVID-19, still 27 exclusively to combat the, clear? And this is read only concept, blah, 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 blah. Trade we have done, so much of revenue we have done, so much of dollars we have done. Clear? This is unit 3. Which unit? Unit of your trade negotiation. Which negotiation? Clear? One of the most important unit it is. Now unit 4 will go ahead. Flip back the page. Any doubt, let me know before moving to unit 4. Unit 4 is little interesting. Rekha. We'll do it. Another 45 minutes, this will get over. Unit 4 and Unit 5. By that, I will instruct what to do with Chapter 10. We'll finish, wind up with the class. Clear? Okay, let's continue. Unit number 4, exchange rate and its mechanism. What is it? Simple topic, one of the most interesting topic. And even numerical problems can come here. See, I have divided the entire chapter into how many parts? 2 and 5 are connected with each other. See, first we should understand what do you mean by foreign exchange? Simple. What is the price of one country's currency in terms of? Now let's say $1 is equals to 87 rupees. $1 is equals to how much? Now there are two currencies involved. See, left side is called as base currency. Right side is called as counter currency. If base currency is a foreign currency, which currency? Is a foreign currency, and counter currency is a domestic currency, that is called direct to quote. Which called? Reverse. Now let's say for example 1 rupee is equals to $0.87. This is called indirect quote. When base currency is domestic currency and counter currency is a foreign currency, that is called indirect quote. In India, which quote are we following? Direct quote. That's it. That is part 1. Clear? Next comes part 2. Foreign exchange rate regime. Simple concept. Now, how does the foreign exchange rates are decided? There are two methods. How many methods are there? Method number 1. What is it? Method number? Fixed exchange rate. What is it? Fixed. So, who will fix this? Simple. Government of the nation. Who is going to decide the exchange rate? Government of the nation will decide the exchange rate. The value of their country's currency with respect to the other country's currency. But the biggest problem is in fixed exchange rate, government has to maintain a huge foreign exchange reserve. Which reserve? Huge foreign exchange reserve. Why? Because every nation will be interested to come and exchange in fixed exchange rate regime. Why? Let's assume for a time being, let's assume India is following a fixed exchange rate. Let's assume. What is it? Let's because in India until 1993, until which year? We had fixed exchange rate. Later we went to the second option, that is floating exchange rate. Which exchange rate? Clear? Now, whenever you have a fixed exchange rate, let's assume India decided exchange rate $1 is equals to 75 rupee. $1 is equals to in 2019. When? Till date, let's assume government has not changed. That means everyone is interested to exchange it in India, because if you need to buy dollar, you should just pay 79 rupee. By mistake, if you forget and if you go to US, there if you want to exchange, today what is the market rate? 87. You should give how much? That is floating exchange rate. Market determined. Which determined? Floating exchange rate. Which exchange rate it is? Clear? So there is two types of exchange rate. One is fixed exchange rate. Second one is in fixed exchange rate. Who will decide? Government. In floating exchange rate, who will decide? Demand and supply, market forces. There, I need not to maintain huge reserve. I just need to maintain sufficient reserve. Which reserve? Sufficient foreign exchange reserves. But the biggest problem with fixed exchange rate is it will not consider inflation. It will. That means inflation is not adjusted. That means inflation is always controlled. Inflation is always controlled. You are not allowing inflation to work. But here, inflation is not controlled. It will give the true value. It will give the which value? Present value in the market. Clear? So, how many types of exchange rate is there? Number 1. Number 2. In fixed exchange rate, who will decide? In floating. But the biggest problem of fixed is we should maintain. And there will be stability. What will be there? In the economy, that will encourage more and more foreign investment. That means whether you bring money today, tomorrow, day after tomorrow, exchange rate remains. Whether you do a transaction today, tomorrow, or after 1 week or after 1 month, until government changes, exchange rate remains. That remains. But here it will be flexible. What is it? That means that exchange rate keeps on fluctuating on every single day basis based on demand and. Clear? So how many types of exchange rate is there? First one is. Second one is. Now under floating there is one more type that is called as managed float. Which float? Or also called as the T float. Which float? That means India follows this managed float. What does that managed float? That comes under floating. See, government of the nation or monetary policy will become participant in the exchange market. What they will become? In which market? Exchange market. That means when there is a too much of fluctuation, when there is which fluctuation? They will come in the foreign exchange market, they will buy or they will sell the currency and they will control fluctuation, but they will never target any currency. They will never target. That is managed float or the T float. Which float? Managed floater. See, completely dash determined. That is demand and floating exchange rate. Next, government will participate in which market? Which float? Managed float. Next, who's determined? Fixed exchange rate. Clear? See, under the floating, we have this government participation. Clear? So, in short, we have floating and we have a. Just now I explained all of this. Advantages. Read only concept. Next comes managed. Who will follow that? Next, fixed exchange rate. That is also called as pegged exchange rate or pegging. Pegging means fixing. What do you mean by pegging? Clear up. See there. Which is most important? Fixing or floating? Floating. Because we need flexibility, not stability. We need to trade in today's value, not in 2019's value. Clear? So flexibility is greatly encouraged than stability. See, free floating or a flexible exchange rate regime is argued to be efficient and highly in the exchange rate as it is free to fluctuate in response to the and demand for the exchange rate. So in short, fixed exchange rate will be bring more and more as well as, but lacks the flexibility is greatly appreciated than stability. Clear? Next comes nominal exchange and same like our nominal GDP, real GDP. Which GDP? Nominal, today's value, present value. That means the presently at which the market is. $1 is 87 rupees. This is nominal exchange rate. Then what is real exchange rate? Simple. What is the value of your nation's currency in terms of goods and services? In terms of what? Let's take up an example. Assume in India, 1 kg tomato. What is it? 1 kg tomato is, let's say, rupees 70. In USA, same 1 kg tomato. What is it? 1 kg tomato is $2. How many dollars? Today, what is the exchange rate? $1 is equals to 87 Indian rupee. This is nominal exchange rate. Which exchange rate? So this is nominal. $1 is how much? 87 rupees. Clear? So remember, in India, what is the price of 1 kg tomato? In USA, if I convert that into the present exchange rate value into 87, how much is the actual price in Indian rupee? 1. That means in India, what you get for 70 rupee, in USA you will get it for. Is the value same? No, we should convert that into goods and services. So we have a particular formula to convert. See here, nominal exchange rate into domestic price divided by foreign price. Today exchange rate is 87 rupee. In India, tomato price was 70, but in USA, tomato prices. Do this. It will become 35. That means $1 is not 87 rupee. $1 in terms of goods and services only. That is real exchange rate. Which exchange rate? In terms of goods and services. We should convert into a common currency price. I converted into Indian rupee. Clear? There is something called as real effective exchange rate. Which exchange rate? See, your favorite topic comes again. What is it? Deflator. Reduce that inflated value. Today, without inflation, how much is $1? I know that 87 rupees $1. This is including inflation. Reduce that value. Let's say 119. Deflator value. This is price index. Which index? No, that 87 divided by 119 into 100. 70. That means real exchange rate is how much? 73. That is real effective exchange rate. Which exchange rate? Clear? Next thing. Okay, part 5. I will straight away go to part 5. Wait, I said no, connection is there is in part 5. See, what is that part 5 connection? See, we explained about fixed exchange rate and floating exchange rate. Which is more flexible? Which is flexible? But which is stable? And where we need to maintain huge foreign exchange reserve? Where we need to maintain sufficient reserve? Where inflation is not controlled. Inflation will work, but where inflation is controlled. See, whenever there is an increase or decrease, what is it? Excuse me. Someone is nicely scolding again and again. Okay. Suppose if the exchange rate increases or decreases in a floating exchange, which exchange? That is called as depreciation and appreciation. What is it called as? Okay, let's say today $1, it is 87 rupee. $1 is how much? Suppose if that $1 becomes 89 rupee, or let's say 90 rupee, wait. What is it? Appa, is it increase or decrease? Decrease in domestic currency value. What is it? This is called depreciation. What is it called as? That means to buy that $1, earlier I was spending only. But now I should spend Indian value is decreasing. Now I should pay 90 rupees. That is called as domestic currency depreciation. Domestic currency and foreign currency appreciation. If domestic currency depreciates, foreign currency will. Now what will happen in this? Now listen to this carefully. Now Shashikiran, shoe seller or shoe, I used to export my leather shoes. One shoes I used to sell for $1. How much I used to earn? But now same shoes, if I sell, how much I will earn? Good na? Export will. But I used to import chocolate packets for $1. Earlier I used to pay how much? But now I should pay how much? Imports have become costly. Imports have become expensive. Exports have become cheaper to the outside world. So whenever domestic currency gets depreciated, exports will increase. Imports will. Suppose $1, if it becomes 80 rupee, this is called domestic currency. Now Shashikiran will not get 87 rupees by selling one shoes. He will get only. So what will happen for exports? But chocolate packet I was to import for how much? 87. But now I will import only for. So imports will. This is the logic of appreciation and depreciation. See, this happens in floating exchange rate. Which exchange rate? This depreciation and. Suppose if at all we are following a fixed exchange rate, this is called as devaluation and this is called as revaluation. Appreciation is called revaluation, depreciation is called devaluation. See, fixed exchange rate, devaluation, revaluation, floating exchange rate, depreciation and is that clear? That is part 5. That's it. Clear na? Let's go to part number 3. Part number 4. 3 or 4? Hello, 3. 2 done. 2 and 5 is done. Now foreign exchange market. Which market? See, this is electronically linked network between all brokers, bankers, institutions and dealers between 24 bar who will transact in the foreign exchange. That is called as foreign exchange market. Which market? Who will buy and sell currency against one another. That's it. There are two type of transaction. Current transaction and current transaction is a spot exchange rate. Which exchange rate? So it is a spot market. Future transaction, you are entering into agreement but delivered in the future. On the future values. On dash values? Rest remaining, these are read-only concepts. Don't worry. Even foreign exchange rate gets fluctuated. There are many participants like commercial bank, brokers, all this. These are read-only. Clear? Next comes part number 4. What is it? Which exchange? Let me teach you the shortcut to remember this. Listen to this carefully. Nominal exchange rate. Which exchange rate? So that is present value at which the market is running based on demand and the point where demand and supply intersects. That is called as equilibrium. That is the price which gets established in the market. Now let's say this is the supply of dollar. Supply of demand for. This is the point of equilibrium. So today's price is 87 rupee. This is nominal exchange rate. Which exchange rate? Now either demand can change or supply can change. Now if demand increases, which increases? Which side shifter? Right hand side shifter. So whenever demand increases for dollar, demand increases for. Now observe what is happening here. Now automatically exchange value will increase. That means $1 which was 87 rupee, let's it become 90. What is this called as? Depreciation of domestic currency and appreciation of foreign currency. That means now dollar got appreciated, rupee got. Whenever demand for dollar increases, demand for dollar and supply remains same. Clear? Now complete opposite. Let's say for example supply of dollar increases. Which increases? Supply of dollar increases. Now let's say for example this was the initial equilibrium. One second. So this is the initial price, this is the initial supply demand. This is supply of dollar, this is demand for dollar. Let's assume that earlier $1 was 87 rupee. Now supply is increasing. Which is increasing? If supply increases, which side shift? Right hand side shift. Supply of dollar increase. This is new equilibrium. Now at this point of new equilibrium, what is happening to equilibrium price? Equilibrium prices decreases. That means domestic currency value from 87, let's say it became 80. That means domestic currency got, foreign currency got. Now rupee got appreciated, dollar got depreciated. That's it. First one demand side, later you understand the, but understand any one, don't confuse with both. See, first one we will understand the nominal exchange rate. From later on, see, demand is increasing. Which is increasing? Demand is growing, RHS shift. So at that point of time, domestic currency, rupee got depreciated, dollar got appreciated. Next, when supply of dollar increased, RHS shift in only and only in supply. Now rupee got appreciated, dollar got depreciated. That's it. Clear? So I had given certain questions here to solve. You guys have to solve it. Clear? In case of any doubt, let me know. So this was your unit 4, and there is one chota sa topic. That means foreign exchange rate whenever it gets fluctuated, appreciation and I have created even shortcut for that. See, whenever foreign currency gets appreciated, what all will happen? That means $1, which was 87. Now with $1, if it becomes a domestic currency appreciate, that means 80. What will happen? Exports will decrease, imports will. You know that. See, domestic currency is becoming. Now foreign goods will become for. So we start importing more. So we'll start importing more, and Indian goods are becoming costlier. So we are exporting. Indians who are traveling to abroad will increase, because in order to buy $1, you don't need 87 rupee. You just need a. But foreigners coming to India will become expensive. That will become costly. Now Indians who have invested in abroad, I always want foreign currency to get appreciated. Why? When I invested, 87 was there, na. I want when I'm getting back return, it should become 90 rupee. How much it would become? So I will get good return. But one who has borrowed money from abroad, he always want foreign currency to, because I borrowed at 87 rupee. When I am repaying, I should only repay it. I want domestic currency to appreciate if I have borrowed money from abroad. If I have invested in abroad, I want domestic currency to depreciate. Clear? So this is the shortcut. When currency gets appreciated, currency gets. Next, last but not the least, when currency gets, what is the depreciation? $1, which was 87 rupees. Stupidity. Now $1 has become 90 rupee. Now exports will, imports will. See there, Indian goods becomes cheaper to the rest of the world. So export starts increasing and Indian stops importing, because import becomes expensive. So imports will decrease. Next, see there, foreign goods will become costlier to Indians. That is why we have decreased our imports, and GDP growth will happen, employment will increase. Why? You are exporting more, na? For that you should produce more. If you are producing more, employment opportunity will increase more, and that raises the demand for which good? Domestic good. And that means people are exporting rather than selling in the domestic country. So because of that, shortage gets created, price gets increased. Which inflation? And you are not importing more. Why? Imports have become costly, but you can't neglect that. You should import some petroleum products and all, na? Life-saving drugs and all, na? When you are importing itself is at high cost, can you sell it at low cost? That is called which inflation? Because you have imported that goods at a very high cost. Cost push and demand pull. Both will happen. Indian traveling to abroad will become. Indians who have borrowed from abroad, his cost of borrowing will goes up. So these are the good things and these are the bad things because of currency depreciation. Clear? By this, entire unit 4 comes to an. This brings to the unit number 5. Last but not the. And after that, I will instruct what to do with chapter 10. Clear? I will instruct what all is there, what all has to focus, what all you should think about, all these things. Clear? Chapter number 9, unit 5. Okay, that speaks about international capital movement. Which movement? That means foreign currencies are coming inside India. Foreign money is entering inside. There are 4 ways of entering inside India. Very first one is called as aid. Aid refers to help. So we are not focusing on this. That is a help created. We will not repay. Second one, we have an obligation to repay, but we are repaying with interest and NRI deposit. Our own citizens who are staying in abroad, earning in abroad, coming and depositing money in India. We are not even interested in this. But then what are we interested in? FDI and FP. Listen to this carefully. The major differentiation between FDI and FDI, FP, foreign direct investment and foreign portfolio. Simple. If at all any person or any individual from the abroad, if he comes and invest it in assets of India, what is it? Or if he invest it on infrastructure, that is called FDI. Rather than investing on asset or infrastructure, if he invest it in capital market, which market? Like stock market, hedge market, mutual fund market, all this, that is called as FP. Every time if the investment is greater than 10% FDI, lesser than 10% FP. Clear? FDI will always and always create a management and controlling authority. Management or that means decision making authority. But here there is no management or a controlling authority. You are holding the stocks and shares only as a speculative motive. Which motive? That means profit motive intention. Here you are holding equity. You are holding what? In order to have a management control in terms of voting rights. Which rights? Clear? And whenever you are coming to India, investing on asset, it is always a dash term investment. But here it can be either short term or and the most important difference of all, FDI will always contribute for employment and GDP. What is it? Employment and GDP. That means you people will just bring technology. You will use the local manpower. Na? You are producing in India, category A, category B. What is category B? MNC companies producing where? That will increase our GDP. But here there is no contribution. What is it? For employment and this is the major differentiation. Which differentiation? Clear? FDI, investment on assets or infrastructure. Investment on where assets are? FPI, invested in which market? Capital market, stock markets, hedge fund, mutual fund. That is in securities market. Which market? Investments of greater than what percentage? Okay, let's take an example. Assuming Shashikiran wants to start one insurance business in India. Assume Shashikiran is a US citizen, US based company. Lombard. What is the company name? Now I am merging with ICICI. ICICI Lombard. ICICI is Indian. Lombard is foreign company. Now I have just 49% control as a Lombard. ICICI has a like this. Greater than 10% is FDI. If your investment percentage is lesser than 10, not an FDI, it is a. Now as a Lombard, I have how much percentage? Like this, government will restrict. Not every business there is 100%. See, for few business, they will just restrict for 26, for few 49, for few 51, for few 47, only for few. And for you, even prohibition. What is it? We will not allow such companies to enter inside our country. Prohibited. Like this. Greater than 10% investment is FDI. Lesser than 10% is? We will focus more on FDI. So, okay, we are focusing more on FDI. Now, how do we enter India through FDI? Simple. Automatic route approval. Which approval? Automatic route approval or government approval. Which approval? Clear? So, either it can be an automatic route approval or a government. See, earlier we also had one more element called as FIPB, Foreign Investment Promotion Board. Now it has been scrapped. In the place of FIPB, now we have one small website called as Foreign Investment Facilitation Portal. What is it? Foreign Investment? Clear? FIPB has been scrapped. Now there is only two ways of entering into the country. Okay, after entering into the country, how do you perform your business in the country? Simple. Either by opening a subsidiary company. Which company? ICICI Lombard. Lombard is subsidiary of ICI. Or franchising. What is it? McDonald's, KFC, Subway, franchising. Clear? Or else third one, opening up your foreign branch. What is it? Opening up your or equity infusion. What is it? Equity. Coming and investing in the equities and then getting the management and ownership control. Or fifth one, merger and acquisition. What is it? Merger and greenfield investment. Which field investment? Greenfield. Greenfield is completely fresh. You are completely coming here, setting up 100% scratch. And or else brownfield investment. Which field investment? Already there is a facility. You are coming and you are taking over. Brownfield investment. Clear? Acquisition, merger, even joint venture. Which venture? JV, joint venture for developing any natural resources. So these are the different ways through which you will enter Indian market and you will perform. Either being a subsidiary company, franchising, foreign branch, foreign subsidy, or foreign equity investments, or mergers and acquisition, greenfield investment, brownfield investment, and joint. Clear? So for us, which is most important? See, it is defined as the process by which resident of some home country, let's assume USA, is investing into the substantial investment of greater than in the another country, that is host country. Let's say host country is India, and gaining dash share, gaining the voting power, and also in the public or private entity, being a non-resident Indian. Next, when there is an investment acquires dash on what he is investing on, asset, and it is always a dash term investment, and it is a dash investment, and also all substantial initial investments and further investments, everything put together is a FDI. See, best example of joint venture, Maruti Suzuki and Government of India. Suzuki and Government of India set up something called as Maruti Udyog Limited. Technology will be bought only by employment, and GDP will increase too. Clear? Next, see, FDI can either happen through equity participation, retained earnings, whatever profit you have made, again reinvest that, or by way of giving a. See, in general, listen to this carefully. In general, giving loan is not FDI. Giving loan is not? But if any person has a stake of greater than, now Shashikiran, ICICI Lombard. Lombard belongs to me. 49% stake I have. Now I will give loan to ICICI. Now such loan money is called as FDI because I have a stake greater than. But in any generic scenario, in normal scenario, if you give loan to someone, is it FDI? But if any individual owns a stake of greater than, and then if he gives a loan, what is it? See, who can do the FDI? Individual, unincorporated entity, associated groups, government and government agencies, even estates and trust, or any other combinations of above. What is it? How do they do that? By opening up there, including there, or through, or any joint development of purchase and annexation, that means acquisition of the companies. And these are important types of FDI. Every attempt, one question is there from types of FDI. Horizontal direct investment. Which investment? I am investing on same business. Let's say Yamaha from Japan is coming to India and they are also starting same motorbike business. Which business? Even in Japan they have motorbikes. Even in India they are selling it. Okay. Vertical investment. Which business? I will come to India. I will not stop. Let me say I will not start a motorbike business. I will start tire manufacturing. Which manufacturing? Which is connected to my main business. What is it? Next comes conglomerate investment. Which business? Hey, which investment? That means Japan, Yamaha will come to India and they will start selling musical equipments, piano, guitar, all this. Yes, they have it. That is conglomerate, speakers, all this. See, that is called as conglomerate investment. Next comes two-way direct investment. Japan, you come to India and invest. Indians, we come to Japan and exchange offer it is. What is it? Reciprocal investment. Clear, huh? So, these are the four types of FDI. What are all the modes of FDI? Already I wrote this now. 7 modes of FDI. See? Same to same. I have already explained. See, opening up of subsidiary or associated companies, stake greater than 20%, or injection of equity, or acquisition, mergers and acquisition, joint venture, greenfield investment, brownfield investment. Now you tell me, common sense, why are you going to some other country and you are starting your business? Simple. For what purpose? Your market is good than my country's market. Next, raw materials are available abundantly in your country and your country is cheap labor ka dukan. Next, technology. In order to earn more and more, I need to start new business in new country, diversification. And in your country, Nirbala aunty said, I will not charge more tax. So tax benefit. Next, avoiding the. So you are putting more and more taxes when I send goods to your country. So I will only come. That is what? Precursor to FDI. Nivedita, clear? Rather than sending goods inside your country and then, let me say, levying a taxes, I will only come to your country and I will produce in your country. That is what? Avoiding a trade barriers. Barriers in the form of tariff or non-tariff measure, precursors to FDI. Next, in your country, lower environment standard, no rules and regulations of environment. We can pollute how much ever we want. We can destroy how much ever we want. Next, see, Modi is agreeing, so I am coming. Political advantages there and interdependence either for raw material, resource, land, labor, anything. So I will only come there. Next, what is it? My product should be available across the globe. Internationalization of business mind. That is why. And global, geographical. Your country is located in such a beautiful location. I can connect eastern countries as well as western country. Afghanistan, best example. Geographical advantages there. Next, your country's growth rate is high. 7.5% of GDP growth year by year. Fourth largest economy. Next you will become third. Next second. Next, keep dreaming. Next, benefits and Costs of FDI. Read only. Clear? But important. You can't ignore. It is important. Next comes FDI history. Simple da. Till 1991. Till when? Until we incorporated LPG. We never allowed any foreign companies to enter India or foreign money to enter. Only after new economic reforms. LP. We allowed all foreign companies. Even today, our major intention is to grow industrial business. Which business? We need to come with industrial revolution. For that, see, we established one more. After 1990 LPG, we established FIPB, Foreign Investment. Later, we scrapped it and we now replaced it with Foreign Investment Facilitation. And foreign money is coming inside India. To handle the foreign money coming inside, going outside, under RBI, we have established something called as FEMA, Foreign Exchange. And we also established SEZ Act. You come to India, produce in India. Don't sell in India. From India, you export. It is a foreign company, but producing where? India. But where are you selling? Outside. You won't be exported. I will give you my land, I will give you my space, I will give you my employment opportunity, everything to you. SEZ. Clear? Either you can come through automatic route approval or government approval. See, there are also certain ways through which we are promoting FDI by simplification of procedure, automatic approval, setting up of FIPB. Later we replaced it with FP, Foreign Investment Facilitation. We will sign one new agreement in order to protect your funds called as MIGA, Multilateral Investment Guarantee Agency, precursor to FDIs and all. You can use your foreign brand name, FDI in multiple sectors, 100%. And we established FEMA, SEZ Act, mergers and acquisition. We supported greenfield investment, foreign technology collaboration. Like this, we are supporting more and more for FDI in the country. Also, we have prohibited certain sectors where you can't come in. Invest like lottery, gambling business, chit fund, nidhi fund, transferable developed rights, real estate, development of farmhouse. Should I go slow? They both are like full. Eye to eye contact is happening.
No, you said Nidhi na, so it's not.
Nidhi company means FMCG. Sorry, so NBFC. What is it? NB. Not FMCG. Sorry, NB. Non-banking finance companies who will collect funds from the members and they will give loans. Clear? Next, manufacturing of all tobacco and tobacco substitutes not allowed, and activities exclusively reserved to government like atomic energy, railways. No, foreign companies cannot come and do business in India. So this is the investment and FDI in India. What all we have received from blah 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 number of years, and we are the major recipient. What is it? Major recipient, 8th ranked among the world in 2020 in FDI recipient. Last but not the least, what is it? Foreign portfolio. Which investment? Foreign? Where do they come and invest? Stock market, bond market, hedge fund, less than 10%, no management, control. They are purely speculative and opportunistic. Market will become more and more volatile because of the stupid people. Because they will take back their funds and they will invest quickly in some other country. It will not impact on employment end. They are more concerned with the security for their funds. Suppose something happens in your country, speedily they will take out their money, they will say bye bye. And when they take back their money, now huge money, crores together will go outside. That will make your domestic stock markets more and more volatile, fluctuate. That is what is in India happening from past 6-7 months. China liberalized rules, all FOI said tada bye bye to India. They went up. Again they came, tariff has been imposed by Donald Trump and all, they again took back. Like this, highly fluctuating. Clear? So this is FI. Whatever I just explained, difference between FDI and by this, the entire chapter comes to an clear, understood. And chapter 10, let me instruct how to prepare. Most important, listen, another 5-10 minutes, it will get over and we will take the exam questions and we'll wind up. You want me to do exam question 9 and 10? 9? Okay, 9 we will do. 10, anyhow, you have to prepare now still. 9 we will do. 9 we will do the exam question. First I will instruct what all you have to consider in chapter. Okay, listen, all aunties, listen, another 15 minutes, listen. Done, madam? We'll start. Okay, see, there are 4 topics in this. How many topics are there? See, topic number 1. Ancient India. What is it? And India under British rule. India under and after independence, 1947 to 1990, disaster phase. Which phase is this? You will learn why I said disaster and all. When you are reading, what a beautiful rules, regulations we brought in, nothing worked in India. Till 1985. Later, growing realization was there. Whatever we adapted, nothing is working. When 1985, from 1947 to 85, they didn't realize. Next, 1991, new big changes happened. LPG, liberalization, privatization. And until now, 1991 to present. This is one major topic, half of your syllabus. Especially this area is important. 1947 to 1990, 1991 to present. Most of the policy, especially industrial policies. Which policies?
Industry.
See, India wanted to grow and develop in the path of industry after independence, like this Industrial Policy Resolution, Industrial Development Regulation Act, Industrial Policy Statements, 1991 Industrial Policy Reforms, like this we have bought in. After this, what you will get is primary sector, secondary sector. Apart from this, any nook and corner question can come. Any government policies, let me show, there are many government policies, even from the policies questions will come. ಇಡೀ ಬುಕ್ ಅಲ್ಲಿ ಯಾವ ಮೂಲೆಯಿಂದನಾದ್ರೂ ಕ್ವಶನ್ ಬರ್ಬೋದು. ಈವನ್ ಫ್ರಮ್ ನೀತಿ ಆಯೋಗ್, now planning commission of India has been scrapped. 5-year plans is no more. In that place, what we have replaced with? Niti Ayog. See here, primary sector. Aunties, listen. In the 1960s, India was a food deficient nation. That means, because of our disastrous policy, India wanted to be dependent on USA for food aids. That is how we went into disaster. Later, we came up with all this green revolution, high yield varieties of seeds, irrigation facility and all we improved. But we were dependent in 1960 for food aid with USA. Later, we turned out to be India emerged to be the world's largest producer of. And that is later on, like this blah blah blah. Full on information is there. Even any nook and corner. Even today, how much percentage of population is dependent on agriculture? But how much is the GDP contribution? See, like this agricultural, all the schemes, policies, growth rate is 3.5, MSP, minimum support price. See, these are the other kind of policies implemented. See, PM Kisan Yojana, MSP, Pradhana Mantri Fasal Bima Yojana, National Mission for Edible Oil, Horticulture, Insurance Facility, Soil, like this, anywhere. What is it? Already the questions have come from INAM, APMC, Mandis, like this from anywhere. Pradhana Mantri Krishi Vikas Yojana, any nook and corner the question can come. See, I can't say that this is important, this is important. From any nook and corner questions can be asked. Complete chapter is filled with data and information. What is it? Usually 7 marks will come. How many marks will come? Worst scenario. What is it? 10 marks. Sometimes 10 marks. If you are unlucky enough in that attempt, 10 marks. Clear up? But usually standard, how many marks will come? 7 marks will come from this chapter. Even secondary sector. See how much population is still dependent on secondary sector? 30%. Allamma, that is gross domestic value production is 30%. But 12.1 crore people. How much? But what is the GDP contribution? See, all this industrial schemes are important because industrial development is what India focusing. See, sometimes they will play around with the abbreviation. What they will do? Play around with the... I will show that question. Wait for a second. Department of Industry and Internal Trade. But they have played around with that word industry, industrial, all that. Where? September attempt, Wait, we will check. See here. DPIIT. What is it? DP? See, what is the only and only difference here? Industrial, industry. That's it. They will play around with English language and they will screw up your happiness sometime. Be careful. Like this, the questions will also come. See, Department of Promotion of Industrial and Internal Trade. But answer is? And Internal Trade. Even in your English exam, they will not play like this. They will play an economics exam. So be careful. Clear up. All this. GST, when was it introduced? What is a corporate tax? Made in India. Ease of doing business. And especially this ranking is important. India's present ranking is... Earlier we were 74 in 2019. We have improved by how many rank? And all this PM Gati Shakti, National Logistics. So all of these are important. From any nook and corner, the questions can come. That is what I am saying. Full on read only concept. Which concept? Full on data information. But the highest contribution for Indian GDP is coming from tertiary sector. How much? Highest and the fastest growing sector in the India. Tertiary sector. See, India. Service sector is the fastest growing sector in the India with the highest labor productivity and also major FDI recipient in the world. And also we are the top 10 WTO service exporting country. All these are the achievements. Blah, 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 blah. Full entire chapter is filled with information. What is that entire chapter is? And especially this disastrous phase. See, till 1993, till when? India was following a which exchange rate? Fixed exchange rate. But from 1993 onwards, India started following a clear, and especially the past 31 years after 1991, what all achievements we have made? Read only. Clear, especially this industrial policy, industrial liberalization. This is important. See what all happened, changes in 1991 and later. This is important. This is where most of the times questions are going to come. MRTP was existing earlier, but MRTP has been scrapped. Now, which are Competition Act. Clear, all this small, minute informations. Everything. See, total how many questions will come in total? Keep this chapter at last. Where is it? Keep this chapter at? My suggestion, prepare one chart from this chapter. Stick it on wall or next to the mirror, wherever you will walk more. Observe. Don't by heart. By hearting will not work. Sir, what if I change PG? Take that chart, go and stick it in your PG. Clear? Clear?
Yes, sir.
Should I continue or stop? Anyhow, claim it. Hello, exam questions you don't want, huh? Oh, okay. Discounted. Then, anyway, Nidhi company. No, chapter 9. Where is this? Chapter 9. Hello, excuse me, aunties. Listen. An appreciation in the currency or stronger currency make more domestic currency more and more. And therefore, it can be exchanging with. Rather than getting some $10, now I'll get some $11 because my currency got appreciated. Next, with the introduction of Niti, in order to promote electric, chapter 10, see electric vehicle, what is that? And even E-Amrit will also give informations about the e-vehicles, but Shunya campaign with development of e-vehicle, like see like this. They will come up with this. Next, the trade, as if people are answering. So Shunya, I didn't even do that. Oh, overacting fellows. Now the trade policy reforms includes, what is the trade policy? Removal of licensing procedures for a non-tariff measure. Next, an investment in which one country establishes a business activity in the foreign country, which is their main business, but in some way they are supplementing, somewhere they are connected, similar business activity. Vertical. Next, long-term interest and investment is for the long term. What is it? FD. Speculative in nature. FPI, help developing countries, World Trade Organization, government and central bank does not participate in the exchange rate, floating exchange, in the dirty float, free float or dirty float. Clear? Next, the most controversial topic of Doha Developmental Agenda. A tariff that is set higher that no imports are entertained. Next, ad valorem tariff, fixed percentage. Which percentage? Fixed percentage. Next, which one of this is the main reason for GATT losing its relevance after 1980? Inadequate institutional structure and dispute settlement system. The theory of comparative cost. David Ricardo. Which of the following statements are true? They're asking which is true. It is based on money cost. Opportunity. Ratio we will take now 1:4, 1:5 ratio, opportunity foregone. We should select one, we should reject the other. Next, it is positive. Although it will not give any, let me say for example, it will say suggestions. What is it? It will say, okay, which country, which has to be chosen? Which country has to be chosen? They are normative in nature, not positive signs, normative signs. Chapter 1, descriptive, prescriptive, those things. They are normative, not positive. Okay, 3 is correct. It does not take into account the factor price. Yes. Only and only labor cost. Only and only 3 and 4 are correct. Next, that's it. Just check how many questions. 1, 2, 3, 4, 5, 6, 7, 8, 9. One more will be there. Usually 10 questions. Or maybe I would have missed it with some other chapter name. Usually 10 questions will be there. This is May attempt. Okay, let's go to the September attempt. Which of the following is covered under the TBT, technical barriers to trade? Both food as well as non-food products are covered there. Next, the tariff which a WTO members binds itself with a dash commitment. Bounded tariff. Next, foreign corporates invest in India to benefit from the countries participating investment privileging in the tax bracket and comparatively lower salary. Foreign direct investment. They are coming in India because I need to pay lower salary all this long term. Next, what is the main differentiation between FDI and FDI is investing on? FPI is investing on cross rate. Again, I said now some information will be given in the summary part. Which part? See, what is cross rate? Now let's say that I have an exchange rate between country A and country B. I don't have it between country C. But country B has an exchange rate with country. I will compare that and I will decide the exchange rate. That is called cross rate. Which rate? This is there in the summary. Usually it was there in inter-level earlier. They should have not asked it, but still. TRIPS, Trade Related Intellectual Property Rights. Full form. Okay, North American Free Trade Agreement is an example between United States, Canada and with nearby countries. Preferential tariff. Their example is NAFTA. Preferential tariff. Nearby countries will create their own small Kutisa group, lesser taxes. Next, what does the principles of absolute? The ability to produce a greater quantity of goods using the as. Next, suppose the exchange rate between India and Europe. 1 euro is 80 Indian rupee. If it becomes 1 euro, 80 to 85. Depreciation of domestic or appreciation? Indian currency is getting depreciated against euro. Next on, this is again general knowledge question, GK question. From nook and corner they will search sometimes. RTAs. How many RTAs are there till this date? On 1st of February 2021. Regional trade agreements. How much? 339. That's it. See how many questions? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So how many questions? 10 questions. Okay, let's go to the last paper. Now, which tariff is calculated on the basis of the specific contents of the imported goods? Specific contents of imported goods. Content requirement, technical, different spare parts, specific content requirements. Next, which tariff is expressed either on the basis of value of or what is this? Which tariff? Next, the system wherein which nominal tariff rates on imports of manufactured goods are and raw material intermediates are lesser. Escalated tariff. I said now all 15 types of tariff important. See, 3 questions have come from that 15 type. Next, which of the following is measured to animal life, plant life, human life? Sanitary and phytosanitary measures. Which regards to international trade, European Union follow? Customs. Factor endowment theory is also called as HO theory. Another name of HO theory. Next, the investments which are reciprocal, exchange offer. You come and invest in my country, I will come and invest in your country. Two-way direct investment, total ban, embargo. The theory of comparative advantage to international trade was given by David Ricardo. Which scheme? Okay, this is chapter 10. Which scheme and all? Okay, which scheme is aiming to protect? Okay, promoting manufacturing of. Okay, that is chapter 10. Okay, which act was initially aimed to regulate the large firm? I said na MRTP. Let me say scrapped and bought with the competition. Now, which of the following countries not a member of Tunisia? Next, which of the following sector FDI is not permitted? Exclusively reserved to the government. Clear? Okay, that's it, I guess. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 questions. How many questions? Approximately another 2 more questions might be there at last. Wait, let's see. It is not there. 13 questions. How many questions? Clear? So by this, we have done with our entire marathon. So I know that chapter 10, I didn't go little in detail because it is completely filled with data. Completely filled with information. See, remember, ancient India, Chanukya, that Kautilya's Arthashastra, that concept is important, and British rule. What did that they do for industrial revolution? All those. See, in generic, from any nook and corner, the question comes. high probability will come from industrial revolution. Which revolution? Primary sector, secondary sector, tertiary. From those area and especially industrial sector. Which sector?
Industry.
More and more, and especially all the government plans, government programs. That is where, see, in reality, out of that 7, it is easy to crack 3 or 4 questions. Easy to crack how many questions? Some 2-3 questions will be bouncer. And every attempt, some GK questions will come from 2 to 3 marks. And some nook and corner of your question paper, or let me say from your ICA material, they will search some questions and they will give. Some 2-3 questions will go for a toss. See, my only suggestion, if you know the answer, attend. If you don't know the answer, no inky, pinky, panky. Because on the result day, you will become monkey and your friend will be venky. To white 100 fix. So, negative marking is there. So, only if you are confident with the answer, then attend. If not, don't attend. Is that clear? Understood? All the best for your examinations. Meet you guys in CA. Inter strategic management class. Clear? So, chalo, bye bye. All the best. Online students. Any doubts, ma? So, chapter 10, don't ignore. Kindly revise it.